Out of troops in that region. European futures currently pointing low by 0.8%. FTSE 100 futures pointing low by 37 points. DAX futures down by 1%. Lizzie.
In terms of some of the individual stocks we ought to be watching this morning, Tom, Monte Paschi is one of them. We have the news that its board has stripped the CEO from his powers. We also keep an eye on H&M, reporting a weak start to the year. Sales disappointing for that Swedish fast fashion retailer. They've been plagued by weak consumption and large currency effects as well. Finally, Hapag-Lloyd, of course, the German shipping company, really in the eye of the storm of this geopolitics, but expecting significantly lower earnings because of the war, disrupting trade flows and raising costs as well, Tom.
OK, retailers, shipping companies, of course, banking, that's a slightly idiosyncratic story. We'll look at all those sectors at the open. We are opening now this Thursday. Again, futures had been pointing low. The FTSE 100 is currently down 0.1%. You've got gold prices weaker in the session today. Interestingly, again, gold not playing that role in terms of a safe haven. Oil prices, Brent is up over 2%. WTI, the last time I checked, was also there. We crossed 105 on Brent. Currently, the FTSE 100 now down 0.5%, so slightly steeper losses coming through for the FTSE 100 across the benchmark. Stock 600 currently down 0.4%. We still wait for the pricing on the DAX over in Spain as well. The CAC 40 in France had been called lower, and that's what you're seeing right now, down 0.6%. The Spanish IBEX off by 0.6 as well, and the sell-off getting a little deeper here in the UK with the FTSE 100 down 0.7%, and a reminder that the consumer is under pressure, retailers very much in focus, and expectations from these markets that maybe the Bank of England hikes as many as 2, possibly 3 times this year. Across the benchmark again, European stock 600 currently down 0.6%. If you lift the hood, what are you seeing on a sector-by-sector basis, Lizzie?
Well, Tom, you mentioned oil flirting with $105 a barrel on Brent once again, and that should mean it no surprise that you've got energy near the top of the basket. Just 2 sectors in positive territory this morning. That's energy and media, both up about 0.1%, but the rest of the basket reflecting that risk-off mood that futures had been pointing to. Basic resources today at the bottom, down 1.7%. Banks down 1%. Tech as well, selling off, down 1%. We talked about potential read across from that Google breakthrough. It had already hit some of the Asian tech names. And I had flagged that we should be watching Monte Paschi after the CEO was stripped of his powers. Those shares are down 1%. You've also got H&M shares down 4.3% after that weak start to the year. Their sales disappointing in their results. And we'll just keep an eye on Hapag-Lloyd. We're waiting for those to open still at the moment. Maersk is shut today, we should say, ex-dividend. So we won't be getting a reading of the shipping sector from them just yet.
So a complete reversal in terms of the gains that came through for basic resources. That was your top sector yesterday. Today, biggest losses coming through for that sector, down 2%. It's worth noting that silver is selling off. It's down 2.8% right now. Silver under pressure. Gold down 1.1%, as I mentioned as well. So that's part of the mix in terms of the negativity in basic resources. To your point, Lizzie, just 2 sectors, and just by the skin of their teeth in positive territory, media and energy. Interesting in terms of the breakdown then, you are seeing pressure on the miners. So Antofagasta, that's the silver story, down close to 4%. And to your point, the retailers with H&M down close to 4% as well. Let's zoom out and get a view right now with our guest in terms of the market analysis and bring in Paul Jackson, EMEA Global Market Strategist at Invesco. Paul, how do you trade the headlines at this point?
I think it's really difficult.
How do you trade the headlines at this point?
I think it's really difficult. I think that you have to stick with a sort of medium to long-term view, keep your strategic vision and don't get dragged into the short-term movements, because as we've seen from yesterday to today, it's just massive swings. So I would say stay happy, because happiness helps us to keep long-term horizons, and stick with those long-term horizons, stick to your guns, don't get dragged in.
You are not positioning for an off-ramp at this night. You are not positioning for a potential ceasefire. You're not positioning for a point where the two sides come to some kind of agreement, as unlikely or not that is.
Well, I would say that we were already positioned for a relatively optimistic outcome. Because
and remind us why what was underpinning that relatively optimistic outcome.
Before the conflict started, we were expecting the global economy to accelerate. Interest rates had been coming down for a couple of years. Money supply growth had picked up. There's a bit of a fiscal boost in Europe and Japan coming through. Real wages were rising. And you could see in leading indicators that around the world that they were improving and already above trend. So it looked as though we were set fair for economic acceleration, which is usually good for cyclical assets. And the question is, how long does this current conflict need to go on to totally upend that reasoning? And I think we've probably got a couple of months of energy restrictions and restrictions of flows through the Strait of Hormuz before this becomes a situation that we would have to totally revisit. So I would say that we at the moment are positioned more for an optimistic and a short, an outcome, a good off-ramp in the short term. That's the way that we are positioned. The risk for us, and in terms of our positioning, is that it goes on longer and you get energy prices that go even higher and stay higher for, say, 3, 6, 12 months.
I did wonder if you'd picked your shirt as a symbol of the dominoes falling, Paul. But if you're an investor, what's the best blueprint to be using as a historical parallel to this situation?
Well, I think the fear comes from looking at 1973, 1974. That clearly was a situation where the oil price quadrupled. Funnily enough, supply of oil only fell by 7% between 73 and 75. But the oil price quadrupled. We had big inflation, deep global recession. It was a disaster for most assets. And that's obviously in the back of the mind. But we're not getting those sorts of price gains. And the world is not as dependent on oil as it used to be. Even since 1990, the oil intensity of global GDP is half of what it was. And I suspect that since 1970, it's probably a third or a quarter of what it was. So even if you do get big oil price increases and you get a similar oil shock to what we had then, the effect on the global economy will not be as big because we've weaned ourselves off oil since then. It will be negative, but it won't be as big.
And what's the signal then that equities need to trigger a rebound? Because you could have all the progress in talks you like, but it doesn't mean that the Strait of Hormuz is going to be unrestricted completely. What would be that trigger?
Well, I think the first trigger is that there are actually talks.
Which we had yesterday. We had the
No, we've had one side saying there are talks and the other side saying no, there are not. So we need firm evidence that both sides are at the table and are talking to each other rather than across each other. So that would be, I think, taken as a positive signal. Aside from that, a freer flow of shipping through the Strait of Hormuz, either in the way that Iran is allowing it at the moment, but an expanded volume, that would be good news. And we've also got something like 5 million barrels a day capacity from Saudi Arabia through the Red Sea rather than through the Strait of Hormuz. That is happening. More ships are heading in that direction. And so if there is a flow of oil coming from that direction, that could mitigate things as well. So I think those two things taken together, independently of the talks, could also give us good news. But at the end of the day, we want to see energy prices come down. And it's the downward movement of energy prices that is going to be critical, I think, for equities, for bonds, for pretty much every asset category.
Where are you, until and if we get a conclusion to this conflict, what are your favourite hedges? Where are you looking for insurance?
Oh boy, it's really difficult. The
Treasuries are not playing the role, bonds are not playing the role, gold's not playing that role.
Which you wouldn't expect treasuries and equities to play that role. If you're just concerned about inflation, if you look at the correlation with inflation in the US and US asset returns, there's really nowhere to hide if you look at the historical evidence. Commodities are really the only asset category that has that positive correlation, but I would argue that the correlation is in the wrong direction. It's because of rising commodity prices that you get the inflation rather than higher inflation pushing up commodity prices. But once again, this conflict, I think, has shown the value of commodities as a diversifier within a broad portfolio. If you look at the history of it, the correlation between broad commodity indices and other asset categories is slightly negative. That means it's a great diversifier. It's a volatile asset, but a great diversifier.
So commodities as a diversifier. What about a regional diversification strategy?
Regionally, I think, as we've seen already, the US assets have been relatively protected, not fully protected, but relatively protected. The dollar has strengthened, and I think that comes not so much from the idea of the dollar being a safe haven. I think it's more to do with just the economics of the situation, that the US is largely energy independent. Its balance of payments is perhaps benefited by rising energy prices, so the dollar is benefiting from that. The US economy is relatively shielded compared to especially Asia, but also compared to Europe. So I think if you do a ranking, US is most protected, Europe clearly not protected, but Asia is very vulnerable when you look at the amount of energy that comes from the Middle East.
Well, how much of the S&P's resilience is because there's still that optimism over earnings, and how much of that is because analysts are just reluctant to change their outlooks when you haven't got that hard economic data yet, because they're waiting for the geopolitics to translate?
I think there may be a bit of that. I think we had been shaken out of. Last year, markets were shaken out of this idea that the US market and that mega cap US stocks will always outperform. And at the beginning of this year, that was continuing. Then this comes along, and I think that maybe it has caused a bit of a reversion to previous behaviors. But I think it is helped by this idea that the US economy is relatively sheltered, that there is some sort of protection by being in US assets. It's not total protection, but it is some sort of protection. And yes, no doubt it is encouraging once again the idea that, well, you see, US mega caps, US tech is always going to outperform, which was never true and will not be true in the future.
Okay, Paul. Cool. Paul Jackson, EMEA Global Market Strategist over at Invesco. Thanks for coming to see us. Let's take a look at the core six, shall we? How they're faring up on this risk-off day. And surprise, surprise, it's only Nestle that's up by 0.4%, but everything else in the red. Novo Nordisk seeing pronounced losses of 2.7%. ASML also down 2.3%. Perhaps a read across from what we've been seeing from Google, that weighing on the tech space more broadly. Let's go to Louise Moon with some of the other individual stocks on the move today. We're more. Louise, over to you.
First up, Lizzie, we are looking at retail earnings. Now, we've had two major companies reporting this morning. Firstly, Next shares, as you can see, rising over 5%. Now, they did warn of more costs from the Middle East conflict, but Met estimates maintained guidance, even lifted guidance in some cases. Their CEO is known for kind of giving relatively conservative guidance and then lifting that later on. So investors welcoming that. H&M, however, declining over 5% after their own earnings. I think this was the steepest decline since around April. So really steep declines there for H&M. Next up, we're looking at Hapag-Lloyd, the German shipping giant. Shares slightly ticking just higher. Now, they have actually warned that next year earnings will come in weaker than this year, but, you know, rising despite all those headwinds as the conflict in the Middle East continues. Now we're turning to Italy, down to Monte Paschi, the Italian bank. They've ousted their CEO after he didn't abide with, you know, the board's plans. He challenged the board's plans to replace him. Shares falling into the red after that. He's overseen the bank returning to a rise in profitability, taking over Mediobanca, so investors dragging those shares down into the red after news of the CEO leaving or being ousted. And finally, we're looking at chip stocks, so the likes of ST Micro, higher, slightly into the green. That's after an upgrade by Morgan Stanley, seeing those stocks as a more attractive pick at the moment. So ST Micro rising on the back of that.
OK, Bloomberg's Louise May, thank you very much indeed on some of the stocks on the move this Thursday. Another stock in focus is Currys, with change at the top there. Currys CEO Alex Baldock is stepping down after 8 years in charge of the retailer. He was also pretty consequential in helping to turn the company around after that merger. He's leaving Currys, then created in 2014, the company, of course, when it merged Dixon's with Carphone Warehouse. And he's leaving Currys to take a new undisclosed external position. And the stock, the last time I checked, was down on the back of that news, falling double digits at one point in early trading. The stock was up about 50% in the 12 months through Wednesday's close. So change at the top. That's Currys, Lizzie.
Yeah, just also looking at a load of private credit-linked stocks. Of course, we mentioned at the top of the show the disappointment for Ares with its numbers. We've already seen it capping the withdrawal requests following a number of others. But today, the likes of AXA, Allianz, Legal & General, NN Group, all in the red. But difficult to separate that out from the broader risk aversion that we're seeing in these markets on the geopolitics. Coming up, as I say, oil higher as the US and Iran offer conflicting comments on efforts to end the war that shuttered the Strait of Hormuz. We'll get a closer look at that next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherianne in Seoul, and this is Bloomberg.
Welcome back to the opening trade. We are 18 minutes into the Thursday session. Renewed uncertainty across the equity markets. The benchmark stock 600 currently down 0.7%. Just 5 sectors so far in positive territory. Personal care and products up just 0.2%, and that is the best performing sector. On the downside, the biggest losses coming through for basic resources, down more than 3%. As you can see, the DAX is lower by 1.1%. Here in the UK, FTSE 100 off by 69 points, down 0.7%. We're focused on retail as well, Lizzie.
Yeah, one of the sectors managing to eke out gains this morning, Tom, but it's a mixed picture for 2 of those who've reported numbers this morning. Next is up 6.5%, H&M down 5.5%. This after H&M first quarter sales fell short of expectations in a period plagued by weak consumption. Next, meanwhile, maintained its guidance, but did warn that the war in the Middle East will add £15 million of costs to the UK retailer's profit guidance. For more, let's bring in Bloomberg opinion columnist Andrea Felsted. And I want to start with Next, Andrea. What do these earnings tell us about that high street retailer?
Well, Next has been doing pretty well. You know, it's really defied, the doom in UK retail. It benefited last year from Marks & Spencer's having IT problems. It's just a very well-run retailer. It knows who it is. It knows who its customers are. It's got a strong online arm. It's got a growing international business. So it's the best, probably the best run retailer in the UK.
What are they doing? What's Next doing that H&M that Henny's isn't doing?
Well, H&M, I sort of always struggle to figure out why they're not performing. Somebody described them to me as they're not fast and they're not fashion anymore. I think the other thing is, I think they're stuck in a bit of a Shein Zara sandwich. They're the filling in the middle. So you've got Shein,
advertising.
Exactly. You've got Shein, really low price. You've got Zara going increasingly upmarket, filling that white space that's been left by the luxury brands. H&M are somewhere in the middle. So that could actually work in their favour, because the danger for Zara is it goes too upmarket and alienates some of those more value-conscious customers.
So Zara is upmarket now?
Zara has been really stretching. It's still got the opening price points, but it's been increasingly moving into a premium retail area, because all the luxury brands have gone so far. They've taken their prices up so high. You've got all this white space that's been filled by brands like Coach, Ralph Lauren, Cézanne. So Zara is sort of moving into that market, which is very smart. But the danger is that some of those shoppers that went there for really, cheap cheek go somewhere else. And H&M, if it can get its act together, could pick up some of that trade.
So a lot of these idiosyncratic stories about how these businesses are run, is there anything that we can extract about the strength of the UK consumer? Because we had numbers this morning saying household confidence is at its lowest under Prime Minister Keir Starmer.
Well, I think the biggest issue is going to be what the war in Iran does to costs. I mean, Next said they've got 15 million of costs coming through, things like freight, energy. They can offset that. The problem is if it goes on a long time and we start seeing that really feed into petrol prices, household energy costs, then consumers they've got to spend more on the things they need, so they've got less left over for the things they want. Next said prices aren't going to go up sort of right now, but if this carries on, we're going to see it really hit in the autumn when the factories that make the clothes have to deal with their own energy prices, as well as energy that goes into things like polyester, oil that goes into polyester. That will come through, and they were talking about maybe 5% increase in the autumn. But the thing is, there's a little offsetting factor which also goes in Zara's favour. What they've noticed is their customers are buying fewer but more expensive products. So if they can, there's lots of things you can do when you face higher prices. You can make things. You can put less wool in a cardigan so it's a bit more itchy, or you can go the other way and you can sort of add piping to a collar, put a fancy lining in, add some trimmings, which helps you to charge more to customers because they think it's better quality. So if people are willing to spend more on clothes but buy fewer items, then that does help you with the costs coming down the line.
piping and itchy cardigans.
Yeah, I always knew that.
Lizzie's not going down that route.
I always knew that dressmaking O-level had come in handy one day.
I led into that. Bloomberg Opinions, Andrea Felsted. Andrea, thank you very much indeed on this retail space. Let's get back. We were talking about the inflationary impacts there on retail. Let's get back to the oil price story right now, because you are seeing Brent and WTI both higher in terms of the session inputs that we're seeing. Up 3% right now, 105 on Brent, $93 a barrel on WTI. Let's bring in Anthony DiPaola, then, Bloomberg's Middle East Energy Markets reporter. Anthony, just give us an update in terms of what's happening across these energy markets. On a day when we have a Turkish tanker apparently struck in the Black Sea, what is the momentum behind higher prices today? Is it the continued uncertainty around the conversations between Iran and the US? What are the catalysts? We're above 105 on Brent.
Good morning, Tom and Lizzie. Yeah, that Turkish tanker, as you mentioned, that just kind of reminds us that there are still ongoing conflicts elsewhere as well, too, as we've been so consumed by following the Middle East crisis. I think this one is clearly the bigger one for oil markets at the moment, because we still have the Strait of Hormuz largely blocked and so much oil stuck inside the Persian Gulf, unable to get out. We've seen oil, as you said, come up. We're at about 105 for Brent, and we've really had the last couple days down back around $100 a barrel. So quite a moderate price given the situation where we are in terms of markets being starved of oil, chemical makers starved of feedstock, nothing getting out of the Persian Gulf, and that's been the reaction really to this kind of jawboning war that's been going on with the U.S. administration making comments that are really seem to be aimed at talking the oil price down as well. That's not to take away from the fact of negotiations around some sort of peace talks or some sort of ceasefire. Of course, the Iranians have denied they're in talks with the United States, but at the same time come out with their own demands for talks. So that does indicate that the two parties are staking out their positions. At the moment, kind of looking like a maximalist positions at the moment. So if negotiations go as negotiations normally do, perhaps you find some way somewhere in the middle. Of course, we did see the Iranians saying they want access and control over the Gulf and ability to control who goes through there and to charge fees for that. That's got to be a non-starter for a lot of the Gulf allies, because that's the issue that's got us into this problem in the first place. The fact that there's not that free transit through the Gulf, the oil and refined products are not able to get to markets. So we've seen those fields shut in. We've seen refineries closed, damage created, and that's going to take longer for those companies to get back up and running. The longer it takes, the longer this closure takes, it will be more difficult for them to get back up and running and back into the market, Tom.
Okay, so a non-starter for Gulf nations. Thank you, Anthony, very much. That's Bloomberg's Anthony DiPaola out of Dubai. Well, you mentioned the oil price. Brent is higher, of course, today, but also keeping an eye on the miners as we're looking at gold weaker, silver weaker, copper weaker too. And there we have on the screen, as you would expect, Fresnillo down 4.2%, Antofagasta about the same, and Anglo-American suffering too, Tom.
OK, coming up, as the US and Iran wrangle over those talks then, we're going to discuss the geopolitical implications of the ongoing war with Anna Rosenberg of the Amundi Investment Institute. What would US boots on the ground mean for this conflict as well? Another question. That is next. This is Bloomberg.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back. This is the opening trade. We are 30 minutes into today's session, reversing most but not all of the gains of yesterday. Currently down 0.9%, but certainly there is more caution in these markets on what is happening in terms of Iran. Very headline-driven still in terms of trading around equities. The biggest losses coming through for the DAX, currently down 1.3%. As you can see, the CAC 40 over in France dropping 58 points, and here in the UK, the FTSE 100 down 85 points, down 0.8%. Lift the hood, and what do we see, Lizzie?
Well, as a mark of the risk aversion that you've just outlined in markets, Tom, we've got 459 members of the Stock 600 lower compared to only 121 up this morning, and also as a mark of the volatility and traders wanting to stay away, perhaps, volumes down nearly 40% at this point. Flip over and we can look at some of the leaders out today. Shell up 0.6%, up with oil prices higher on the back of those Middle East tensions, on the fragile talks as well. Next, we were just discussing with Andrea Felsted, rising despite saying that the Middle East conflict will add around $20 million in costs because sales met estimates and it maintained its guidance. And then we turn to SSAB, up 3% this morning after it was raised to buy by ABG. But let's take a look at the laggards. ASML, one of the biggest in fact this morning, down 3.1%. Shares of memory and storage companies sinking after Google researchers touted this new compression technique for LLMs and vector search engines. We've seen some of the Asian tech names suffering as well. On the flip side of the retail story, H&M down 5.6%. First quarter sales falling short of expectations because of weak consumption and big currency effects for them. And finally, Boliden down nearly 20% here after RBC reported that the impact on one of its mines that it had halted production at earlier in the year is worse than expected, Tom.
Okay, here's what else you need to know. This Thursday morning then, the former Goldman Sachs CEO Lloyd Blankfein says the accumulation of unsold private assets on investors' balance sheets is a warning that some may be overvalued and a spark may trigger a widespread markdown. The former Wall Street chief, who spent much of his career as a trader before leading Goldman during the financial crisis, made his comments as the AI disruption caused by the AI story and pockets of alleged fraud have caused jitters in private markets. Meta and Google say they will appeal against a California court decision after they were found liable in the first ever social media addiction trial. A jury ordered the tech giants to pay $6 million to a 20-year-old woman who said her addiction to social media caused her mental health struggles. The ruling highlights the potential multi-billion-dollar exposure of social platforms facing thousands of similar lawsuits. And US President Donald Trump is insisting that Iran is negotiating and desperate to make a deal to end the war. That's even as Tehran publicly rejected Washington's outreach and issued its own guarantees, including that the US and Israel won't resume attacks, reparations for war damages, and recognition of its authority over the Strait of Hormuz. Meanwhile, Iranian media reports Iran is drafting a law to impose Hormuz transit tolls.
Well, let's get some analysis on the geopolitical situation now. We're joined by Anna Rosenberg, head of geopolitics at the Amundi Investment Institute. Welcome back, Anna. You've described this as a go big or go home moment for President Trump. So now that the ball's back in the US's court, Iran having rejected this US proposal, what is President Trump's next move?
Well, I think we have to be very clear that this negotiations is mainly a show. It's not about substance, because they're both far removed from agreeing on any of these terms. Israel too. So this is very much about, are both sides willing to show that they are kind of willing to step back from the brink? And I think it's in both sides' interest to do so, in Iran's interest and in the US's interest to take a step back. But ultimately, we shouldn't underestimate what's at stake here for the US, because this is not just about the very short term. This is about big geopolitical changes, and Trump really is facing a moment of monumental historical importance. It's about, do I go big, and do I try and seize control of the Strait of Hormuz, and do I try to decimate the threat from the Iranian regime for the Strait of Hormuz, but also for the region, for the Gulf countries, for the Red Sea, or do I leave it at that? And essentially, then I will have lost the war, because Iran will remain in charge. And that will undermine the US position on the global stage.
And if the US does go home, then how would Israel react? How would that leave the relationship with Israel?
So Israel is probably going to be okay. Our base case for this conflict has always been that this was going to be a hot phase of aerial bombardment, US and Israeli strikes. It comes to a close after a few weeks, and then we move into a phase 2. Because this is not going to be over. This is an opportunity for Israel, and also for opposition forces within Iran to continue to weaken the Iranian regime. They're not going to just sit idle now. Something's going to continue. So we're likely going to move to a lower intensity war that will mean that Iran will continue to disrupt the region with occasional drones, with disruption in the Strait of Hormuz. That means we're not going to go back to a time where the strait was fully open. So I think we have to assume the base case is ongoing disruption. And Israel will continue to aid opposition forces, protesters, to continue to destabilize the regime. And so if Trump decides to go home now, they're probably going to say, okay, fine, we had our thing, we did this big, they were on our side, we can't ask for more, but they're going to continue to disrupt. So the base case is, don't assume a full ceasefire that means we're going back to the status quo ante. I don't think that's very likely.
It seems to me that the risk for the markets is that they assume that your base case comes to pass, which is that President Trump ultimately walks away from this conflict, declares victory, and we can assess whether or not that is valid or not. But you get that disruption. The markets then pounce on that. They lean in, there's cash on the sidelines, equities rally, oil comes down. But maybe they underestimate your point, which is that continued disruption is there, and that has an effect for the economy, that has an effect for inflation. That, for me, seems to be a potential risk for these markets.
Yeah, absolutely. That is the biggest risk that we have out there. And we are in a new world with drone warfare. Drone warfare is a new thing in this environment. We haven't had that before. It means that you actually essentially can wage wars forever. The only solution is not on the battlefield, it's diplomatically. And diplomatically here, it's incredibly tricky, because you now had a regime that is even more radicalized, that has realized that its only deterrence is to cause global economic chaos. So to really have a diplomatic solution is very, very difficult in this context. So drone disruptions, drones are cheap, they're easy to produce, they're difficult to track down. I think we have to assume that that disruption will continue for a while.
Can I put another scenario on the table, and that's one that could be deployed, which is boots on the ground. And we're seeing a build-up, 5,000 troops plus 1,000 82nd Airborne are the reports. So it seems like in terms of optionality for President Trump, this is real in terms of giving him this option. Have you mapped out, can we map out potential second and third order effects of having US boots on the ground, whether in Kharg Island or on the coastline next to the Straits of Hormuz?
Yes, of course. So firstly, I think this is a decision that Trump has to make now. And I think the stakes are very high. I think the risks are high that he decides to go big because, as I said, this is about a historic moment. This is not just about the short term. Assume he controls the Strait of Hormuz. It would allow him to say, I control global oil flows. It would have reestablished deterrence of the U.S. in the eyes of the world. It will have pushed back China's influence too. And for the Gulf countries, and this is very important, this is existential because the business model doesn't work if there is ongoing war. Because the Gulf countries are hostage of their geography, and the geography remains volatile. So if Trump decides to go big, then you're going to have a situation which is going to be very messy, and I think going to take quite some time. He will probably focus first on the islands before going into Kharg, the region. But keep in mind, this is a country of 90 million people with a very strong and big armed military apparatus. So I think this will be an intense, if it happens, it would be not an easy thing. It would take time, and it would likely cause quite a lot of disruption. But our base case is that he goes home and not goes big because he's constrained by domestic politics. He's facing a midterm election. And so that's the base case.
And you talk about the importance of diplomacy. Who do you expect it is that the US is talking to in Tehran? They say, we're not talking to the US, but with so much of the leadership killed,
yes.
Who is that going to be?
Well, there are interlocutors, there always are. We currently have Pakistan, which is interesting because they're fairly new to this negotiating table here as an intermediate. We've had Oman usually in the past. On the Iranian side, there are lower tiers, representatives. I don't know who specifically it would be right now. There are some indications, but who knows? Ultimately, it's always been Tehran's policy to dismiss that talks are ongoing. If there is a ceasefire now, or if there's a deal, which I think could look something like the US says we're going to stop hitting bombs at you, and then Tehran says, okay, and we're going to open the Strait of Hormuz. That's the extent of the deal we're going to get. It's not going to be more detailed than this.
Yeah.
So if this happens, then both have to look like victors.
Well, I wanted to ask, where Tehran's come back with its own plan of what it wants, do you see that as a starting point, or are they red lines?
No, I think this is a starting point because both have an interest in de-escalating. Trump for domestic political reasons, and Tehran simply because they need to survive, and they know that this could get bigger and they could lose Kharg Island. So ultimately their interest is let's stop this and let's focus on what we're best at, which is lying low and rearm. That's what their incentive is going to be. So the question is, how do we go from this current show of negotiations to a point where both agree they can look like victors and things calm a little bit and we move to phase 2 of this conflict?
I want to bring a slightly different angle to this, but I'm reflecting on the threats from President Trump to NATO and his very apparent ire that US allies have not stepped up and intervened as much as he would like. Above and beyond what happens with this conflict, is there a risk to NATO at this point? Is this the Trump administration that looks back on this 6 months down the line and says, you know what, we're done?
No, because this is something that I've stressed from the beginning. Trump faces constraints. They're the interests of a president and the core interests of the United States. NATO is a massive asset to the US. No other geopolitical rival has such an alliance. It makes the US stronger. And when you look at all the threats that Trump has made against NATO, they never came to anything because ultimately he knows that NATO is very important to the US too. And when you look at the defense law that was passed in December in the US, there are lots of commitments to NATO. So this is also why he was never going to really invade Greenland. Ultimately, NATO is a US interest, and he can say a lot of things. He's not going to walk away from that.
And where does China sit in all of this?
China sits at this and looks, wow, this is interesting. This is an interesting opportunity, especially you're talking now about the renminbi being used for transactions.
Yeah.
You know, when you look at history, there are signs of empires that are rising and are declining. And one of the signs of an empire in decline is that its status as a reserve currency starts to deteriorate. It happened to the Dutch, it happened to the Brits. And now the question is, are we seeing the beginning of this to the US dollar because of what's happening in the Strait of Hormuz? So clearly it's allowing China to look like the trustworthy party in the room. And that is what is a game changer. It's about trust. And this is something that the US has eroded by not looping in the partners, by not looping in the allies. And China is capitalizing on this. So I think that obviously they do not like economic disruption because China needs economic stability. But ultimately, from a geopolitical perspective, I think it benefits China.
I want to get your view on what's happening in terms of Russia's involvement with Iran, with reports that they're supplying not just intelligence, but hardware now as well to Iran in the form of drones and other equipment for the Iranians to pursue that conflict. Does the Trump administration respond to that? They've typically been remarkably kind of pliant when it comes to Russia. They want to get this deal between Ukraine and Russia. Now reports that Russia is supplying intelligence and hardware that could be used against US military personnel. Does the US see that as a red line? Does it change the relationship between Washington and Moscow?
No, because again, there is very little leverage that the US really has against Russia, or at least there's little leverage that Trump wants to use. Like, for example, we never expected we expected that at one point the Trump administration, after the midterm, would impose much more stringent secondary sanctions on Russia once they realized that Russia wasn't going to back down. Because they didn't want to have high oil prices, they didn't do this earlier. But they wouldn't have attacked Iran if they would really care about high oil prices. So why have they not imposed already secondary sanctions on Russia? So there is something that is holding the US back from taking a tougher stance on Russia, and I don't think this is going to change now.
Anna, really smart insights. Thank you very much indeed. Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. Coming up, we're going to go to France to look ahead to the G7 foreign ministers meeting. So more, of course, in terms of response to the conflict in the Middle East as the group seeks to narrow their differences over the war in Iran. That is next. This is Bloomberg.
Estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The role we can play is by not being involved in this war is to actually, both on the diplomatic end, to support the United States in the negotiations and also to reopen, which is really absolutely crucial for the world economy, the Strait of Hormuz.
That was French Senate Foreign Affairs Committee Vice President Hélène Conway-Mouret speaking to Bloomberg yesterday. The wars in Ukraine and Iran, of course, expected to dominate today's meetings of G7 foreign ministers in France. Ministers from Kyiv, India and Saudi Arabia are expected to join the talks as the group tries to narrow its differences over the Middle East war. Bloomberg's chief Europe correspondent Oliver Crook joins us now from Vaux de Sarney. Ollie, how deep are the divisions within the G7 at this point?
So opinions differ, but the headline is the same across the G7 and many nations, which is this is not our war. This is not something that the Europeans or many of the other G7 members are willing to take a kinetic or active military role in. It's something that we've heard the Trump administration call for periodically, not in a very specific manner, but basically trying to get the help from some of these allies to reopen the Straits of Hormuz. And the answer across the board has been, we do not have appetite to do so. And in normal circumstances, a G7 meeting might be a place for leaders and for foreign ministers to discuss potentially coordinated action, potentially, let's say, on oil strategic reserves. We're not in ordinary times. So for many of the people that are here, the foreign ministers of the G7 and the wider group, it will really be a fact-finding mission for conversations with the U.S. Secretary of State, Marco Rubio, who arrives here tomorrow. They will be trying to figure out what the U.S. war aims are, how they see the war developing, what the next steps are, and of course trying to keep the United States on side on a number of key issues for the Europeans, including Ukraine, potentially putting forward some of the reporting we've seen recently about the Russians sharing intelligence with the Iranians, sharing potentially drones and hardware. That will be the message that the Europeans are pushing. But I think here also there's going to be a degree of conversation among G7 allies on where exactly they stand and what help they can provide to the United States and what help the United States is actually asking for concretely.
Well, yes, we're more than a year into President Trump's second term, Ollie. Is the G7 still a relevant format?
I think that's a very valid question. I think that for the last year, the Trump administration has effectively been trying to invalidate structures like the G7 of multilateralism. And if you think back at the origin of what the G7 is, and really the echoes of history here are really sort of bizarre to consider, that the first G6 meeting was held in Rambouillet, not far from here, and it was to deal with two major crises across the globe. One was the collapse, basically, of the international monetary order, Bretton Woods, and then the second was an oil crisis instigated by OPEC blockading countries that support Israel. Fast forward 50 years, we're dealing with many of the same issues here. The difference is that back then, the communique, the Declaration of Rambouillet, the antidote to many of these issues was more open trade, more multilateralism, more cooperation among nations to sort of grow the economy across the world. And now we have a Trump administration giving the exact opposite direction. So really, I think it's interesting to come back to the place of birth of the old international economic architecture to find out if it is still valid or if it's here that we bury it.
Ollie, on that point, how do we expect Marco Rubio to approach this meeting? He's seen typically as being more in the form of a traditional diplomat, the US's chief diplomat, versus a J.D. Vance, for example. But have the dynamics changed? How do we expect Rubio's relationship to play out in the coming days with his counterparts?
Well, I think where the Europeans and a lot of in the international community rely on Marco Rubio is to bring kind of substance and also detail to some of the sort of broad strokes that we get from the Trump administration. So I think for many ministers who will be carrying meetings with Marco Rubio, again, it's trying to find those facts to get a clear idea, A, of what the war aims are of the United States, how they're going to achieve those, though it's probably not terribly likely that they'll give too much information on that, given that none of the G7 were really alerted to this invasion before it happened. But again, I think also getting a clear idea of what kinds of things, what kinds of support the G7 can lend to the United States, potentially in the day after, in order to win back the United States on side. And again, I think that for the Europeans, the absolute colossal point here is going to be keeping the Ukrainians on the agenda. We should say that the Ukrainian foreign minister will also be present in these talks and talking to G7 foreign ministers.
Bloomberg's Chief Europe Correspondent Oliver Crook there. Thank you very much for that coverage. And indeed, oil traders are passing both what they're seeing in the Middle East and what they're seeing in Ukraine when it comes to the oil price. We're up at $106 a barrel on Brent now, up 3.8%. Let's take a look at what else we're watching throughout the day. We do have that G7 foreign meeting. We also have the EU Foreign Affairs Council meeting. We have the OECD interim economic outlook. Before at 12:30 p.m. London time, we get US jobless claims and then a raft of Fed speak as well. We'll hear from Cook, Myron, Jefferson and Barr. But let's bring in Skylar Montgomery-Koenig now from the Bloomberg Markets Live team for a bit of analysis. I mentioned the Brent price, Skylar. It feels like we're back in that pessimistic mood heading into the weekend.
Yeah, absolutely. And I think the question that I had yesterday was whether or not we could just kind of like toddle along in markets if we didn't get any new headlines or we just didn't get a deterioration in sentiment. And the answer is clearly no, in terms of we haven't had anything really change over the last 24 hours, I don't think, but you've had that Brent price rise on the idea that heading into the weekend, the risk of escalation is higher. And we've seen this repeatedly over the weeks where people don't want to take risk into the weekend because they're unsure of what's going to happen. And you get more optimism at the beginning of the week as a result. And I think that tells you that we're not quite happy with this peace push that's being put forward for Monday, particularly that the Brent price is now above any level that we've seen this week. And there is still concern there. That means energy prices will rise and stay elevated.
How closely correlated are high oil prices with high yields at this point?
I mean, I'd say fairly correlated. I think, though, what you're looking at in terms of fixed income is a higher floor on that, right? Because we've already had some permanent damage. If you think about what a 10-year yield is, it's essentially what your policy expectations are plus a term premium. Now, policy expectations, there's already been a change. The Bank of England was supposed to cut in March. They didn't. We're clearly having a more hawkish turn. To what extent that's validated, we know it's a higher floor. In terms of term premium, this is something like...
that higher floor, because this is really important.
Yeah.
You get a higher floor, there's implications across asset classes as a result of that, and that's your expectation. That doesn't snap back in the event of an end to this conflict. That higher floor is now kind of structurally in place, at least in the kind of medium term?
Yeah, I mean, absolutely. And
Right.
I think particularly for your fixed income outlook from central banks, they're really worried about inflation. And if you look at something like the gas curve, there's been enough infrastructure damage that curve is elevated across. So you're getting at higher prices in gas as expectations for the end of the year. And from a term premium perspective, this is really important. This is the fourth supply shock we've had in almost as many years. That raises economic uncertainty. It means that your bond equity correlation turns positive. So bonds aren't protecting you in the same way that they have historically. And you also are getting more supply, whether that be to fund the war or in energy subsidies, et cetera. Now that justifies a higher term premium. And I think investors are increasingly being aware of that as it's just not going away, right? Geopolitical frictions, that kind of stuff means we're getting more of these.
Skylar, isn't it weird that the Stock 600 and the FTSE 100 are both down 0.9% when we've got oil flirting with $106 a barrel, it's just below that now, and so much energy exposure in London?
Yes, this I think is going to correct itself. I think part of it is the market's looking at who's an energy importer, who's an energy exporter. So the U.S. is a clear beneficiary of that despite having a relatively low weight of energy within its equity index. Now that makes sense they just have lower input costs, so that'll be positive generally just with WTI being lower than Brent significantly. Now for the UK versus Europe, part of it's the energy exposure is better in the UK, so higher. Also there's just worse energy exposure in Europe, as in materials, industrials, that kind of stuff that has higher input costs are also there. And then the UK index is also more defensive. So maybe it's that exposure, maybe it's the yield move, but what we saw in 2022 is this massive outperformance of the FTSE versus the Euro stocks. Now that partly is also because they were able to expand margins in this more inflationary kind of economy that is the UK, and I'd expect that to kind of repeat itself this time around. So you'll get more kind of divergence in people looking at stuff more specifically as the crisis continues.
Skylar, thank you, as ever. Skylar Montgomery-Koenig from the Bloomberg Markets Live team as we look at European stocks down about 0.8 across the benchmark right now. Kai Kallas, meanwhile, EU Foreign Affairs Chief, will be speaking at 4:30 p.m. London time. That interview very much worthy of your attention, of course. That is it for the opening trade from me and Lizzie. The Pulse is up next. This is Bloomberg.
news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
U.S. President Donald Trump insists Iran is negotiating and desperate to make a deal, despite Tehran publicly rejecting Washington's outreach and issuing conditions of its own. Now, Bloomberg understands Germany is drafting plans to potentially target U.S. companies if there's another trade spat. We're live at the G7 meetings of foreign ministers. Plus, warnings of a potential fire risk in private markets. We'll bring you more of our interview with Lloyd Blankfein, the former chief executive of Goldman Sachs. So stocks and bonds falling across the world as Iran's persistent rejection of Trump's administration push for talks to end the Middle East war is sending oil prices a little bit high. You can see Brent crude at 105. The move reignited also inflation fears and pushed global yields higher as money markets priced in tighter monetary policy. You can see the U.S. 10-year 4.3738. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump says Iran is negotiating and is desperate to make a deal to end the war, despite Tehran publicly rejecting Washington's outreach. We have a panel of guests to discuss what it means for markets, including Giulia Pellegrini, EM Portfolio Manager at Allianz Global Investors, Derek Halpenny, Global Markets Head of Research at MUFG, and Sebastian Malaby, a Senior Fellow at the Council on Foreign Relations, but also author of the newly minted book, The Infinity Machine, the story of the development of DeepMind. So we'll also discuss the AI revolution. But let's start with the markets. And Julia and Derek, I mean, you see actually moving currencies, which is pushing EM currencies in a spot where maybe they don't really want to be because it makes a lot of the internal decisions much harder. What happens to dollar going forward?
Well, we've seen the dollar really gaining from this conflict as a safe haven, and so EM currencies have taken a brunt, saying that the sell-off we've seen in EM currencies has also been motivated by the large positioning that many international investors have had in this space, in this asset class. EM local effects, but also local bonds were very much in vogue last year and received a lot of inflows. So the knee-jerk reaction was exacerbated also by some of these inflows turning into outflows outflows and investors basically divesting away from that portion of the asset class.
Derek, I mean, do you worry that actually there's a more permanent damage to a lot of the EM asset class, regardless of what happens in the next couple of weeks and months?
Yes, I think that's certainly a risk. I still think we're in relatively early days to be talking about permanent damage, but obviously if the conflict lasts longer, certainly from an economics perspective, those import energy-reliant countries are going to suffer more, and you can see that certainly in foreign exchange with those currencies definitely underperforming.
But, I mean, because they're underperforming or they're weaker, how much of a real problem is it for these emerging markets?
Yeah, economically, it's significant because you're going to see a significant consumer-led downturn because of higher energy costs, real incomes being hit. To a degree, the same as what's happening in the major developed economies that are import reliant, but it's hitting those in the emerging market space that bit more quickly initially, but it is beginning to feed through into the major developed economies as well.
Julie, are there some countries that can actually benefit because weaker currencies can also make you more competitive, depending on how your economy is positioned?
Sure. I mean, we've seen, first of all, central banks giving an appropriate response in most of these countries, saying we'll have a more cautious outlook on our monetary policy. Mm-hmm. Some of these countries also come to this period of crisis with better buffers, higher buffers. They have rebuilt over the past couple of years, stronger macro backdrop. And in general, we see, obviously, oil exporters gaining in this context. We've seen some of the likes of Colombia, Ecuador, but also Angola and Nigeria on the more exotic side of the opportunities in emerging markets, really gaining from this conflict.
Sebastian, we've interviewed you for many years on, of course, all of these geopolitics and global, concerns. And first of all, congratulations on the book. It's an easy read. It's a great read. And you frame AI as a, scientific quest, but also a geopolitical race. Which one is it more?
Well, I mean, the science drives the geopolitics, right? In that sense, I can be Marxian. Technological change in the 19th century with the Industrial Revolution led to Marxism, and we could have the same this time again, right? This is a huge technological shift. I would say the biggest change since the arrival of human cognition 70,000 years ago. And so, it's going to change how we think about ourselves as humans, how we raise our kids, how we educate them. It's going to change the workplace. It's going to change productivity of companies. Everything is going to be changed by AI. And so I wanted to get inside the main lab building this AI, Demis Hassabis, DeepMind, tell the inside story. I was very lucky because I got access to Demis a week before ChatGPT came out. And then I was embedded inside this leading lab, understanding the building of this technology from the inside. It's been an amazing trip.
Yeah, so were they trying ChatGPT out in real time? I mean, I imagine they have a team trying to figure out what that means for them.
Of course, and I went to see Demis right after it came out, Demis Hassabis, the founder of DeepMind, and he said, Sebastian, they've parked the tanks on our lawn. This is war. I mean, he was going to get back at them. And sure enough, immediately, Google merged its Mountain View AI operation with the London DeepMind operation. It took them a couple of years, but by the end of 2025, the Gemini model from Google DeepMind was rated higher than the OpenAI model. So I think just in business school case study terms, to do a merger between a Mountain View operation 8 time zones away from London and make that work and then overtake your rival, I think this is yet another way in which the AI revolution is extraordinary. It's going to go down as a brilliant study and sort of, a merger on the fly.
And Derek, I guess when you look at everything, we ask ourselves day in, day out, and I know the markets do the same, is if you go back to Iran, what was the U.S. trying to do? And I've heard everything. It's like, actually, they're just trying to go after China. This is all part of a big geopolitical race for resources because of everything that's happening in AI. I mean, does it make a difference to the timeline of the war, and therefore, should it make a difference to how markets react today?
I think timeline is hugely important because obviously the longer the Strait of Hormuz remains closed, the restriction on energy supply is going to increase dramatically. So, I think when you look at the way the markets have responded so far, I think it's definitely still very, very contained. Like VIX has gone from 20 to 26. Crude is up 50%, but we're still at relatively cheap levels considering the potential supply dynamic. I think, the stock of crude, which was estimated by the IEA going into the conflict to be 8.2 billion barrels, the highest since just after COVID, I think is helping to contain the energy fallout at this point in time. But if we go beyond weeks, where the markets, I think, are still hoping this will de-escalate, then I think it's inevitable we're going to get another lurch higher, and you get into a range of maybe 120 to 160 on crude. And then global recession risks start to be priced in, VIX goes higher, equities drop, and you get a new kind of, dynamic in financial markets that we haven't really seen yet.
Julia, where's China in all of this? Again, if this is, the big race of our time, then how will they deal with the large, the higher price in oil? And does it all boil down to U.S. versus China?
Well, China is obviously a large energy importer, so it's clearly not enjoying this conflict. Saying that, its asset prices have held up pretty well, and we just had data out yesterday on its exports, 6% up year-on-year in containers going through its ports and the like. It exports 30% of global AI-related goods, so it's still doing pretty well. And we know the Chinese system is built rather differently than Western democracies, and as a result, it's built to last some of these conflicts.
Sebastian?
I think just that 8.2 billion stock figure, 15% of that is China alone. So they have been building in preparation of potentially some kind of risk like this. So they are sheltered, I think, initially anyway.
But when you speak to Demis Hassabis, is he more worried about Chinese tech or his own competitors in Silicon Valley?
Well, he said that the Chinese AI models are only a few months behind the American ones.
Just nothing.
Super fast followers, right? And part of it turns out to be that when you build a really cutting-edge model, like the latest Gemini iteration from DeepMind, it's quite easy for a rival lab to what's called distill the results from that model, and that helps them to build their next model in China. So it's a very close race. It's relevant, I think, that because of the war in Iran, the Trump-Xi summit has now been delayed until May. And to me, that's quite worrying, because the only way we're going to get our hands around the safety risk from AI is if China and the US talk about it. I'm comforted a bit by the fact that in 1962, you have the Cuban Missile Crisis, absolute high point of tension in the Cold War. But in 1968, you have the Nuclear Non-Proliferation Treaty. And so you can go from tension with China now to collaboration on AI safety. I was just in China for 8 days promoting my book there, which is fun, by the way, because they take authors way too seriously. So I was celebrated like a king.
Pulse.
But I mean, I think the serious point here is that the Chinese are beginning to speak about AI safety concerns too. So the Western idea that you can't talk to China about AI safety because they don't care. I mean, I was we're talking to CEOs, Huawei and Financial, Hike Vision, a camera company. I was talking to the top academics in AI, and they're all completely obsessed with AI safety. So you can talk to them about this.
But is it different in the West again? And even, we saw this massive fight between the Pentagon or the Trump administration and Dario Amodei. So at the end of the day, who controls the future of AI? Is it companies, is it individuals, or is it governments?
Yeah, so in one way, my book about Demis Hassabis is a case study of this point, right? Here is a person who is a genuinely, sincerely good person. He wants to make AI safe. He's wanted that since 2010 when he founded DeepMind. But when push comes to shove, if you're in a race dynamic and you're up against other US firms, you're up against, Mistral in France, Cohere in Canada, and then all of these Chinese labs, you can't, as the leader of one single lab, impose a safety caution across the industry. That has to be for governments. And it has to be not just the US, because China has all these labs and China has all this AI, so the US and China have to talk together. It may seem improbable in today's geopolitical climate, but it's going to have to happen.
What does building AGI require? I mean, first, we'll probably have 3 definitions of artificial general intelligence, because it just means different things to different people.
Precisely. The irony is that back in 2009, Demis Hassabis bonded with his scientific co-founder, Shane Legg, at a lecture by Shane Legg on the definition of AGI. This guy wrote his PhD on defining what artificial general intelligence might mean. And yet even DeepMind doesn't really have a clear and consistent story on the definition of AGI, even though it's in their DNA. I mean, I would say that today's Gemini model, it's artificial, it's general, and it's intelligent. Maybe we have AGI, right? I mean, I think it's kind of a pointless debate.
I mean, what does this all mean for markets, Derek? Because we go from crisis to crisis, right? We talk about private credit. I had a good conversation with Lloyd Blankfein yesterday. We talk about also AI, the models evaluation, what it does to labor market. And then now on top of this, you have, trying to decipher even the terms of negotiations, if there's a negotiation between the U.S. and Iran.
Yeah, I think obviously energy intensity in terms of the tech sector, there was a vulnerability there if this was to persist and we were to see considerably higher energy prices. So I think there's a downside risk based on the current geopolitical climate. I think further out, productivity changes, obviously from an FX perspective in terms of medium to long-term valuation is very important. And you would have to assume the US certainly at the moment is in the lead. And if that continues from a productivity perspective, I think investors would expect the productivity gains to be most in the US, and that would certainly be, from a valuation perspective, dollar supportive.
And Julie, again, AI sentiment changes a little bit like we've seen sentiment change on EM. What are some of the correlations that you see?
Well, AI can help, as we said. Experts from some of the EM countries, some of the Asian countries are hit by the energy crisis, but they're also some of the main exporters of AI-related goods. So that can cushion the story in this near-term period of conflict, saying that it'll be interesting to see how the productivity piece plays out, how some of these countries will be able to gain on a relative basis from this. We still think that the demand for diversification away from the dollar remains a powerful force, despite the short-term need for a safe haven.
Does Demis look at the markets at all? Or when he talks about the disruption of all the industry groups, does he see, the markets misunderstanding anything?
When he was in a secret negotiation with Google to try and spin out, and he had all these lawyers working for him, bringing him new drafts of various documents about a potential escape, he would say, I don't want this part of my brain to get any bigger. Stop showing me these legal documents. And I think he feels the same about the markets, frankly. He just doesn't care. He doesn't care about money. He kept on saying this to me when we spoke for more than 30 hours in this little pub near his house in North London. We would go up a kind of rickety staircase and sit there together in this old fusty room with nobody else there, talk for 2 hours, and he kept on saying, I don't care about money, I don't care. And I would say, well, but Demis, you got a lot of money, right? You got all that Google stock. Yeah. Have you moved into a new house? And he goes, no, I got the same house I had in 2014 when I sold my company to Google. I haven't moved. What kind of car do you have? I don't know. I've forgotten what it's called. 9 years old, I think. I'm not sure. He just literally is not materialistic. So markets, all that.
But the problem, Sebastian, is that this started, I imagine, as an intellectual endeavor, right, to make humanity better or worse. But now he's stuck in a commercial race.
Oh, totally, yeah.
Right?
I mean, he needs to have capital to build, enormous compute, all the clusters, all the salaries for the very expensive AI scientists. He has to care about, resources, but Google's got his back. And there is this, I think, the most important relationship in global business right now is the one between Sundar Pichai, CEO of Alphabet and Google, and Demis Hassabis, his AI czar. And because Sundar is providing the resources and he has Demis's back, Demis can go be the scientist and just build this stuff. And that's what he loves to do.
Okay, and we're trying to all figure out exactly what he's building and the impact on the markets. Thank you all for joining us. Julia Pellegrini, EM Portfolio Manager at Allianz Global Investors, Derek Halpenny, Global Markets Head of Research at MUFG, and Sebastian Malaby, Author and Senior Fellow at the Council on Foreign Relations. Coming up, G7 foreign ministers meet in France amid a transatlantic split on the Iran war. We speak to Canada's Foreign Affairs Minister next. This is Bloomberg.
Day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And
I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Now, the wars in Ukraine and the Middle East are expected to dominate today's meeting, of course, of G7 foreign ministers in France. The U.S. Secretary of State, Marco Rubio, will try to sell allies on America's strategy as the group tries to narrow its differences over the war in Iran. Well, let's bring in Ollie Crook, Bloomberg's chief Europe correspondent, who's standing by with the minister. Hi, Ollie.
Yeah, well, we're here at the G7 meeting where the foreign ministers are meeting to try to discuss, well, a great many number of topics, but of course the main one, the elephant in the room, the war in Iran, where Marco Rubio will be arriving shortly. We're very pleased to be joined now by the Canadian Foreign Minister, Anita Anand, joining us here at the sidelines of the conference. Thank you so much for joining us. How close or indeed far are we from a collective view on Iran among the G7 leaders?
Well, this is the subject of our meetings here over the next 2 days. It's the first in-person meeting that the G7 foreign ministers have had since meeting briefly at Munich, and we are going to make sure that there's an exchange of views, as well as to hear from Secretary Rubio, and then to ensure that hopefully we can work towards de-escalation and preservation of civilian life, which is Canada's position.
And there was a statement signed by the UK and a number of others, including Canada was a party to, talking about getting appropriate efforts in place to ease the flow of naval ships through the Straits of Hormuz. What are appropriate efforts?
So let's be clear on navigable waters. The UN Convention on the Law of the Sea and international customary law is extremely important here, and that states that these waters are freely navigable by all parties. And we look forward to the opening of the Strait of Hormuz, and any efforts to block energy shipments as well as fertilizer and other commercial goods is completely unacceptable.
And before we get to sort of diplomatic solution, I'd like to also get an understanding of where you were thinking and your other colleagues are thinking about actual involvement in some way in the military efforts. We heard from Mark Rutte at NATO saying that it's only natural for European and other leaders to have discussions, but that they will eventually be involved in some way with naval assets. Is that your position? Where is that conversation evolving? And is it a NATO question? Is it a member state question? Coalition of the willing? What's the format we should be thinking about?
Well, these are the governance questions, and I will firstly say that Canada was not consulted and we didn't participate, have no intention to participate in the offensive action. In terms of any defensive action by NATO or otherwise, Canada takes such decisions collectively, and in the context of the NATO body, there are 32 member states, and we look forward to participating in a conversation with NATO member states should that arise in the context of the multilateral organization. As you know, Canada is a proponent of multilateralism, generally speaking, and certainly the Prime Minister and I take very seriously collective decision-making internationally.
Do you think that Canada could take an active role in defensive measures? There's been reporting that the UAE, maybe Saudi Arabia, might consider now joining in some part of the military option strikes. This is obviously a close ally of Canada. Would that be a circumstance under which you would join in defensive act?
Well, we're very pleased that Prince Faisal from Saudi Arabia is here at this meeting to have the exchange of views needed. Canada is, of course, heavily engaged in diplomatic efforts. I've spoken with every country affected by the offensive attacks and the retaliatory attacks. I make sure that our diplomacy is very far-reaching, and certainly this meeting here today with Prince Faisal present is going to be able to address further the next steps in the conflict.
And you've brought with you here a document of principles for a diplomatic way forward. What is the architecture there? What does that process look like?
Well, let's take a step back and think about what Canada's longstanding position has been across numerous crises, but certainly in this context, the preservation of civilian life, the assurance that non-belligerent states are not unduly impacted, certainly not impacted by retaliatory strikes, making sure that economic shocks are mitigated, including the opening of the Strait of Hormuz. Those are fundamentally important issues, and they will inform Canada's position and the discussion here today.
And Marco Rubio will be here tomorrow. What are your questions to Marco Rubio? What information do you require from the United States?
Well, I spoke with Marco Rubio on Monday afternoon. We had a lengthy conversation about numerous issues, including the situation in the Middle East. We are very much focused on ensuring the continued dialogue, and I indicated that Canada wants to play a role in this diplomacy to work towards the preservation of civilian life. Canada is a humanitarianist. We have, across conflicts, put forward humanitarian aid. Haiti, Cuba, Gaza, and in terms of Lebanon, $37.7 million announced just a couple weeks ago.
And having spoken to Marco Rubio so recently, do you have a clear idea, a clear picture of what the U.S. endgame is in Iran?
Well, of course, the situation is volatile. We take seriously the words of the President of the United States. At the same time, we want to engage in the dialogue with Secretary Rubio here. And we want to make sure, as I said, that the humanitarian situation is front and center. And of course, Canada stands with the people of Iran. We've listed the IRGC as a terrorist entity under Canadian law. We've sanctioned the Iranian regime as a state sponsor of terrorism, and we will continue to advocate for nuclear non-proliferation.
And in ordinary times, these may not be ordinary times, the G7 would be a format for coordinated action, particularly, say, on oil and energy. Is there going to be a conversation here about potentially deploying strategic reserves in a sort of coordinated fashion, or those conversations in terms of action?
Well, I'm glad you point to the purpose and the utility of the G7, including the FMM, the foreign ministers. This is a multilateral organization, and Canada believes strongly in the utility of multilateral organizations, including in the preservation of global supply chains, in terms of energy, in terms of fertilizer. We believe strongly that the G7 can play a useful role in maintaining the stability of supply chains. That's what you saw at the G7 last year when Prime Minister Carney introduced critical minerals stability in supply chains.
And as ever with the Trump administration, there's always a fear of retaliation for not doing the things that Donald Trump would like, potentially joining in Iran. Is there a fear that there could be a retaliation from the United States? For example, we just had a story today that the Germans are appraising points of economic leverage for the United States in case that does come. Is Canada doing the same thing? Could you see Canada working alongside the European Union in order to sort of defy if that were necessary?
Well, we work closely with the European Union and its member state, full stop. But let me discuss the here and now.
Yeah.
Civilians' risks of life is very serious, and civilian infrastructure also needs to be protected. And Canada will continue to advocate for the protection of civilian lives, the rights of the Iranian people, and the stability regionally across the Middle East, including in countries like Saudi Arabia, UAE, Bahrain, Oman, Kuwait, all who have been negatively affected by retaliatory strikes.
Well, Anita Anand, thank you so much for your time here on the sidelines of the Foreign Ministers meeting here in France. I'll throw it back to you in studio.
Yeah, a great interview with Canada's Foreign Affairs Minister, speaking to our very own Ollie Crook. Thank you, Ollie. Now, coming up, the former Goldman Sachs chief executive, Lloyd Blankfein, warns of a fire risk in private markets. More from our interview next, and this is Bloomberg.
take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
oh boy,
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving someday.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslinda Amin in Davos, Switzerland, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. U.S. President Donald Trump insists that Iran is negotiating and desperate to make a deal, despite Tehran publicly rejecting Washington's outreach and issuing conditions of its own. Bloomberg understands Germany is drafting plans to potentially target U.S. companies if there's another trade spat. Plus, warnings of a potential fire risk in private markets from Lloyd Blankfein, the former chief executive of Goldman Sachs. So a private credit fund managed by Ares Management has posted its steepest monthly loss on record in February. The results provide further evidence of deteriorating performances in the $1.8 trillion private credit market. Now, following in the footsteps of many of its rivals, Ares last week decided to cap withdrawals from the fund to 5% after investors tried to pull money out. Lloyd Blankfein, the former Goldman Sachs chief executive, says the accumulation of unsold private assets on investors' balance sheets is a warning that some may be overvalued and a spark may trigger a widespread markdown. Now, Blankfein, who releases his memoir, Streetwise, Getting to and Through Goldman Sachs, also told us that the U.S. economy is well positioned to deal with any problem.
Today, we're in a moment where the banks are doing well. We're not starting out with interest rates of zero. Interest rates are going down. The balance sheets are not great in banking, but from the U.S., it's lower than it has been. So in other words, the official sector has a lot of tools it could use to remedy a bad economy, to work on it. Doesn't mean it'll be instantaneous, but there are a lot of tools that could be put into service, and the banks themselves are in much better shape. So I'm not saying that there won't be problems, but the problems will not cascade and snowball into a bigger problem is what I think.
So you don't see anything systemic?
I don't see anything systemic, but by the way, I didn't necessarily see anything systemic in the run-up to the crisis, which is why that's the nature of bubbles. Yeah. Everybody sees it in hindsight, but no one sees it in prospect.
Lloyd, how successful have financial markets been in reining in Trump's wilder impulses?
Well, I think I don't think we're reining in. I mean, look, a lot of the stuff that just betraying certain attitudes here, I think some of the actual outcomes and specific policies are quite defensible. It doesn't mean that everybody's liking it, but he's addressing some things that need to be addressed, and then on the other side, he's also, let's say, challenging some norms and traditions and some safeguards and guardrails that that some people include that I even find some alarming from time to time. And so it's a bit of a balancing act. But I think sometimes some of the inconsistencies and media kinds of statements that go out. What's the cliche that's emerged? You take it. You don't take it literally, but you take it seriously.
Okay, and this is for everything that's happened in the price of oil or also tariffs and trade?
Well, things can spiral out of someone's control. I mean, you have something, it's not as if, you can have, somebody can only convey his intentions, and you could decide whether you believe it, and that's really where he's coming from, because maybe there's some inconsistencies. But then there's another level. What if you absolutely knew intentions, but you lose the ability to control these things? You can't manufacture more supply of energy with your intentions. So, things can get out of control. And so, look, one thing when you compare crises and going back, we're in one that's unresolved. So it could get worse. And so, and by the way, this is the one we're in. So it's worse and it's scarier in terms of our attitude and our minds. But if we went back to the same place at the same time at the global financial crisis, that was much worse. But it's hard to be scared of something that's resolved on the shelf in a can, can't hurt you anymore, it's not going to get worse, you're just reading about it. And so we're living with something that you are not just marking yourself to market and how bad is it today, but we automatically extrapolate to where it could go. So we'll get through this also. Look, I joked, I said, that we had the crisis of the century every 4 or 5 years. Whether it was the long-term capital, the dot-com bubble, the Asian currency crisis. We haven't had one in a long time. By the way, that itself is a reason for concern. Because if you haven't had a crisis, it means you haven't had a reckoning. You haven't had a sell in distress, things that have accumulated on your balance sheet that might not be marked correctly. And the more time, the analogy I like to give is you accumulate tinder on the floor of the forest, and eventually a spark will come. But the longer between intervals where there's a spark that sets it on fire, the more that accumulates. We're coming off a period where we had the highest equity markets we've ever had and a very, very favorable financing market. Yet a lot of private equity firms have accumulated a lot of inventory of deals that they've gone into, been on their balance sheet. They're highly incented to sell them, but they haven't been sold. If they haven't been sold in a good equity environment and a good financing environment, how easy it's going to be to sell them. And so why not? Maybe they're marked higher than what you could get in the market. So at some point, there needs to be a forcing function or a reckoning that causes you to come to grips with what your balance sheet really is worth.
But what's the hardest leadership lesson that you've learned that we can apply now? And you talk about this a little bit in the book. Is there, if you know that there's going to be a spark, should chief executives look for the sparks before they're ignited?
But really, I would say look for the kindling, because eventually there will always be a spark. And by the way, a spark that occurs when there's a lot of flammable material on the floor will set it ablaze, but the material wasn't there. The spark would just happen and go by. It'll be something that in a different moment we might not have noticed, but it'll be, now to mix a metaphor, the last straw.
Well, Lloyd Blankfein there, the former Goldman Sachs chief executive, warning of a potential risk in private markets. Much of that risk has been associated with software investment, possibly taking a hit from the rise of AI. Now, let's discuss the challenges and opportunities in the sector with Dean Forbes, who's marking also 5 years as chief executive of the industrial software company Forterra. Dean, so good to speak to you. Thanks so much for coming on. I mean, in 5 years, we've seen a lot. It's been COVID, it's ups and downs, it's tariffs, it's trade. Now it's everything that's happening with Iran and all the twists and turns with AI. I mean, does this moment in time feel different or more difficult than the past?
Well, I mean, it's certainly a difficult moment. As you mentioned, there's mass geopolitical unrest around the world. There's, of course, conflict happening in the Middle East. The debt markets are more volatile than they've probably been for a few years now. So it's certainly a very, very interesting and challenging time. But as we were joking kind of off camera, not to make light of a difficult situation, we've seen these volatilities before, right? As you mentioned, we had COVID in 2020, we had conflict in the Ukraine, we had all of the impact of that from a debt perspective. So it's not the first time we've lived through times and moments like this. So strangely, there is some degree of comfort in having lived through something like this before.
What does it mean for Forterro? So, one of the things that we're trying to explore is actually if you're at crisis number 4, right, in 5 years, for various reasons, are you stronger because you're more nimble, or does at some point, does it really weigh you down?
I mean, to a degree, you build up the muscle and the resilience to deal with these things. The thing that we've been incredibly protected by, and the thing that we're incredibly grateful for, is we support 25,000 mid-market manufacturers of components, the things that go into automobiles, into aircraft engines, windows, doors, and there's a continued demand for those things, which means our end customers have continued to thrive. And it means that we've continued to enjoy an incredible position in supporting them in growing and expanding their businesses. So whilst a lot of things have changed, there's a lot of new threats and things to overcome, that primary dynamic has remained, and that's allowed the company to continue to grow and be incredibly powerful.
Dean, there were a couple of days in February where a lot of the software companies that were listed got absolutely slammed because of worries about AI. Was that irrational?
I don't think it was irrational. I mean, what the markets technically did was they took a moment in time when there were some amazing announcements from some of the giant AI companies, and they just kind of swept those announcements across the software industry in totality. And as we know, not all software is created equal, not all software has the same moats, not all software has the same defensibility to these kind of challenges. So that was certainly an overreaction. But again, we've seen this before, the shift from on-premise into the cloud. We had that similar hysteria then that on-premise companies may not survive. But what did many on-premise companies do? They capitalized on that shift, moved their businesses into the cloud, and companies like Forterro, Oracle, SAP have become even stronger as a result of that market shift. And I don't think there's any reason to believe now that this change won't present the same amount of opportunity for companies like Forterro.
Does it make you change your perspective, though, on how to lead, but also how to look at the business? If something could take market share or actually change the perception or change what you actually do?
I think, look, it's always been one of the primary defenses of a software company that it takes a long time to build and master software. And the advancements in AI have shortened that cycle to build and master software. So that's, of course, something that we need to take into consideration and be aware of. But we have 25,000 customers who are building things, who are making things, who want to remain focused on doing that for their customers. And as they have done for the last 2 decades, 3 decades, they look to us to help them leverage these technological advancements. And that's why it's just an amazing opportunity for us, right? This is a moment in time where we can leverage AI to deliver even greater value to these customers, help them be stronger, and as a result, make Forterro an even stronger company.
Dean, what's your biggest concern right now? So there's a lot of talk because the price of oil is going higher. First, it's energy prices, it's energy costs. That can't be good for business. It's interest rates rising. There's a lot of uncertainty.
There is a lot of uncertainty, but my thing is always remain focused, on the customer. So when things like oil prices start to creep up, as they have done for the last 6 or 7 weeks or so, that translates into increased energy prices, increased prices in transportation, and those things hit our customers and they cause margin compression. So, you need to stay focused on the customer because we need to help them respond and react to that. They don't want to pass those cost increases on to their customers, which means they need to become more efficient, and that's where software and companies like Forterro have a role to play.
What's UK businesses, what's the environment looking like? Is there enough funding, or are people getting a little bit scared of what's happening, so you have less venture capital or investors going in?
The market's certainly more cautious, right? Decisions are taking longer. There's a higher burden of proof to get a decision made when it comes to funding or winning a new customer. There's less money flowing into the ecosystem from an investment standpoint. And there's certainly kind of mass hesitation happening, especially from an investor standpoint. But coming back to the earlier point, if I go back to COVID, as COVID unfolded, investors kind of slowed down and, capital became clogged up in the system. We came through COVID, the new normals got defined, the investment landscape changed a little bit, and then that capital began to flow. And we're just in that period right now where there's a bit of hesitation, Capital is clogging up in the system. We'll find our new normal, and then I'm pretty confident things will resume.
How's morale among staff? I mean, this is, we talk more about leadership. I have a new podcast, which we hope to have you on sometime. But a lot of the focus is actually, as a leader, your purpose is to see the vision, to keep the company safe, but also to motivate people. Is it harder after all the crises that have come one after the other?
I would say this situation is harder on that dimension, for sure, because whilst we've had conflict before, whilst we've had pandemics before, whilst we've had economic uncertainty before, the new nuance here is how AI can impact the placement of staff, how it can impact jobs, how people feel secure in their job and in their role. And that personal element of this hostility is certainly a new one. The fortunate thing for Forterra is we're growing at an incredible pace. So the message to our employees is, as long as we continue that pace of growth, we're going to need more capacity. We're going to need more people, and using AI to allow us to become more efficient is a positive, right? Because we're in growth mode. If the company were not trading so well, and if our outlook was not so good, it would be certainly much harder to keep employee morale high.
Where's that growth coming from? I mean, is it also expansion into either other sectors or other countries?
We've been incredibly focused on the industrial market, primarily in Europe. We continue to be focused in that category. We know it well. We love it. It's a thriving category. But we have acquired and built new capabilities that expand the offering from Forterra. So that's been a real source of growth for us. And even with the emergence of AI, I expect us to continue to be hugely acquisitive and continue to grow.
Okay, Dean, thank you so much, as always, for coming on. Dean Forbes there is the Chief Executive of Forterra. Coming up, we'll talk to Rachel Elahus, the Director General of RUSI, as the White House insists that peace talks with Iran are ongoing to end the war. That's coming up next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Now, President Trump is insisting that peace talks with Iran are ongoing, despite Tehran's public rejection of Washington's outreach and issuing conditions of its own.
We settled 8 wars, people sort of forget, and we're winning another one. I tell you, we're winning so big, nobody's ever seen anything like we're doing in the Middle East with Iran. And they are negotiating, by the way, and they want to make a deal so badly, but they're afraid to say it because they figure they'll be killed by their own people. They're also afraid they'll be killed by us.
Now, for more, we're joined by Bloomberg Horizons anchor Jumana Bercetchi. Jumana, so what's the latest on this diplomatic efforts from the U.S. side?
Well, Francine, as we reported yesterday, the U.S. had submitted a 15-point draft proposal to Iran delivered via Pakistan. And we spent most of yesterday waiting for the Iranian response to see whether they would be inclined to return back to the negotiating table, to perhaps yield to some of these demands. But the message that has come through from Iran is still one of defiance. They do not seem to be in the mood of compromising and, in fact, set forward their own counter demands. These are 5 terms that appear to be very, very far from what the U.S. are asking for. And some of the terms from Iran include asking for war reparations from the U.S. because the U.S. started this war in their minds. They're also saying that they would like to see assurances that the U.S. would never attack Iran again. And then one further point, which is becoming a key sticking point as it pertains to this war, is they claim that they have sovereignty and a right and ownership over the Strait of Hormuz, which of course is an unacceptable outcome for not just Gulf states, but more globally, the global energy industry. To have one country have this much influence over who passes through the strait would be an unacceptable outcome. So we are getting closer and closer to that 5-day ultimatum deadline. Remember, President Trump pushed back the deadline by 5 days on Monday. That works out to around Friday evening, middle of the night over here in the Middle East. And at the same time, it is day 27 of this war. We continue to see ferocious attacks from both sides. The Israel and U.S. joint military operations continue around central parts of Iran. Iran continues to strike back at Gulf states. More interceptions going through. And then also remember that the U.S. is also deploying more assets to the region, and the expectation is that these Marine Expeditionary Units will arrive. The first batch will arrive in the coming days. So there is some nervousness going into the weekend as to what exactly this next level of the war could mean, whether it's a de-escalation or actually further escalation.
Giovanna, thanks so much. Bloomberg Horizons anchor Giovanna Bersecci. Now, for more analysis, Rachel Elahus, Director General of RUSI, now joins us. Rachel, I mean, if we try and make sense of it, I'm not sure what's the likelihood. First of all, thank you so much for coming on, but what's the likelihood of some kind of ceasefire or diplomatic solution?
Well, it's really positive that there do seem to be some sort of talks going on. I can't say that they will end in a ceasefire, much less a peace deal, but it does appear that both sides are talking through the intermediary to Pakistan to try to stabilize the situation, both in terms of the strikes, but also in terms of the markets. Now, whether this then produces a lasting result, it remains to be seen. The 15-point plan is rather maximalist, and if Iran didn't agree to that before the strikes, why would it then suddenly change course and agree to that then?
But Rachel, what is the solution? Because if you're the U.S. right now, or if you're Iran or you're the Gulf states, you have a more hardened Iran. And if you're Iran, this is a matter of survival.
Exactly. Well, let's look at the different actors. Yes, for Iran, it's existential. So they have every incentive to keep going and to assert their control over their nation and to make sure that regime change doesn't happen and that they retain control of the straits. If you're Israel, you have a similar incentive to keep going and make sure that Iran is not a threat to Israel or the region. But when I look at President Trump and the incentives in the U.S., they seem misaligned. I think President Trump's going to want to end this war as diplomatically as possible and as quickly as possible. He's under pressure, not just from the Democrats, but also the Republicans. People are feeling it at the gas pump. They're going to start feeling it on the shelves as consumers. And so these incentives are misaligned. So for him, I think a stabilization of the situation that stabilizes the markets, whereby he could claim some limited military victory and then stop short of political change, would probably be the best outcome they could hope for.
But it is a question, I mean, can the Gulf states and can China afford to have an Iran that could actually flare up and again push the oil price to 120, 150 at any time?
I don't think they can, and I believe that's why you see countries like Saudi Arabia and the United Arab Emirates actually saying keep going, because they can't live with this unstable situation on their borders. China is a very interesting dimension. We haven't talked about the links between what's going on in the Middle East and China, but we haven't thought about the eventuality that Iran might call in other friends. North Korea, we saw the long-range missile strikes apparently emanating from Iran, but what if they emanated from the Indo-Pacific region? That would really be an escalation. So Iran still has tools and cards that it could play to escalate this conflict.
But is North Korea strong enough to be able to support Iran in this endeavor?
It's unclear, but I think there is a high degree of cooperation around the missile technology, and it has strong incentives to make sure that it has that partnership with Iran as well as Russia.
I mean, it's very clear that Europe doesn't want to be drawn into this conflict. Will they have to eventually, unless there's, again, a solution where the price of oil goes down quite significantly?
Yes, and I believe Europe has already been drawn into the conflict, and you've seen a change in European positions since the start of the war, where there was either silence or tacit support without wanting to get involved themselves. But a country like the United Kingdom, for example, has very strong interests in the region, whether that's its partnerships with the Gulf allies, its citizens that live in the region, or again, the price of oil that affects the price of things here in the United Kingdom. So whether they like it or not, I think they've been brought into the war and at a minimum have to participate in a way that is defensive and contributes to the defense of those allies, partners, and citizens in the region. But more importantly, as you're hearing the requests from the U.S. come in, they do have an obligation to try to do what they can diplomatically and in support of the U.S. to try to reopen the Straits of Hormuz.
I mean, what's the likelihood of regime change in Iran? I mean, it actually seems really far-fetched at the moment.
Yes, to me, that still seems like a distant prospect. No doubt the regime is damaged. Economically, we had a lot of pressure that was, pushing for change even before the strikes. That is still there. If anything, that will be magnified given the damage to their economy and their inability to get that oil out with any sort of speed. They've also created enemies among their Gulf allies. And so I think that's a very difficult position to be in. And, 80% of the population, if not more, still want some kind of change. So we're not going to see regime change overnight. But, and in fact, in the short term, we might even see a hardening to try to retain control. But longer term, let's hope that all of those pressures internally from the population, the region, and the economy will lead to some sort of positive change.
Rachel, I mean, if you look at the two main questions for Iran, I guess can you control the Strait of Hormuz and still being at war or certainly fighting Iran? But the other one is also their nuclear program. I mean, will they now want nuclear arms that they'd said they'd forego?
Yes, I mean, it's hard to know how much their conventional capabilities, like the drones and the ballistic missiles, have been attrited. It seems like a lot of the military objectives on the initial target list have been achieved, and so there is some measure of success there in degrading those conventional capabilities. But as we read yesterday, Russia is stepping right up to replace some of those drones that could continue to hold the straits at risk with drones and long-range missiles. The nuclear program, we haven't heard a lot about that, and we don't know where those uranium stocks are. So as far as I can see, that ability to pursue nuclear capabilities still remains intact. Now, that might be one of the objectives with the U.S. Putting the Marine Expeditionary Force and the 82nd Airborne into the picture. They would have the capability to go in and see a bit more closely what was going on in the ground and maybe find some of those uranium stocks.
Rachel, very briefly, I mean, does this war also show how warfare has changed because of these small, cheap drones?
Yes, it does show how warfare has changed, and we saw that first in Ukraine, and now we're seeing those lessons and those operational lessons and the use of the drones instead of these higher platforms really take off. And for nations that have these very expensive platforms like aircraft carriers, ground-based air defense that cost tens of thousands of dollars for each missile, we really have to think about the asymmetry there in terms of using these expensive systems or putting these expensive systems at risk when you've got these lower end attritable drones.
Rachel, thank you so much. As always, Rachel Ella, who's their Director General of RUSI. Now, up next, it's Bloomberg Surveillance, and this is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat. There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
There's so much noise in the world. It's very difficult to be definitive around this.
I'm worried about what the negative consequences are if this conflict continues to go on.
What the equity markets are saying is that this will not metastasize into something which is larger.
We are viewing U.S. equities as a bit of a safe haven in this environment.
The bar for bad news is obviously exceptionally high.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, stuck in talks about talks.
Following President Trump's powerful threat on Saturday evening, it was made clear to the United States that Iran wanted to talk. President Trump is willing to listen. President Trump does not bluff, and he is prepared to unleash hell. Any violence beyond this point will be because the Iranian regime refused to understand they have already been defeated and refused to come to a deal.
The White House insisting the diplomatic effort is continuing as Iran is drafting plans to introduce a toll to transit Hormuz. Investors are caught in a headline-driven market whipsaw. Oil advancing once again this morning.
This is a faith-based market. Do you believe one headline? Do you believe another headline? How do you prepare yourself for the next headline that could come down the pike? Every day this goes on, though, the upside gets smaller. Every day this goes on, inflation expectations are going to creep higher and the growth expectations are going to dip lower. And so ultimately, at a certain point, you wonder how much people's impulse to buy the dip starts to become limited.
Speaking of the whipsaw, this from Axios just moments ago. Check out the story. The Pentagon developing military options for a final blow in Iran that could include the use of ground forces and a massive bombing campaign, according to 2 U.S. officials and 2 sources with knowledge.
This just highlights how much we don't know about the fog of war. There was also reporting overnight about how the bulk of Iran's bombing sites and missile launchers have been damaged. There are questions about what the U.S. and Israel attacks have actually accomplished in Iran, what their capabilities are. It just doesn't take much to disrupt shipping, and this is the difficulty. It takes one ship, one dinghy, one drone, and that is the problem that people are facing this morning.
Which is why everyone is stuck between a rock and a hard place. Which way do you turn? We've talked about facing down substantial two-way risk. BlackRock, not pricing in the risk. That's the BlackRock view. CIBC, Chris Harvey, Trump. The Trump put is struck. It's time to put money to work.
Honestly, you've got Morgan Stanley saying the same thing. You've got JP Morgan saying also by the dip. You have Vinu Krishna over at Morgan Stanley coming out and actually upgrading his forecast. Right now, buy the dip has been a successful trade pretty consistently throughout the board, especially when there is geopolitics. this time, when you speak to energy strategists, we've been talking about this for a couple of weeks now, they're sounding a very different note that is much more similar to what we're hearing from BlackRock than, say, some of the more bullish streets out there.
Equity futures right now in the S&P negative here by about 0.8%. Coming up this hour, George Goncalves of MUFG with markets very much on edge. Marine Corps veteran General Robert Walsh as strikes continue in the Middle East. And Michelle Meyer of MasterCard with the consumer very much under pressure. We begin this out with our top story. The US and Iran at odds over peace talks as attacks press on. Bloomberg's Jumana Basechi joins us now from Dubai for more. Jumana, welcome to the program. Just what is the status of talks? Where are we?
Yeah, well, it doesn't appear like the talks are actually happening, John. And if you go by what the Iranians put out yesterday, they don't seem to be in the mood of compromising at all. They set out their own 5 counter demands of what they would be looking to enter into discussions to end the war. And some of those terms are really far away from the starting point of the U.S. discussions that they had even prior to this war. But they include things like assurances from the U.S. that they'll never attack Iran again, war reparations that they're seeking to get from the United States as well. And then the other one, which is a new point that has obviously emerged over the course of this almost month-long war, is they are saying that they have a right to sovereignty over the Strait of Hormuz, which is obviously an unacceptable outcome for not just Gulf allies in the region, but more broadly for anyone involved in the energy market. So the terms are unrealistic and a non-starter as far as the U.S. is concerned, and it seems very unlikely that these direct negotiations or even indirect negotiations are actually going to yield anything. At the same time, the clock is ticking. Remember, at the beginning of the week, Trump pushed back that 5-day ultimatum. We're getting closer to that, so that coincides with around Friday evening over here in the Middle East. And at the same time, we have been reporting about extra military assets and the marine expeditionary units that are arriving to the region. There are 2 units on their way. The first batch is expected to arrive in coming days, which means the Trump administration policy at this point is almost to simultaneously look to de-escalate while at the same time looking to potentially escalate over the coming days, given Iran are not showing any inclination to return back to the negotiating tables. So I think there's a real fear this weekend that we could once again find ourselves in a situation where military operations have once again intensified. And just as a reminder, it is day 27 of this war. The strikes, the military operations are ongoing. If anything, IDF have intensified some of their attacks over central Tehran and other parts of Iran overnight. Iran has continued to retaliate against Gulf states. Some sirens went off in Bahrain, some more drones intercepted in Saudi Arabia, and even the first deaths reported in the UAE in over a week now because of intercepted missiles. So we're still very much in the midst of the war, and a lot of nervousness heading into this weekend, and the real possibility that this could once more escalate. And in return, Iran have also threatened to strike back against civilian infrastructure at Gulf states.
Jumana, appreciate the update. Stay close as always. Bloomberg's Jumana Basechi out of Dubai, leading our coverage so far this morning. There's a lot hanging on talks over the next 48 hours.
And a real question around what de-escalation looks like. I mean, if you de-escalate, does that mean a ceasefire? Does that mean a reopening of the Strait of Hormuz at a time where Iran is saying that essentially they have ultimate control over this key passageway?
Let's get to the view on Wall Street this morning. George Goncalves of MUFG writing the impact from the war will likely turn out to be even more damaging than the tariff shock, especially considering that the US jobs market and consumers are already on shaky ground. George joins us now for more. George, good morning.
Good morning.
Let's start with Lisa's World, the auction. Soft 2-year, soft 5-year, 7-year auction coming up a little bit later. What do you think is behind the weakness in demand for US government debt right now?
Look, I think it's a repricing that's happened globally on the rate side. The US Treasury market really lagged everything else. And this sort of concern around like what is the new steady state for interest rates? And heading into end of the month, end of the quarter type environment, these auctions usually do well. And the fact that they're under pressure does kind of show that there's been some sort of kind of buyer pullback.
Mohammed Al-Arian wrote in the FT earlier this week about Gulf flows and the importance of the Gulf as a source of capital, not just a source of energy. Is something happening with those Gulf flows in respect to what we've seen so far in the auctions?
Look, it's hard to tell with public data and just where we stand things right now. In general, foreign flows, could be impacted, the longer this persists, and that's really the big issue here.
Is there also a question around institutional credibility? What kind of fiscal response there's going to be to this? I've noticed that a lot of the increase in benchmark rates in the U.S. have come from real yields, not at all from inflation expectations. Yeah. What's the read-through in terms of what the appetite for debt is internationally?
Yeah, absolutely. So yeah, that's a great point. The fact that we've seen real rates, especially out beyond the 5-year point in the curve. So the 10-year and the 30-year has largely been a real rate move, potentially capturing this sort of fiscal concern. We've been here before. We've seen this before, like in times past, when there's a risk of more supply coming down the pike. The bond market does discount it, but we've also seen the 2-year sell off a decent amount. So we've seen a level shift higher that's also infiltrated out the curve. I think it's early days, but yes, I am concerned about the fiscal outlook in general. I'm usually more of a fiscal hawk than more of a central bank dove, but I do think that it's more inflation and then the fear that we're going to have to address this with more supply down the road.
The reason why we're focusing on the auctions is because it's the front lines of real concern that we're seeing that hasn't really been represented through broader markets. There hasn't been this sort of capitulation to the fear that we can represent on any given day as we try to extrapolate out the story. Yes. Why do you think there hasn't been that sort of fear trade, that sort of washout that so many people have been talking about?
I mean, the 2-year going from 3.4 to close to 4%. I mean, that's pretty much, I think, as qualifies as a washout. I think that's a pretty big move and really repricing, realigning positioning. If your modus operandi from this point forward until we get some sort of conclusion on this conflict is to trade small and to be very tactical, it's hard to really come in with conviction.
Committing capital in this market is almost impossible. I think that's been a feature of this week, not just around this table, but for a lot of people in this market, Bramo. After what we saw earlier this week, particularly on Monday morning, this is a really difficult moment for a lot of people. Not just the economic backdrop, that's shaky enough. Things are fragile at the moment. But going into the weekend, not knowing which way this can go, when the risk on either side is so large, I'm not sure what you're meant to do in this moment.
You're meant to sit on your hands and try to take long-term positions, which is the reason why you see people not have conviction. Right now, you're talking about two-sided risk. There also is no way to get an edge. The whole idea, and this is why I say it's playing blackjack or it's playing slot machines. It's not playing poker where you can kind of gauge and calibrate the potential probabilities. How do you have any sense of that, especially if you think maybe the other guy has a better edge than you do?
Have you ever seen it like this before, George? You're an experienced guy. You've seen many markets, many market regimes. What's this one?
Yeah, I mean, it's unique. It has a lot of different elements to it. I've always thought, down the line, after years of accumulating all the debt that we've had, after really kind of relying on governments to be like the real backstop of everything, that ultimately would come down to something like this. It becomes geopolitical, where this is the new chess game that we're playing.
This is different, though. Central banks don't seem to have a role in this moment. We're used to that, and that's why I think what Jeff Curry of Carlyle said on this show just last week is so important. You can't print molecules. You can't print barrels. The central bank backstop, the anchor, isn't there for this market. This is different, no?
No, clearly. We don't even know the full extent of the shockwaves that are still coming down the pike from the closure of the Strait of Hormuz, right? I think that's the unusual optimism that somehow it's all going to turn around when you can't just turn on a light switch.
And Iran is making a major effort to formalize what essentially they're trying to set up at the moment, which is charging people to use the Strait of Hormuz. And if you think this is just a negotiation right now between Iran and the United States, you're mistaken. You've got nations across the Gulf who are not going to be interested in tolerating any of that as some kind of formalized structure over in the Middle East.
Which we've seen, for example, Saudi Arabia and the UAE saying that there are certain red lines, that they aren't going to be patient forever, as Jumana has reported, that they could join the effort against Iran. What does a ceasefire look like? What does a de-escalation look like? We keep coming back to that. How far away are we from things going back to the way that they were?
Equity futures right now in the S&P, just off session lows. We're negative by 0.7%. George, it's good to see you, as always. George Concalves there of MUFG. There is a bond auction coming up later. We'll talk more about that. We'll get Lisa's thoughts on the story. 2s, week, 5s, week, 7s, a little bit later on this afternoon. Let's give you an update on stories worldwide with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Good morning, John. The Pentagon is reportedly ramping up military options for a potential, quote, final blow in the war with Iran, according to Axios. The plan could include the use of ground forces and a massive bombing campaign. President Donald Trump and Chinese leader Xi Jinping planning to meet in Beijing on May 14th and 15th. Trump was due to visit China next week, but postponed his trip to focus on the war with Iran. And travelers are facing the longest wait times on record, with some stuck in airport security lines for nearly 5 hours. The partial government shutdown has left the TSA without funding for about 40 days. Republicans and Democrats remaining deadlocked over disputes on immigration policy. That's your Bloomberg Brief. John?
Yeah, hi, thank you. I've got a friend, works at Bloomberg. Got a flight at 6 a.m. from LaGuardia. And I was watching the social media account of that individual. They got there at 3 in the morning, thinking that that would be enough time to avoid the lines. And the line is incredibly long already.
The response? Delete vacation. I think I'll drive. Right. I think increasingly people are saying, you know what, I'll meet you in a month. Let's just postpone this meeting.
Who is going to want to fly? Use any of the airports with the lines that long? More on that story a little bit later. Up next on the program, talks about talks.
Nobody's ever seen anything like we're doing in the Middle East with Iran. They are negotiating, by the way, and they want to make a deal so badly, but they're afraid to say it.
Up next, General Robert Walsh of Academy Securities, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Equity futures just off session lows. We're negative by 0.6% on the S&P. On the Nasdaq, we're down by 0.7. In the bond market, yields are higher across the curve. 10's up by 4. And once you've seen those two boards, you know what this one looks like. Crude higher by 3%. 93 on WTI. Brent crude this morning pushing 106. Bramo just counting down to that self-imposed deadline into the weekend.
If there is some sort of re-escalation, then all of a sudden there becomes a material risk of further oil supplies getting actually destroyed, and that the plants themselves, and that I think is the real concern. At what point you're talking about years to bring some of the supply back online?
Brent crude right now 105.61. Under surveillance this morning. Talks about talks.
Nobody's ever seen anything like we're doing in the Middle East with Iran. We are decimating. They've got no navy. They've got no anything. They are negotiating, by the way, and they want to make a deal so badly, but they're afraid to say it because they figure they'll be killed by their own people. They're also afraid they'll be killed by us.
So here's the latest this morning. The White House doubling down, claiming peace talks with Iran are ongoing. Tehran rejecting the latest U.S. proposal and offering conditions of its own. Bloomberg's Ollie Crook joined us now from the G7 foreign ministers meeting over in France. Ollie, good morning. What's on the table into the weekend?
I think for the G7 foreign ministers who are gathering here, we just spoke to the Canadian foreign minister. This is really a fact-finding mission in their conversations with Marco Rubio, who will arrive here tomorrow morning to try to establish a few facts. Of course, there's the great question about the U.S. war aims, what the next steps are, potential coordinated response in order to dull the sort of influence of energy, the energy crisis we're feeling in ordinary times, John. The G7 would be the kind of format where you discuss potentially petroleum reserves coordinated across all of these nations. But we are, of course, not in ordinary times. I think for the Europeans also to quite have an understanding of what they envision, what the Americans envision a European role could be here. We've heard from President Trump that he'd like some help in potentially opening up the Straits of Hormuz. He's pulled back on that. Marco Rubio tends to bring sort of practicality to some of these broader initiatives from the United States. So I think that will be the focus here. And of course, trying to keep the U.S. on side on the question of Ukraine and Russia. There's been a lot of reporting recently, John, about the intelligence that's been shared by the Russians to the Iranians, potentially delivery of drones and hardware to the Iranians. So that will all be in focus here, John.
Ollie, looking forward to your coverage of the story on the ground in France. Ollie Crook there. This could get awkward for Rubio. This from the president just moments ago out on social media. NATO nations have done absolutely nothing to help deal with the lunatic nation, now military decimated, of Iran. The USA needs nothing from NATO, but never forget this very important point in time.
Okay, Marco, go negotiate with them.
Go have fun.
Have a great time, and I hope those discussions are fruitful. This comes also with Germany talking about ways to get leverage in their next negotiation with the United States. Clearly, Europe very concerned about how to deal with President Trump's United States of America.
So this is how the diplomatic chessboard is set up right now. Secretary Rubio essentially heading to France. You've got J.D. Vance, the vice president, reportedly preparing to make his way to Pakistan for talks. And then you've got military troops reportedly on their way to the Middle East. So you could have troop buildup, several different talks in several different places, and a lot of options for the president, who, according to Axios, hasn't made his mind up.
And this is a reason why markets are really getting mixed signals. It's unclear who exactly is going to win out at the end of the day. And there is a schism right now in the MAGA movement about how to proceed, how involved to get this. It is not popular to put boots on the ground. Some people saying there isn't another option to get the Strait of Hormuz open. And this is the setup heading into the weekend.
Let's get to the options. Anne-Marie joins us now from Washington for more. Anne-Marie, good morning.
Good morning, Jonathan. And to make that G7 meeting potentially even more awkward for Secretary Rubio, the Washington Post is reporting this morning that the Pentagon is also weighing moving some hardware that has been used in Ukraine to the Middle East, because, as you say, they need options. And to discuss those options, we're now joined by Lieutenant General Robert Walsh of Academy Securities. He's been a friend of the show and someone who can give us some insight on actually what this could mean if the president were to send these troops on the ground. Axios is talking about a, quote, final blow. And a lot of this says to me, when you look at some of these options and some islands they would want to take, it would really be about controlling the Strait of Hormuz. Given what we know about what kind of personnel is being sent to the region, how would they actually go about doing this?
Thanks for having me today, Marie. I think, it looks like what you're trying to do is bring as many options on the table to try to escalate this, to try to end this. It's in the Trump administration's interest and the world's interest to end this as quickly as we can. The pace that we're going, the U.S. and the Israelis have had an air campaign that kind of dominates the air domain at this point in time. But now the next goal is to open up the straits. And to be able to open up the straits, they're not going to probably be able to do it by air alone. They're going to need maritime capabilities. And then when you introduce ground capabilities, taking key terrain is a key part of what the U.S. military can do with forces like coming from the 82nd Airborne or these Marine Expedition Units. In fact, one of the main missions of these Marine Expedition Units are to seize advanced naval bases and seize and control choke points. And seizing key terrain is a key military objective, even in today's style of warfare. Now, obviously, they're going to have to be protected to be able to go in there and have all the capabilities to do that. But seizing terrain or the threat of seizing that terrain can drive the behavior of the enemy. And I think that's what they're hoping to do by introducing them, drive them closer into the negotiations to try to bend to the U.S. will in those negotiations, or escalate this to try to bring this to an end.
Well, if they're going to hold some of these key assets to open the strait, how long could these kind of individuals hold it? Because the regime will likely keep fighting on. Does this mean that we're going to have to relieve some of these people, and this could last months or maybe years?
I think the hope would be to bring them in seize that key terrain so the Iranians can't use these. A lot of these locations they're using for missiles, drones, but a lot of these fast attack boats that they've used in the past, and it's hard for intelligence to know whether we've gotten them all. So sometimes you have to go in there and really look around and be able to seize things to be able to make sure that they don't have that capability, or if they bring it out, you're right there to whack them. So I think part of that is bringing them in, and if you brought them into one of those islands, you may put them in there and protect them with air cover, maritime cover, but you may also insert them for a while. It could be go in there to seize oil, gas, refueling capabilities, shut down the piers, those locations, and you could extract out also, and then put in some type of blockade that would stop, you know, the Iranian shipments going out, but you now have stopped them from being able to operate from those locations.
You mentioned this idea of escalate to de-escalate. Do you think this would harden the regime, or it actually would push them to the negotiating table?
It's very difficult to see with this regime. You know, you go back to World War II and what it took with the Japanese, and you go back with the Germans and how much it took to finally bring that war to a conclusion. You know, in this case, this is even a more fanatical regime. So the hope would be that you can escalate this so much that they feel so much pain that they look for some way for an out where they can get to some type of ceasefire where they could claim domestically some type of victory, because I think at this point in time, the regime change is not going to happen by military action, not unless we marched on Tehran, which there is no intention to do that. So I think the capability now would be to try to take the military objectives that we set out, and then now look to see what the people will do over time. And it may not be in the next weeks, it might be months, it might be a couple years.
Can the U.S. do this alone?
I think what the president's been trying to do, I think on the taking the straits, I think that's something that we could absolutely do with the forces that we've got lined up. But I also think keeping the straits open by escorting ships through there, having air defense capabilities, so we start escorting commercial shipping through there. The best thing we could do is to build a coalition, and I think that's what the administration's trying to do. But a lot of the countries, they all have different requirements. We saw that in Iraq and Afghanistan over rules of engagement. Everybody had their own kind of sets for what they were comfortable with. This would be some countries, like maybe the British, would like to come in and operate with us and how we operate. Others would wait till the conditions would be more set, where they would have less risk, but they would be part of this coalition to open up the straits. But this actions we're doing now to escalate with the threat of using ground forces is all part of opening up the Straits of Hormuz, which is a key part along with getting the nukes and stopping the nuke growth.
Absolutely. That's where all the oil right now, this key chokehold. Thank you so much, Lieutenant General, for your time this morning. Jonathan, of course, that was Lieutenant General Robert Walsh. What's so interesting is when you talk about the Strait of Hormuz, what the Iranian parliament right now is discussing is basically making this passage for a fee. And we already know that one vessel that went through had to pay $2 million in order to get their cargo safely through the strait.
Anne-Marie, appreciate the update down in Washington, D.C., which is why we've said already this morning that this is not just about the U.S. and Iran anymore. If Iran is attempting to formalize what Anne-Marie just described, you're going to have some nations across the Gulf with a few things to say about that.
Can you allow Iran to become essentially a superpower right now with the control of one of the main waterways in this world? That is the question.
Brent crude up by 3%, 105.50 on Brent this morning. Up next, Wei Li of BlackRock downgrading equities as the war takes a toll.
we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Know how market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Sometimes the price action is so volatile, your head's spinning, you forget where you are. On the week so far, through Wednesday, coming into Thursday, we're actually higher by 1.3%. Close out the week at these levels, one of the best weeks we've seen since early January. So there you go. Things can change a lot in the next 24 hours, that's for sure. Equity futures on the S&P pulling back by 0.6%. Likewise, on the NASDAQ, we're down by 0.7, down 0.9 on the Russell, with higher bond yields this morning, 2s, 10s, 30s, yields up across the curve. We're looking out for a 7-year auction a little bit later after soft 2s and soft 5s over the previous 2 days.
Those two auctions rhymed in the sense that the bid to cover auction was the lowest going back to 2024, and dealers took down the most going back to 2022. How come there is this lack of appetite for U.S. debt? Is it because of concerns about inflation? Is it concerns about the fiscal response to any kind of crisis? Or is it a sense that people just don't know where to put their money right now? So they're playing whack-a-mole with the headlines. It's really curious. Watch the $44 billion of 7-year notes sold today.
So there's a lot of reasons, and you've outlined a few. The one I'm paying attention to, this is the one I want to see come together, try to understand. There's obviously domestic internal budget pressure at certain countries around the world right now, in Asia, in the Middle East. And I just wonder how that's going to shape foreign flows in the next several months. That predictable demand that might come from those sources, how it might be shaken up by the decline in crude revenue in the Middle East because they can't get the barrels out, and the increase in crude imports for Asia struggling to get the barrels in.
A great example of that is gold. The idea that gold prices have gone down as central banks in different parts of the world have sold gold in order to raise resources. You talk about the Middle East. How much are Saudi Arabia and UAE investors really going to continue to go into U.S. assets? This has been a linchpin of a lot of the investment for a lot of the tech build-out, let alone U.S. treasuries. How much does that start to wane as this conflict is ongoing? Some people say, well, they could gain more on the other side if there is a good outcome. You know, this is going to be a question, and a real question, especially given an appetite to diversify for some of these nations away from the risk that they hold currently.
I thought the piece from Mohammed Al-Arian in the Financial Times earlier this week was really quite prescient on Gulf flows. The Gulf is a source of capital, not just a source of energy and what it might mean for financial markets in the coming weeks and months. As we can't get down to the opening bell with crude advancing, upending some of those moves in the bond and stock market. Let's get you some single names and morning movers. Yahara has more. Hey, Yahara.
Hi, John. It's a familiar pattern playing out when investors start to get uneasy about the situation in Iran, especially with conflicting signals from both sides. You start to see gold and silver sell off. Gold retreating today after a 2-day bounce, and that is pulling down the mining stocks. So you have names like Hecla Mining down 3.9% in the pre-market. Moving on to memory chip stocks, they are extending their sell-off. SanDisk down 3.4%. Micron also in the red after Google introduced a new compression technique that could cut memory needs for AI models by as much as 6 times. So, of course, that is raising concerns about future demand, while others on the street are saying greater efficiency will only increase usage over time, referring to Jevons model. But today, investors choosing to price in the risk. Plus, these names have run up so much, so makes sense on a risk-off day like today. And we end on a small stock making a big move. Olaplex soaring 50% in the pre-market on some deal news. The company Henkel, a German company, agreeing to buy the hair care brand for $1.4 billion. John?
Yahara, thank you. Thanks for the update. More from Yahara a little bit later. On our radar this morning, Iran rejecting the US ceasefire plan and continuing attacks on Israel and Arab states in the Gulf. Tehran offering its own conditions for a truce, including reparations for war damages and authority over the Strait of Hormuz. Elsewhere, a Turkish-operated tanker carrying about 1 million barrels of Russian crude hit by drones in the Black Sea near Istanbul. Turkey's transport minister saying there were no casualties or spilled oil. And finally, the Ares Strategic Income Fund posting its steepest monthly loss on record last month. The fund capping withdrawals of 5% early this week following a surge in redemption requests.
This feeds on the whole private credit concern story. Just to sort of have a to be sure here, the decline that we're talking about in February was 0.68%. This isn't exactly an 8% drawdown or even a 15% drawdown or even a 3% drawdown. So at a certain point, you've got to frame it in the context that these funds just haven't really seen losses in their recent iteration. There has been a golden era for private credit for so long that no one has experienced the downtrend of the cycle. That's the reason why people are looking and saying, what exactly are we looking at? Are we looking at the end of the cycle and some sort of collapse? Are we looking at some shakeout, particularly tied to software names, which accounted for about a third of the portfolios of a lot of these private debt funds?
Also hard to really frame the amount of redemptions we're actually seeing right now and how many of them are real or not. And what I mean by that, we touched on it earlier on this week, if I know that whatever I request, I'm only going to get half, I'm likely to ask for double. And I wonder just how much of that we have seen over the past few months.
It's the reverse side of allocations to debt sales. People put in twice, 3 times as much, and that's the reason why a lot of the investment bankers say it was 5 times oversubscribed, because they know they're not going to get the allocation that they're looking for. A lot of questions around this story. When you talk to people in the market, it doesn't seem like there is crisis type of alarm bells ringing here. And you could see that by the fact a lot of people went into software names in the past couple of weeks as other people were distracted by what was going on with the Iranian war. That said, there is a fragility here. And should there be some sort of economic downturn, people point to this area as evidence of a weak spot that could potentially percolate out into the broader economy.
Without a doubt. And it's headline after headline every single morning on this program coming out of private credit. Let's turn to global markets, whipsawed by conflicting signals from the US and Iran. Wei Li of BlackRock writing, we're dialing down tactical risk for now. We turn neutral across equity markets because overall risk asset pricing is not consistent with the shock implied by energy markets. Wei joined us now for more. Wei, welcome to the program. This is something that a lot of people are talking about, a shock in energy and how to price it in equities. What suggests to you that we're mispriced?
Yeah, so this is how I'm thinking about it right now. The risk feels a bit asymmetric at this moment. So if we have a peace deal, then we could have a relief rally in markets, but U.S. equities are just over 4% from the beginning of the conflict, just how much room there is for that relief rally to go. On the other hand, if we don't have tangible evidence of actions that could shorten the duration of the disruption, and right now we don't, then current risk pricing is not consistent with the doable disruption that energy markets are pricing right now. So our energy investors are telling me that we have already lost about 10% of global oil supply, 20% of global LNG supply. Now, driving this inconsistency in risk assets, especially equity, the asset could be this buy the dip flow dynamics, right? So before I just came on, I was using the Bloomberg Ask B function to pull up the flows going into US equity ETFs. Is a really easy function. And actually the flows has been going up since the beginning of the conflict, even though sentiment is clearly plummeting. And I think that has been one big reason behind the inconsistency in market pricing. And because of this risk asymmetry that I just talked about, we have flattened equity directional exposure to neutral while leaning into thematical themes. So for example, no matter what happens from this point on, as a result of the events in the Middle East, every company, every government globally is going to be very focused on energy security, energy independence, and also supply chain and infrastructure security. So these are the themes that we're leaning into whilst being directionally neutral on equities right now.
Wait, are you suggesting then there will be a premium, an additional premium in the price of commodities due to stockpiling beyond whenever this situation concludes?
Well, we already see some stockpiling activities by countries, and countries are putting in restrictions on energy use already as a result of the supply chain disruption. So, Jonathan, you may remember that we rolled out the world shaped by supply framing almost 4 years ago, characterized by mega forces. I think we're in a supercharged version of that world shaped by supply. You look at what has worked during this period of volatility. It hasn't been gold, incredibly. It was not government bonds. Real assets have actually been working better as a diversifier in this environment. I think in this world, supercharged world shaped by supply constraints, this is what we're dealing with right now. So macro environment is really quite different. No matter what happens from this point on, the macro environment for 2026 is very different because of the stagflationary momentum in the system, because of the existing disruption that has already taken place.
Wait, a lot of investors who've come on the show agree with you, and they say that they are taking down risk, but they're taking down risk more in Europe. They're taking down risk in Asia, some of the more exposed areas to imports of energy assets. You talk about downgrading U.S. stocks in particularly. Why don't you think that the U.S. is almost a haven from some of the turmoil because of the oil production in the nation?
I would say that we already preferred U.S. equities over Europe and Asia equities through most part of the conflict so far. So this adjustment right now that we have implemented this week is really just to flatten the directional movement across equity exposures. So we had the overweight in U.S. equities, so we flattened that, but we didn't have the overweight in European equities. We didn't have the overweight in Asian equities, which is why they were already flat. So right now we're just we want to square the directional kind of exposures by being neutral across equities at the moment because of the blow-by-blow volatility coming from headlines. I think this week is the perfect example of how it is impossible to predict the next announcement. And I think squaring the directional exposures makes sense. It's just good risk management. But we are very nimble and very dynamic to look to dial up or maybe even further down risk, like what we did back in April. We're looking very closely for evidence of durable kind of policy actions. And right now, markets seem to react a lot to announcements coming from the U.S. side, which is why we saw the last few days markets trying to rally on announcements from the U.S. But maybe actually the announcement coming from the Iranian side could be driving the next kind of progress, next step in this journey.
Well, you noted that a lot of the government bond space has not acted as a counterbalance to some of the risks that we've seen. It hasn't acted as a haven. How concerned are you about some of the auctions that we've been seeing, the U.S. government bond auctions that have been pretty messy over the past couple of days?
You talked about it earlier on and also cited reasons such as inflationary concern as well as fiscal concern. I think these are really big reasons for why maybe the appetite for U.S. treasuries is less compared to before. And I think also that you talked about kind of petrodollar potentially decreasing and also the greater demand for real assets. Where is that going to come from? And I think they all play a role. But I would say at the same time that markets have gone through significant repricing, especially at the front end of government bonds in the US, yes, but in Europe, in other parts of DM markets too, to the extent that actually as a temporary cash buffer, they don't look too bad. So we actually prefer the front end and the belly of the U.S. Treasury market over the long end of the U.S. Treasury market. And the same applies to European government bonds. We actually even this week brought up the front end of European government bonds from neutral to modest overweight to reflect the very significant repricing that we have seen for ECB hikes.
Wei-Li, thank you. We've got to leave it there. Wei-Li there of BlackRock on rate pricing. This from the President of the United States and for you, so you can follow at home. The Iranian negotiators are very different and strange. They are begging us to make a deal, which they should be doing since they have been militarily obliterated with zero chance of a comeback. And yet they publicly state they are only looking at our proposal. Wrong. They better get serious soon before it's too late, because once that happens, there is no turning back. And it won't be pretty. The president, just moments ago.
Who's he talking to? Is he talking to the Iranians? Is he talking to U.S. markets? This is the reason why people are looking at these kinds of Truth Social postings and inferring what could the action be on the back end of this. There have been an increasing number of Truth Social posts from President Trump this morning, including one talking about NATO, we won't forget, and then threatening Iran to get serious about talks. Hard to get a sense of what actually is going on.
Futures just pulling back following those headlines. We're down by 0.75% on the S&P 500 with an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump declaring victory in Iran. The president saying the U.S. is negotiating and Tehran wants to make a deal, but, quote, they're afraid to say it because they figure they'll be killed by their own people. They're also afraid they'll be killed by us. Meta and Google saying they will appeal a California court decision holding them liable for a young woman's mental health struggles. A jury ordering the tech giants to pay $6 million to the woman after a landmark case centered on social media addiction. And BlackRock's Rick Rieder shrugging off speculation of rate hikes this year. Rieder telling Bloomberg, quote, small businesses, young people, and the low income are really getting hurt by current rates. Rieder's call for a cut is in line with the White House's demand for cuts from the Fed. That's your Bloomberg Brief. John.
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, pain at the pump.
We're going to see prices at the pump go back down. This president is keeping them as low as he can during this short-term combat operation, and they're going to go right back down when this is over.
They're getting higher. Michelle Meyer of MasterCard Economics Institute joins us next from New York City. This is Bloomberg Surveillance.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
These stakes are high as we get closer and closer to this self-imposed deadline for talks between Iran and the United States. The president with a statement just moments ago, they better get serious soon before it's too late, because once that happens, there is no turning back, and it won't be pretty. The president of the United States just moments ago, with that statement, equities pulling back on the S&P 500, futures negative by 0.75% on the Nasdaq, down by 0.8, down 1% on the Russell. Story so far this morning, yields higher, 2s, 10s, 30s. A lot to think about. Some data later this morning, initial jobless claims at 8:30 Eastern time. Also, I think more importantly at the moment, the supply. The weak auctions we've seen across 2-year and 5-year notes this week. The 7-year is up next.
Yeah, $44 billion being sold at 1 p.m. today. The 2-year and the 5-year note both seeing dealers take down the greatest proportion of those debt sales going back to 2022. Uncertainty here about exactly what the level of rates ought to be, and seeing these bonds sell off after the initial auction.
Quick check of crude for you, 106 on Brent, WTI at 93. Basically everything is set off the price of this right now. You wake up every single morning, you look at Brent, you look at WTI, and you've got a pretty decent idea of what everything else is doing in financial markets worldwide.
And you blink and it changes, and then everything adjusts at the same time. Who's going to want to hold risk heading into this weekend? We keep asking that, and I'm going to keep looking for that one person who's going to raise their hand and take it on. So please call in.
Chris Harvey, CIBC. Time to put some money to work.
Vino Krishna.
Yeah. Vino too.
Yeah.
I love that Vino raised his price target.
I think it's fabulous. We'll talk to him
Just
next week.
more of that. I'm not endorsing it. I'm just saying, like, that's bold. I respect it.
There's a lot of bold moves right now.
Totally.
I think I'll be hiding.
Oil prices are up. Gasoline prices are higher. Under surveillance this morning. Pain at the pump.
As for the temporary short-term fluctuation in gas prices, the president has said once these combat operations are over, this administration is going to continue to unleash American energy dominance. We're going to see prices at the pump go back down, just as we have over the past year because of this president. This president is keeping them as low as he can during this short-term combat operation, and they're going to go right back down when this is over.
So here's the latest this morning. U.S. gasoline prices rising over 30% since the start of the war in Iran last month. Michelle Ma of the MasterCard Economics Institute writing, gas prices are up, but with historical norms, within those historical norms, and households have shown resilience through recent inflation shocks. Michelle joins us now for more. Michelle, good morning.
Good morning.
You've got really good visibility on spending in this country.
Yes.
What's the reaction so far to much higher gasoline prices?
Well, I think consumers are managing remarkably well, as I noted. Certainly, gas prices are higher, and that's a necessity, which means that more of that purchasing power has to be allocated towards paying at the pump. But when you think about the bigger picture in terms of how consumers are spending, it's holding up quite well. And I think a lot of that is because we're still in the early stages. We're still in the early stages of the shock. What will really matter is the duration of the shock. How long does it go on for? Because you see over the years, right, when consumers are faced with a temporary price adjustment, they can manage through that. When it becomes a permanent price level shock, then it becomes a very different story.
The starting point matters as well. Let's take the airlines. Lisa caught up with United earlier on this week. What we heard from Delta and what we heard from United is demand ahead of the shock was sky high.
Yes. That's extremely important. And that was for the overall economy. When you think about the momentum at the end of last year from the holiday shopping season and how that continued into early this year, consumers were out there spending. They were out there spending on experiences. We see that very clearly in our airline spending data as well. So there was a lot of growth heading in, which means that, yes, we're at a world now where there's heightened uncertainty. There are a lot of questions. There's a lot of concerns, naturally, when it comes to consumers. But it's still in the early stages.
Steve Riscido of Mizuho said what this does for him, this oil price shock, is that it reduces the option for an upside tail risk or a tailwind to the U.S. economy, that is taken off the table, but that the momentum will prevent the U.S. from falling into recession. Do you think that there is sufficient momentum to deal with oil prices should they reach $125, $150 a barrel?
So I think we need to take a step back and think about this overall cycle and consider how every year, probably right around now in the spring, the pessimism comes in a big way. And there's always a reason why, whether it was tariffs or the smaller bank crisis or a variety of other shocks that were hitting the economy that were making people feel really uncomfortable, making investors and economists feel very uncomfortable. And the U.S. economy in particular has managed through remarkably well time and again. So I think that there is this kind of dynamic nature of the economy that has allowed it to manage through a lot of headwinds very, very well. So yes, you have to think about where we're coming from, what we've learned throughout the cycle, the momentum that started in the beginning of the year, and then consider where we're going from here. If oil prices remain very high for an extended period of time and financial conditions tighten, it could create some real challenges for the economy. It doesn't necessarily mean a recessionary environment, but it's something we have to monitor. If it's a short blip, then you have to consider, again, the underlying trend and how much momentum there's been in this economy, and the conversation changes.
A lot of analysts have pointed to the labor market weakening. Do you see any evidence of that type of dynamic showing up in some of the demand on the consumer side?
So certainly the pace of job creation has weakened. The unemployment rate has inched higher. We'll see what jobless claims show. So far, they remained very, very low. So there's not that much evidence of job reductions. There's certainly evidence of a reduction in hiring rates and overall churn in the workforce. So I would argue, yes, the labor market now versus a year ago or 2 years ago is in a more challenging place, but I don't think it is a challenged labor market because you're not seeing that displacement.
What are the prospects for second-order effects from this inflation shock coming from energy? What are the chances that I can go to my employer and say, my energy bill's up, my gasoline prices are higher, I want a higher raise?
So you want to know about a wage price spiral?
Without a doubt.
So I think in this environment, it's probably a bit harder to see that play out because you have a labor market where there's you don't have the same degree of churn. You don't have that same amount of bargaining power exhibited by employees. So that does mean that the extent to which energy prices increase, it's going to be a matter of consumers trying to figure out how they navigate that, how they shift things around, how they reallocate what they're spending on in order to manage through that. It's different than in the last big energy price increase where the labor market was very hot. So we had energy prices increasing, we had asset prices increasing, and we had wages increasing. The overall economy inflated.
That explanation to look through the shock. That's why traditionally you look through it if the labor market's not that tight.
I was expecting you to say, don't let that discourage you from going to your boss and asking for a raise at the same time. You are correct.
I don't think you should give up on asking for a raise.
That's where I thought you were going to go with this.
Keep your leverage, all right? Michelle, good to see you.
Great to see you.
Always is. Thanks for dropping by. Thank you. Coming up on the program, we'll catch up with Ozan Tarman of Deutsche Bank, John Lieber of Eurasia Group, the OECD Secretary General Matthias Cormann, and the former Dallas Fed President Robert Kaplan. The second hour of Bloomberg Surveillance up next.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's going to take, logistically and from the production perspective, months to go back to normal.
The longer we go, and this, I think, is the key issue.
There's nothing the Federal Reserve can do. They can hike or cut all they want. It's not going to open the Strait of Hormuz.
The uncertainty in the Middle East may put them on hold for a while.
The U.S. economy can take a few more punches than the rest of the world.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. And your scores, the price action looks like this. Pulling back by 0.7% on the S&P 500, down by 0.8 on the NASDAQ. In the bond market, yields up across the curve, 2s, 10s, and 30s. 2s this morning, higher by 4 basis points, approaching 4% again, up by almost 5 on 10s at 438. And crude, doing this. WTI and Brent pushing higher once again. Brent at 106, WTI at 93. The president setting the stage for talks going into the weekend and his self-imposed deadline for negotiations. The diplomatic effort continues. This from the president. They better get serious soon before it's too late, because once that happens, there is no turning back, and it won't be pretty.
The reason why people are concerned about production facilities would be in the line of fire, given any escalation. That's what Iran has said, and the U.S. side has also talked about targeting Iranian facilities. Given that backdrop, people are watching some of these discussions, some of these Truth Social posts, the comments, to understand whether there is an effort and a desire to de-escalate or escalate. If you get any clarity, good luck. Call in and let us know, because right now it has been highly a soup of uncertainty and messaging that runs in all directions.
I have so much sympathy for anyone waking up and trying to commit capital, allocate capital to this market this morning. So much sympathy. This can cut 2 ways in a very dramatic fashion. You've got markets at the moment itching to allocate, itching to step in. The fear of missing out greater than the fear of losses at the moment. And you can see why. You've got some signal from the administration they'd like to make a deal. I get it. But then you look at the calendar and you think about where we might be in 2 days' time, when this self-imposed deadline expires and the troop buildup that's been ordered reportedly arrives in the Middle East. Then this can go dramatically in the other direction.
This is, and I have a lot of sympathy for them too. A number of analysts have come on the show and said, we're not going to trade this. This particular set of events isn't tradable. What is tradable is the risk premium that Jeff Curry was talking about in commodities, is the concept of stockpiling key assets of national security and building up some sort of defense system. And that's what Wei Li was talking about of BlackRock. They're going to go with those mega themes rather than try to time out different postings on different social media.
Should we talk about auctions?
Please.
These are the real-world issues happening in financial markets right now. You've seen the shock in energy. We've been tracking it through fixed income as people try and price the future of interest rates, inflation, how much fiscal space have all of these different nations got for very different reasons. The 2-year was soft. The 5-year was soft. There's a 7-year auction coming up a little bit later. The traditional stable sources of demand are under question right now because domestically, internally, pressure's building abroad in places like Asia, in the Middle East. And I give some credit to Mohamed Al-Erin earlier this week, and we talked about his piece in the Financial Times, pressing it, I think, to think about the Gulf not just as a source of energy, but also as a source of capital, and trying to track that story in the coming days.
They've been the seed investors for a lot of the private credit investments, for a lot of the private equity investments, for a lot of the leveraged finance deals that have gotten done. And now there's a real question about whether they have the capacity to keep allocating, let alone the willingness. This hasn't come from increasing inflation expectations, and I think that is underpinning what you're saying. When you look at five-year break-even rates, which is the expected inflation over the next 5 to 10 years, it is the lowest in more than in almost a year. That is how far it has fallen. You could say that this is a skewed metric. Nonetheless, maybe it's better than the University of Michigan Sentiment Survey in terms of forward-looking inflation expectations, and it is not screaming inflationary spiral. So that gives you a sense of why the increase in yields is that much more interesting.
You mentioned tomorrow, right?
It is.
Okay,
we'll
looking
be
forward
watching
to that.
Closely.
We will, of course, on the way home. Right?
Yeah,
after the show.
exactly.
Sure. Okay. Coming up this hour, Ozan Tarman of Deutsche Bank. As war uncertainty rattles markets worldwide, the OECD Secretary General Matthias Cormann on a stagflationary shock, and the former Dallas Fed President Robert Kaplan on pricing rate hikes. We begin this hour with stocks lower as crude prices push higher. Ozan Tarman of Deutsche Bank writing, energy is the dominant transmission channel into inflation expectations and cross-asset correlations, raising the question of whether duration still hedges risk assets in supply shock regimes. Ozan joins us now for more. Ozan, good morning. Good to see you.
Wonderful to be here.
You're a very connected man. You talk to a lot of people. In your conversations in different regions over the past 3 weeks, just give us an idea of what they sound like at the moment and how they've changed.
Complacency, John. That's the key word that I'm coming up with after my New York City trip. Obviously, the Monday headline helped. That whole 5 days gave us a bit of a breather. Only 2 weeks ago, I sensed that everybody's waiting for, or the moment that we keep getting mission accomplished from the president, equities higher, oil lower. I would say 2 weeks ago in London and around, there was more bearishness. People wanted to really fade that. Now, into the weekend, into these ceasefire hopes, I do sense, especially in this city, complacency, the feeling that American assets can bear this out, the feeling that maybe 23, 24, like US outperformance may be back. So we're very vulnerable, very fragile to mornings like this, when the president raises the game again. If, for much more important than market reasons, if there's a human tragedy over the weekend, if a ship one or two ship gets hit,
yeah,
we're vulnerable to that.
Where do you see greater complacency? Because we have repriced asset classes a lot, particularly in energy and in bonds. Where's the greater complacency at the moment?
Great question. I mean, the hurt was in especially front end of rates, especially in oil, where complacency is, especially in the US, equities and credit. Still feeling very, very resilient. Credit, wonderful to be here with Lisa, with all the worries on private credit. I think there is a merit to that. Things can get a lot wider than where they are if headlines turn more nasty.
What are you telling clients when you say you really ought to be careful about the complacency and, frankly, the ripple effects that are coming from the fixed income market?
And the 7-year auction, right? So, look, first of all, yes, it looks untradeable, but especially if one has survived this whole saga, there is a lot to be done. So I do have sympathy with those who are betting on more of a ceasefire, to tackle some good headlines to come, and because of that, us having a small pop-up. But I think the bigger risk is the wounds that we have created, the big oil supply problem. Because of that, unfortunately a cliche, but a very true cliche, it may be a war triggered by US and Israel, but Europe, Asia, UK will get hurt more. So for the moment, I'm here, Vice Chair of Deutsche Bank. I would have loved to talk about my blue hat and European outperformance, but looking forward, I do see underperformance from the rest of the world, Europe and Asia. A trade that has done wonderfully for 15, 16 months. Now time to scale back.
You mentioned the front end of the yield curve and how much people have priced out rate cuts and now are pricing in rate hikes. What do you think is behind that? Because inflation expectations have not picked up in a lot of metrics over the longer term. And as John was just mentioning, the idea of a wage price spiral looks much less like a given this time around than, say, back in 2022. Why this pushback so significantly against rates?
Because people do believe that really this higher story has momentum. They do worry more about inflation. They do remember 22. They do remember the supply oil shocks. And even listening to Madame Lagarde yesterday, yes, she did sound balanced. She did walk a careful line. But if oil continues to even stay high, would you really rule out a summer hike, a spring hike? No.
What do you think the pain trade is right now in fixed income?
Pain trade, the absolute pain trade is for us to go back to pre-Iran. Remember those facts about was AI Strini, Schumer article, something bad is about to happen.
Right.
Bull flatteners, some legendary names that we both talked to a lot were claiming that bond is the new gold. That coming back, you know.
So the pain trade is lower yields from here.
Everything coming lower. So bull flattener. That almost sounds like a fantasy. But be careful, in 3 weeks these things can turn. But even steepeners, all of a sudden front end coming down, maybe hearing what Lisa says a bit more, feeling that all wars coming in may change the picture a bit. We're big believers in bear flatteners again, so a bull steepener, front end coming lower could be a pain trade.
Ozan, it's good to see you. Thanks for being here.
Always a pleasure.
Thanks for making time for us. Ozan Tarman there of Deutsche Bank. Heard this a few times, that at some point it gets so bad it's good for bonds. We're not there yet.
But you have to imagine, typically bonds do well when growth falls off a cliff and it incurs some sort of recession in a region, which is the reason Wei Li was talking about buying bonds in Europe, because things don't look great there. And if they hike rates, well, that's going to torpedo growth, and that's going to maybe be good for bonds perversely on the back end. This is, again, you keep going back to what exactly is the bond market representing? Is it inflation expectations? Are break-even rates accurate? If they are, then they're inflecting lower. They're highlighting an actually disinflationary type of impulse. Or is it fiscal that people are worried about?
Will you forgive me for making it really confusing?
I think that there's no way that this can be a less confusing moment.
I happen to think the pain trade's in the opposite direction. It's not that I think it's the most likely outcome. I just think that's where there is the most doubt right now. Just surveying the people that come on this program. Most people come on this program and say, look, I understand why rates have repriced higher, but this is why they're not going to hike, and this is why yields need to come down. And everyone I speak to in fixed income at the moment looks at the backup in yields and turns around and says, we've created a lot of value in the yield curve. I think this is the time to buy, which is why I would say, from my perspective, and you know, I'd be interested in other people's perspectives on this too. When I think about pain trades, I'm always thinking, where is the most doubt? And the most doubt seems to be in fixed income right now, that yields can go much higher from here. Maybe they can.
The pain trade, when it comes to tradable moments in the near-term positioning, might be a bull flattener. The pain trade for the entire market, particularly risk assets, is yields going higher and blowing out a lot of people's expectations of what asset pricing looks like. That is the pain trade. That is a much bigger one that could incur some sort of recession.
Not necessarily the most likely trade, but one to think about. We can argue about this in a commercial break. I'm happy to. Let's get you an update on news worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. President Donald Trump posting on Truth Social this morning that Iranian negotiators are, quote, begging to make a deal. The president urging Iran to get serious before it's too late, writing, once that happens, there is no turning back and it won't be pretty. The Trump administration is trying to arrange a meeting for Vice President J.D. Vance in Pakistan this weekend for Iran peace talks. CNN reporting other top administration officials could also join the meeting. Turkey is also being floated as a potential location. And Fed Governor Stephen Myron raising his rate projection for the end of the year. Myron saying, I boosted my policy rates by 0.5%, not due to oil in Iran, but due to inflation data. Myron voted against the Fed's decision to leave rates unchanged last week, preferring a quarter-point cut. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. Up next on the program, threatening to unleash hell.
President Trump does not bluff, and he is prepared to unleash hell. Iran should not miscalculate again. Any violence beyond this point will be because the Iranian regime refused to understand they have already been defeated.
John Lieber of Eurasia Group joins us next, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
Economic data. You're all wrestling with the same thing. Everyone is heading closer and closer to that self-imposed deadline this weekend.
Which we're watching right now, the risk coming out of the market ahead of this, cash levels going up, and a sense of where are you going to hide? Increasingly the answer, not U.S. bonds, not gold, but some of the commodities that are most sensitive to this particular inflation shock.
High-stakes diplomacy taking place on social media. That's what's happening right now. The president calling out Iran, saying they better get serious soon before it's too late, because once that happens, there's no turning back. That statement coming out 30 minutes ago.
And on Monday, the statement that came out from the president completely whipsawing markets, as you and Anne-Marie were talking about. How do you treat this? How do you want to get ahead of this? How do you get an edge in a market that is this vulnerable to these type of proclamations? I would argue the longer this goes on, the more a lot of investors say the upside gets smaller, the potential for an off-ramp declines, and the potential for real longer-lasting damage increases.
How do you trade this with great difficulty? At the moment, Brent and WTI higher, taking equities down by 0.7% on the S&P. We're down by 0.8 on the NASDAQ and pushing yields higher, unlocking higher bond yields. 2s, 10s and 30s. 10s up by 5 basis points now, just short of 440. And crude at the moment, Brent and WTI. Brent crude 106, WTI 93. Under surveillance this morning, threatening to unleash hell.
If they fail to understand that they have been defeated militarily and will continue to be, President Trump will ensure they are hit harder than they have ever been hit before. President Trump does not bluff, and he is prepared to unleash hell. Iran should not miscalculate again. Any violence beyond this point will be because the Iranian regime refused to understand they have already been defeated and refused to come to a deal.
So here's the latest this morning. The White House insisting peace talks with Iran are ongoing while threatening further escalation. Tehran rejecting talks and offering a new set of conditions for a deal. Anne-Marie has more now from Washington. Morning, Anne-Marie.
Good morning, John. We have another threat, another warning from the White House this morning. The president on Truth Social saying that Iran needs to make a deal, make it fast, or it will not be pretty. He says before it is too late, because once that happens, there is no turning back. Yesterday, Jonathan, I was with the president covering him, part of the press poll. He called what was going on with this war an excursion into hell. Clearly, he is weighing his options this morning to try to understand exactly what is going on and the political ramifications as well. Domestically, John Lieber joins us, of course, from the Eurasia Group. John, thank you so much for your time this morning. I'd love to just get your reaction to early this morning, before the markets open, the president with this latest threat to the Iranians. They better get serious before it's too late.
I think he wants this war to stop, and he's recognizing that he's in a bit of a challenge. So gas prices are headed over $4 a gallon, and his approval rating is headed below 40 points. And that's not a good place for the president to be. So he knows he needs to get out of this war, and he knows that he can't get out of it alone, because even if the U.S. stops bombing, if he's in a situation where the Iranians are the only ones who are able to get oil or other products out of the Strait of Hormuz, that's a bad outcome for the world economy. So he's got to do something to change the game right now to get the Iranians to open up the strait. And these threats, I think, are his way of trying to do that, because I don't think the Iranians are in a mood to negotiate right now.
Do you think the talk of diplomacy, potentially reports of the Vice President, J.D. Vance, going to Islamabad to maybe meet with Iranian negotiators, is that real? Or do you think that's just a distraction while the president and the DOD get their personnel on the ground?
I think it is real in the sense that there are people who are trying to set up talks or mediate talks. The Pakistanis are involved. Steve Witkoff has been involved in talking to the Iranians. But I don't know if these are going to go anywhere. And I don't know if the Iranians right now have the incentive that they need in order to show up at these talks and make a good faith effort. You also got to remember that the Iranians have zero reason to trust the United States here. They got attacked, from their perspective, they got attacked by America while they were in the middle of negotiating a nuclear deal. And what guarantees do they have that the U.S. and Israel is not going to attack them again while they're negotiating a peace deal?
It is a midterm election year. You mentioned gas prices. Also the fact that there doesn't seem to be an appetite for boots on the ground in Congress. What kind of pushback do you think we could see? You were an advisor to Senator Mitch McConnell. What kind of pushback do you think we could see, not from Democrats, but from his own party?
Yeah, I think the pushback to putting American troops at risk here is going to be enormous. And if that's what it takes for Trump to de-escalate this war, is to get troops on the ground, seize the Iranian oil, seize some Iranian territory, and potentially expose thousands of Marines to hostile fire from the Iranians, who have lots of drones and missiles that they can turn away from the UAE and Saudi and focus on American forces, which the Iranians, of course, would be happy to do. I think that's a huge problem for President Trump, and I don't think that's really a viable option for him right now. Maybe in a few weeks, he sees that as the only path out of here, but there's going to be a lot of blowback on Capitol Hill and from the American public to committing these troops, and so it just doesn't leave him with great choices.
Where does that leave the $200 billion the Pentagon is asking Congress to sign up for?
The Democrats are treating that $200 billion like the authorization for use of force in the Iraq War, which they later came to regret, because that authorization of use of force had been used to create these forever wars that cost trillions of dollars and got America bogged down for 2 decades. And so the Democrats don't want to vote for it. I think that's a tall order to get that $200 billion right now. It'll happen probably eventually, maybe at the end of the year when they have to do appropriations bills. But I don't, or Republicans have the option, of course, of doing a party line reconciliation bill, which introduces a whole other bunch of complexities, because you're going to have people that want to do tax, you're going to have people that want to cut spending, and I think that's ultimately going to be a huge problem for Trump.
If the president decides to take this action, Axios outlined what potentially some of the strategic goals of that would be, this, quote, final blow. Wouldn't the Iranians just tell the Houthis, we need to create more chaos for the Americans, we need to drive up oil prices higher, while they're now engrossed with the Strait of Hormuz? The Houthis should now close Bab el-Mandeb and close the Red Sea.
They could try it. The Iranian influence in the region is waning. I think all the proxy groups are seeing that right now Iran's not what they used to be. I mean, Iran does have a lot of money coming in their coffers, but our understanding is that the Houthis are asking for money from the Saudis to stay out of this war, and the Saudis are happy to pay that for right now. That could change over time. The Iranians could make them an offer they can't refuse, but I think the Houthis right now, we think, stay out of this war because it's in their interest to not attack their neighbor.
Speaking of the midterm election, speaking of the president weighing his options, the Wall Street Journal this morning said that Trump is telling close associates he wants to avoid a protracted war in Iran. If he takes this decision
to send in troops to potentially seize an island or make sure the military is there to try to clean the Strait of Hormuz so more vessels can go through with minesweepers and the likes. Won't that mean we are now running the Strait of Hormuz and this becomes a protracted environment?
Yeah, absolutely. I don't think there's any easy way to get out of this war right now. If the U.S. de-escalates unilaterally, the Iranians have proven that they control the strait, and they can let friends and family through, and they can let shipments that are going to the United States or from its allies.
Friends and family for $2 million.
For whatever the discount is, yeah, you get a nice little rate on your ship that's going through. But I think that this is there's just no way out of this. So you can take it by force, but then you're committing yourself to probably months or longer of U.S. presence in the region, and again, exposing a lot of American troops to missile fire, which is not going to be popular here.
We're at $4 a gallon of gasoline. What does he do if we're at $5?
I think he pauses. I think he's got to say, I'm done. I expect the Iranians to open the strait, and that's the easiest action for him to take. It's the least risky action. It's a long-run strategic loss for the United States, and it puts Iran in a stronger position than when they started this war, but I don't see what choice he has.
John Lieber, thank you so much for your time this morning. Of course, Jonathan, John Lieber of Eurasia Group. Immediate reaction from the President's Truth this morning. Another warning, but he's just keeping his options open as of this morning as we head into the weekend.
Anne-Marie, thank you. Getting closer and closer to that self-imposed deadline. What he just said there about the Houthis, that's one of the only release valves that region has right now to get energy out, and that's through the Red Sea. Can you imagine how much messier it would be if the Houthis got involved?
Everyone's a mob boss now. So the Houthis can say to Saudi Arabia, you want to ship your oil through here? Fork over some dough. And that's essentially what John Lieber said they were doing. It highlights, we're in a different regime now, especially when it comes to that region. What will it take to get it back to where it was before this war?
This can't become the new status quo.
Correct.
Which is why we keep going back to this. This is not just about talks between the US and Iran. Gulf nations have got a lot to play for here. And if Iran is pushing, and I keep going back to the big push they've got right now, when you go through the 5 conditions, the one that stood out for me is the one we've heard a lot about, which is trying to formalize what is happening through the Strait of Hormuz right now, which is turning that into their own waterway and no one else's.
That's not sustainable. That's not going to be agreed upon, certainly by the United States and certainly not by Gulf nations in the region. We're watching this. The Iranians know that the pain point for the president, as John Lieber was saying, was that $5 a gallon. So when you hear all of this rhetoric on both sides, the Iranians want oil prices much higher to exert maximum economic pain. President Trump would like oil prices lower so that he has some more leeway to maneuver politically. That is the framework that you have to view all of the rhetoric coming out of all sides.
Futures lower by 0.75% on the S&P. Up next on the program, we'll catch up with the OECD Secretary General Matthias Cormann as the shadow of stagflation looms. Plus, Danny, how's your morning movers? Memory stocks sinking as Google announces a new compression technique for AI. That conversation up next.
news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Quite a morning already. Check out the moves. Crude, Brent, WTI pushing higher. That's setting the tone for the session so far on Brent and WTI at the moment. Brent crude at 106.40, WTI at 93. That's taking equities lower by 0.8% on the S&P 500. On the S&P, we're a bit softer off the back of that move in crude. And this move in the bond market, unlocking higher yields, up 5 basis points on twos at 394, 10s at 438. I say quite a morning already with the statement from the President of the United States on the talks with Iran. They better get serious soon before it's too late, because once that happens, there's no turning back. It won't be pretty. A statement from the President about an hour ago. So what could happen if the talks don't go well? Well, this is from Axios earlier on this morning. The Pentagon developing military options for a final blow in Iran that could include the use of ground forces in a massive bombing campaign. That according to 2 U.S. officials and 2 sources with knowledge.
The administration was looking for a short war, something that was clean, I put in quotes, akin to what we saw in Venezuela. The goal is to accomplish something with the minimum amount of pain done to supply chains and to the global economy. This weekend, we'll get a sense of exactly how that will transpire, potentially, given that the deadline, the self-imposed deadline, expires early Saturday morning. If there is an escalation, does that put some of the oil production facilities in the region in the line of fire, potentially pushing back how long this gets back online and supplies can pick back up to not just months, but years?
Think about how Monday morning felt before the President put out that post. The prospect of very near-term, almost immediate escalation risk, and the prospect of this spiraling out of control. We could be there tomorrow evening. That's what the market's confronting at the moment, the prospect of whether that happens or not.
Getting conviction right now in this market, good luck. At the same time, people are saying we're not going to go back to where we were before. It is getting harder and harder as the time grows on. And you're seeing more investors lean into the stockpiling trade, the commodities trade. I was speaking with one investor who said increasingly, not just gold or even U.S. Treasuries, but any commodity-related asset that could be stockpiled will increasingly be the new safe haven, and you're already seeing flows that represent that.
It's a tense moment in financial markets. Let's get you some single names going into the opening bell. 2 hours away. Some morning movers with Danny Berger. Hey, Danny.
Hey, John. Looking at the memory chip stocks this morning, falling after a brutal session yesterday as well. After an announcement from Alphabet, they put out something called TurboQuant that supposedly compresses the amount of memory that's needed. So that's been hurting the memory stocks. To be fair, equity analysts at Link said that it barely makes a difference, but these stocks have been on a tear. SanDisk got something like 1,000% over the past year, so not crazy to take some of the air out of that. Elsewhere, all the energy stocks reacting to what you were pointing out in the market, that is higher energy prices and concerns about escalation. Venture Global, a U.S.-based LNG company, one of the ones that has benefited. It already closed yesterday at a July high, having rallied since the start of the war. Shares add another 4.25% in the pre-market. Finally, wrapping things up with some earnings. We heard from Jefferies disappointment there despite the fact their investment bank had the best quarter, the best first quarter on record. Their earnings missed, though, 70 cents. Expectation was 87, and it appears to be tied to those credit blowups, taking about a $17 million write-down on both First Brands and MFS in the UK. So shares are down 2.4% this morning, John.
Danny, thank you. Looking forward to catching up with Danny in the next hour for more on those movers going into the opening bell. We'll talk about credit in just a moment. On our radar this morning, the Iranian parliament drafting a bill imposing tolls on vessels through the Strait of Hormuz. The plan would legally recognize Tehran's oversight of the waterway and could be finalized by next week. Elsewhere, Germany mapping U.S. supply chain vulnerabilities to use as leverage in future disputes with the White House. Sources telling us here at Bloomberg the initial findings suggest ways to target U.S. tech, AI investments, and pharmaceuticals. And finally, the former Goldman Sachs boss, Lloyd Blankfein, warning of a fire risk in private markets.
If you haven't had a crisis, it means you haven't had a reckoning. You accumulate tinder on the floor of the forest, and eventually a spark will come. The longer between intervals where there's a spark that sets it on fire, the more that accumulates. So at some point, there needs to be a forcing function or a reckoning.
We have seen headline after headline over the past few months. Ares and Apollo capping withdrawals from private credit funds at 5% this week after a surge in redemption requests.
Lloyd Blankfein is not alone. You've heard Jamie Dimon, you've heard Ted Pick, you've heard a whole host of Wall Street CEOs warning about this lack of a washout that will essentially and eventually face some sort of reckoning. Is this it? That's what some people are asking. Is this the initial tremors of some sort of credit crisis that could percolate into something broader? With Jefferies, why are their shares down so much if they beat expectations but did take a hit on some of these credit portfolios? The concern here is, should there be any pressure on the U.S. economy, any decline in growth, or even just a flattening out in growth? All these companies that could get financed at levels that were attractive, say 6 months ago, are going to get washed out, and there are a lot of investors who have not been practicing safe investments, I should say, going forward, and you're going to see some sort of reckoning there.
I'm not going to go there.
Please go ahead.
Yeah, no, I'm absolutely going to let that go. And any other day, maybe not. Today, I'm going to let that slide. Okay, I'm sure if you're at home tracking this, you're in tears right now. I'll say this on Lloyd. I'll change the subject.
Oh, good job.
I know he's on the big book tour right now, so he's doing a lot of publicity, but it's nice to hear from him. And I hope he stays disengaged with what's happening in financial markets, because that man's experience is immensely valuable.
Especially through the financial crisis. More people are saying we have not had a crisis since the financial crisis that actually was a credit cycle. 2020 doesn't count. The Fed was buying high-yield bonds, remember that, or maybe they just threatened to do so. If you can't have that kind of counter-cyclical response from central banks, what kind of washout does this look like? Increasingly, people are trying to understand that.
That was a classic. It really was. Okay. Energy price shocks fueling stagflation fears. We'll move on. The OECD predicting average G20 inflation will jump to 4% while anticipating lower than expected global growth. The organization releasing a new outlook this morning, writing persistent disruptions to exports from the Middle East could trigger more extensive repricing in financial markets. The OECD Secretary General Matthias Cormann joins us now for more. Matthias, thanks for making some time for us this morning. Can we just start with how difficult it might have been to put together a forecast in a moment like this? How complex was it for you and the team?
Well, obviously the level of uncertainty is extremely high, and so what we do in these circumstances is use technical assumptions. I mean, the key factor, of course, here relates to the energy supply and the energy price shock. The technical assumption that we have used as the basis for our projections is, essentially aligned with future markets pricings as they stood on 20 March. Now, the truth is we can't predict how much longer the conflict will last or how much worse it could get. We really don't have much choice but to use a baseline scenario, and of course, but we've also included like a worst case scenario in our report today. There clearly is a level of quite a significant level of downside risk to our outlook today.
Matthias, the inflation component of this is the piece that we can focus on now, and then we can turn to growth. There are some people who believe the potential for second-order effects is low because the economies aren't as strong as they were, and maybe balance sheets for consumers aren't as well-built, resilient right now as they were coming out of the pandemic. Matthias, where do you stand on that? I remember the first time we met, you were part of the Australian government. You know these things well, how to run a treasury. Do these governments have the fiscal space to respond to this energy shock and provide the fiscal support that consumers might be looking for?
Well, I mean, debt levels across the world are elevated, and including because of some of the fiscal responses, in the wake of the COVID pandemic, but also, structural pressures on spending around the world. But, in terms of the inflation story now, I mean, the story really is, different in different parts of the world. And I mean, in terms of the impact of the energy price shock and the flow on that has, and I mean, some are more directly exposed than others. I mean, here the direct exposure, is probably more into the Asian markets and to the Asia Pacific. But in other areas like Europe, for example, I mean, the price effect is more indirect. But I mean, there is an impact on global prices. When we look at the United States, I mean, in the United States, the reason we say what we're saying about inflation is there. I mean, we do actually see that the labor market remains relatively tight, and in the context of now this global energy price shock, and also the delayed effects still of some of the tariff price effects, and but also the impacts on the labor market of slowing net migration. I mean, we do think that there is a combination of factors there that is likely to have a bearing on the inflation outlook in the United States.
Matthias, we've been trying to wrap our heads around the idea that the ECB and the Bank of England are now expected to hike rates several times even potentially this year in response to inflationary pressures, at the same time that you and many others are downgrading their growth prospects. At what point do you see the necessity to hike rates as torpedoing any potential growth going forward, forcing you to lower expectations further on growth?
Well, look, I mean, there's obviously now, different, factors impacting the inflation outlook, and that is going to have a bearing on the response of central banks. I mean, it is, of course, true. I mean, our current expectation is that the energy price effect will be temporary, and as such, I mean, central banks, of course, would be able to take that into account, and there is a softening in labor markets and in economic outlook in some economies around the world. But I mean, in the end, what we are saying to central banks is that they need to continue to focus, very closely on the data as it evolves, and be very prudent to ensure that, inflation expectations are well anchored, and that the inflation outlook, is as they would want it to be.
Do you see, Matthias, a real concern about runaway inflation globally? I mean, this ultimately is the real question. Do you think that this shock is similar to what we saw in 2021, 2022, especially because inflation has been above the targets for quite a while?
But I mean, inflation prior to this, latest shock was on a downward path, and we were certainly expecting that in most G20 economies, inflation was going to get back within the central bank target range by the end of this year or sometime next year. But this now clearly is having a material impact. I mean, we are expecting, or we have upgraded our inflation outlook for this year globally by 1.2%, looking across the G20 economies, I should say. Now, it remains to be seen. As we've said at the beginning of this conversation, we don't know what we don't know. I mean, we don't know how much longer this conflict will last. We don't know how much worse it could get. And I mean, there's significant downside risk, but there's also upside risk or upside opportunity. I mean, things could turn out better than what we're fearing.
Matthias, thanks for making time for us this morning. We appreciate it. The OECD Secretary General Matthias Cormann there following their forecast for the year ahead. Difficult to put together a forecast in a moment like this. There is so much doubt, though, around a broader inflation story. No one wants to say the T word because they're scarred by what happened several years back, but I think basically what you're hearing is labour markets aren't as tight as they once were. Household balance sheets aren't as strong as they once were, so consumer price tolerance is lower. And the argument to get second-order effects and an inflation spiral from here, it's a difficult argument to make. That's what I'm hearing from a lot of economists at the moment.
What Wall Street is saying is it's transitory, at least if you look at the trading and if you look at break-even rates. And ultimately, central bankers in the U.S. are following along with that theme, at least if you listen to half of the speech from Fed Chair Jay Powell. We'll hear about from Kevin Warsh. Probably he'll lead into that. Very different tone from the ECB. Whether that's the correct take remains to be seen.
I've just been humbled so many times since the pandemic.
100%.
Things have gone different ways, so I think we have to stay humble once more. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump insisting Iran is negotiating and desperate to make a deal. Iran publicly rejecting Washington's overtures and issuing conditions of its own. Fars News reporting Tehran wants Hormuz transit tolls. Now the latest on the deadly plane crash at New York's LaGuardia Airport. All but 4 of the passengers injured in the collision between an Air Canada plane and a fire truck have been released from the hospital. Roughly 40 people were treated for injuries. And the Postal Service is looking to raise prices to offset rising transport expenses, including the cost of fuel. The USPS will increase prices by 8% on some packages until early next year. If approved, the price hike will take effect in a month. That's your Bloomberg Brief, John.
Yahara, thank you. More from Yahara in the next hour. Up next on the program, pressing for rate cuts.
I think the Fed needs to cut interest rates. Now, we have an energy shock, we have an inflation shock, so you're a bit more patient around it. There is a premium today, no doubt, for just uncertainty, which is warranted. Then I think you'll get to the other side.
That was Rick Reeder of BlackRock, in Texas, by the way. And I think the further south Rick goes, the more buttons that are undone.
Well, it is hot out there, so, I guess Godspeed.
The former Dallas Fed President Robert Kaplan joins us next to talk about Federal Reserve interest rates, and Bramo very, very interested in safe investing. So we'll talk about that too.
Yeah.
New York City.
All right.
We're watching
really?
Bloomberg TV.
All right.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Equity futures near session lows with negative 0.8% on the S&P 500. Here's a quick look of what prices are doing this morning. On the Nasdaq, we're down by 1%. On the Russell, by 1.3. Off the back of a move in crude, this is what the bond market looks like. Yields pushing higher once again. Twos very close to 4%. 393 up 5 basis points on 10s to 438. More supply yesterday. Week 2-year auction. Week 5-year auction, 7-year supply coming up later this afternoon. Make a note of that one. And setting the tone for absolutely everything worldwide, the price of this right here. Brent and WTI. Brent crude, 107. The president raising the stakes as we get closer and closer to that self-imposed deadline this weekend.
If there is an escalation over the weekend, could you see some sort of sea change when it comes to expectations around oil? They have been somewhat contained because of the expectation that supply can come back online. Should that be removed from the equation with actual oil-producing facilities damaged, that changes things.
Let's talk about rate policy. Under surveillance this morning, pressing for rate cuts.
I think the Fed needs to cut interest rates. Now, we have an energy shock and an inflation shock, so you're a bit more patient around it. Who is affected by these interest rates today? Small businesses, young people, low income are really getting hurt by this interest rate. Maybe you wait a little bit before you drop the rate. There is a premium today, no doubt, for just uncertainty, which is warranted. Then I think you'll get to the other side.
So here's the latest this morning. The former Fed chair candidate, Rick Rieder, calling for looser monetary policy as market expectations shift from rate relief to potential hikes. Robert Kaplan, the vice chairman of Goldman Sachs and former Dallas Fed president, joins us now for more. Mr. Kaplan, good to see you, sir.
Good to see you.
Thank you for making time for us. What should the Fed do in a moment like this?
For the moment, they should do nothing, which is what they are doing. They should let this situation continue to evolve, keep monitoring it. I think maybe we'll have more clarity in the next 3 or 4 weeks, but we don't have it right now. The markets, the debt, the credit market, the treasury market, the stock market is pricing in that this won't last very long. You start to see today, it's starting to realize maybe it'll last longer, and we don't know. And so I think the Fed is wise to be a risk manager here and not a prognosticator.
You've seen the response from the Fed, the ECB, the Bank of England. Is there a better response right now for you?
Well, so what you saw is the Fed, I thought, appropriately was non-committal and balanced the markets repricing, rate cuts into either no action or even something on the other side, but they've been non-committal. The ECB and the Bank of England are much more sensitive. Europe is much more sensitive to the price of oil and fertilizer and these commodities. And so they're a little quicker to jump. We're a little more insulated in the United States. Even with that, I would have said to the Bank of England and ECB, they would be wise to be more non-committal now too, because there's so much uncertainty. We'll have a better sense in a month, and I would be careful not to overdo it. And I've noticed even they have backed off a little bit from the stridency of their comments. They may turn out to be right, their initial hawkish reaction, but I think it's too soon to jump to that.
Rick Rieder was talking about the potential for rate cuts in part because of the weaker economy heading into this. And a number of investors are pointing to nodes of fragility that are increasingly popping up in markets. How much do you see that being a concern, and that there's perhaps a little too much complacency around the weakening that you could see in the economy going forward?
So let's go 30 days ago, before all this started. Our economic forecast was for actually a strengthening U.S. economy, strengthening global economy. We were 30 days ago calling for 2.5% plus GDP growth. Not a cyclical slowing, but a cyclical strengthening. The weakness in the labor market in that context was more about mismatches. College graduates are struggling to find jobs, and yet there's a historic amount of open jobs that are very attractive. Plumbers, electricians, technicians, people work on assembly lines. And so the war is going to dampen that strengthening. We just don't know how much. But it's clear it's going to mean lower GDP, but stickier prices too. And so, but no, we did not see a cyclical weakening going into this. This may create a cyclical weakening, but it's too soon to say that, in my opinion.
And right now, there still has been a robust capital markets, wide open for a whole host of deals. How long can that last? Should this continue to be roiling even just the front end of Treasury yields?
Yeah, to your point, equity markets are not down very much. Credit spreads are a little wider, but they're hanging in there. Again, because the market is pricing in that there's going to be a resolution, I don't know, in the next X number of weeks, not in many months. And I think the market keeps wrestling with this time frame, and oil markets are wrestling with it. I think for the moment, equity markets and markets generally are resilient. Merger activity is very active. That could change, though, if it's clear that this is going to go on longer. And yeah, we may say in hindsight the markets were underpricing the risks that this would create, but we don't know yet.
Can we stay on client activity? Lisa and I have been talking about this morning, about the Gulf as a source of capital, not just a source of energy. What are your clients doing, and how do you assess the flows coming out of the Gulf?
So the part that's challenging here, the Gulf was not only a source of capital, it was a destination for investment. There was a lot of activity looking at putting capital in the Gulf, development in the Gulf. And yes, they were investing around the world too. Listen, when we look back 6 months from now, depending on how this all gets resolved, that narrative, may resume, may even get stronger, but it depends on how this gets resolved and what the time frame is. But for the moment, we're hearing clients in every industry tell us, I had an order, we were shipping a product to the Gulf, got canceled. We're struggling with shipping. We're struggling with not just oil, but fertilizer, helium. It's affecting semiconductors. The ripple effects are substantial. So a lot of it will depend on how all this gets resolved and when it gets resolved.
What's the haven asset that you're recommending to clients, or that they're gravitating towards given all of this uncertainty?
So for investing clients, and I'll carve out hedge funds, people who make decisions every day, for big pools of money and individuals, you want to take a long-term horizon. Sometimes the best thing to do, and history has shown the best thing to do in this kind of period, is do nothing. For havens, yeah, you could have more cash. Up until about a month ago, we would have said gold was one option. Obviously, gold has behaved in a way that's been surprising. In years past, we would have said the 10-year Treasury was a haven. It's not acting that way. And so I think our best advice is look over the horizon. Don't have a 3-month horizon. Have a multi-year horizon. Have an asset allocation you can live with. And if you can manage your emotions, try to stick with that and don't overreact to what's going on right now.
Certainly difficult to do that right now, Robert. It's good to see you. I'm still used to calling you President Kaplan. Thanks for being here.
All right.
The former Dallas Fed president, now with Goldman Sachs, on a tricky market for the time being.
Sometimes the best thing to do is to do nothing. I think a lot of people get around that. Again, haven trade, bed. Go back to bed.
I'd say stretch out the time horizon, take a vacation, but you can't go to the airport right now.
That's true. Take a local vacation.
No, don't do that either. Up next on the programme, Matt Stuckey of Northwestern Mutual, Stephen Schork of the Schork Group, Ines McPhee of Oxford Economics, and Sarah Malik of Nuveen. The third hour of Bloomberg Surveillance just around the corner.
Estava sitiada. Isso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business,
then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One. Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
There's so much noise in the world. It's very difficult to be definitive around this.
I'm worried about what the negative consequences are if this conflict continues to go on.
What the equity markets are saying is that this will not metastasize into something which is larger.
We are viewing U.S. equities as a bit of a safe haven in this environment.
The bar for bad news is obviously exceptionally high.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. The price action looks like this. Equities declining across the board on the S&P 500, negative by 0.9%, down 1% on the NASDAQ. Higher crude prices unlocking this in the bond market. Higher bond yields, 2s, 10s, 30s, yields pushing higher. On 2s up by 6 basis points now to 394. On 10s approaching 440 again. With this in the commodity market, Brent and WTI pushing much higher, up by more than 5% on Brent, very close to 108. This statement from the president earlier on this morning, Iran better get serious soon before it's too late, because once that happens, there's no turning back. It won't be pretty.
It's Thursday. We're only a day and a half away from the self-imposed deadline. And if President Trump is putting out statements talking about how Iran better get serious, it doesn't give the markets that much confidence that they're that much closer to some sort of negotiated release or negotiated conclusion. That said, taking a step back, it is such a difficult moment to understand exactly what the threshold is for there to be an exponential jump in expectations for both oil prices as well as the destruction to some of the oil production facilities. And that, I think, is what we seem to be approaching heading into the weekend.
I will say we had a massive turnaround Monday morning, whipsawed by that statement from the president, taking away the near-term escalation risk and opening the door to a diplomatic effort. But if you look at the bond market, pull it up again. 2s and 10s are very close to where they were on Monday morning before that post. That move has persisted even with the administration opening the door to talks with Iran.
I've actually been spending the morning trying to understand this and trying to understand if it's coming from inflation expectations. You're not seeing it in break-even rates, whether it's coming to the volatility in potential inflation expectations, so you need more term premia, or is it a question of just investors pulling back, selling what they can, the same kind of reaction that you're seeing in gold. And you've mentioned Mohammed Al-Arian's piece about Gulf investors in particular, also Asian investors. A lot of these nations are having to raise money in order to finance and offset some of the pain that a lot of individuals are feeling. Is that part of what's behind the increase in yields, as so many investors around this table say they're actually seeing opportunities start to unlock itself, at least in the front of the yield curve?
2-year auction soft, 5-year auction weak, 7-year auction later on this afternoon. And 7-year auctions, we've had a history of this over the last few years. We've had some soft, weak 7-year auctions that have come out of almost nowhere. We've kind of set the stage for a week one later, haven't we?
The 7-year tends to be the awkward kid that comes along and never does particularly well, and everyone's just like, ugh, they're just the 7-year. At this time, following the 2-year and the 5-year, given the fact that dealers took down the greatest proportion of both of those debt sales since 2022, if it's messy, do people take a signal of what to expect down the line? And again, I keep going back to why. Is this the fiscal response? Is this inflation expectations? Or is this a structural pulling back of investors around the world?
There has been a lot of disruption, let's put it that way. A lot of disruption through the month so far. 10-year yields this morning up 6 basis points, 439. 2's up by 6 basis points, let's call it 395. Coming up this hour, we'll catch up with Matt Stuckey of Northwestern Mutual with conflicting signals over the war in Iran. Stephen Schork of the Schork Group with oil prices headed for the biggest monthly jump in over 35 years. And Ines McPhee of Oxford Economics breaking down the latest round of jobs data. We begin this hour with stocks edging lower and crude rising. Matt Stuckey of Northwestern Mutual Wealth Management writing oil prices are in the driver's seat for the near term. Breaking this correlation is likely going to require an energy flow solution. Until then, volatility is likely to remain very elevated. Matt joins us now for more. Matt, welcome. What are you advocating for going into a self-imposed deadline this weekend where we're confronting substantial two-way risk? This could break one way or the other aggressively.
Look, I think in moments like this where, the short term is so dictated by one variable, that being oil prices, I think the market's just tempting you and reminding you that you need to have a long-term plan and a asset allocation that incorporates shocks like this into that plan. It doesn't give you much, high-level conviction into what's going to happen this weekend, but it does provide some comfort and some stress testing for resiliency in your portfolio as you look out for a year or 2 years. So, right now the correlation between stock prices and oil futures is around negative 0.8 or so. That's incredibly high. It just kind of emphasizes how specifically honed in the market is on oil. But if you look longer term, that correlation is much looser. And eventually we do see that starting to descend down to that longer term correlation.
Matt, let's talk about the nature of those shocks, though. There's a history full of demand shocks, but more recently, it's supply shocks that seem to be popping up here, there, and everywhere. How do you build a portfolio for resiliency if you expect the frequency of supply shocks to carry on at this level, looking several years out?
Look, it's a couple of things. There's two main variables that come into portfolio construction that you need to think through. One is kind of what happens when economic growth moves higher or lower, and the other being inflation moving higher or lower. And those supply shocks that you mentioned have been impacting kind of the inflation higher or lower variable. And so in the inflation higher scenario, which we're kind of going through right now, commodities and real assets being a dedicated allocation of portfolio kind of really underscores the reason why it's there in the first place. In today's environment, we haven't seen fixed income really kind of be the ballast in portfolio that we've seen in the past. It's been commodities that have been driving it forward. And so, that is what's working in the near term. But if you look over the intermediate term, if we get past some of the disruption in the Middle East today and look through kind of how things might shake out based on the forward curve, and, maybe that's not where, the best money should be placed over the intermediates, or maybe it should be back into traditional equities and high quality fixed income. But again, in the scenario where inflation is unexpectedly high, real assets are your best friend.
Matt, do we already know enough based on how this conflict has transpired, how the world's physical market has responded, to start shifting allocations more into commodity-exposed sectors?
That's a tough one. I think that's difficult because so much is just dependent on an announcement we might get this weekend, either being more escalation or lower escalation. That tight correlation, I think, is going to be with us until there is that off ramp for flows being restored out of the Middle East. So in terms of kind of what to do here, I think you maintain your portfolio allocations. If that requires some rebalancing, I think you do that. But in terms of just kind of looking for an off ramp in the portfolio to kind of lessen some of the pain, I think that's too short term in nature in terms of overall kind of portfolio hygiene.
When we speak to commodity strategists, they talk about a nonlinearity, that the longer this goes on, the pain doesn't just get a little bit worse, it gets significantly worse all at once. Is there a time frame or is there a sense of when you'll reach a point where you will be more definitive about what a potential outcome could look like and take more definitive action within your portfolios?
That's a really good question, and it kind of underscores kind of the risk that if this stays in place, this disruption in the Middle East, what does that mean for global commodity markets? In reality right now, we've kind of ripped a 10, 11 million barrel per day kind of hole in supply to the global crude market. Right now just through shut-ins, and there's the risk that this gets worse if there isn't flows restored coming out of the Middle East. And so you run the math on that in terms of that disruption against kind of global storage levels, and that buys you about 4 or 5 weeks worth of cushion, if you want to call it that. Beyond that, the physical market's likely to tighten significantly further, to your point about nonlinearity. I think if you get to that point, some additional hedging might make some sense, but we're just not there yet. And to have conviction on what's going to happen 3 or 4 weeks from now is really, really tough in this environment.
Matt, you have got a trade on, though, that I think is interesting, and it's in the equity market, and it's small caps. Small caps so far this month have declined somewhat off the back of what's happening here, obviously. Energy's pushing rates higher, it's pushing out rate cuts. Why the overweight on small caps right now?
Jonathan, I think that really kind of ties back to our earlier conversation about the intermediate term, and just kind of rewind the clock back to, not the start of March, but the start of January and February. What we were seeing was a sustained rotation into that area. I think continued overweight to small cap is a view that the volatility that we're seeing in the commodities markets, and because of the disruption of flows from the Middle East, has an end date to it. It's hard to have a conviction about what specifically that end date is, but if we have an intermediate time horizon, that helps with that view. And what we were seeing heading into this was rising earnings expectations combined with attractive relative valuations. And to us, I think that is likely what we are going to continue to lean on to support our overweight view.
Matt, looking at your overweight in equity, so small versus large, underweight large cap, and then comparing it to your overweight in IG credit and underweight in high yield. Usually if someone said to me they were overweight small caps in the equity market, guess where we are in credit? I'd say you're probably like high yield. Why the difference there, that slight nuance?
I think when we started this year, the nuance was reflected of pricing. So if we started, 2026 at near 20-some-year tights in credit spreads, the pricing there just wasn't really necessarily commensurate with the risk profile of high yield. And now I understand that there are tight correlations between credit spreads and the performance of cyclical parts of the equity market, like small cap specifically. But against a kind of more compressed earnings profile in the small cap space and a price point that was in the mid-teens, we just thought it was better to put the incremental dollar in the small cap space versus the high yield. Now, certainly we don't necessarily expect small cap performance to perform up to our level of expectations if we see spreads continue to widen out. But in terms of the incremental dollar, we thought it was better served in the small cap space.
Interesting. Matt, thank you, sir. Matt Stuckey there of Northwestern Mutual Wealth Management, always looking through people's positions and looking for these pockets of tension, and that's a pocket of tension that jumped out to me.
Yeah, and it goes to a point that Howard Marks was making, not necessarily about small caps in any way, shape, or form, but in certain sectors, maybe equity risk is better than credit risk because you're you're not getting compensated sufficiently for the credit spread. And that ultimately is something that an increasing number of investors are looking at, particularly tied to AI, given the potential spread of outcomes in that sector.
As well framed. Russell futures right now down by about 1% on the S&P, attempting to recover, just bouncing off session low, still negative by 0.75%. With an update on stories elsewhere this morning, with your Bloomberg brief, Yahira has more. Hey, Yahira.
Hi, John. President Donald Trump posting on Truth Social that Iranian negotiators are, quote, begging to make a deal. The president urging Iran to get serious before it's too late, writing, once that happens, there is no turning back and it won't be pretty. Axios reporting this morning that the Pentagon is gearing up for a massive final blow of the war. Ex-Goldman CEO Blankfein is warning of a fire risk in private markets. Blankfein telling Bloomberg the accumulation of unsold private assets on investors' balance sheets is a warning that some may be overvalued and a spark could trigger a widespread markdown. And the average Wall Street bonus jumping to a record last year, rising 6% to $246,900, according to estimates from the New York State's controller, with the total payout pool rising to over $49 billion as profits and revenues soared for the banking sector. That's your Bloomberg Brief, John.
Yahira, thank you. Thank you very much. More from Yahira later this hour. Up next on the program, the Morning Calls Plus, Stephen Short of the Short Group as crude prices continue climbing. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The risk feels a bit asymmetric at this moment. So if we have a peace deal, then we could have a relief rally in markets. On the other hand, if we don't have tangible evidence of actions that could shorten the duration of the disruption, then current risk pricing is not consistent with the doable disruption that energy markets are pricing right now.
Copy and paste, cut it, repeat it. We've heard that so many times since this war started. Wei Li there of BlackRock on the disconnect between energy and what's happening in risk assets. Risk looks like this morning. We're negative by 0.75% on the S&P, down by 0.9 on the NASDAQ, down by more than 1% on the Russell, unlocking high yields in the bond market, 2s, 10s and 30s. 2s really close to 4% again, up 4 basis points on the day to 392, up 4 on 10s to 4. 38. More supply later. We've talked a lot about that 7-year auction, so look out for that later this afternoon. In the commodity market, crude, Brent and WTI higher by some 4%. 107 on Brent, WTI at 94. A couple of headlines worth going over. Done it a few times already this morning. This came from the president directly. They better get serious, Iran. Better get serious soon before it's too late, because once that happens, there's no turning back. It won't be pretty. This is the final 2 days of negotiations against the self-imposed deadline for them that the president set earlier on this week. This came from Axios. This was quite instructive. A few hours ago, the Pentagon delivering military options for a final blow in Iran that could include the use of ground forces in a massive bombing campaign, that according to 2 U.S. officials and 2 others with knowledge of the matter.
And different military strategists have talked about how the hope is to escalate, to de-escalate, to bring in troops into the region and some significant threats in order to reach some sort of resolution. That is the double-sided issue that we're facing for a weekend, which could end up with either a real upside or a real downside.
It makes it difficult to put on risk over the next few days, that's for sure. Let's get you some morning calls. First up, UBS upgrading new core to buy, calling it, quote, largely insulated from the war with Iran. That stock is up by 1%. Your second call from Bernstein, downgrading Qualcomm to market perform, believing memory issues will worsen. That name is down by close to 2%. And finally, D.A. Davidson, raising its price target on Clear, highlighting opportunity from the partial government shutdown. That stock is just about unchanged. We've got someone around the table with some experience of that.
Okay, I always thought it was a scam, a pay to play. You know, if you've got money to pay, you can skip the line, and it felt just really unfair to me. But sure enough...
Sure felt good this week, didn't it?
I went ahead, never felt so happy about spending that money, and I totally sold out. So I understand the upgrade.
I can't wait to see the chart, just how many other people have
100%
have done the same thing. Let's send back to our top story. Oil prices whipsawing as the US and Iran offer conflicting comments on ceasefire discussions. Stephen Schork of the Schork Group writing the following: the gap between market optimism and ground truth is dangerous. The market is pricing a panic, not a new normal. Stephen joins us now for more. Stephen, welcome back. I've heard this a lot. We've all heard this a lot. The disconnect between the physical market and the paper market. What explains it, one? And two, how do you think it's going to resolve?
Absolutely. So the physical market that's being most affected by the conflict, of course, is in the Asian markets. So that's where we're seeing the disconnect. We're seeing, well, you'll see analysts will talk about predictions, pie in the sky, $130, $140, $150 oil. Potentially, that's where we could go. You know what? We're already there in the Asian markets. So there's the disconnect. The money that's being traded, the quotes that we see here on Bloomberg or for NYMEX WTI, for ICE Brent crude oil, these are markets that are based in the Atlantic Basin. And as we just saw yesterday with the EIA weekly update on petroleum, the Atlantic Basin is well supplied with oil. So the contracts we are looking at are depressed because they're in a market area that is secondary to where the real action is. So it's that massive disconnect on the physical side. Interestingly enough, when we look at the CFTC data, the commitment of traders, we're seeing a tremendous amount of selling by producers. And Jonathan, there is the disconnect. Because when we look at speculators, hedge funds, they own 11 Brent crude oil contracts for every one contract they are short. They are massively long. On the other side, the physical guys, the producers, are selling into this rally. So therein is the catalyst for that disconnect.
Stephen, just explain that for people who don't follow your world. Why would they be selling into this rally?
Absolutely. You're a producer. So ideally, you're selling into it because you are taking advantage of these prices. So now we're looking at Brent crude oil in the $105, $106, up to $110 range. WTI in the mid $90. Yeah, got it right up there on the screen there. Thank you. And so what that's telling us is the physical guys are taking advantage of this. Could the prices go higher? Absolutely. But the guys that know the best, selling physical cargoes, they're more than happy to lock in their production at this point. And therein lies a problem and a potential trap if we do get a resolution sooner rather than later. With the funds being long 11-1, there are no longer any natural buyers left in this market. So if there is a panic to liquidate your positions, it's going to be a mass run to the exits, and you'll see a significant downdraft on a massive squeeze. Yet to be seen, because I do think militarily it gets worse before it gets better. But therein is our game plan right here. We have funds, Wall Street, we'll just say, massively long oil, producers, the guys that actually touch oil are selling into this rally, and we have a bifurcated global market where the real shortage is in the Asian basin, whereas we are focused on prices that are priced off of the Atlantic basin.
Stephen, this is fascinating, and it explains why the price of physical oil in Dubai actually fell significantly over the past couple of trading sessions. And it goes against what a lot of commodity strategists have been saying, which is that this huge gap between the physical and the paper market would close to the upside for the paper market. Do you think it is too early to say that that is going to be the path of travel, that frankly some of the more dramatic statements coming out of commodity strategists is overplaying how much upside is left?
Absolutely. And let's keep in mind, and I've said it before on the show, that can we go higher? Can WTI Brent go up to that $150 range? Absolutely. Can it stay there? Skeptical, because what, of course, that means for economic degradation. But to your point with the physical market in Asia coming off, it's coming off because access to that physical oil is really difficult. So if you don't have the product, you really can't charge a premium. What we are seeing now is a shift to the Gulf Coast. We're seeing what it takes, the premiums of bringing West Texas oil down to Houston to get to the Gulf Coast. Tremendous amount of Asian buying going on in the Gulf Coast at this point. So there is that real demand shift. Now we're shifting away from Asia, or where the oil is, because we're running out of it for all intents and purposes, and where we have plenty of it in the Atlantic Basin. This is where the buyers are going. So that physical demand is migrating now from the Asian markets into the Gulf Coast markets, the Atlantic Basin markets, ideally to bring that oil, U.S. oil, North Sea oil, back into where the demand is needed, to the refineries in South Korea, Japan, so forth.
There's a question about non-linearities right now, and I've seen a lot of investment firms talking about this, that if you start to get destruction of oil production facilities, that changes the game, and you could start seeing the more significant numbers of 200 and beyond. How closely are you watching that, especially as we head into this weekend?
Absolutely. It's a concern, and what we're seeing, not just on the oil side, but look what's happened in Qatar, where 17% of their natural gas or LNG production has been shuttered and could be offline for the next 3 to 5 years. So we are going into an area of really uncharted waters at this point. I'm reticent to call $200 oil. Mathematically, from a quantitative probabilistic modeling, I've mapped it out. Yes, theoretically, we could get up to $238 oil by the end of this year, but I really think that argument is moot. And I'll go back to history, because back in 2008, when oil was at 140, 145, nearly $150 a barrel, all the smart people on Wall Street were mapping out $200. Absolutely, we're going there. Well, you know what happened before we got there? We hit the Great Recession. So at this point, can we get there? Yes, potentially. But there is really no staying power, because the demand destruction will be so significant that we'll see a worldwide contraction in economic growth. And as the saying goes, high prices are the cure for high prices. You make those prices high enough, you'll either get the supply to meet that, or you'll get the demand destruction to pull those prices lower.
Stephen, it's good to see you. Thanks for breaking it down. Stephen Schork there of the Schork Group, heading into a weekend with substantial two-way risk, and just some illumination there about the air pocket we could hit to the downside if we get a resolution to this war.
It was refreshing to hear that. I was surprised by the fact that physical oil prices out of Dubai actually have contracted over the past couple of days. It's not clear exactly how this is going to break, which continues to add to the uncertainty heading into the weekend.
Not clear who's getting through the strait and who isn't at the moment.
That's true also, and what supplies look like.
Equity futures right now on the S&P 500. Near session lows. Up next, we'll get you some data. Jobless claims in America set to cross. Innes McPhee of Oxford Economics will be with us around the table to break it down.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
This is how we're set up 60 minutes out from the open and about. The cash open just around the corner. Futures pulling back on the S&P 500. We're negative by 0.8. On the Nasdaq, down by 1%. In the bond market, yields pushing higher. Throughout much of this morning, twos, ends, 30s up by, let's call it 2 to 3 basis points right now. Twos at 392. Heading into the data, just seconds away. Crude setting the tone for everything. WTI and Brent. Brent crude 107 and higher by close to 5%. With some jobless claims data, let's get to Mike McKee for more. Morning, Mike.
Good morning, John. A bit of a rise in jobless claims to exactly what was predicted, 210,000 for the week ending last week on March 21st. However, that's still a very low number, so it doesn't really suggest any kind of change, just a little bit of volatility. The continuing claims number, 1,819,000, is down from 1,851,000 2 weeks ago. So not much change on the labor side of the Fed's mandate, and it doesn't appear that companies are reacting yet to anything that's happening over in the Middle East. However, we are seeing, and I wanted to bring this back up, I know you talked to the Secretary General a little while ago of the OECD, the inflation side of the Fed's mandate is starting to show cracks. The OECD predicting 4.2% inflation for the U.S. this year. That may not be completely accurate, since we don't know how long this is all going to go on, but it's something that people should be considering when they're filtering through what the Fed is going to be saying over the next couple of days. And the rest of those countries, here's a point that people are starting to make in the economic circles. The rest of those countries could be in trouble because not only are oil prices going up, but the dollar's going up. And as the dollar goes up, their currencies buy less, and oil's priced in dollars. So it's a double squeeze for the rest of the world, and that could lead to demand destruction that leads to lower growth here.
That's the 1-2 punch. Stateside, Mike, this is what I hear a lot. Let's work through it together. Inflation, ultimately, by the time we get to the end of the year, will be closer to 3 than 2. That will constrain the Fed. But the Fed doesn't have to worry about an inflationary spiral and so-called second-order effects, because we're told, Mike, that this labor market is not as tight as it once was. Then I look at claims at 210 and a 4-week moving average of around the same number. Mike, and I wonder just how tight this labor market is. How tight is it?
We don't think it's all that tight, but the biggest issue is that we have lost a lot of population because of the crackdown on immigration, and that seems to be leading to a situation where employers need fewer workers because the economy is not putting the pressure on them at this point. And so we don't see the unemployment rate rising as you would think it might in this kind of situation. But nobody knows for sure. This is one of those things we'll be looking back on 5 years from now and have a better handle on exactly what's going on. But as I think Jay Powell said in his news conference the other day, the economy is still performing relatively well. There are all these clouds on the horizon, though. That's the big question is, does the OECD's forecast come true? And do we see the rest of the world slow down and the U.S. economy slow down? No sign yet, really.
Mike McKee, thank you, sir. It's one of the biggest differences between now and, say, 2022. Back in 22, unemployment was around, what, 3.5%? Now it's closer to 4.5 than it is to 3.5.
And the fiscal impulse was different then, too, with money printing in a much more significant way. That said, this explains why it's so confusing, this moment. Because on one hand, you could say, well, inflation is picking up. And even before the potential oil price shock, you saw that yesterday Mike was talking about import prices and how much they increased versus expectations. On the other hand, things are still good. And actually might have even been improving during the remainder of this year had it not been for what we're seeing in oil.
Claims at 210 is good news. That's good news for this labour market. No other way of talking about it. So that's the labour market. That's how the stage is set. This is how the stage is set for diplomacy right now. The president, heading into the weekend, a self-imposed deadline for talks between the US and Iran. And this line from him this morning: they better get serious soon before it's too late, because once that happens, there is no turning back, and it won't be pretty. Anne-Marie's been tracking the story down in DC. Anne-Marie, how is the stage set going into this one? That self-imposed deadline, only 2 days away.
That self-imposed deadline is just days away, Jonathan, and the president is out with another warning to the Iranian regime, another threat that you better get serious when it comes to diplomacy, or it's not going to be pretty for you. At the same time, there's also reporting this morning from Axios that's talking about the Pentagon is preparing these potential options for a, quote, final blow. And the details, if you look at in that story, really go towards the heart of what the United States wants, would be opening up the Strait of Hormuz, potentially getting some assets on the ground in some of these key islands that are in the strait that the Iranians need to control the strait. Also interesting, in the last hour, we heard from Pakistan's foreign minister, and he said that there's unnecessary speculation in the media regarding these talks, and he pretty much crystallized what is happening in terms of the back channel. He said individuals like Pakistan, as well as Egypt and Turkey, are the ones that are acting as intermediaries, and it is through Islamabad that the United States shared that 15 points. So they are acting as this intermediary, but he didn't go on to say anything of the likes that there would actually be talks in person. So really where we are at this moment is a fork in the road. The president needs to decide, does he continue diplomacy after Friday, or potentially could we see another escalation on the ground?
Anne-Marie, Lisa and I have been talking about this all morning. It's not just about the US and Iran. One of the conditions in a report that came out yesterday that Iran is demanding is the sovereign right to exercise authority over the Strait of Hormuz. What are the nations across the Gulf saying about what Iran is demanding?
Yeah, that's absolutely dead on arrival for nations across the Gulf, as well as allies in Europe, as well as the Asia Pacific. We have seen Iran already do this. Remember, the strait is open to, as John Lieber said it earlier, family and friends. It's not open to everyone else, which is why you are seeing some vessels go through, but obviously not the normal flow. And what Iran's parliament right now is drafting is basically a new toll. If you want to come through the Strait of Hormuz, which is an international body of water that we have been using for years, companies have been using and countries have been using for years, they're now saying you have to charge a fee. And we have seen some tankers pay this fee, one reportedly $2 million. So that is what Iran is doing. And when they talk about one of these demands, and their 5 points, according to Iranian press TV, was this demand, that is not going to work with this administration or other allies around the world.
Anne-Marie, appreciate the update. I know you've got to run. Anne-Marie down in Washington, D.C., cabinet meeting coming up for the president later on this morning. Let's talk to Innes McPhee of Oxford Economics. He joins us now. Innes, welcome to the program. Labour market data is okay. The threat of escalation still very much on the horizon. Walk us through how you're tracking the damage, how this is turning up in the data that we've seen so far.
Thank God. Well, I think, the first thing to say is that we're going to see this really have an impact on inflation, first of all, flow through to real incomes. On the positive side, we're obviously going to see more output from the oil sector in the US. But really, we're going to start to see that impact on the economy, or that impact on consumer demand, start to bleed through, I would say, really in the second half of the year. Now, elsewhere, outside of the US, in Europe, for example, the impact is going to take a little longer because, of course, gas prices are much more impactful there. That's much more the driving force of the economic impact. And that won't really start to have a big impact on energy prices that firms and households pay until around the winter. So much more of a sort of Q4, Q1 impact for the European economies.
How fragmented is the global economy right now when it comes to growth outlooks in response to this oil price shock? There's a feeling on Wall Street that the United States market is pretty insulated based on its own oil production and its self-sufficiency versus, say, Asian economies in Europe that are much more exposed and have greater downside risk to growth. Do you agree with that? Do you see that kind of shaking out in a significant way?
Absolutely. Just from a high-level perspective, what we're really seeing is a lot of the cracks starting to develop in the global economy. A lot of the typical sort of vulnerabilities that you might expect to be corrected through a recession or some sort of economic downturn. So we look around the global economy. Obviously, you've got the US, which at a household level is very divided in terms of economic prospects. This shock will only serve to reinforce that. We all know that around 4% of the bottom half of consumers in the US have 4% of their disposable income is spent on gasoline prices. That's offset to some extent for the US by being a net energy exporter. For Europe, it's much more of a gas story, and some of that liquefied natural gas and that being a large input in terms of the energy mix there and what firms pay in terms of energy costs and their structural competitiveness versus the US and others. Even for Asia, this is going to be a significant shock, I think, as well. Just remember that, Qatar and region is a major producer of helium and other gases that are quite critical in the production of semiconductors. And so you're looking at supply chain issues all around the world that are going to have differential impacts. And this is going to be quite a nuanced shock that's going to play out over the following quarters.
Ines, how much conviction do you have around any kind of forward-looking projection right now? We're talking about we have no idea how long this goes on, but an increasing number of people say once you've reached a certain point, the risks become significantly greater. It is nonlinear. What is that point for you as you look out and assess the landscape?
Yeah, I think it's a great question. Look, there's a huge amount of uncertainty. It ultimately comes down to the duration of the shock, how long we see supply down from the Strait of Hormuz. That will determine the energy price shock and therefore the hit to real incomes and the impact on businesses. In terms of the non-linearity, I tend to think about it and putting the question in a slightly easier way in terms of what's the oil price that really starts to have a major impact on the economy, and what's that point at which you start to get those non-linearities. We think that's around $150 a barrel. If you see that sustained for some period of time, that's when you start to see a really significant hit on the global economy. And then potentially a lot of the second round impacts through wealth effects, through asset prices and so on, that might well then mean that you're moving towards more of a recessionary scenario than simply a significant hit to growth.
Ines, we're often in different financial capitals. Can you draw on your experience in conversations with clients over the past few days? Is there a difference between how they're approaching this in, say, New York and what they're telling you over in London?
Yeah, it's funny you say that. I was in New York a couple of weeks ago, and I think really the focus there was actually on AI, believe it or not, and really the longer-term structural impacts that might have on business models. Whereas in London, over the past week, clients have really been focused on Iran, the impacts of energy, the impacts that would have on demand, on firms' hiring practices, and on the labour market. So I think, over the last couple of weeks, anyway, in my small sample, there's actually been quite a different focus either sides of the Atlantic.
Ines, it's good to see you. Thanks for making time for us. Ines McPhee there of Oxford Economics. We've experienced a similar thing.
Yeah, look for the edge you've got, right? I mean, essentially people in New York are saying, we have no way of analyzing this, and typically you buy the dip, so just ignore it for now and focus on what you can, which is AI and private credit, and that's what we're going to focus on. And frankly, it has been completely not on the agenda to talk about the war. Is it complacency, or are they right? We shall see.
The longest first quarter ever continues. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Recapping the data we just received, jobless claims coming in exactly in line with estimates at 210,000 for last week. The 4-week moving average now sitting at 210,500. Continuing claims ticking down by 8,000, coming in at 1.82 million. A private credit fund managed by Ares saw its steepest monthly loss on record in February. It's the latest domino to fall in a broader sell-off across public debt markets, which Ares uses to assign prices to its assets. The firm recently capping withdrawals at 5% of the fund's net assets. And in sports, the New York Yankees defeating the San Francisco Giants 7-0 last night to kick off the 2026 MLB season. The rest of the majors will open today with the Mets hosting reigning National League Cy Young winner Paul Skeens and the Pittsburgh Pirates. That's your Bloomberg Brief, John.
We've had a Greenland crisis, Yahara, thank you. We've had a Venezuela crisis, had a private credit crisis, had an AI disruption crisis, had a crisis in the Middle East, all in the first quarter of the year.
I'm having a crisis. That's how I feel about this, and I think everyone does. It feels like people are becoming benumbed a little bit in New York. It's just enough crises already.
Right? It continues. Up next on the program, Sarah Malik of Nuveen, still expecting 1 to 2 rate cuts this year, plus Danny drops by. She's got some morning movers for you. Energy stocks up on the president's latest warning to Iran.
The problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Markets, the debt, the credit market, the treasury market, the stock market is pricing in that this won't last very long. You start to see today, it's starting to realize maybe it'll last longer, and we don't know. And so I think the Fed is wise to be a risk manager here and not a prognosticator.
If in doubt, do nothing. That's the message coming from the Fed right now and from the Dallas Fed president, the former one, Robert Kaplan, now with Goldman Sachs, joining us a little bit earlier on the program. Equity futures right now in the S&P very close to session lows going into the cash open. We're down by, let's call it 0.9%, down 1% on the NASDAQ 100 with some single names and morning movers. Danny has more. Hey, Danny.
Hey, John. With the price of oil nearly up 5% this morning, worth checking on the oil majors that are doing better, but not huge gains. They have been gaining for most weeks since the war broke out. We're around 1% higher for the oil majors, Exxon, Chevron, ConocoPhillips. That one's doing the best, above 1%. Elsewhere, it's also the memory chip stocks that have been under pressure both yesterday and today. Google comes out with a new compressor that they say reduces the need for memory, but a lot of the analysts point out that this really isn't that big of a difference. Link's equity analyst saying, whatever. It's only going to make a tiny difference for need for memory, but these stocks have had a huge run up, so not surprising to see some of the air come out. SanDisk down 3.6%, Micron down nearly 3%. Finally, some earnings from Miller Knoll. They make high-end office furniture. This one was really telling of the time. So they miss estimates. Essentially, they say, look, we're dealing with higher tariff costs, but that's fine. We've already taken measures to mitigate that. That we can deal with. The issue is the war in the Middle East. They're taking an $8 to $9 million charge because they're getting less shipments and logistic costs are now higher for them. So those shares off 20.5% in the pre-market, John.
Danny, thank you. Looking forward to the show alongside Matt Miller going into the opening bound. That kicks off in about 10 minutes' time. Let's talk about the Federal Reserve. BlackRock's Rick Reeder doubling down on his view the Fed should start cutting rates once again.
I think the Fed needs to cut interest rates. Now, we have an energy shock, an inflation shock, so you're a bit more patient around it. I think you need to get there because I think the interest rate channel is very different than it used to be. Small businesses, young people, low income are really getting hurt by this interest rate.
Sarah Malik of Nuveen writing the following. The next phase of the Fed may focus more on productivity, not just inflation. Expect 1 to 2 rate cuts in late 26 with the risk of a delay into 2027. Sarah joins us now for more. Sarah, welcome to the program. You call this a shock, not a structural inflation cycle. What's the difference between the two?
Well, we're definitely in a period of uncertainty here. So the difference between a shock and structural inflation is going to have to do with the length of this war. Typically, about 3 weeks past the beginning of a war is where you get to peak uncertainty and the market bottoms. We are about there now, but if this war continues to ramp up, that's where the risk will increase from shock to structural inflation. If you look at oil prices, if they increase by $10, that's about a 10 basis point drag to U.S. GDP and a 40 basis point increase to inflation. So that what we don't want to see is oil prices get to about $125 and stay there for an extended period of time, because that's going to bring back and increase the risk of stagflation, which will be a period of higher inflation and, of course, lower employment. And we saw that with last month's payrolls, which came in at minus 92,000. So that's the risk going forward. I don't think we're there yet. I think rate cuts can be still on the table for later this year.
Well, let's attack the stagflation. This is important. We live in a nominal world. If inflation rises and nominal growth is good, earnings should be okay. Sarah, what's the outlook for earnings and how insulated is that revenue stream for some of these big companies in America?
Second quarter earnings outlook, which will start in a few weeks, those earnings still look strong, up low teens year over year. I think we can get to that level. There's going to be a lot of uncertainty around that. Remember, those earnings are going to be, partially before the war started. So that's going to be a bit backward looking. What we're going to be focusing on is what are companies saying about whether they'll pull back because of the risks of higher inflation and uncertainty around the war. The good news for the U.S. markets was that we came into the markets with strong earnings growth and a fairly strong growing economy. But the bad news is that we also came into this year with markets at a premium after multiple years of a positive run. What we have seen, though, is the market has been volatile during this period, but not a tremendous amount of downside yet because of this war, as a lot of buyers have been stepping in. We've seen that from retail buyers, foreign buyers, and target date strategies. So we're in a buy the dip environment in the U.S. The question is, though, if this war continues to ramp up week after week, I think eventually we're going to see some form of capitulation for the markets.
Sarah, do you think that there is complacency right now when you talk about the risk markets that have been well bid and people have been buying in? Or do you have more comfort right now in the bond space where people seem a lot more concerned?
I think the bond market is telling us more of a signal than the equity markets. We've dealt with a lot of uncertainty year to date. You all were just talking about it between this war, Venezuela, what's going with AI, what's going on with private credit. There's a lot to be concerned about. I am a little surprised that equities are sort of just, walking right by it. People are still coming in to buy. That's a sign of a lot of cash on the sidelines that wants to get into these markets and rely on that earnings growth. I don't think today is the day where I'd be stepping in to buy equities. I would wait to see, are we going to get more clarity around a ceasefire for this war? Because markets day to day are going to trade on whether we think we're getting a ceasefire in the near term or we're not. Today, of course, we do not see a ceasefire coming anytime soon.
Sarah, what is the signal right now from bond markets? Is it worries about an inflationary spiral? Is it worries about some sort of fiscal impulse needed to respond to some sort of cost of living crisis? Or is this just buyers stepping back from around the world as they look to pad their own consumers' balance sheets?
Well, bond markets are worried about are two things. One is that inflation is going to spike and it's going to be more structural. And secondarily, that'll lead to the Fed having an inability to cut rates, and because we'll end up in the stagflationary environment where the Fed's hands are tied. But that is not my base case scenario. I do think that we will get to a period where this war either causes the economy to slow enough where the Fed needs to cut rates to support the economy and consumers, or they look, and even if we have an extended bump to inflation, we realize it was oil price driven. Once we're past this war, oil should settle back into the $70 to $80 range. The Fed can look at that and say, okay, we'll get past this period of inflation like we did during the COVID pandemic. We can put a rate cut in near the end of this year, another one in early 2027, and go from there.
Sarah, it's good to see you. It's always great to touch base. Sarah Malik there of Nuveen, breaking down this market. This is how the stage is set, heading into the weekend of this self-imposed deadline. We're in the talks phase. It's always a tricky moment. You've got both sides trying to anchor to the extreme and build leverage as we go on. And this can break either way. And that's what's difficult for financial market participants, just knowing that you're facing substantial two-way risk, something we keep talking about as we inch closer and closer to that deadline.
Yeah, and all sides are trying to use the market to get more leverage. I mean, that's the other aspect of this that also is giving people some agita. This idea that not only do oil prices move in response to an actual escalation, but Iran wants oil prices to go higher, and the rest of the world is looking for lower energy prices to stave off an economic crisis. Who's going to win? It is a very uncomfortable position.
It's going to be quite a morning tomorrow morning as we count you down, literally counting down the hours to the end of that deadline. The president, of course, with great discretion to push it back even further and say the talks are continuing. We'll keep monitoring the latest headlines for you. Tomorrow, we'll catch up with Russ Kostrick of BlackRock, Joe Davis of Vanguard, Michael Gapin of Morgan Stanley, Mona Mahajan of Edward Jones, as we count you down to a pretty big weekend potentially for the war between Iran and the United States. Your equity market near session lows. We're down about 1% on the S&P 500. Bond yields are higher, and crude keeps on gaining, up by around 5%. WTI, $94. Brent crude, $107. From New York City this morning, good morning. This was Bloomberg Surveillance.
Day 9 at the Miami Open. Arina Sabalenka remains on course to successfully defend her title after she took care of business against Hailey Baptiste to reach the semi-finals. She'll face Elena Rybakina for a place in the championship match after the Aussie Open winner clinched her 5th consecutive win over American Jessica Pegula.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing,
Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
You know, investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's Deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
It's Thursday. Stocks moving lower, 30 minutes until the start of cash equity trading. I'm Danny Berger. Matt Miller is off the rest of the week. Bloomberg Open Interest starts right now. Coming up, President Trump urges Iran to get serious soon, while Washington and Tehran send mixed signals on ceasefire talks. Lloyd Blankfein warns of a fire risk in private assets, saying a single spark could trigger a broader and sudden markdown. And on Wall Street, bonuses hit a record thanks to a surge in trading revenue and a rebound in M&A. All right, 30 minutes ago into the start of cash trading, let me show you what some of these stocks are doing pre-market. Jefferies, off the worst of its losses, now just down 0.7%. Missed Wall Street estimates. It had some losses on its credit bets, including MFS and First Brands. And then the memory chip stocks, they're down yet again. We talked about this yesterday. Google had announced a technology that powers AI that apparently can compress the amount of memory needed. But how big of a difference will it really make? Either way, these stocks have had a huge run up, so they are falling at least 2.8% this morning. Let's go back to our top story, though. As Iran continues to reject President Trump's push for talks, Axios reports that the Pentagon is preparing options for a final blow, including ground forces and a massive bombing campaign. President Trump posting on Truth Social this morning that Iran should get serious soon before it's too late. Joining us now is Wayne Sanders, Bloomberg Intelligence Senior Defense Weapons Analyst and retired Army Colonel. Wayne, it feels, again, like deja vu that we're escalating going into the weekend.
Yeah, I pretty much think that he saves these things normally for Thursdays and Fridays. I think part of it's tied into the end of his suspense deadline for the Iran 15-point plan that has been submitted, and the arrival of the USS Tripoli that's expected to happen over the weekend.
So then what do we know of talks? If the president is sending troops, if he's telling Iran to get serious quickly, do we understand what talks, back channel or otherwise, might be ongoing at the same time?
I think everything that he does right now is to try and provide as much leverage as he can going into talks, right? You've seen that from when he parks aircraft carriers in specific areas, submarines, you name it, around the world, and this is what he does. This is obviously a much larger escalation with that, with the 13th Marine Expeditionary Unit and the 82nd Airborne being on their way. But I mean, those talks, the real question is who it's going to, right? And I think that's one of the biggest pieces that we're looking at is, Foreign Minister Abbas Araghchi. He's the one who denies having any talks, but then says that Iran is reviewing the ceasefire plan. Almost all other media, most all other messaging has come from state-sponsored Iranian media. It's not coming from some specific center of gravity supreme leader that can provide that overarching, message for the country itself. So it makes it difficult in this time.
Then what do you make of this Axios story, Wayne, that the president might be attempting to end it in a way that would include one last and large final show of force?
Yeah, I still, when I talk about the amount of risk that comes with putting boots on the ground, I still stick with that. Putting boots on the ground is one of the things that could at least put at risk some of President Trump's legacy, because at that point in time, you're allowing people to start looking back to 2003 Operation Iraqi Freedom. And nobody wants to have that long protracted war. So I think that's a fear that has to be addressed politically. But I do think that some level of decisive escalation option sets could potentially be there. Massive last phase strike campaigns, large scale coordinated air campaign to hit remaining targets of missile stockpiles, launchers. Think about like a 30 or 40% uptick, similar to maybe something that happened earlier on in the first 6 days of the conflict. But really, or even violent destruction of Natanz and Fordo. I think I've actually talked with you about this before as well, is, if it's really about uranium enrichment, that those are the areas where that is actually taking place. And if that is something where, okay, we've already done it with Operation Midnight Hammer when that took place, but now if it was a true just blanketing of those areas to reach those areas deep within the mountain that we did not hit last time.
Wayne, thank you so much for joining this morning. That's retired Army Colonel Wayne Sanders of Bloomberg Intelligence. Let's shift gears now to tech news. Shares of computer memories, I pointed out earlier, in storage makers, they're slumping. Google said yesterday its new TurboQuant technology can limit the amount of memory required to run large language models by a factor of 6. Bloomberg Tech's Caroline Hyde joins us for more. Caroline, I feel like everything I've been reading has kind of been pouring cold water on this, saying like it doesn't make that much of a difference, but still for a second day running, these stocks are taking a hit.
Can I take a wild bet? You maybe heard Jevons paradox a couple of times.
I have
again.
Indeed heard that.
It's like DeepSeek all over Citigroup, JP Morgan saying, look, if you can do more with less, we just do more. It just means we're going to use these models even more. It just means that the amount of AI accelerators will continue to expand, and actually SK Hynix, Samsung, Micron will continue to see significant demand for their chips. The bottleneck has been the anxiety, and maybe we get a bit of profit taking. So I do think that's notable. Also, when you say it's new, look, Google's been publicizing what TurboQuant can do this week on X. It was actually last year that they first publicized about it. So you've been in the know, and if you've been really in the weeds on these stocks, then you perhaps would have understood the fact that we could do 6 times as much with certain memory going forward. But look, a lot of retail names, a lot of others have got into what have been ultimately momentum trades. I mean, Micron's up 300% last year. You've got some of these Asian names up 700%. No wonder there's a bit of like, maybe a bit of profit taking.
Yeah, I was going to say, how much of this is just about these things have run up massively? The amount of times that I've talked about Jevons paradox in the past year that I never thought I would. So elsewhere, I mean, Google related, Meta and Google found liable in this social media addiction case. The amount that they're paying, I mean, it's peanuts for them, right? Meta must pay $4.2 million. Google owes $1.8 million. I mean, that's truly nothing for them. So are there wider implications? Could this be more damaging for them down the road?
Could it be a tobacco-like moment is what people are trying to worry about. Look, the stock market would say no, and actually you saw the shares trade a little bit higher yesterday, even after the findings. But this is going to be knock after knock, headline after headline. Are these companies now going to take each and every case as it comes? A wall of thousands of claims are going to come from individuals, from schools, from states. And yes, as Matthew Schettenheld, who works for us over at Bloomberg Law, has said, and time again, this was probably the best they had in terms of resiliency of court case. So Kaylee GM, this is a 20-year-old woman in LA, has managed to persuade 10 jurors out of 12 that yes, her own mental health crisis was down to an addiction of platforms, of social media platforms. Not the content she was served, but the way in which it was served. TikTok, Snap, they settled already before I went to trial. Google, Meta took it head on, and they have lost. But now the question is, do they all band together? Do they try and settle it all in one go, or do they take just the headline risk of being associated with social media addiction time and time again? Look, Google has come out fighting, to talk of that name, saying they're going to appeal and stop making them out to be a social media company even in itself. They think YouTube is a streaming company. But Meta with Instagram says they're still looking at their legal options more broadly, looking to appeal. But this is the question academics and many out there are wondering, do we start to see this moment of contention where Bloomberg has its own documentary where it's about Can't Look Away, about how many parents have come forward, how Australia's banned it for 16s and under, how Asia is doing the same, Europe's considering it, the state of California might stop the young using social media. What does it mean for the business model? What does it mean for advertising?
And you just spent the past 2 days down in Washington, D.C. talking to tech leaders. I know a lot of it was about defense tech in this moment in Iran, but I'm wondering what the sense is among regulators, among Washington, D.C., if there is some pushback beyond just the court cases that these big tech giants might find themselves in.
It's the one thing that maybe Congress can rally around at the moment, and in bipartisan nature, you've got a Democrat and at the moment you've got Republican coming together. They've had policy on the docket. They've been looking to get people to rally behind this since 2022. But of course, lobbying helps, changing of those in the administration, changing of the way in which big tech is considered by this particular administration. But we are starting to see a reprisal of certain bills being put forward that could start to restrain the use of social media for the young, bring out some warnings, because this is ultimately what it came down to. There was negligence argued in the development, in the organization and the operation of their platforms, but also in lack of warnings. Now, these companies have put out warnings. They have changed many things about their business model. Are they going to be forced to do more?
Caroline, thanks so much for joining. Looking forward to Bloomberg Tech at 11 a.m. Eastern. Bloomberg Tech's Caroline Hyde. And by the way, our own original investigation, Can't Look Away, the case against social media, it is available and watchable on all of your favorite Bloomberg platforms. Elsewhere, Jefferies shares, they're slightly down this morning, only down 1/3%. They posted a first quarter result that missed estimates. It reported a record 54% surge in investment banking revenue, but also was overshadowed by losses on credit bets. Let's bring in Bloomberg finance reporter Catherine Doherty. And Catherine, we talked to you about these results before. It's something that you had been warning about. Just how big of an overshadow did the credit losses? Did MFS, First Brands, what kind of mar was that on Jefferies?
That's right. So those two names that you're just mentioning, only a $17 million write-down, which in the grand scheme of things is not dragging down the entire operation that for the first quarter, posted some of their best numbers in equity trading and the core investment banking, especially pointing to strength in advisory and underwriting. But outside of that, these credit headlines that we've been posting and following, the company has been very public about their potential exposure. This write-down is what they're actually, it's what's going and hitting their top line numbers. And then they also had some unrelated outside of credit. There was a $36 million write-down tied to a sale of a telecom company that is just unwinding from something that they had already, again, publicly said that they were going to, but I think that was the unexpected number, and clearly a much higher number than the 17 million write-down from the credit bets. So there's a lot of noise that is going on here, and that's what really analysts are pointing out, is that overall the strength in investment banking and in equity trading particularly is being overshadowed by these write-downs.
And everyone seems to be nervy, jumpy, whatever you want to say about credit anyway, so maybe that doesn't help. Catherine, you and the team have also been reporting on what a great year last year was, and that's maybe no surprise, translated into very good bonuses for Wall Street.
That's right. Yes, it was a record year, 2025. And what does that mean for not just the industry, but for the city of New York? This is a city that is benefiting from the rise in bonus pools, in just overall salaries, which posted their strongest performance last year. And that's despite the tensions that already were bubbling up and have continued this year. Clearly, I think the most noteworthy takeaway from this report, this is a report that comes from DiNapoli each year, he's pointing to more skepticism ahead. He says, however, we are seeing slower job growth and geopolitical conflicts, which have global repercussions that pose extraordinary risks for short and long-term outlook on the financial sector and for broader economic markets. So it's an interesting dichotomy here. You have, on the one hand, ending 2025 on such a high note, but he's pointing to a lot of skepticism of what's ahead, and bankers ultimately entered 2026 with a windfall. They had their best trading year, and M&A was a rebound that had been long projected and finally started to come through. The big question mark when we start hearing from the banks in April, and when they're going to be reporting their numbers following Jefferies, is does that momentum continue? We expect trading to continue because of how high volatility and volumes have been, especially with equity trading. But M&A is the big question mark. The start of the year started up pretty strong, but now with a lot of the uncertainty and the war breaking out a few weeks ago, we could start to see some pullback from that, and what that does to the overall numbers remains to be seen.
As Paul Taubman said on Bloomberg Deals, maybe it's time to put away the pom-poms. Catherine, thank you very much for joining. Bloomberg finance reporter Catherine Doherty. And by the way, she mentioned the New York comptroller Tom DiNapoli. He's going to be on the close, 4 p.m. New York time. A quick check on your markets this morning. 15 minutes or so until your trading day. Stocks are down this morning. It's all being led by the price of oil. Fears of escalation as Trump says that Iran better get serious soon before it's too late. We still are on track, though, for a weekly gain. It would be our first weekly gain since the war broke out. 10-year yields, those are higher by 3.5 basis points, 436.79. Coming up on the show, a private credit fund managed by Ares posts a monthly loss in February. We're going to discuss the latest private credit concerns. That's up next here on Open Interest.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Now to high interest, a look at what's making headlines around the world. The Iran war is jolting the global economy just as it was stabilizing. The OECD now sees U.S. inflation hitting 4.2% this year. That's up very sharply from earlier forecasts. Oil disruptions driving prices higher. The group warns that energy shocks pose significant downside risks to global growth. The Wall Street Journal reporting that Fannie Mae may soon accept crypto-backed mortgages for the first time. The product would let home buyers pledge crypto holdings instead of selling assets for a cash down payment. It's not the first crypto mortgage offering, but Fannie Mae's involvement could bring these products further into the mainstream. And former Goldman CEO Lloyd Blankfein warning that private markets are piling up Tinder. He says unsold assets may be overvalued and one shock could spark widespread markdowns. He spoke with Bloomberg's Francine Lacqua.
If you haven't had a crisis, it means you haven't had a reckoning. You accumulate tinder on the floor of the forest. Right. And eventually a spark will come. The longer between intervals where there's a spark that sets it on fire, the more that accumulates. So at some point, there needs to be a forcing function or a reckoning.
Let's get more on those credit concerns with Bruce Douglas. He leads Bloomberg's leverage finance coverage. Bruce, there's a story this morning that Ares posted its steepest lossly month on record. But we should note in February that loss was under 0.7%. So can you put that in context for us? What does it mean for the fund to lose but less than 1%?
Yeah, I mean, it's a $23 billion fund, so it's a sizable fund, and it is its worst monthly loss on record. This obviously reflects losses in the public markets, where we saw steep sell-offs in the leveraged loan market, where obviously there's a lot of investment in the software companies that are also big borrowers in the private credit space. And it's notable that Ares is not alone in posting a loss in February. A Blackstone fund also saw its worst February in 3 years that month. So it is reflective of kind of wider unease in the industry.
Yeah, I mean, I was talking to someone from Apollo who is essentially like, of course these things are going to be down in February. If the leveraged loan market is down, we're going to mark our assets appropriately. But Bruce, I wonder if this leads to a bigger fear. The whole adage of sell what you can and not what you want to. If some of these funds are gated, if you can't get out more 5%, are we going to, or have you started to see stress on more public parts of the credit market as investors try to get out of some of their exposure as they want to bring in more liquidity?
Yeah, I mean, I think we're already seeing some of that stress. I mean, the leveraged loan indexes on both sides of the Atlantic have marked significant declines since the start of the year. As I say, one of the big reasons for that is this kind of fear of AI disruption and how that will impact the software as a service business model that is so key, such a key part of both the public leveraged loan market and the private credit market. And the real worry here is not necessarily just defaults. Default rates still aren't projected to be that high, but it's really about the recovery rate. If these businesses go south, they're very light, asset-light businesses. There's nothing to sell, there's no factory, there's just kind of lines of old code and a client subscription line. So there really is very little to be gained from a recovery if these companies do truly go south.
I guess, Bruce, does it make a difference then of being a big fund versus a small fund? Because presumably if something defaults and you're like an Ares, you have a restructuring team, maybe you can try to work with the business to try to get value out. What happens to more mid-market fund that doesn't have any of those resources, that all of a sudden is handed the keys and is like, we're just in the business of loaning to companies, not owning them?
No, I think that's a fair point. We have seen some consolidation in the private credit market, predating the current unease, that actually the bigger firms are starting to squeeze out some of the smaller competitors. That's certainly been a phenomenon that we've seen here, and fundraising has continued apace for the big kind of marquee firms, while some of the smaller ones are struggling to keep kind of investors on board and continue to raise funds. And obviously, when there is such investor concern as there is at the moment about both kind of credit quality and about the ease in which investors can get their cash back, there tends to be a bit of a flight to safety, and obviously the bigger names are likely to be beneficiaries of that.
Bruce, can I ask you about something else I've been thinking a lot about with this whole concern around private credit? One of the big defenses, this is something Mark Lipschultz, others have said to me, that are like, look, if you're worried about private credit, then you should also be worried about the leveraged loan market. If private credit's doing poorly, then equity should be doing really poorly, and private equity should be doing really poorly. Bruce, I wonder what to make of that defense when one of the arguments for these private assets was that they were less correlated, was that there was an illiquidity premium. Does the fact that they're behaving a lot like the leveraged loan market, or even that their defense is like, we're doing just as well as these other asset classes, suggest that maybe there is more correlation there? Maybe the illiquidity premium's not as great as we thought?
I mean, I think that's a very interesting point. Apollo's Jim Zelter, speaking in Australia the other day, made a similar point. Though it is a rather strange one. It's sort of like saying, well, you know, if you sprained your ankle, but, you know, what about the leg that's falling off? It's a rather odd way of looking at it. Clearly, if there are issues in private credit, then, and the credit is senior to the equity, then you would expect to find private equity there. And it does somewhat undermine that argument that it is a less correlated asset. And I think that is an area that is worth looking at. Private equity firms, as we've seen, are struggling of late. And I think that these question marks in private credit obviously then feed upstream to serious questions about private equity firms as well.
Bruce, really appreciate your time today. That's Bloomberg's Bruce Douglas. Coming up, InvestNet's Dana D'Auria on whether investors are underestimating the cost of the Iran war. Stay with us. This is Bloomberg Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equity markets moving lower, just 5 minutes until your opening bell. We're down 9/10 for the NASDAQ 100. That underperforms. The S&P down 0.75%. Fears of escalation. The president saying on Truth Social that Iranian negotiators better get serious soon before it's too late. And then Axios comes out with a story that the White House is preparing for a large surge in Iran to close it out. Brent crude moves higher by 4.3%, 10-year yields up by 3.5 basis points. Let's quickly go through some of the movers this morning. Precious metal miners, they're lower after a renewed drop in gold and silver. Those have been acting more like momentum assets this morning. Barrick Mining, for example, down 2.8. Henkel is buying hair care brand Olaplex. It's a $1.4 billion deal. Shares are up 50% in the pre-market. Then office furniture giant Miller Kroll dropping after it signaled a slowdown in demand and increased costs from shipping from the war in Iran. We'll have your opening bell coming up next.
cidade estava sitiada.
Nisso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are about to kick off trading on this Thursday. You're watching Bloomberg Open Interest. I'm Danny Berger. Matt Miller has left me on my own this morning. S&P futures, NASDAQ futures, all of those are lower. Concerns that it's a deja vu. We're heading into the weekend. Not yet. We do have 2 trading days to go. But with escalation threats coming from the president saying Iran needs to get serious, an Axios report about sending more troops for one final push in Iran before the end of the war. Russell 2000 futures, those were actually trading at a 2-week high, but now they're off more than 1%. So at the opening bells, something a little bit unusual, something you don't see every day. It is a takeover from both the New York Stock Exchange and the NASDAQ of a company called IR Impact. Apparently they used to be IR Magazine, so they're a bit of a trade publication. They're giving out awards for investor relations. I'm sure we have a lot of IR professionals watching the show, so congrats to you out there if you've won an award. I have to say, I think the NASDAQ has it better because the NASDAQ, I believe, has the CEO, whereas the New York Stock Exchange just has their head of content. I might have mixed that up, I'm going to be honest. But one of them, you know, they split and conquered. I don't know how you decide who goes to who. Okay, let's go to your pre-market movers so you can stop hearing me rambling on about IR Impact. Jefferies now up more than 1%. There had been some concerns about them before that they were seeing credit impacts. They were seeing losses from MFS, from First Brand, some other things in there too. However, they did notch their best investment banking quarter ever. So now shares are starting to reflect that. The memory chip stocks, those are having a bad day after having a bad day yesterday, down 4.6% for SanDisk. Micron falls nearly 4% in the pre-market. Google announcing yesterday that it has a new technology that can power AI at just a fraction of computing power currently needed, though I have to say a lot of analysts pouring cold water on that, saying it's not going to make that much of a difference. Elsewhere, back to our top story, top brass at BlackRock believe investors are underestimating the impact of the war in Iran. BlackRock President Rob Capito says, quote, "What if this disruption is a week, 6 months, a year? What is it going to mean for the companies that I own? My biggest concern is that people aren't looking at this. They're just making the assumption for an optimistic outcome." Add to that, the OECD sharply increasing its inflation forecast today due to the war, predicting a 4.2% jump in the U.S. this year. Let's bring in InvestNet's co-chief investment officer and group president, Dana D'Auria. Dana, great to see you this morning. Would you agree with the likes of BlackRock that maybe we're not fully pricing in the risks that are coming from this war?
Yeah, I have a similar assessment. I mean, I think what we all expect typically in cases like this is that there's a plan in place that's going to prevent any sort of long-term problems, you know, upset to the market, et cetera. And I think what we're kind of discovering is that that doesn't appear to be the case, right? There doesn't appear to be a good plan ahead of time for how we're going to get out of this. what goals we're even, necessarily trying to achieve here, and what victory looks like. And so if that's the case, then, you have sort of this exacerbating circumstance where you have Iran, you have Israel, who maybe want the conflict to last a little bit longer, right? They both think it potentially helps their position for it to last longer. And so if we don't sort of have that plan going in, which again, typically markets kind of look through this stuff, even the Fed, right? Which I think is one of the big, results of this is what happens with Fed rate. But even the Fed will typically look through a short-term supply shock in oil. But if it's not short-term, to the quote that you just kind of read, then you do have more serious long-term issues that you have to look at in the market.
Then what would that actually look like? Stocks now down maybe about 5% since the start of the war. Is that what's mispriced? Is there something else that you think looks a little off given what you're talking about, the threat that this just keeps going on and on?
Yeah, well, I think, I mentioned one of the biggest issues is, of course, what does this mean for rate cuts, right? So you had a market that we came into the year obviously very strong, and the market was pricing in something like 2 rate cuts probably. And we had a weak jobs report obviously come out in February, declining 92,000 jobs. So that was unexpected. We also had revisions to earlier months that took away jobs. And so that balance that the Fed looks at between inflation and unemployment, inflation's already been a little stickier than we want it to be. But the employment picture was starting to show cracks. And so the expectation was that we would get some rate cuts. Now, if this is not a short-term shock, if energy prices are going to remain elevated, and in fact, many other products that rely on the Strait of Hormuz and rely on energy itself, right, in terms of the supply chain, could be impacted, the Fed is not going to want to react quickly. They're not going to want to let inflation run away, so if it looks like this could be longer term, then you have that impact to rate cuts. You have all the, resulting economic impacts of that.
So it's a great point. And Dana, I've just heard over and over, and I mean, it's hard not to agree with this, that the impact will just depend on the duration for this. The longer it goes on, the worse it is. But I have to wonder, even though it seems like we might get an extension, Trump is talking about bringing troops into the region over the weekend. Even if it were to end tomorrow, it takes a while for the energy taps to be turned back on. There's already disruption to the Strait of Hormuz. We know that Iran can control it. Will that even be open again? Is there already a scenario built in, again, even if the war were to end tomorrow, that we will have a longer-term impact just because of the delays in getting everything back to normal?
Yeah, that's certainly what the information kind of seems to indicate, right? All of the sort of experts on this are pretty clear. This is not, even if it, to your point, even if it ended tomorrow, you're going to have months of getting everything back on and getting the straightened out, so to speak, and, kind of shipping where it needs to be again. So 100% there's long-term impact here. And I think there's also long-term impact in terms of the message. Kind of, we've already been sort of in a place where we've had this idea of globalization really under attack, and countries sort of realigning around, internal supply chains with friendlies, and sort of losing that globalization dividend. And obviously there's an impact to that as well. But I think you are right. Much as it may take months to get it back going, the market keeps ticking up every time it looks like there might be a ceasefire. It looks like, negotiations might be taking place. And there's a reason for that, right? It's because at the end of the day, if we could see an end, right? If we can see a timeline here, then we can start to calculate, okay, this is the damage and this is what we can get past it. I think the real uncertainty around, wait a minute, how long might we be mired in this, right? What are we in for here? Is this something that could go on for a long period of time is the real risk.
So with all of that risk, Dana, where do you hide out? Because gold is not giving you that protection. Bonds, you were just talking about the concern that the Fed isn't able to cut, even if we do have weaker job growth. Where do you get protection right now?
Yeah, I'm a proponent of diversification. I don't think there's any one place. I mean, gold is suffering. Obviously, a metal doesn't have any dividends, and if we have higher interest rates, then bonds are not a terrible place to be. But I think in terms of a diversified portfolio, I mean, 2025 was a fantastic year for diversification. We really saw, we started the year with sort of this theme of U.S. predominance. but international emerging stocks returning, significantly more in a year that the U.S. already returned double digits, right? And so we're seeing that still, kind of today. And there's an argument to be made for international stocks suffering even more from this. But I think diversification across the spectrum, not trying to say, to your point, there are going to be certain industries, certain sectors, certain companies that are more affected than others, and the market will start to try to price that in. For the average investor, diversifying across the portfolio is going to be the safest way. And yes, bonds, the interest rates, you're getting a return, right? The higher that interest rate, at the end of the day, you're getting a higher yield. So I think you want, kind of a good portfolio of equity and fixed income with ballast.
Dana, we're going to have to end it there. Thank you so much for joining us this morning. That's InvestNet's Dana D'Auria. 9 minutes into your trading day, let's get a check on your equity markets. They are moving lower. I believe we are still on track for a weekly gain, and it would be the first since the war broke out. But if these losses deepen, we could undo that. On the upside, interestingly, energy's doing well. Not a surprise at all. You'll see that when we look at the sectors. But a lot of these financial services, credit card companies like MasterCard, Visa, they're doing well, and I'm not quite sure why, if I'm being 100% honest. On the downside, it is all the big cap giants that are selling off, which is why it's difficult for this market to get a bid. NVIDIA, Meta, Alphabet, Amazon, it's a who's who of all of the Mag 7, so if they're down, the overall market's going to be down too. A lot of the chip makers having a bad day, Lam Research, Micron, all of those falling. Broadcom on this Google news that they have developed something that can compress the amount of memory needed. There's a question to how big of a difference it will make. Nonetheless, the shares are selling off. Looking at the sectors, energy, the only one that's up today. No surprise, this is dictated by the price of oil. One of the things I do want to point out, it's something Matt and I had talked about in the first couple weeks of this conflict, that there was some weird aspects to this market, that the safety stocks were getting destroyed, that healthcare wasn't doing well, staples weren't doing well, utilities weren't. Now we have more of a textbook risk off, where some of the safety sectors, yes, they're down, but they're not down as badly. Financials also not down as badly. We had Jeffrey earnings, their best quarter for investment banking on record. Coming up, we're going to talk more about that memory chip sell-off. The rally hitting a snag as Google's latest breakthrough limits the capacity needed to power AI. This is Bloomberg Open Interest.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television. Nearly 15 minutes into your trading day, not starting off so well, but we're only down 0.7%. The NASDAQ 100 seeing steeper losses. Nvidia, all the big tech giants are selling off, hence you get that reaction. Everything, though, dictated by the price of Brent crude. We're now back above $106 a barrel, up 4.5% or just under there. There had been some reprieve yesterday as Trump attempts to de-escalate, and now it seems like we're escalating again. If the Axios report is indeed true that this is a White House that is contemplating one big last and final push militarily in Iran. Let's get some of the top calls, the analyst action that we are watching this morning. First up, JP Morgan downgrades Scott's Miracle-Gro, saying the company will probably have to spend more on things like fertilizer ingredients, fuel, and plastic due to the conflict in Iran. Shares down 4%. Next, William Blair, they cut its rating on Adobe, saying competition is heating up, making it unclear how strong Adobe's AI edge will be going forward. Shares up 0.5%. Finally, Qualcomm, that gets downgraded at Bernstein. The firm warns that rising memory prices are weighing on smartphone demand and could drive double-digit shipment declines with conditions that will probably get worse before getting better. Shares are only down 0.4%. Elsewhere, Google's new technology dramatically reduces the chip capacity needed to run AI models, sparking a global sell-off in chip stocks. Let's go back over to the desk, because waiting for us patiently over there is Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. Mandeep, thank you so much for joining.
Yeah.
Okay, so in looking at this, I feel like every single analyst I've read from is like, this is truly no big deal. It doesn't make that much of a difference. How big of a difference does it make? Is a sell-off in memory chip stocks warranted off of this?
Not really. I mean, you could see, inference efficiency being a bigger focus for all these companies that are spending, over $100 billion in CapEx. You want to optimize for your infrastructure. So to me, Google accomplishing that through this new technique is just a sign that, one, they clearly have an advantage when it comes to CapEx efficiency with their TPUs, and now they are actually using the memory part probably better than some of the other hyperscalers who are investing their CapEx. So efficiency is something that we'll hear more and more of. But does it warrant a sell-off in the memory names? I don't think so, because we are so undersupplied. And, Qualcomm downgrade, you just, talked about that. Why? Because of memory prices. So there are a lot of pockets where even if Google doesn't need memory, the edge devices need a lot more memory. So from that perspective, I think that supply-demand imbalance is huge when it comes to memory right now.
If only markets were efficient, we all weren't tourists, and we were more like you, Mandeep, and knew better. But it's interesting you talk about Google. Is the net tech takeaway from this then? It's just like Alphabet seems ahead in terms of what they're doing with a lot of their technology and their efficiencies.
Absolutely. For every dollar of CapEx spent, I think Alphabet clearly has an advantage with the vertical integration, the chips, their own LLM, now the memory compression. And so clearly they will generate a higher ROI on this CapEx. Now, they will have more competition in the ad space, and that's the part that's, it remains an overhang, for even a name like Alphabet, because the core ads business will come under pressure from, ChatGPT and other companies really launching agentic offerings. And if you start doing things that are agent to agent, then a lot of the ads spent, on Google platform will come under pressure. And so that is a risk for them, regardless of how well they're doing on the infrastructure side.
By the way, were you looking at this Meta Alphabet court case at all? This idea that they're found liable for social media addiction. The fees, the fines they have to pay were incredibly minimal compared to the overall company. The big headline, like, is this social media's tobacco moment? Is it their tobacco moment?
I think you should expect more regulation when it comes to social media platforms, and we have been talking about it, for a very long time. We have seen quite a bit of regulation in the EU around, and look, countries like Australia have banned, like Meta platforms for users under 16. So you're starting to see, countries and regulators act. But it's very hard to, regulate these on one instance or, even a few instances. And that's where regulating social media has been hard. So I don't know if that changes anytime soon.
I guess it only gets harder when all of a sudden AI is in the picture too. Mandeep, thanks so much for joining. That's Mandeep Singh of Bloomberg Intelligence. Coming up on the show, consumers starting to feel the heat of higher prices of oils at the pump when booking travel and now shipments with the U.S. Postal Service. We're going to talk about crude coming up next on Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
You are watching Bloomberg Open Interest. Let's check on your markets this morning, 20 minutes into your trading day. The worst of the losses on the equity markets now starting to ebb. This coming from Tasnim, Iran saying that it has formally responded to the U.S. ceasefire plan, that it cites informed sources on U.S. yields. They are at 3.9%. Five-year yields were above 4% at one point. So yes, yields are still moving higher. The losses are still gathering, but it's not as bad as it was about 10 minutes ago. Gold continues to get beat up. Where do you hide out for safety? Dana Dioria says you just need a diversified portfolio. That gold isn't going to do for you. Certainly Bitcoin isn't. That's down 1.8%. And then the price of crude in New York now up 3%. Brent crude up 3.8%. And it was up more at one point this morning. It was up more than 5%, but all of that coming off the back of this idea that Iran is responding, and they sent a response to the U.S., and they're now waiting what the U.S. has to say. So that rise in the price of oil, it's already impacting consumers making travel plans. United CEO warning of airline ticket price hikes, and USPS adding a new 8% surcharge for packages. Let's discuss the ripple effects with Will Kennedy, Bloomberg News director for EMEA. Will, I thought it was supposed to be a U.S. that was more insulated. It's energy independent. The price of NYMEX crude isn't as high as it is in Brent. So why are we now starting to see corporations struggling or adding additional costs because of what things like jet fuel and diesel are doing at the moment?
Yeah, thanks for having me on, Danny. Well, even at $93, oil is considerably higher than it was at the start of the year. NYMEX had traded in the low 60s in the early part of the year, and we're already up to 93. So that in itself is a big change, but these markets are global. And it is feeding through, and product markets are stressed, and that means prices of gasoline, jet fuel, etc., are outpacing the price of the crude oil that goes into the refinery. We see that in gasoline, where we're on the verge of $4 a gallon average at the U.S. petrol pump, gas pump, and that's the sort of level that consumers really start to notice.
Well, I was mentioning a response from Iran, it appears, that is happening right now to the U.S. plan, the 15-point truce plan. This also coming from them. Iran saying that Hormuz sovereignty will remain its right. As long as this is Iran's posture, even if there were to be a ceasefire, even if there were to be an end to the war, the fact that Iran is saying that it has sovereignty, that it remains its right, can we just expect elevated oil prices, that fundamentally it needs to reset before it was before this war?
Perhaps. I mean, it will depend on how the war actually ends, and it will depend how Iran chooses to enforce that so-called sovereignty. Many countries, including the US and Gulf monarchies, the allies of the US, the UAE and Saudi Arabia, will not accept that sovereignty. They will argue that this is an international waterway and should be treated as such as it has for many, many, many years. And I think this is the crux of the issue. And Iran, as long as Iran makes that assertion, it will be very hard to reach a permanent resolution here. And you're right to say that uncertainty will weigh on oil markets, because it will be very hard for people to have confidence in the free flow of oil in and out of the Persian Gulf.
What do we know about what sort of ships are getting through the Strait of Hormuz at this moment, Will?
Well, the first thing to say is very few of them. So ship movements through the strait are happening, but they're happening at a vastly reduced rate. It was probably more than 100 ships a day before this conflict started. We're now less than 10, probably. It's sometimes a bit hard to count. But there has not been a real resumption in flows. Now, it seems that the Iranians are allowing some ships through, perhaps after negotiations, perhaps with payments involved. Some of the ships that we've seen through are like Indian LPG carriers that they need. But what we haven't seen is large movements of oil through the strait.
Hey, Will, thank you very much for that. That's Bloomberg's Will Kennedy in London. Coming up on the next hour of Bloomberg Open Interest, Ethan Devitt of Moneta talking about how to trade this market that keeps moving dramatically on the ping pong headlines. And we're going to hear from the former Deputy Assistant Secretary of Defense for the Middle East and a cabinet meeting. That's also coming up.
Tariffs, I think,
are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Former Venezuelan President Nicolas Maduro and his wife are set to appear in court in New York this hour for their first pretrial hearing since they were captured by U.S. troops in January. Maduro's vice president, Delcy Rodriguez, has been running the country since. CBS's Lilia Luciano was in Venezuela this month.
I felt a sense of calm patience even among Maduro's staunchest supporters, who told me that they trust Rodriguez to continue running the country. They also believe that the deals she is cutting with the United States are going to benefit both countries. And more importantly, they told me, some of his supporters, that they still expect that Maduro will be found innocent.
New developments in the war with Iran. Correspondent Chris Livesay is in Dubai.
Now there are reports that the United States may be preparing a final blow to bring about a definitive end to the conflict, and that it could be prioritizing freeing up the Strait of Hormuz. That's if Iran doesn't open it up itself.
Today, Israel announced it had killed Iran's top naval commander in a bid to reopen the strait. We're hearing more from the Today Show's Savannah Guthrie about her mother's kidnapping. Guthrie tells her NBC colleague, Hoda Kotb, she realizes her own fame may have been behind it.
I don't know that it's because she's my mom and somebody thought, oh, that girl, that lady has money, we can make a quick buck. I mean, that would make sense.
Almost 2 months after she vanished, there is still no sign of 84-year-old Nancy Guthrie.
And I just say, I'm so sorry, Mommy. I'm so sorry.
We're also hearing from 2 survivors of the deadly collision between an Air Canada jet and a fire truck at New York's LaGuardia Airport.
Rachel Mariotti told CBS Mornings she and Rebecca LaCourie were sitting by the emergency exit.
We didn't know what was going on. We all flung forward.
LaCourie opened the door, allowing many passengers to jump to safety. She can't stop thinking about the 2 deceased pilots.
I just want to find a way to live my life that honors them moving forward.
LaCourie says she won't get on a plane again anytime soon, but Mariotti is flying to Japan today.
Yeah, I feel a little uneasy about it. You have to face your fears at some point.
Michael Wallace, CBS News.
Transgender athletes will be barred from the 2028 Summer Olympics in Los Angeles. The International Olympic Committee announced this morning eligibility for any female category at the Games or at any other IOC event will be limited to biological females. Gender will be determined by genetic testing. This is CBS News. NYU wants to help students addicted to screens.
More Americans are trying to intentionally step away from their devices, and a recent survey suggests Gen Z is leading the charge. About 63% say that they're carving out screen-free time in their day.
But with toys and Play-Doh sprinkled across this collegiate space, some critics have dubbed it daycare for adult students. A moniker Callahan is embracing.
I'd rather be the person that tries to solve the problem and, yeah, there's some silly things that go on, rather than acknowledging that there is a problem and not doing anything about it.
Unplugging to power up new connections. Jared Hill, CBS News, New York.
After initial denials from the White House, the Kennedy Center confirms comedian Bill Maher will be this year's recipient of the Mark Twain Prize for American Humor. Maher's been critical of both the president and political correctness. The ceremony will be held June 28th at the Kennedy Center. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube. We are streaming live on Bloomberg.com as well. It is Scarlett Fu, Paul Sweeney, the Bloomberg Intelligence Program. We've got a mixed stock market out there. Lots of noise, lots of news. You know, you got to figure it out. What's the noise and what's the news? Coming up, we're going to check in with Ethan Baran, our Bloomberg Israel Bureau Chief, on the latest news out of Israel. Christina Ruffini is going to join us, foreign affairs journalist and host of Bloomberg This Weekend. She's down Lower Manhattan at Maduro, Mr. Maduro's court appearance, so she'll have the latest reporting there. Kathy Entwistle, Morgan Stanley Managing Director, Private Wealth Advisor, will give us her thoughts on these markets. And Matt Sheltonholm is going to join us, Bloomberg Intelligence Media Litigation Analyst. What's it mean for Meta and Google as they were found liable in social media addiction case? The fine's immaterial, but what does it mean going forward for them? What is the liability? Will there be any changes? So a lot coming up there. Right now, let's kick this whole thing off with John Tucker. We'll get a Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash brought to you by IBKR. Will the price of gold exceed $5,150 an ounce on March 31st, 2026? Turn your view into a trade at ibkr.com/forecast. Last trading day is March 31st. So we opened lower this morning and paired those losses. In fact, the Dow has turned around, and it's this headline that moved markets. Iran says it formally responded to the U.S. ceasefire plan, and Tehran is waiting for the U.S. response. This is according to the Iranian news agency. Right now, the Dow 67 points higher, up about 0.2%. S&P 500 down 21, again, pairing the earlier losses. The NASDAQ still down 145 points. That's a decline of 0.6%. And Brent crude really hasn't budged. It's still about 4% higher at 106.38 a barrel. 7 of the 11 major industry groups in the S&P 500, they're higher right now. You have real estate and healthcare. They're in the lead. Communication services and information technology, the biggest drags. That's tech. U.S. insurers Equitable Holdings and Corebridge Financial set to merge. This is an all-stock deal, valuing the combined business at $22 billion. You have Equitable up 0.8, Corebridge is up 0.2. Wave Life Sciences, those shares plunging the most on record after a single higher dose shot of its weight loss drug failed to meet investor expectations for reducing visceral fat. Wave Life, here's a standout, 56% lower in today's trading. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
Hi, John Tucker. Thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and on Bloomberg.com. We're also waiting, Scarlett. President Trump is holding a cabinet meeting in the White House, and when that happens, we will dip into that briefly.
And we'll see if we get a response to Iran's response to the U.S. 15-point plan. I'm losing track of whose turn it is to respond.
Right.
But we do know there's this deadline coming up that the president made clear, which is the end of this week for Iran to end the war from his point of view.
Yep, there's better to see them talking than not talking is kind of the way I proceed. So we'll see how that plays out, but we'll have that full reporting going forward here. And stocks are mixed out there, as John was just reporting. Let's take a look at some of the stocks on the move today. Let's join by Bloomberg's Bailey Lifshultz. Bailey, what are you looking at?
Yeah, one of the stocks that was on the move to a much sharper degree earlier this morning, but has dialed it back, is Venture Global, ticker VG. Company basically transports LNG. So as we've seen energy markets move, markets are responding in kind and vice versa. So the stock was at one point up more than about 4%, now closer to 1.3%, alongside kind of a push and pull, as it were, into oil movers, liquid LNG miners, LNG distributors, exporters. Again, keeping an eye on what crude's doing right now. It's at about $93 a barrel, so still up 3%, but not quite where it was before the latest headlines around conversations around potentially ending this ongoing war.
All right, let's talk about a corner of the market that had been doing incredibly well the last couple of weeks, and that's memory chip makers.
Yeah, we're seeing selling pressure across a number of companies. Want to call out SanDisk, ticker SNDK. This is the company that was carved out of Western Digital. Stock right now down more than 6%. Has been pretty much the biggest winner in the market, all things considered.
It's up 1,100% over the trailing 12 weeks. That's a 10-bagger.
It's honestly insane, and this has been a big, heavily driven by the demand and expectation around memory chip makers. Still up, again, that is a breathtaking number, still up year-to-date 167%. So the best performer in the S&P 500 really blows out like a number of baskets that track spin-off and carve-outs. But now it's fully separated from Western Digital. But this sell-off today related to Google researchers touting new compression technique that could help kind of reduce the need for memory chips, reduce the need for energy. And we're seeing that kind of knock on to some of these stocks. But Paul, as you mentioned, if you're up 1,100%, it's easy to take a few chips off of the table.
All right, real quick, JBS.
JBS, ticker JBS. It is the biggest global meat producer for people who do not track the industry closely, like myself. Up more than 7% right now, best day since August. This comes after earnings were pretty strong, EBITDA beating expectations, and really kind of calling out, according to analysts, their ability to navigate strong demands, underpinning better efficiencies, but still a lot of headwinds going on as it relates to cattle inflation and kind of expectations in the economy.
Protein, Paul.
Protein. Oh, that's right. Okay. And, you know, my strategy, just make more cows. So that's kind of where I'm sticking with that. All right, Bailey Lifshultz, thanks so much. We appreciate that. Bailey Lifshultz covers all the equity markets for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Lots of headlines going back and forth here as it relates to Iran and the Middle East. Let's get the latest reporting. Ethan Bronner, Israel Bureau Chief for Bloomberg News. He is based in Tel Aviv. Ethan, I guess if nothing else, Iran and the U.S. as it relates to this 15-point plan, some progress seems to be being made here. What can you tell us?
I'm not sure I'd characterize it as progress, well, but I mean, you know, the Americans have presented a 15-point plan. I think it's fair to say that the 15 points are pretty much what they demanded of Iran before they went to war with it. Iran said no then they went to war, now they've gone back, made the same demands, and it looks like Iran has said no once again. So I don't know. Yeah, it doesn't sound like progress, does it? No. No. But I mean, they're talking.
Is the fact, I mean, Scarlett and I were just saying, just the fact that they're talking feels a little bit better?
I guess so. I mean, you know, it's an interesting question about good and bad. I mean, obviously, from the most perspective abroad, everybody would like this thing to come to an end. I've just written a story that we put on the Bloomberg Wire a couple of hours ago that says in this country, in Israel, that is not the goal. The goal is victory, not stopping the war. So, you know, the idea is to stop Iran from having the capacity to threaten Israel and the region any longer. And if the war stops, that won't happen unless it stops on under the terms that President Trump has put forward. And that doesn't seem very likely.
At the same time, Iran is moving forward. For instance, it's been able to export a lot of oil, make a lot of money by sending oil to China, for instance. It's also charging some ships a transit fee to get through the Strait of Hormuz. So financially, you know, they're pocketing some money.
They are. I mean, I'm not sure you'd let us change places with them. They're losing all their infrastructure by pocketing a few bucks in oil. I mean, sure. Look, I am not saying that the war is going great from the American perspective. I don't know. It's very difficult for us to assess. And there's always a propaganda war underway. At the same time, there's an actual physical war, an attempt to persuade the other side to back down. And it doesn't look at the moment that either side is. Now, it is also true that from an American perspective, rising oil prices and all this kind of stuff for what is seen to be a war of choice is causing a lot of political trouble for the president. And in Iran, I think there's less political trouble. It's, after all, an authoritarian situation. So, and they may be willing to put up with a lot more suffering than the West is. We shall see.
Ethan, if President Trump were to decide to end this war, for whatever reason he sees fit, is it a fair assumption that Israel will go along with that?
It's a fair assumption, yes. I mean, as much as this country would like to see it completed appropriately, it is much more important to it to maintain its strong relationship with the United States, with this administration. And it is certainly made clear that it will take its cue from the president on this. Absolutely.
Ethan, what are you looking at next? How are you determining how to kind of keep score here?
I'm trying not to keep score. I'm not really sure it's all that useful for me. I mean, you know, there are a bunch of things we're watching all at once. One is the level of attacks by the Iranians on their neighbors and on Israel. So those have gone down to some extent. In the first days of the war, there were maybe 75 or 80 a day here, and now there are about a dozen or 8, 10, 12, that kind of thing. Is that because the Israelis have successfully taken out their launchers? Possibly. Is it because the Iranians are husbanding their stuff? Possibly. Another issue, of course, is in addition to the growing international and markets pressure to end this thing, is the interesting fact that the Emiratis and the Saudis seem now, although they didn't want this war to happen, more enthusiastic about ending it along the same lines as Israel's argument has been, because they feel there's a sort of Damocles hanging over their heads with these Iranian attacks of the last week. So will that make a big difference? It'll make some difference. And of course, are there going to be airborne ground troops from the Americans heading there? Looks like they are in the coming days. So there's a lot that we're watching, a lot.
All right, Ethan, thank you so much. We really appreciate getting some of your time. Ethan Bronner, he is the Israel Bureau Chief, Bloomberg News. He is based in Tel Aviv, and fantastic reporting coming out of that bureau as, you know, the world and all global financial markets continue to look at the social media posts from President Trump and some of the official responses from the, I guess, semi-authoritative press groups within Iran.
Yeah, and there's all sorts of reporting going in every direction, right? We keep getting reminded that the president's deadline for Iran to end the war is at the end of this week. There's also reporting from CNN, for instance, that J.D. Vance, the vice president, may travel to Pakistan this weekend for talks with Iran. But again, we don't know what the state of talks is at this point. Are they kind of talking past each other?
Right.
Or and who's even talking right now? Who within the Iranian power structure is there to kind of speak on behalf of the government?
Yep, we don't know, and I think that's reflected in the global energy markets today. Brent crude, it's off its high of today, but it's still up 4% today to $106. It did touch $108 earlier this morning, so off the high, but still markedly higher on the day, markedly higher since obviously before the war. We'll keep an eye on that. The S&P is off 21 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. The Tasnim News Agency says Iran has formally delivered its response to the 15-point proposal from the U.S. through intermediaries, adding that Tehran's now awaiting Washington's reply. So that is what is has turned the markets around to some extent. The Dow Jones Industrial Average, a lower earlier, that is now up 42 points. The S&P 500 paring its earlier losses, down right now just about 24 points. The NASDAQ 100, that is down 167 points, a decline of 0.7%. Brent hasn't moved much on this news. It's still up $4.34 a barrel, 106.56 right now. Memory chip stocks extending their losses after Google publicized that research on this new algorithm that could allow more efficient use of storage needed for AI development. It's basically compression. Micron down 4%, Western Digital down close to 4%, SanDisk down over 6% right now. We did get some economic data today. Applications for unemployment benefits, a little changed last week, so layoffs do remain low despite some of the economic headwinds. And JetBlue is said to be looking at selling itself to a competitor. Sources tell news outlet Semaphore that the airline has enlisted advisors to assess a potential deal with United Airlines, Alaska Air, or Southwest. JetBlue, based across the East River in Long Island City. So I don't know.
It's a New York airline.
Well, what would the regulators say? They wouldn't let two bad airlines get together before.
Well, JetBlue tried to buy Spirit, and that didn't go anywhere. Tried and failed.
So then,
just try again. We check the
Different
markets.
regulators, remember?
Yes.
For you, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
JD, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube and on Bloomberg.com. Nicolas Maduro is set to return to a Manhattan federal court as the U.S. pushes forward with a broad drug trafficking and narco-terrorism conspiracy case against him. Reporting for us today from the Southern District of New York courthouse is Christina Ruffini. She's a foreign affairs journalist and host of Bloomberg This Weekend. Christina, what's on the agenda for this court appearance today for Mr. Maduro and his wife?
Well, the Maduros arrived here long before the cameras. We think they were able to drive here. Our colleague Miles Miller reports that that's because his risk status had been downgraded to medium. If you remember last time, there was quite a scene where they choppered in. They are set to get started in the courtroom at the top of the hour here. It's a lot of pretrial motions, a lot of scheduling issues, but one of the big things that needs to be worked out is who is paying his lawyers. Under the OFAC sanctions against Venezuela, the government has argued that Nicolas Maduro cannot use Venezuelan government funds to pay his attorney. Now, this is the same attorney who also represented Julian Assange, so I would assume his hourly rate is pretty up there. Maduro has argued he doesn't have the funds to do it out of his personal money, but the U.S. government says he can't use sanctions money to pay his lawyer. If that's the case, his lawyer has asked to be permission to withdraw as his representation, and the former president of Venezuela could then potentially be represented by a New York City public defender.
Oh boy. Okay, so this gets more and more interesting. Yeah. It sounds like there's going to be some technical stuff being taken care of today. Christina, in general, what kind of timeline are we looking at here for this appearance and for an eventual trial?
Yeah, these pretrial motions and hearings could on their own take until the end of the year. This is not going to be a short trial. There's a lot of issues at play here, including whether or not the U.S. has jurisdiction to try Maduro in the first place. This is something, if his current legal team does to stay with him, they've already been arguing that there's something called executive immunity. Might sound a little bit like executive privilege, something our own president has argued in front of this Supreme Court, that as the leader of a country, you should not be arrested when you travel to other countries for things you did in office. Now, the prosecutors in the Justice Department argued that drugs and money laundering are not official acts and therefore wouldn't qualify. They also would argue that the U.S. has the right, the U.S. president has the right to recognize governments, and since it has not recognized Nicolas Maduro as the leader of Venezuela since that contested 2018 election, he was not the president. So even if this international law were to come into play here, which is another thing that will be argued, it doesn't matter because he wasn't really the president of the country. The only precedent for this is when the U.S. picked up the military dictator of Panama in 1990. However, at the time, he was not the leader of the country. There was a separate person who had been elected, so he was never president. So it was less of an argument there than it is here, although you're likely to see a lot of comparisons between those two cases.
Christina, have we heard anything from the Venezuelan government itself about how it views this case, either pro or anti?
So it's interesting. In January, when this extraordinary military operation was carried out from Delcy Rodriguez, who is now the de facto leader of that country and has been working with the Trump administration, and from his people in general in Caracas, a lot of outrage, a lot of pushback. That has been quieter over the last weeks and months as the current leader of Venezuela, the vice president, has been in communication and working with the Trump administration. That outcry has been muted. So it will be interesting to see their reactions after today and as this case really gets going, because they need to give lip service to support of Maduro to keep their apparatus in place and to play to their base that is still in power. But they also don't want to antagonize the Trump administration when they have what seems to be a somewhat functioning relationship between these two governments.
Yeah, so it's walking a tightrope, really.
Yes.
That was a very political question, Paul Sweeney.
I know.
Christina Ruffini, thank you so much. Christina Ruffini is a foreign affairs journalist here at Bloomberg and host of Bloomberg This Weekend on Bloomberg Radio and Bloomberg Television, and of course, outside the Southern District of New York Courthouse. Let's get a check on how this is all shaking out for the markets. Clearly, the Venezuelan case is not what's driving markets. It's all about oil prices. And oil prices right now are higher by more than 3%. Brent crude, the global benchmark, at $106. That is, of course, raising concerns about inflation and stagflation and demand destruction. Let's bring in Kathy Entwistle. She is managing director and private wealth advisor at Morgan Stanley, joining us from Delray Beach, Florida. Kathy, the rise in oil prices has remained elevated. Day in and day out, it might backtrack, it might come back again. Yet we know that oil prices are unlikely to go down anytime soon, even when the Strait of Hormuz opens up. How does that color how you view investing in risky assets?
Absolutely. There's a lot of different things that we're thinking about right now. And clearly this Iran war oil shock is the big event. However, we want to think about our clients and what they're thinking about and how we can better position portfolios. So, last week's data confirmed our inflation fears. PPI came in hot. And the longer oil stays elevated, the harder it will be for the Fed to control these upstream price pressures. And what that means for clients and just the general population is that everything is more expensive. They're getting like a tax on gas, and they're also very, very concerned about their portfolios, because usually when we have these issues with oil, we will see some downward pressure on both the equity and the bond market. So what we're looking at is favoring some high defensive stocks and such as energy, financials, healthcare, reducing overbought semiconductors, unprofitable tech, and low quality credit. What's interesting, the market looks like on the surface, surprisingly resilient, but underneath it's like a violent rotation going on, and energy and AI infrastructure are booming while software companies and private credit lenders are showing signs of stress. So these are all things we think about, and we're trying to remove some of the risk in the client's portfolio and add some more forward-looking investments.
How about on the fixed income side here? How much credit risk do you think folks should be taking in this environment? Because, boy, you could just sit there at a 2-year treasury and get close to 4% here right now.
Yeah, no, we think that investing right now in safer risk assets is the smarter move and the smarter play. We are advising clients not to be in high yield because you're not getting paid for high yield. And these are the times where you'll start to see high yield assets start to crumble a little bit. So we want to avoid that. I look at it, if you've got money in investments and money in the bank, you've won the game. We want to protect it, and we want to grow it methodically, not take undue risk.
Where does gold fit into that? For a while, everyone was flocking to gold, and they saw it as almost a risk asset given how it was performing. And they've definitely pulled back from that as concerns about the prospect of fewer rate cuts and now even talk of a rate hike really infect the market.
Yeah, on the rate hike issue, we don't anticipate a rate hike. We are still looking at 2 rate cuts towards the end of the year. So it will be interesting to see that unfold. In terms of positioning with gold, we still like real assets. We like energy, infrastructure, commodities, REITs, and gold and metals still play a position there. Basically, again, when oil-driven inflation fears take over, stocks and bonds tend to drop at the same time. So real assets provide a natural shield against inflation. So that's why we like to add that to the portfolio too. So we've been adding real assets.
Even though gold is down about 16% since the start of the war, it hasn't done very much.
No, it hasn't, but it also, anytime there's a downward trend, there also might be a buying opportunity there. And just with the thought of where we are in the markets and the economy right now, and with the oil prices going up, it's just basically a hedge. And we don't put a large percentage of clients into gold, but we do a small percentage.
Interesting, Scarlett, just as you were talking about gold, piece of research just hit my inbox from Richard Rosenberg Research. First bullet point, we maintain our long-term bullish call on gold and are looking for the most attractive reentry point since we trimmed our position. So he says maybe buy on the weakness here. Kathy, how about in the municipal bonds? I know down in Florida, you guys famously do not have those state taxes, but for those of us in high-tax jurisdictions, munis have been really, really attractive here. How do you allocate to municipal bonds for your clients?
Absolutely, that's a great question. And we have lots of clients in high tax rate states, including New York. So we are using municipal bonds. The short-term and intermediate-term municipal bonds are very pricey right now and not as attractive. So we are using long-term municipal bonds, which have still great value for clients, and placing them there. So we do like the municipal bonds, and we are continuing to utilize them, especially in an environment where, taxes are high and they may go higher at some point.
We had one of your colleagues on earlier today, Craig Brandon, Morgan Stanley Investment Management, the old Eaton Vance folks up in Boston. He was talking about a New York City general obligation bond that is in the market today, $1.9 billion, huge demand. And on the long piece of that, 27 years, it's got a coupon of 4.8%. But if you live in New York City, the taxable yield is 10.9%. So you get a AA rated credit and you're getting basically double-digit returns. Just extraordinary. That's the power of triple taxation. So very good. So we appreciate it. Kathy Entwistle, thanks so much. We appreciate it. This is like an all Morgan Stanley day today. Just getting some thoughts here. Kathy Entwistle, then Morgan Stanley Investment Management on these markets here. And again, kind of mixed. We've got, we did have earlier this morning, before some of that news, Scarlett, when Tom and I were on surveillance, we had futures down 1%, and then we got some of this news that maybe Iran is engaging a little bit on this 15-point plan. And now we've got the S&P down 0.3%, the Dow up a little bit, and the NASDAQ down 0.6.
Well, we're waiting for the White House's response to Iran's response to the 15-point plan from the U.S. I mean, if you're still keeping up, great job. The president is supposed to hold his cabinet meeting shortly, so we'll wait to hear how he responds to the latest commentary out of the Iranian government power structure. I don't know what's left there.
Yeah, I don't know, but and we will bring you some of those, some of that cabinet meeting from the White House when that starts.
This is breaking news from Bloomberg.
All right, the president is speaking at a cabinet meeting in Washington. Let's listen in.
We've really done tremendous damage to the places where they make them. And just so we set the record straight, because I've been watching the Wall Street Journal's fake news and all these stories that get printed like, oh, I want to make a deal. They are begging to make a deal, not me. They're begging to make a deal. And anybody that saw what was happening over there would understand why they want to make a deal. But they say, oh, we're not talking to them. Anybody would know they're talking. And only a total fool. And they're not fools. They're very smart, actually, in a certain way. And they're great negotiators. I say they're lousy fighters, but they're great negotiators. They are begging to work out a deal. I don't know if we'll be able to do that. I don't know if we're willing to do that. They should have done that 4 weeks ago. They should have done it 2 years ago. Or they should have done it when we first came into office, because 2 years ago they had free reign under Biden. Sleepy Joe, worst president in the history of our country. What he allowed to happen to our country at the borders, and even with a thing like this. But not just him. Every president for 47 years, every president should have done this. They should have done it a long time ago, because you cannot give lunatics a nuclear weapon, and they would have had a big one. It stopped really when we did the B-2, but even before that, the Barack Hussein Obama, what he did where he gave them the Iran nuclear deal, gave them free will toward a nuclear weapon. Basically, he chose Iran over Israel and others that didn't want him to do it. But I terminated that deal. Had I not terminated that deal, you would have had a nuclear weapon years ago, and it would have been used, guaranteed. And one of the reasons you know about the guarantee is because their neighbors were sort of like bystanders. They weren't involved very much. They didn't choose heavy sides. They didn't want to, because people were concerned with Iran. There was a big black cloud over the Middle East. They were concerned, but all of a sudden the war starts, and they start shooting at these five, in particular, 5 countries. They start shooting at Qatar, Saudi Arabia, UAE, Kuwait, Oman. They start shooting at them, and everybody was shocked, including us. You know why? Because they're sick, and they had a plan to take over the Middle East. And some of those missiles that were shot at them were locked long before we even started this process. They were locked and loaded and aimed at those countries. They wanted to take over the Middle East, but we happened to come along, so it wasn't so easy. So right now their Navy is sunk in the largest elimination of a foreign Navy that has taken place, maybe ever, but certainly since World War II. Their Air Force is gone. Their anti-aircraft and communications capabilities are totally dismantled. And one of the problems they do have when they deal with us is we deal with people, and the people aren't able to communicate with anybody else. So, you know, because all of their leadership has been gone. The first level is gone, and they met to pick a new level, and they're gone. They're all gone because they didn't make a deal, and because they're sick people. They're really sick. They're really sinister, sick people. And if anybody thinks it was okay to have a group of people like this to have nuclear capability, nuclear weapons, and if we didn't attack with the B-2 bombers, they would have had a nuclear weapon within 2 weeks of that, maybe 4 weeks. But between 2 and 4 weeks, they were planning to have a nuclear weapon. If we didn't hit them at that time with the B-2 bombers, and one of the great air raids in history, maybe the greatest, dark at night, no moon, no light, every single bomb hit its mark and just obliterated that place. So it's now buried deep under earth. And it was an amazing thing, but they would have a nuclear, and they would have used it without question. And you know that because why did they shoot all these countries that weren't even really involved with them? They weren't involved. They had no big problems because they're sick, because they want to take over the Middle East, not just Israel. Certainly Israel would have been the first on their list. They would have used nuclear weapons, a nuclear, you don't need too many of them, but they would have used a nuclear weapon on Israel, and they would have used it on the other neighbors, and then they would have come after us. And if we had a weak president, they would have done great damage. But fortunately, you don't have a weak president. I knew what was happening. And I think we've been proven right. You know, they took one missile, went 2,500 miles. They supposedly didn't have a missile like that. They had no missile with that capability. But they shot the now famous Ireland, the island that the UK was very afraid to give us because they didn't want to get dragged in. But we don't want to get dragged into their wars either. You know, it's one thing we're very disappointed. I'll say it publicly. We're very disappointed with NATO because NATO has done absolutely nothing. And I've always said, 25 years ago, I mean, I was somebody that wasn't a politician, but I was always involved in politics and I understood politics. I said 25 years ago that NATO's a paper tiger, but more importantly, that we'll come to their rescue, but they will never come to ours. And I want you to remember that we said this. They didn't come to our rescue. Now they all want to help. When they're annihilated, the other side is annihilated, they said, we'd love to send ships. They actually made a statement, a couple of them, that we want to get involved when the war's over. No, it's supposed to get involved when the war's beginning, or even before it begins. We had the UK say that we'll send, this is 3 weeks ago, we'll send our aircraft carriers, which aren't the best aircraft carriers, by the way. They're toys compared to what we have. But we'll send our aircraft carrier when the war is over. I said, oh, that's wonderful. Thank you very much. Don't bother. We don't need it. And we don't need it. And we don't need them. We estimated it would take approximately 4 to 6 weeks to achieve our mission. And we're way ahead of schedule. If you look at what we've done in terms of the destruction of that country, I mean, we're way ahead. Think of it. They have no Navy. And they had good ships. 154 ships have been shot down and are resting very nicely at the bottom of the sea. And we did that in a matter of less than a week. Because we have the greatest military in the world by far, nobody even close. So we estimated it would take approximately 4 to 6 weeks to achieve our mission. 26 days in, we're extremely, really a lot ahead of schedule. The Iranian regime is now admitting to itself that they have been decisively defeated. They're saying to people, this is a disaster. They know it. That's why they're talking to us. They wouldn't talk otherwise. But they're talking to us because they've got a disaster in their hands. They're defeated. They can't make a comeback. We're free to roam over their cities and towns and destroy all of their crazy nuclear weapons and missiles and drones that they're building. And we're doing that. They now have a chance to make a deal, but that's up to them. And they'll tell you, we're not negotiating. We will not negotiate. Of course they're negotiating. They've been obliterated. Who wouldn't negotiate? They are begging to make a deal. We'll see if we can make the right deal. And if they make the right deal, then the strait will open up. Hormuz Strait will open up. And even now, we don't know if there are any mines. You know, they have 22 they call mine droppers. Think of it. Who would have 22 mine droppers? There's a boat that drops mines. Who has 22 mine droppers? Except for people with very evil intention. So every one of those mine droppers has been struck with the same weapon we used to stop drugs from coming into the United States of America. When we hit those boats, it's the exact same weapon, extremely effective. We have unlimited supplies and extremely effective. But they have no more mine droppers. By the way, speaking of drugs, we're 98% down drugs coming in by water, by the ocean, by the sea. 98%. And we're trying to find out who are the 2% because we think they're the bravest men anywhere in the world. Maybe women. But whoever's on those boats is very brave or doesn't watch television. But where drugs coming in by sea, coming in by water, are 98% down. And now we'll stop the drugs coming in by land. The land is the easy one. You had to stop the water. A lot of it came into the water. Now it's all pinched. And these people are trying to come in by land. And we will, that's it. That's the easy one. But we had to take care of the water first. Nobody's coming in. Virtually nothing is coming in anymore. It was hundreds of millions of dollars a week were coming in by water. But they now have the chance that is Iran, to permanently abandon their nuclear ambitions and to chart a new path forward. We'll see if they want to do it. If they don't, we're their worst nightmare. In the meantime, we'll just keep blowing them away, unimpeded, unstopped. Well, there's not a thing they can do about it. They can't do anything about it, you know. I tell you, if they could, you'd be hearing about it. You'd be hearing about it. You don't hear anything about it. They can't shoot our jets. We have the best military equipment in the world. No, not even a contest. You see that with Venezuela. They had other equipment. They didn't have ours. It didn't work. Didn't work. Think of it. We did the situation in Venezuela. It was a great military operation, getting a very, very dangerous man who's killed a lot of people, forced people into our country. Incredible. He emptied his prisons in Venezuela, emptied his prisons into our country, and I hope that charge will be brought at some point, because that was a big charge that hasn't been brought yet. It should be brought. He emptied his prisons into our country and was a major purveyor of drugs coming into our country. And he's now been captured and he'll, you know, I guess be given a fair trial. But I would imagine there are other trials coming, because they have they've really sued him just in a fraction of the kind of things that he's done. Other cases are going to be brought, as you probably know. In the meantime, with Iran, we're going to keep doing what we've been doing, and nobody's a match for the United States, but they're not a match for the United States. It's small potatoes. That's why I'm so disappointed in NATO, because this was a test for NATO. This was a test. You can help us. You don't have to, but if you don't have, if you don't do that, we're going to remember. Just remember this in a number of months from now. Remember my statements. They have an expression, a great expression: never forget. Never forget. So as we end threats to America abroad, we're focused here at home on building the greatest economy in the history of the world. Now, before this started, the Dow hit 50,000. The S&P hit 7,000. Both of those achievements were not achievable. Every one of you, most of you, I guess, said you'll never hit 50,000 during a 4-year period because it was too high a number. Well, we hit it in our first year. And I said, well, now we have to take an excursion to Iran. If they stop this maniac who's no longer with us, the supreme leader wasn't so supreme, no longer with us. It's very sad. But we have to stop him from blowing up the world, blowing up the Middle East, and blowing up our country. And we did that. And I thought, frankly, the oil prices would go up more, and I thought the stock market would go down more. It hasn't been nearly as severe as I thought. I think they have confidence in maybe the American president and maybe the people sitting around this table. But Americans filing their taxes this year are receiving record-setting refunds. It's been a very big story. Well, it should be a big story. I don't think you read about it that much, but I speak about it. You know, I speak about it because if I speak about it, at least people hear. You don't write about it. You don't write about the drug prices going down. It'll be going down 30, 40, 50, 60%, 70%. Favored nations, called most favored nations. We're going to be paying the lowest price anywhere in the world. Before we paid the highest price in the world, Bobby, right? And now we're going to pay the lowest price in the world. That's quite a difference. It's a difference of from 40 to 70 and 80 and even 90%. That's a pretty big difference. But we're slashing regulations, and investment is pouring in from all over the world. We have the most investment of any country in history has been put into our country in the last year. And again, we had to take a little detour. Won't be long. Going to end soon. We had to take a little detour, go to Iran, and we had to put out a fire. Very dangerous fire that could have blown up big portions of the world, if not the whole thing. So tomorrow we'll be announcing a variety of actions that we're taking to support American farmers, who we never forget. We love the farmers. We gave them $12 billion out of tariff money. We had a tremendous amount of tariff money come in, and we continue to have. We've gone, as you know, the Supreme Court gave us a very unfortunate, foolish ruling, a ruling that gives the people that have ripped off our country for many years, gives them some money back. But, it's one of those things. It's a terrible, terrible, horrible mistake they made, but it's okay because we have another method that's just as good. We'll use the other method. But because the tariff money has been so substantial, we gave our farmers who have been mistreated by some countries, we gave them $12 billion, and they're extremely happy, and they deserve it. They've been great. They never complain. They just go out and they farm, and they wouldn't do anything different. They wouldn't trade jobs with any of you, except maybe some of the fake media. I don't know. Somehow I don't see that. I like their job better, actually. I love the farmers. So we gave them $12 billion. So in just a few moments, Treasury Secretary Scott Bessent will discuss the actions that we're taking to address energy prices, which have not gone up as much as I thought, Scott, to be honest with you. And you know, it's not over, so maybe it'll go up a little bit more. It's all going to come back down to where it was and probably lower. And my predictions have been right. Trump was right about everything. They have a new hat. Trump was right about everything. It's pretty right. But Scott's going to address that. And I think before we go very much further, I want to ask Vice President J.D. Vance to say a few words about where we are with the situation he's involved with Steve and with Jared on negotiations. And then some of the others will speak. We'll have Marco say a few words. Pete Hegseth, who was born for this role. I mean, he's doing a great job. They gave him a hard time. And now people, I'll tell you, somebody came up to me yesterday, gave you a very hard time, said, you know, I made a mistake. Pete Hegseth is doing a good job. So when I tell you who, you're not even going to believe it. He said Hegseth. He gave you such a nasty hard time. But you're doing great. And then Steve is going to speak, and Scott will speak last. And if we have any questions, we'll take some questions. You may have questions. I doubt it, but you may have some. So, J.D., please.
Yes, sir. Well, thank you. It's good to see everybody. Proud to be part of this team. Proud to be serving the president of the country. Let me just say a couple things. The first of all is the president summarized this very ably. But look, the Iranian conventional military is effectively destroyed. They don't have a Navy. They don't have the ability to hit us like they could have even a few weeks ago. And what that does is that gives us options, Mr. President. Now, there's been a lot of reporting about diplomatic options, about negotiations. There's, of course, Pete and his team. There are further military options. But what we have now that we didn't have when the president took over just a little over a year ago is the ability to use every tool at our disposal to ensure that Iran doesn't get a nuclear weapon. Because when I say options, I think it's important the American people know options for what? And it's options to ensure that Iran never has a nuclear weapon. You talk about people who walk into a crowded supermarket and have a vest on, and they blow up the vest and a couple of people get killed, and that's a terrible tragedy. What happens when what's on the vest is not something that can kill a couple of people, but can kill many, many tens of thousands of people? That is the most important American national security objective that exists for any administration at any time, is you don't want the worst people in the world to have a nuclear weapon. That's why the president is doing this. That's why the president cares so much about this particular issue. I'll let Steve talk a little bit about the details of the negotiation, but the last thing I'll say before I turn it over to Marco is I'm very mindful, of course, that we have a lot of folks overseas fighting very ably for the United States of America. I know Pete and the whole team, we're very proud of them, but they're fighting at a time where we are about to enter as Christians the most important week of the Christian calendar, the Holy Week that celebrates the return of Jesus Christ to Jerusalem. And so I want to say to all of my fellow American Christians, but particularly those serving in the Gulf, that I wish you all a very blessed Easter, a very blessed Holy Week, and we continue to stand behind you and continue to support you every step of the way. Thank you, sir.
Thank you very much. Marco?
The most important job any president has is to keep the American people safe. And every president says it, but we have a president that means it and does something about it. As the president outlined very clearly to the world on the night this operation began, Iran has been at war with the United States for 47 years. For 47 years, Iran has been killing Americans and attacking Americans across this planet. And other presidents had an opportunity to do something about it. And they all warned about how Iran was dangerous, but they refused to act. And this president's not someone that's going to refuse to act. He's not going to leave a danger like this in place. He's going to address it, and that is what he is doing. From the very first night of this operation, the president made it very clear. People like this, and now what I'm talking about is not the people of Iran. The people that run this country are radical Shia clerics. These are religious fanatics. Look what they are doing now. At their weakest point, this is the weakest Iran has ever been, and look at what they're doing. They're attacking embassies. They're attacking hotels. Imagine what these people would do if they had a nuclear weapon. That is an unacceptable risk for the world. By the way, the president's not just doing a favor to the United States and to our people. This is for the world. He defined very clearly on the first night of this operation what the goal was. We were going to destroy Iran's Navy, and that is happening. We were going to, if it hasn't already happened, I'll let Pete speak to the specifics of it. We were going to destroy their missile launching capabilities. We're well on our way to achieving that goal. We were going to destroy the factories so they couldn't make more missiles and more drones, and that is moving forward. Every single objective the president clearly laid out on the first night of this operation is being effectuated. Again, Pete will speak to the specifics of it. This has been an incredibly successful operation. Every day, it may not get covered because, you know, we're unlike them. We're not bombing embassies and hotels. We're hitting military targets. But every day, the Department of War lets the drummer get wicked over every portion of Iran that has these military capabilities, and the results are going to bear fruit for the world. The world is going to be a safer and a better place when President Trump's mission here is achieved. And frankly, I think countries around the world, even those that are out there complaining about this a little bit, should actually be grateful that the United States has a president that's willing to confront a threat like this and not allow it to continue to persist. Because these people will kill as many Americans as they have a chance to do, and if they have a nuclear weapon, as the Vice President pointed out, they could kill millions of Americans in the future, and that is a risk that was not going to continue to exist as long as we had this president.
Thank you, Marco. You know, it's very interesting because yesterday I was watching, is it Anthony Blinken, and he was saying that they should have done it. But they didn't do it. Nobody did it. Nobody did it. For 47 years, Marco, that's the number, 47. I guess now it's 48, because we've been saying 47 for a long time. It's probably 48. But for 47, 48 years, every president should have done this. And some are saying now that they made a big mistake in not doing it, but we're taking care of business. Steve Witkoff, please.
Mr. President, it is my distinct honor to be a member of your cabinet and to report to you and your team on our negotiations with Iran. Mr. President, you directed Jared and I to pursue a diplomatic resolution with Iran prior to Operation Epic Fury, which we did. However, it became quite clear during these meetings with the Iranian negotiating team that we could not make a deal that fulfilled your objectives of the following: no enrichment whatsoever, no chance of weaponizing whatsoever, decommissioning of Fordow, Natanz, and Esfahan, which you destroyed in Operation Midnight Hammer, no stockpiling of any material, which they flagrantly violated, turning all enriched material over to us, and a cutback in Iran's missile inventory and range capability of those same missiles. Throughout our meetings with the Iranians, we heard the following from them. The Iranians have the inalienable right to enrich. Then we heard they possessed enough 60% enriched material, 460 kilograms, to make 11 atomic bombs. Finally, we heard the following statement. They would not give up diplomatically what we could not win militarily. In other words, they were again miscalculating the success of Midnight Hammer, which was a total success. These are incontrovertible signs, among many other signs, sir, that their regime had not given their negotiating team authority to make a deal required by you. We conferred with you and all the other members of your foreign policy team, Susie Wiles, Pete Hegseth, the chairman, Marco Rubio, JD, Scott Bessent, Chris Wright, John Radcliffe, throughout all of these negotiations, and we were repeatedly rebuffed on everything we asked for. I have no doubt that we exhausted all efforts on behalf of a peaceful resolution, as you directed. Jared and I both agreed that the Iranians were there to buy time until a weaker president arrived. This was a flawed strategy, as your clear direction was to never allow Iran to obtain a nuclear weapon today or any time in the future. Against that backdrop and our compelling military successes in epic fury, we have had multiple reach outs from the region and others who want to play a role in ending this conflict peacefully. I can report to you today that we have, along with your foreign policy team, presented a 15-point action list that forms the framework for a peace deal. This has been circulated through the Pakistani government, acting as the mediator. And this has resulted in strong and positive messaging in talks, as you just indicated to the press. But these are sensitive diplomatic discussions, and you have directed us to maintain confidentiality on the specific terms and not negotiate through the news media as others do. I can say this: we will see where things lead, and if we can convince Iran that this is the inflection point with no good alternatives for them, other than more death and destruction. We have strong signs that this is a possibility, and if a deal happens, it will be great for the country of Iran, for the entire region, and the world at large. Your policy of peace through strength is the most effective tool for a diplomatic resolution here, just as this policy was an effective tool in each and every one of all of the other conflicts you settled in your first year. Iran is looking for an off-ramp following your powerful threat on Saturday. Your indications that you are willing to listen to peace proposals have been well received. You have instructed us that your preference is always peace, and that we should make that our priority. We have delivered that message, sir, along with the 15 points for peace. Finally, we have told Iran one last thing: don't miscalculate again.
Good. Thank you very much. Good job. Doing a great job. Everybody around this table is doing a great job. Pete Hegseth, please.
Mr. President. I'll start kind of where you left off, Mr. President. Thank you for doing the work of the free world and having the courage to step up and stop the Iranian terror regime from holding the world hostage. That's really what it is. And 27 days ago, Iran had a modern military. Never in recorded history has a nation's military been so quickly and effectively neutralized. Operation Epic Fury is not an endless war. It's a decisive campaign with clear objectives to destroy Iran's offensive military capabilities and ensure they never obtain a nuclear weapon. This is stuff for the history books. This is stuff for legacy. Mr. President, you are acting now to ensure future generations do not have to live under the threat of a nuclear-armed Iran. However, you wouldn't know it if you listened to the dishonest hate Trump media, as you referenced. The folks here in the room, these cameras, they have a choice. You're either informing the American people of the truth or you're not. Because I hear it from my people every day. Behind every headline you write, there's a helicopter crew in the air. And behind every news banner you write, there's a battalion on the move. And behind every fake news story, there's an F-35 pilot executing a dangerous mission. My message to the media is get it right. This actually isn't something new to me. I may be a young guy, Mr. President, but I'm not a rookie in this realm. In 2007, I helped lead the surge, the public fight for the Iraq surge. Stood and watched people stand in the Senate and declare the war is lost before it even started. Who was that? It was Harry Reid. That was the Democrats and the media working hand in glove. Back then, it was 3 years into a war. Now we're 3 weeks into an operation. But see, unlike Iraq, this isn't a tie. This is not parity. This is not chaos. This is success, pure American success, on plan, and as the president said, ahead of pace. Over 10,000 enemy targets destroyed, Over 140, I think now you're right, Mr. President, over 150 naval vessels sunk, underground facilities destroyed, their defense industrial base in shambles, and overnight, not only do they not have a Navy, Mr. President, they no longer have a Navy commander. IRGC's Navy commander was killed overnight in operation. So no Navy leader. Now that here's the thing about the media, though. If President Trump had not acted, you'd be screaming, why not? And now that he has taken decisive action, you're asking, well, why did you? It's the same old tired playbook, TDS in your DNA. But the hardworking, God-fearing, patriotic Americans out there know better. And you alluded to this, President Obama, Mr. President. Here's a fact that you don't hear on your networks, but we know. Many of the Iranian military factories and bases that we're systematically destroying were paid for by the pallets of American cash that Barack Obama flew into Tehran under the Iran deal. You might call it an inconvenient truth. Iran took our money and turned it into weapons and bunkers and ammo. And now we're destroying those weapons, and you're righting, Mr. President, that grievous wrong. And make no mistake, we had to act. And our objectives are clear. No nukes, no Navy, and a complete dismantling of their missile program and defense industrial base. And as Marco pointed out, that mission, and the VP as well, has not changed since day one. Yet, 2 days ago, they shot 2 failed missiles on a target 4,000 kilometers away. For years, they told the world that their missiles could only range 2 kilometers. Surprise. Yet again, Iran lied. And to the world, I say London is 4,000 kilometers from Iran. Washington, D.C. is 3,300 kilometers from Venezuela, another country President Trump did something about that partnered for a long time with Iran. So you're telling us that Iran is not a threat to the world or to the U.S. President Trump knows better. And here's what success actually looks like right now. You mentioned it, Mr. President. A-10 Warthogs, if you know them, you love them, and Apache helicopter gunships are flying strike missions inside Iranian airspace and throughout the Strait of Hormuz at will. See, you only send these slow, low-flying, close air support platforms when the enemy has no meaningful air defenses left. Their presence is proof that Iran's air defenses are gone. Their command and control is shattered, their top leaders hiding in underground bunkers, while their mid-level commanders are being crushed in the field. The morale of their fighters plummeting, and we see that disconnect daily. They're privately admitting, as you said, Mr. President, very heavy losses. We know that. President Trump has given us a clear mission. Our capabilities are only going up and Iran's are plummeting. We are here to win, and we're full speed ahead. So, Steve, we appreciate your efforts. We pray for a deal, and we welcome a deal, and we have the ultimate deal maker to make it happen. But in the meantime, as I said yesterday, the Department of War will continue negotiating with bombs. War is negotiation by other means. And finally, I want to thank our incredible troops, our pilots, crews, sailors, refuelers, air defenders, the absolute best of America, the real 1% of our country. This President Trump, has your back. And I know this cabinet prays for you every single day. We ask the American people to do the same as they continue in this mission. God bless. Thank you.
Thank you very much. It's great. I think before I ask Scott to say a couple of words, it would be great if people like the mayor of Chicago and the governor of Illinois would say, please come in and stop the crime. A beautiful young lady was killed the other day, and the father was a very good friend of Dan Scavino, and he took it very hard. Dan took it very hard. He liked the father, friends. They grew up together. And it's a young lady whose life would be saved if we did what we did as an example in Washington, D.C., which is now a safe city. All the time, people come up to me in the building, people that work here, they say, thank you so much. I know immediately what they're talking about. They're able to walk to work. They walk to work. You all walked to work. Some of you were mugged. I know you told me stories. Some of you were mugged. One person in particular was viciously mugged in the group right here. It's not happening anymore. You have a safe city. Louisiana, the governor of Louisiana called me, can you help me with New Orleans? They just had the Mardi Gras. He said it was the safest Mardi Gras we've ever had. Sounds terrible to say. No murders. You know, it sounds like, who would say this? No murders. But they always had murders. They had a lot of crime during Mardi Gras. He said virtually no crime. We had the troops down there. Memphis, Tennessee, I just got back. We were there. Crime is down 75%. In a short period of time, we're there 5 months. We could do that for Chicago. We could do that for New York. We could do that for LA. And we could do that for, frankly, San Francisco. I know they have a mayor who's trying very hard. He's a Democrat, but he's trying very hard. But we can do it much more effectively because he can't do what we do. He can't take people out from the city and bring them back to the country from where they came, where they were in prisons. They were allowed to go in prisons. There were drug dealers, the highest level drug dealers, murderers, 11,888 murders. We do things that they can't do. I had friends calling me up from San Francisco. Could you give him a chance? I said, absolutely. If you want him, we'll give him a chance. He's trying. He's doing okay, but we could do much better. We could make it a lot safer than it is. San Francisco, a great city, was a great city, could quickly become a great city again. But, you know, they're going very slowly. I tell my friends, they're very substantial people. They're in a certain business where people have made a lot of money. I don't hope that lasts. But they have a tremendous potential. It was one of the greatest cities in the world. Now it's got a lot of crime. And the mayor is really trying it. Again, a Democrat trying. And I spoke to him. He just wants to have a chance. And I said, we'll give you a chance. But we can solve it very quickly. This young lady would be around today if we were around, because we have nobody coming through our border. I mean, literally for 9 months, it's zero. It's hard to believe that that number can be possible because millions of people came in through Biden. But nobody even tries. We don't have the caravans of thousands, 25, 30,000 people pouring into our border. They come up in caravans. We don't have caravans anymore. There's no such thing anymore. There's a name that I think I developed, but somebody developed it, but I think it was me. I thought it was inappropriate. Thousands of people would come up and just barge into our country, totally unchecked, totally unvetted. And this man came in, Dan, right? And he came in through the ridiculous open border of Biden. If we were there, the election was rigged. What are you going to do? Came back, big comeback. But if we were there, we wouldn't have had people coming through. It's amazing. You know, it's so easy now because everyone knows they're not getting through. We don't have any caravans. Once they know that, when it was easy to come through. When I heard that they had an open border policy, I said, boy, this is going to be, I couldn't believe it. But when it was actually, you know, it dawned on me because I had built 1,000 miles of wall. And we were finishing up some, and he didn't want to finish it up. I said, they really do want to have an open border. And we got it finished. But that young lady would be alive today. And she'd be alive for another reason, because we would have the National Guard in Chicago and in New York and in other places. And they love doing it. It's like training, to be honest. It's actually training. I never want to take them out of D.C. I mean, maybe somebody later on will do it, but I never want to take. You know, the people, they look, they say, we feel so good, we feel so safe. We see these beautiful, strong people, and they're so nice. They open the doors for people. They carry bags. They pick up paper when they see paper on the ground. I looked at D.C. last night. I drove to make a speech, and I drove through, and I said, take me this way, take me that way. The city's clean. The fences are down. You don't have homeless all over your parks. I mean, we had parks. There was no room for anything else other than homeless. It's all clean and nice. And it'll be even more beautiful in a year from now. And we have some projects that are great. This ballroom is going to be something that's so beautiful for the city, so desperately needed by presidents. I mean, now it's no secret the military wanted it more than anybody. was supposed to be secret, but it became unsecret because of people that are really unpatriotic saying things. But doesn't matter. Doesn't matter. It's going to be great. We're building an arc, a triumphal arc, which will be incredible for the city. Incredible. We're fixing up what was the Kennedy Center. I was honored when the board changed the name a little bit. Actually, it shows that the Republican and the Democrats, they work together. It's really something we work together. I think it's a great symbol, actually. But we're doing a lot of work. That building is ready to fall down. It's in terrible shape. We're closing it. We're going to open it with a bang in less than 2 years. It'll come in under budget, ahead of schedule. That's what I do. It won't be like the Federal Reserve that's costing $4 billion or something thereabouts. Think of it, $4 billion. You know, it's amazing. I said to the group before, I said, everything I do, I get sued. I build under budget, ahead of schedule. I get sued over a ballroom that's going to be the most beautiful ballroom in the country, so desperately needed. You won't have to have tents sitting on the wet White House lawn. If it rains, you get wiped out, to honor the president of China or the president of France or the president of somewhere. You can have the greatest. We get sued by the National Trust for Historic Preservation. They don't know what they're doing. Then I just found out we got sued by that group and another group, I guess, on the fixing up of again, I'll use the old name, Kennedy Center, because they're not fixing up Trump Kennedy. It's going to be beautiful when you add the name Trump. But we got sued, and all I'm doing is fixing it up. We're fixing broken marble. We're putting on a roof because it leaks like a sieve. We're fixing steel that's broken. It's the same building, same exact building. We're fixing it. It's going to be beautiful. It's going to be so beautiful and safe. It's actually unsafe. You had some of those columns on the outside that were painted a fake gold. Now we painted them a beautiful white color, beautiful cream white. It's beautiful. Everyone said it's so much more beautiful now. Instead of a cheap, you can't imitate gold. See, I'm a gold person. It's all real stuff. You can't imitate it. Someday they'll discover a paint that will look like gold, and the guy's going to be the richest man in the world. But you can't imitate real gold. It just doesn't. That's 24 karat, which is what this building deserves. But think of it. I get sued because I'm fixing up the Trump Kennedy Center. We're going to make it gorgeous and safe. We're fixing new windows, new this, but just all fix them. I got sued by preservationists. But you know who they didn't sue? The man that took this beautiful Federal Reserve building. That's small, much smaller than the hotel I built. I built the Waldorf Astoria Hotel down the road. And it was a beautiful job for $201 million. It's bigger, I think, than the Federal Reserve building. And it's got rooms and bathrooms, and it's not like just an open office space, which is much cheaper to build. Think of this. I hear he's going to be over $4 billion for a little building. He doesn't get sued by anybody but me. I sue because it's either somebody's very crooked, which has to be, because what happened to all that money? You can't sue. I would have done that building for $25 million. It's going to cost maybe $4 billion, and we have a great new person coming in to take over the Fed. And Kevin may not ever have an office, because I don't know if they're going to be able to build. I passed that building the other day. It's a see-through. You know what see-through means? There's no walls up. And they're going to spend. But the National Trust for Historic Preservation, which is a joke, by the way, they didn't sue that building. They didn't sue anybody. But they sued me, and I build. And by the way, my buildings, it's all donations. Rich people and people are putting up the money. Zero taxpayer dollars. Is that right, Scott? Zero taxpayer dollars. This stuff is all done for free, and I get sued. This could only happen to Trump. But they don't sue the guy whose interest rates are too high. That's why we call him Too Late. His name is Jerome Powell. We call him Jerome Too Late Powell. And done a terrible job. He suffers from Trump derangement syndrome, as he probably should, because I hit him pretty hard. But so I don't blame him. But They don't sue a man who has taken this gorgeous building, ripped it down from the inside, taking ceilings that are as beautiful as you've ever seen, taking the ceilings down instead of leaving them, taking walls down that were 2 feet thick of solid concrete and plaster, replacing them with 6-inch walls with no insulation. I said, let me ask you, are you going to put insulation in? No, it's not in the budget. Insulation costs $5. Now you're going to hear the guy next door. If he's next door to me, I'll be able to hear his military plan. I'll know exactly. If Lutnick is in there, I'll say, oh, I know exactly what Lutnick's got planned. It's the craziest thing I've ever seen. They've ripped this gorgeous building apart, and you can never build it again. I could, but it costs a lot of money. But a normal person can never build. So you're going to have crummy little walls, a flat little ceiling eventually, but right now you don't have anything. And nobody sues this guy. And then when Jeanine Pirro, working with Pam and others, has the courage to sue to find out what happened to maybe $4 billion and a building that may never be occupied by Kevin Warsh. She may never get there. We're going to have to find him some space in the White House. We'll put him in the basement of the ballroom. But when, now think of it, when Jeanine Pirro and Pam and the group, when they bring a suit, it's like, oh, this terrible thing. And then we have a judge that attacks us. So we've got to get our priorities straight, you know. It's a very sad thing that's happened with the Fed. And then just one other thing very quickly, you have Gavin Newsom in California Railroad. That's 100 times over budget. It's out of control. It was supposed to go from the middle of San Francisco to the middle of LA. Well, now it stops way short of both. It now goes into areas that nobody ever heard of. It's billions and billions of dollars over budget, years and years, maybe decades late. And that's why we have a country that has a lot of problems, you know. We have incompetent people. It's all people. Think of this, Federal Reserve, I would have had that building done for $25 million. I would have, if I did it, it was up to, somebody else would have done it for more. So maybe 50. But you could have done that building if it was properly done and planned. You would have done that building for, I would have done it for $25 million, and it would be better. It would be better. See this pen right here? This pen is an interesting example. It's the same thing. So this pen is very inexpensive, but it writes well. I like it. But I can't have the pen the way it was. You know what it is. I don't want to give too much publicity, but they do treat me well. Sharpie. So I came here, they have $1,000 pens. And you know, you hand pens out, you're signing and you hand them out, you're handing them to all these people. Sometimes you have 30, 40 people. And they were $1,000 a piece. Beautiful pen, ballpoint. 1,000, it was gold, silver, gorgeous. But I'm handing out to kids that don't even know what they're doing. What is this, Mommy? It's kids. They're getting a pen for $1,000. They have no idea what it is. And I feel guilty because I'm like, you know, I'm by nature, I don't, you know, it's the government. I love the government like I love myself economically. I want to save money. So I'm saying, this is crazy. And it had another problem. They didn't write well. So I take it out and I sign and there's no ink. And I got all you people looking and you say, there must be something wrong with Trump. And I'm signing and there's no ink in the pen and it costs $1,000. This one, I called the guy. I said, I'd like to use your pen, but I can't have a gray thing with a big S on it saying Sharpie. As I'm signing a $1 trillion airplane contract to buy brand new fighter jets, brand new B-2 bombers, of which we just ordered plenty. I can't do that with the press. Use your pen, but I like the pen the best, but I'll sign it. I could do like Biden did, you know? Give it to somebody else to sign, or an auto pen, or maybe sign it separately in another room, but I can't use your pen. He said, well, I can make it nicer. I said, what can you do? He said, I'll paint it black. I said, that's nice. And I can even paint the White House on it, sir, if you like, in gold. Almost real gold, not bad. And I can even do your signature, sir. And by the way, this was not staged. I just saw the pen sit there and I thought of this as an example. of how $25 million spent by me at the Federal Reserve Building would be a better job than $4 billion that they're spending. And you know, one of the things that Kevin Warsh told me, he said they ripped down the nicest building. I don't know what building they're talking about. They ripped down a building, Scott, right? Kevin Warsh said it's the most beautiful building in Washington. He said the most beautiful space. They ripped it down. Why did they do that? I don't know. Do you know what he's talking about? Is it true?
Yes, sir.
They ripped it down. We have a moron at the Fed. Who wouldn't be lowering interest rates right now? But I want to thank Janine Pirro and Pam and her group for having the courage to bring this suit. And I believe that the contractor on that job is probably one of the richest men in the country right now. I believe that it's not possible to spend that kind of money. $3 billion, $4 billion, nobody knows, nobody has any idea what it is. But it's over $3 billion, and it's probably going to be over $4 billion by the time they finish. And it may never get finished. Unless I take it over, I'll get it finished. But it can never be what it was. It's never going to have those beautiful ceilings. It's never going to have those incredible walls. The walls were 1.5 feet thick of solid masonry. They ripped them down for no reason. And I just gave you the story. And just to finish on this one, so I told that story to somebody and said, yeah, but it's not the same thing. I said, you're right. This one is better. It writes. So the guy said to me, you don't have to pay me, sir. I'll give them to you for nothing. I said, no, I don't want that. Let me pay you. I want to pay you. No, sir, you don't have to. You're the president of the United States. He was shocked. The head of Sharpie gets a call. I don't even know who the hell he is. He said, is this really the president? He said, no, you don't have to pay me, sir. This is such an honor. I said, no, I want to pay you. And he said, what would you like to pay? I said, how about $5 a pen? He said, that's all right. Whatever the hell we agreed to. Peanuts. As opposed to 1,000. And these were $1,000 pens. And we were giving them out. Sometimes, you know, you were there for signings. I'd have 30, 40 people standing behind me. I'd give out 40 pens to people. Then somebody would say, could I have a couple extra? This way I go like this. Here, you want 5? Here, take 5. But the bottom line is, they're better pens. It's a business story. So for $5, could be 0, but for $5, I get a much better pen than for $1,000. And I can hand them out. And actually, they become hot as a pistol. So what can I tell you? With that, could I give it to, please, a man who's done a great job at Treasury, Scott? Good luck, Scott.
Well, sir, as always, you're a tough act to follow, but that is very illustrated. Your economic leadership has made our military mission possible. Mr. President, national security, as you always say, is economic security. Your leadership has shown the American people that there is no prosperity without security. That our mighty military on one side, but the U.S. economic strength is fighting off this evil regime. The Iranians believe they are fighting a two-front war. It is the military war that our great warriors are prosecuting, but on the other side, they are trying to take control of the global economy through a choke point that we believe does not exist and that we will overcome. Your historic operation at Epic Fury seized a generational opportunity to demolish a regime that has coordinated over 4 decades of global terror and claimed thousands of American lives. Many people, especially the Democrats, underestimate the will of the American people for short-term volatility for 50 years of safety that we are going to have on the other side of this. And I believe energy prices will be lower, inflation will be lower before we had the appearance of security, which is not real security. Now, the American people and the world will have absolute security. Through your maximum pressure campaign, Treasury has worked to uncover all financial lifelines through the regime and cut them off. You gave that order last March. This was not something that happened overnight. This is something that has been contemplated for almost a year. The Iranian financial system collapsed in December. We have systematically weakened Iran's ability to fund operations and procure weapons, and that required months of preparations. Threats to American national security have no place in the global economic system. The oil market is well supplied. We have taken actions to ensure oil supplies stranded at sea are made available to the global market. Your bold actions like the Development Finance Corporation's Maritime Reinsurance Program in conjunction with Central Command will soon provide shippers through the Gulf region with a level of security we have never seen before. Mr. President, we are starting to see more and more movement in and out of the Gulf today, and this is more than yesterday, and this is the beginning. I am confident that shipping traffic will continue to increase on a daily basis even before we secure the straits. Turning to the home front, the U.S. economy remains strong. We had a strong economy thanks to you. We are the best insulated in the world thanks to your energy efforts in term 1 and term 2. The U.S. is an energy superpower. American workers' purchasing power is finally being restored. The latest figures indicate robust real compensation increases. We are starting to see the working family tax cuts benefits bearing fruit this tax season. 44% of tax returns have claimed at least one of your signature policies: no tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans. The average tax refund is up more than 10% for working Americans. The economy you vitalized through your pro-growth policies is well positioned to withstand these temporary disruptions. The United States dollar has reasserted itself as a safe haven asset. The U.S. dollar has appreciated since the hostilities began because everyone knows, thanks to your efforts, the U.S. economy is the best position in the world and capital is flowing in. Efforts to reprioritize economic security are ensuring the United States remains secure, resilient, and prepared for the challenges ahead. As we approach the 250th anniversary, America will never be safer and more secure militarily and economically. Thank you.
I just want to ask you a question. Is this guy central casting? I'm looking at him. I'm in Treasury. He might not be so good for war. I don't know. Pretty good. No, I'm looking pretty good too. I'm looking at this guy. He's central casting. Even the glasses are perfect. Where do you get those glasses? I think I'm going to get glasses. That's beautiful. Great job. That's really good. No, he's done a great job. And you all have. Proud of you all. Do you have any questions?
Yes. Mr. President, are you going to go in for the uranium? Like, how do you secure Iran? And
let's assume I was or I wasn't. Why would I ever answer a question?
Can you accomplish
what kind of a question? Am I going to go in for the? Oh yeah, I'm going in. We're going in tomorrow at 3:00. How could you possibly ask a question like that and expect an answer? I don't know, but I don't know. I think you're a friendly person too. It's just such a ridiculous question.
Mr. President,
please.
Thank you, Mr. President. There's been a report that potentially the U.S. is looking at diverting some munitions, air defenses that were meant for Ukraine to the Middle East. Is there any accuracy to that? Is that something you're considering?
Well, I'd have to ask me, but we do that all the time. You know, we have tremendous amounts of ammunition. We have them in other countries, like in Germany and all over Europe. We have, you know, we're packed. And sometimes we take from one and we use for another. We help Ukraine. Biden started, and he gave $350 billion away. Too much, way too much. And we sell it now to NATO. We sell it to NATO, and they probably give it to Ukraine. Mostly, I think they give it to Ukraine, but we get paid for everything that we give. We don't give anything anymore. That's a tough situation. That whole Ukraine situation, very, very tough. We're working very hard on getting that one solved. It doesn't have any impact on us, virtually nothing. In fact, if anything, I mean, we sell a lot of equipment for that unfortunate war. 25,000 people died last month, 25,000, so mostly soldiers. Some in the towns, but for the most part, soldiers. They're dying. Nobody's seen anything like it since World War II. It's a terrible situation, and hopefully that's going to get settled. You know, I settled 8 wars, and many of them I think were more difficult than this one. In theory, they were more difficult, but there's tremendous hatred between President Putin and President Zelensky. Tremendous hatred. I've seen it before, but I've never seen it maybe to this extent. And I think that's calming down a little bit, and I think we have a chance of getting it done. But it doesn't affect us thousands of miles away. That's why when I heard the head of Germany say, this is not our war about Iran, I said, well, Ukraine's not our war. We helped, but Ukraine's not our war. I thought it was a very inappropriate statement to make, but he made it. You can't erase it. But he felt that way. I said, well, you know, Ukraine's not our war. And it's not, but I would like to see all those young people stop being killed. I mean, they're being killed. It's like a slaughterhouse. What's happening there is horrible. 25,000, on average, last 2 months ago was 31,000 people died in 1 month, Marco, right? I said, it's getting crazy. It's getting worse. Think of it, 31,000 soldiers, both Russian and Ukraine, died 2 months ago, 25,000 last month. And if I can solve that, it would be a great honor to do it. I wish it could have gone faster. I solved other ones in 1 day that have been going for 32 years. We stopped one that was starting, it was already started, India and Pakistan, and the Prime Minister of Pakistan, a very fine gentleman, said President Trump solved something that was going to cost 10 million lives. That was going to cost a lot of lives, 2 nuclear nations. And those were complicated, but we got them done quickly. This one is, it's a shame. And the only reason I'm doing it, frankly, is because I want to stop death. I want to stop the death from happening. I think I'm going to go with a man that I've missed, Brian. I haven't seen you in a long time. I've missed him. He's been in a very strange location. I don't know. He's had a strange thing happen. But anyway, go ahead, Brian.
Well, good to see you too. Actually, good to see this your card cabinet here. Good to see you too. You talked about gas prices coming down. Obviously, they will. But would you ever consider suspending the federal gas tax in order to kind of temporarily alleviate some?
Well, some people should do that. As an example, in California, every time prices go down, his prices go up because the gas tax is bigger than the tax itself, bigger than the product itself. It hasn't. I mean, we've thought about it, I guess, but honestly, when I did this, I knew it was going to be a little bit. We had the greatest economy ever. We had the greatest stock market in history. I said, we're going to take a little bit of a hit, a short-term hit. It's going to end up going much higher than it was, in my opinion. I said we're going to have a great stock market. Nobody thought we could get to 50,000 or 7,000 in the respective indices. Nobody thought that was going to happen, but it did in the first year. They said it couldn't happen in 4 years, that you wouldn't hit 50 in 4 years, but you could maybe get close. We hit it in the first year. And I said, this is a good time to solve a problem that you had to solve. And that's what I did. But the gas tax, people have talked about it. It's something we have in our pocket if we think it's necessary.
And if I follow real quickly, you just recently took off, Secretary Duffy, 17,000 truckers off the road that quite frankly could not speak English, which is a safety issue.
Yeah.
Could we ever extend that to Uber drivers, Lyft drivers, cab drivers, for someone who takes a lot of Ubers, a lot of my drivers who can't speak?
Oh, well, that's not good. I didn't like that. Go ahead, John.
So that's a really good point. The problem is that our states are the ones that issue these licenses. So with commercial driver's licenses, we do have some federal control. But again, we have thousands of people who can't speak the language, long-standing rule, and it's a safety issue, right? If you can't understand road signs, if you can't communicate with law enforcement when you're pulled over and communicate what's on your rig, huge problem. But the last administration, Mr. President, they let truck driving schools self-certify that they were qualified to train truck drivers. And so this is like the Leering Center. So you pay $800 and you get a certificate that you passed a CDL driving school, and again, they have no skills. They don't have the knowledge. They don't have the skills. They haven't gone through any of the testing, and then they get licenses, and they're killing Americans on our roads. So it's remarkable, the rot that the last administration allowed to take place. We are ending that, and I need partnership with our states. Even California started to come on board. Even Gavin has started to play ball with us, which is surprising. Sure. Not all the way, a little bit of ball.
Mr. President,
you know, it's interesting because I just saw something that the nursing home business and the daycare centers in particular, they went out and inspected them in Minnesota, and they didn't exist. They're knocking on the door. He happens to be a young man, Nick, nice young man. He's done a very good job. They're knocking on doors. It's like homes, and they're getting hundreds of thousands of that. They didn't exist, and in California, it's worse. It's even worse. And I spoke with Russell Vogt. I said, Russell, don't send them any money. He said, but we have a court order that we have to. Can you believe it? A judge. The judges are really hurting this country. Our judges, Justice Roberts doesn't like when I say it, but the judges are really hurting this country. And frankly, the justices, the Supreme Court, has really hurt our country too.
Mr. President, do you have a new deadline, given that there are some talks now? Do you have a new deadline before taking?
No, I'll announce it. I mean, right now, you're talking about a deadline for doing some pretty big damage, even bigger than we've done. We'll say, well, look, we have very substantial talks going on with respect to Iran, with the right people. You know, I told you about a present, right? Steve, can I reveal the present?
You can do anything you want to say.
Thank you. They said to show you the fact that we're real and solid and we're there, we're going to let you have 8 boats of oil, 8 boats, 8 big boats of oil. This was 2 days ago. And they'll sail up tomorrow. That was 3 days ago. And I didn't think much about it. And then I watched the news, and they said, a very good anchor, actually, happened to be Fox. But I watched it, and he said, something's unusual happening. There are 8 boats that are going right up the middle of the Hormuz Strait. 8 big tankers are going loaded up with oil right through. And I said, well, I guess they were right, and they were real. And I think they were Pakistani flagged. Yes. And I said, well, I guess we're dealing with the right people. And actually, they then apologized for something they said, and they said, we're going to send 2 more boats. And it ended up being 10 boats. All right, I hope I haven't screwed up your negotiations, but I thought it was appropriate to say, because I did taunt you the other day by saying they're going to give us a present.
There were 2 illegal immigrants who were arrested at San Francisco airport for ignoring deportation orders. At the same time, as you highlighted, really great reception from American travelers for ICE agents. Is there a PR aspect of this that can allow future deportations to go on with less protesting, less outrage?
Yeah, it's amazing, because by putting ICE there, look, the press was very unfair to ICE. So was everyone else. These are great American patriots. They have a tough job. They have to find murderers and take them out of our country. I wouldn't want to do it. You wouldn't want to do it. Most people wouldn't want to do it. They do it. And, 11,888 murderers. And that's murderers. That's not drug dealers. That's not lots of other things. It's not people from mental institutions. Entire jail populations were released from major countries and let into our country through the open border. And ICE has done an amazing job. I wouldn't want that job. It's a tough job, dangerous job. So what happens is, by putting them at the airport, and I just say, do me a favor, take off your masks. And they did. For that, not for when they're looking for some, cold-blooded killers and they're in the, but for that. And they did. They took them off. And the passengers, I see the interviews of people, they're saying, these are nice people. One person said, he's a very strong man, But he's a nice guy. He grabbed my bag. He helped a woman with a bag that she couldn't lift. And I'll tell you, I don't want to use the word rehab because there was nothing to rehab, but rehab from the press, because the press is so tough on him. And these crooks in Minnesota, these crooked politicians and dirty cops. They're dirty cops, they're dirty politicians. Waltz is a dirty, crooked politician. The Attorney General is a crooked guy. He's no investigations, and I hope JD's going to do a great job. He's in charge of it now with somebody who's very talented. But I think it's easy stuff. They say $19 billion, think of it, is missing. $19 billion. If we would solve half of the fraud problem, Pam, in this country, we would have more than a balanced budget. We'd have a surplus. And in the case of Minnesota, it's very Somalia-oriented. Think of it. These people come from a crooked country, disgusting country, one of the worst countries in the world. Acknowledged to be one of the worst countries in the world. Some people say it's the worst. They have no money, they have nothing. They come to our country, low IQs, and they rob us blind. Stupid people. And they rob us blind. Because we have crooked politicians, and we have dirty cops. The Attorney General's a dirty cop. It's my opinion. It's only my opinion. And something should be done about him. Let's see what kind of a job he
Mr. President,
does.
yesterday you said that you hate mail-in ballots.
Excuse me?
Should Iran be able to charge a toll for the Strait of Hormuz? They're charging some vessels to go through.
Oh, yeah. Well, should they be able to? They shouldn't be able to, but they're doing it a little bit. I don't look. Their capability is a lot less than it was 2 weeks ago, and with every week and every day, frankly, it gets less and less. All I can tell you is they're begging to make a deal. So let's see what happens. We may make a deal. Tell me about mail-in ballots. Go ahead. You mean I used a mail-in ballot? You probably said, yeah, I did. You know what? Because I'm president of the United States, and because of the fact that I'm president of the United States, I did a mail-in ballot for elections that took place in Florida because I felt I should be here instead of being in the beautiful sunshine taking...
But you were in Palm Beach, sir, the last few weekends.
That's right. And I decided that I was going to vote by mail-in ballot because I couldn't be there because I had a lot of different things. But, we have exceptions for mail-in ballots. You do know that, right? So if you're away, we have an exception. If you're in the military, we have an exception. If you're on a business trip, we have an exception. If you're disabled, we have an exception. And if you're ill, if you're not feeling good, we have. So I was away, mostly in Washington, D.C., so I used a mail-in ballot. But I appreciate the question because I know it was so well-meaning. Yeah.
Mr. President, I actually just looked up the company that owns Sharpie, and they stock turned positive after you mentioned it. Question over it.
By the way, they deserve it.
Yeah, question
it's a good product.
So you gave a 5-day deadline. With oil tankers going through the Strait of Hormuz, is that a condition to move that 5-day deadline?
Well, we don't want anything impeded. We want ships to go through. We don't know that they've dropped any mines, by the way, because we blew up all their mine droppers, right? We blew up every one of them. They're going to have to take them out on a rowboat or something. I don't know how the hell they get them out there, but we don't really know. You might speak to it. We don't know. There could be a few of them out there, but that's a lot. If you have $1 billion ship and you get hit by a mine, it's not the greatest thing in the world. So if you think, the problem with that's not like you've decimated a military. If you think there may be a mine, that's a bad thought, and it stops things up. How are we doing in that regard, Peter?
Mr. President, you're right. We have so heavily degraded their coastal defense capabilities and their naval capabilities that any strategic or operational attempts to do those types of things are extremely limited. And we continue to move over the top of that. Now, whether Iran makes a wise choice or not to try to execute that is part of how this deal comes together. But with every passing day, the military pressure that we're putting on them lessens their ability to really hold that militarily at issue.
I mean, the problem with the issue of the Hormuz Straits is this. We've decimated them as a military. No Air Force, no Navy, very few rockets left. We blew up so many. Hard to manufacture them. Same thing with drones. The leadership is gone. The problem with the Straits is this. Let's say we do a great job. We say we got 99%. 1% is unacceptable because 1% is a missile going into the hull of a ship that cost $1 billion, right? So 1% is we can't. If we do a 99% decimation, that's no good. So it's really, a little bit. But I have a feeling it's going to clean up pretty quickly. I could just say this: they want to make, and I probably hurt our little negotiation. It gives them a little impetus to say, well, I wish you didn't say that. But they said yesterday that we weren't negotiating with them, and now they admit that we were negotiating with them. So they want to make a deal. The reason they want to make a deal is they have been just beat to shit.
So are you thinking of taking control of Iran's oil?
It's an option. I mean, I wouldn't talk about it, but it's an option.
Is that something you've thought about?
Well, in Venezuela, we've done very well working with Venezuela, certainly. And we've taken in billions and billions of dollars. And by the way, Venezuela is doing better right now than they've ever done in the history of their country. And it's sort of like a joint venture. But the United States has made a lot of money, Marco, right? With it. Do you want to talk about that for a second?
About Venezuela?
Yeah.
Yeah, I mean, I think Venezuela in the first 2 months of this year generated more revenue from oil sales than they had most of all of last year. But the money's not being stolen anymore. And it's being held in a U.S. Treasury blocked account. And to the extent it's flowing to the Venezuelan government, it's going to help people, like fund hospitals, pay teachers. It's not
and we
being
get
stolen.
a lot of it. And they got more than they have in many years. Think of it. We get a lot of it. We have a deal. We get a lot of it. We had 100 million, think of this, 100 million barrels we took in the first 2 weeks. 100 million barrels. That's a lot of oil. It's a lot of ships. And we got some, and they got some. We paid for the ships. A lot of money left over. And Venezuela has done better now with us. Call it a partner, call it whatever you want. We've made a lot of money, and they've made a lot of money. We've paid for the cost of that military hit many, many times over. And we've only just started. Our relationship with Venezuela has been amazing. The people, actually, I'm the highest polling person. In other words, after the presidency, I think I may go to Venezuela and run for president against Delcy. I may run against Delcy. It's an option. No, they like me in Venezuela, but it's an option for me. It's a wonderful option. Yes.
There's some reports that Gulf allies are concerned about winding down the war too soon and potentially leaving Iran.
Well, they'd probably like us to stay, but
the concern.
If we don't stay, look, it's a beautiful thing about airplanes that go 2,000 miles an hour is you can get back there very quickly. If we don't stay, we're going to be protecting them. We know, they've been very good. Hey, Qatar, Saudi Arabia, in particular, Qatar, Saudi Arabia, UAE, the three of them, Kuwait, Bahrain, they've been 100%. Now, in all fairness, they could have gone the other way. They were surprisingly missiled. They were shot at. Nobody ever thought they'd be shot at. UAE had 1,400 missiles aimed at them. Fortunately, they had the greatest anti-missile weapon in history called the Patriot. Almost every single missile was shot down. We had an incident recently where 101 missiles were shot at a certain thing that we own. It's very valuable. 101 missiles going 2,000 miles an hour. Out of the 101 missiles, every single one of them was shot down in midair and fell into the ocean. It's amazing technology. There's nobody has equipment like we have.
Iran still has that enriched uranium. Is it even possible?
Well, you're going to have to see, but I think we're in just very good shape. We're roaming. You know what we're doing? You know the word roaming free? We're over their skies with the most beautiful planes you've ever seen. Roaming free, there's not a damn thing they can do about it. And it would be nice if, like the fake news New York Times, which writes so fake, and the Wall Street Journal is terrible, terrible. I mean, I read a story today that I'm desperate to make a deal. If I was desperate, he'd be the first to know. Pete, let's get the hell out of there. I'm the opposite of desperate. I don't care. I want to know. In fact, we have other targets we want to hit before we leave. We're hitting them on a daily basis. I don't talk about you. I can't talk about specifics. a lot of people say that wouldn't matter. Maybe it does matter. Who knows? But I wouldn't talk. It's like the question this young lady asked. Sorry about I embarrassed her. I don't want to embarrass you because I think I think she's a friendly reporter, so I'm sorry. But I can't say what we're going to do because if I did, I wouldn't be sitting here for long. They'd probably, what is it called, the 25th Amendment? They'd institute the 25th Amendment, which they didn't do with Biden, which is shocking.
The husband feel safe enough to leave the region because Steve said that they've got enough uranium to make 11 bombs. That's a very scary thing. So,
well, again, I can't talk to you about that. You're asking me a question. You're essentially saying, will I go in and do something? I can't talk to you about that.
Mr. President, you're looking at a coalition of ships to help, warships to help protect tankers. How close are you to getting that coalition?
Well, we have a coalition for them, but they should have been up here a long time ago. And they're affected. The amazing thing is we don't need the Hormuz Strait. We don't need it. We don't need it at all. We have so much oil. Our country is not affected by this. We have twice the amount of oil as Saudi Arabia or Russia, and soon it'll be 3 times the amount. Chris, do you want to speak to that for a second?
Yeah, that's correct. Our total oil production is greater than Saudi Arabia's plus Russia, and more than we consume in the United States. So we're the largest.
Pretty good.
Pretty
you know what they call it? Drill, baby, drill. Yes.
Mr. President,
Anything else you want to say?
Well, and same thing for natural gas. We went, before your first term, we were the largest exporter of natural gas in the world. Today, we're just by far the largest. I mean, we're the largest importer. Now we're by far the largest exporter, and it's growing rapidly this year. New facilities are coming online. Production's ramping up.
We're doing an amazing job. We're getting a lot of help from that man right over there. He's getting approvals done quickly and very environmental. He's an environmentalist, actually. He does a great job, but he gives you a fast approval or rejection. Do you have anything to say?
Well, back on Venezuela, where Chris and I have both had a chance to be there, I literally think they're going to put a statue to President Trump. And I'm not being, it's not a political statement, it's an actual thing.
So. That would be a great honor.
No, because it's like they view President Trump like Simon Bowler. He's the liberator of a country. And this is a country where they love American baseball. You look on the street, they're wearing NBA jerseys. And Delcy and her team working with us, getting back. Chris and I both experienced, it was the first time in Venezuelan history that they had the free press allowed to come on to essentially where the White House, the Palacio Miraflores. And it was an emotional thing for people that had been for 20 years had never had a chance to be there. So whether it's and then production, it's showing up in production. The American companies that are coming back, most of those American companies have many American Venezuelan team members. One company in Houston's got 600 Venezuelan Americans that know more about reviving that industry. So their GDP is 1/4 of what it was before. They want to get back. They remember what it was. Their production on oil production is climbing towards 50% increase just in the 3 months we've been here. That flows to American refineries on the Gulf Coast, lowering the price of gas in America. So it's a
forget that. When are they going to do the statue?
Thank you. You've been really honest about how disappointed you are in Sir Keir Starmer, particularly in relation to Iran. So I'm curious about your phone calls with him, how easy they might be. And also, were you surprised by...
Are we talking about Starmer?
Yes. And are you surprised by how weak...
I think he's a lovely man. I do. I think he's a lovely man. But I think he did something that was shocking. He didn't want to help us. And maybe in particular that country, we were the longest bond, the longest ally. Australia, too. Australia was not great. I was a little surprised by Australia. I wouldn't say anybody was great, other than the 5 countries in the Middle East. We never really had very much support. We spend trillions of dollars supporting countries, and this is Little League. This isn't the big league deal. This is sort of Little League pool for us. This was we decimated them in a period of a week. In the first week, it was over. In the first few days, it was over. I think the Navy took us 3 days to essentially annihilate them. They weren't there. So if there's ever a big one, which I hope there's not, but if there's ever a big one, I don't think they're going to be there. And that's not fair. And we have to remember that as a country, because we spend trillions of dollars protecting Europe, protecting the countries of NATO. They weren't there for us. For small time. This is small time. You know what? Venezuela is a big deal, but it's not the big one. They weren't there. So what makes you think they'd be there if we needed them for something? And your prime minister was not there, as you know. He was there after we won. He said, we'd like to send some ships. I said, we already won. We don't need them anymore.
But can you explain why he was reluctant to help?
Why you what?
Why he was reluctant to help with Iran?
He didn't have to. I didn't ask him. I just said, just tell me, no. I mean, we're always going to be there, or at least we were. I don't know about anymore, to be honest with you. I would have to be honest. We were always there when they needed help. We always would have been there when they needed help. I mean, think of it. We're there to protect Europe from Russia. In theory, it doesn't affect us. We have an ocean, big, fat, beautiful ocean. But we're there to protect NATO, to protect them from Russia. But they're not there to protect us. It's ridiculous. It doesn't make sense. I tell you, a lot of people were big NATO people. I was never big. I was okay. I got them to pay 5%. By the way, they haven't paid it yet. You know that. You know, I got them to pay 5% from 2% to 5%. They didn't pay it yet. I got them to pay up to 2% because they weren't paying the 2%. Then I got them to pay 5%, which they should be at. And we had a lot of, oh, that was great, great. Oh, only Trump could do it. But the problem is they haven't paid. Because if you look at the numbers, they haven't paid yet. So we were there for them, but they were not there for us. Did we need them? No. I never thought we needed them. I was more doing a test. I said, I really would love to have you come up. Bring your boats. You can sail through the beautiful Hormuz Straits, and you can protect people that are being shot at. They didn't do it. And that's small potatoes. Do you understand what I'm saying?
Yeah, I do.
Go ahead.
I was just going to say, does it affect the state visit with the King that you're going to have in April? Are you looking forward to that?
With the King?
With the King coming here?
No. He's a friend of mine. He's a great gentleman. As you know, he honored me and our country. He really honored our country. But we had an amazing time. I've known him as Prince Charles. I know him as King Charles. I'm proud of him. He's fighting a tough battle. He's tough. I think he's a fantastic. It has nothing to do with that. It's different. But he's going to be here very soon, as you know. We're going to have a state dinner. It's going to be great. But I was very disappointed when the Prime Minister said, I won't be able to. It started with the island that the indigenous have claimed away from your country. And for some reason, you went for it. And all of a sudden, indigenous people that never saw the place, they never saw it. He was afraid that we would do something to himself because he's a liberal. That's the way they think. And when we needed the island to land that beautiful B-2 bomber, we were told we can't use it. We'd have to fly back to Missouri, which is a 17-hour flight, as opposed to a couple of hours. And I said, you got to be kidding. Not good. They made a big mistake.
Mr. President, is the Friday deadline for Iran, is that pushed back now, and if not?
I don't know yet. I don't know. Mr. Witkoff and JD and Jared will tell me whether or not they think it's going along. And if it's not going along, maybe not. And we have a lot of time. You know what? It's a day. In Trump time, a day, you know what it is? That's an eternity. Say it, what?
European Parliament just passed a major deportation plan. Some of the tenets of it are that member states can deport rejected asylum seekers to third countries regardless of whether they have a connection to it. It allows for detention periods of up to 2 years and also offshore return hubs or detention centers similar to ours.
Who did this? Which country?
European Parliament, and the vote was not close. It was 389 in favor to 208 against.
I'd vote with them, yeah.
Europe is where you are now. Do you think that will move the needle with Democrats?
I don't care about the Democrats. The Democrats hate our country. The Democrats are in chaos right now, and they have no common sense. You know, they have one quality that's amazing. They stick together. And it's harder because they stick together in a ridiculous policy like men playing in women's sports, open borders for everybody, including murderers and anybody else that want it. We're open to you. Come in, murderers. You know why they do that? They do that for a couple of reasons, but they do it for votes because they think they're going to vote for the Democrats. Even though I did great with the Hispanic vote, tremendous with the Hispanic vote. You know, I turned that whole thing around. The Hispanics like me and I like them. And you know, it's interesting with the Hispanics. When I built the wall, everybody said, oh, that's going to ruin us for the Hispanic. It was just the opposite. They know all about immigration and they know all about death and crime, and they're smart people and they have common sense. They wanted to be protected from the people that were coming into our country. So, you know, I won the election with a very tremendous Hispanic vote, and I think it's higher now than it was then. So we're a party of common sense. The Democrats are a party of insanity. They're a party that will destroy our country. If I didn't win this election, I believe our country would have been destroyed by now. 1 year, that's all it would have taken. If you had Kamala or Sleepy Joe, either one, it wouldn't have mattered. They're the same thing. Two sleepy people, two stupid people. I believe, and by the way, Gavin Newsom, who is one of the candidates, I believe he took himself out of the running when he says he suffers from mental disability. And a reporter said it was terrible that I talked that way about somebody with mental disability. I said, I have no problem with it, but I don't want a person with mental disability to be my president. I mean, you don't want to have a person with mental disability being your president. And Gavin Newsom said that he can't read a speech. He can't do almost anything. And then he said he's as dumb as all the people in the room. And he got accused of being a racist, which was an amazing thing. I thought it was the worst interview I've ever seen anybody give. He's actually a very stupid person. So I believe he's out of the running. I think that statement, that interview, he admitted that he's a stupid person. I don't want a stupid person being president. You know, I'll say it right now. I say it because no press never reports it. I'm the only president that ever took a cognitive test. I took it 3 times. It's actually a very hard test for a lot of people. It wasn't hard for me, but it's a cognitive test. It starts off with an easy question, and by the time you get to the middle, it gets tougher. By the time you get to the end, very few people can answer those questions. They get very tough, mathematical equations and things. I took it 3 times. I aced it all 3 times in front of numerous doctors that I have no idea who they are. And I was told when I went in, they said, Doc Ronnie told me this. My current doctors were fantastic doctors. They said, well, if you take it, you know, it's Walter Reed. It's essentially a public hospital. And if you do badly, it's probably going to get out. But I aced it. I got them all right. And one doctor said, I've never seen anybody get them all right. I've been doing the test for 20 years. I want people, I would love to see anybody that's a president or a vice president or anybody that has any chance of being a president, I would like to see them take a cognitive test, because we had a man in this office that had no clue what was happening. And let me give you a little secret. He wasn't a smart man 30 years ago. And I'll tell you about President Obama. He wasn't a smart man either. I know all about him. He wasn't a smart man, highly overrated. He was a great divider. And our country can't go through that anymore, can't go through. We have done an amazing job. I had to do a little stopover. I call it an excursion. I had to do a little stopover in Iran, and we had to knock the hell out of them because our country would not have been safe. The world wouldn't have been safe. I've done a great favor for the world. The world has not been reciprocal, because when I told NATO, where we give billions and billions of dollars, trillions over the years, I said, do you mind coming up and giving us a little hand with the streets? Send up some. They didn't want to get involved. And I believe that's going to cost them dearly. Thank you very much, everybody. Thank you. Thank you very much.
Live from the White House and President Trump along with the cabinet, the first wartime cabinet meeting that we have seen since the start of kinetic action in the Middle East. I'm Joe Matthew in Washington. Thanks for being with us here. We wanted to make sure we let that breathe and hear the full Q&A with reporters, including, by the way, Bloomberg's Anne-Marie Hordern in the cabinet room with the president and his top lieutenants there, saying they are begging to make a deal. We had a lot of headlines go by, and there's a lot to unpack. I read a story today that I'm desperate to make a deal, the president opened with. I'm the opposite of desperate. He says, I don't care. They are begging to make a deal, not me. And we did hear from Steve Witkoff on the potential for a deal. Of course, the president's top envoy, who has been reportedly in at least back-channel talks, if not actual negotiations with Tehran. I can report to you today, Witkoff said, that we have, along with your foreign policy team, presented a 15-point action list that forms the framework for a peace deal. That's significant because just yesterday, the press secretary cast doubt on reports suggesting there was some fake news in reporting that 15-point plan that Bloomberg News was, in fact, reporting. That does appear then to be true after all, despite the press secretary's analysis yesterday. The president talked as well about the present, if you will, that he suggested Iranians were providing him. He mentioned this yesterday, and no one quite knew what he was referring to. They said, to show you the fact that we're real and solid and we're there, the president said, we're going to let you have 8 boats of oil. 8 boats, 8 big boats of oil. He was talking about how they would proceed through the Strait of Hormuz. He said they were Pakistani flagged, and I said, I guess we're dealing with the right people. Then they said, we're going to send 2 more boats that ended up being 10. I hope I haven't screwed up your negotiations, as he looked at Steve Witkoff. As far as deadlines go and timeline here, realizing the president put a 5-day ultimatum on Iran to make a deal, he said, I don't know yet. There's still a lot of time. In Trump time, a day is an eternity. That's the very latest on this, and we're going to have more to unpack from reports out of the White House and from Capitol Hill following a series of classified briefings that were delivered on Iran. We still have a DHS that is shut down as well today with big questions about a deal to move forward and reopen it. We're going to have much more to talk about, including our conversation with former Republican Congressman and Bloomberg Politics contributor Patrick McHenry and our political panel all ahead here on Balance of Power. Let's start, as always, by looking at Wall Street. It's been a minute. Amy Morris has the latest on the markets for us right now from Washington. Amy.
All right, thank you, Joe. Everything's in the red right now except for oil. WTI now topping $94 a barrel. Brent crude topping $108 a barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 now down 0.9%. NASDAQ down 1.25%. The Dow down 0.5%. 10-year Treasury yield at 4.38% and the 2-year yield at 3.94%. Bitcoin about 3% lower, around $68,000. And it looks like oil prices might not go back down. There's some debate over that, even after the Strait does reopen. Kathy Entwistle is a managing director and private wealth manager at Morgan Stanley.
What's interesting, the market looks like on the surface, like surprisingly resilient, but underneath it's like a violent rotation going on. And energy and AI infrastructure are booming, while software companies and private credit lenders are showing signs of stress.
Kathy Entwistle at Morgan Stanley was on Bloomberg Surveillance. Memory chip stocks extended their losses after Google publicized research that could allow more efficient use of the storage needed for AI development. U.S. insurers Equitable Holdings and Corbridge Financial are set to merge in an all-stock deal valuing that combined business at $22 billion. Wave Life Sciences shares fell after a single higher dose shot of its weight loss drug failed to meet investor expectations for reducing visceral fat. Wave Life Science shares right now 52% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. The Thursday edition of Balance of Power officially underway live from Washington. Thanks for joining us on Bloomberg Radio, streaming live on YouTube. That's how we bring you right into the cabinet room to see and hear what's going on as we cover everything in Washington today from both ends of Pennsylvania Avenue. Search Bloomberg Business News Live on YouTube and dial us up. We're going to have Patrick McHenry with us shortly in the studio. After a tour de force there, another cabinet meeting for the ages. This went well over an hour and a half with President Trump doing the weave and also taking some questions. Interesting, usually we do the round robin. We didn't have too much of a round robin today. Scott Bessent spoke. Pete Hegseth did speak. Doug Burgum took a question. Did we hear from Mark Wayne Mullen, the new Secretary of Homeland Security? I thought we'd get some kind of an update with his first cabinet meeting in the Trump administration. Yeah, we didn't, right, Cece? I don't know. But the markets are not loving what's going on here. We've got an S&P 500, as Amy just mentioned. Now, session lows, we're down almost 1%. We're down more than 1% on the NASDAQ. VIX at 27, oil prices higher. 94 in New York, 108 for Brent. And so investors are keeping close tabs on what's going on. I'm just not sure we learned a lot more other than the actual confirmation of this 15-point plan that the press secretary yesterday told us had been exaggerated. Apparently, it was right on the spot in Bloomberg's reporting. The president also refuting what he's seeing in the headlines, and he hasn't liked any of the coverage here. Pete Hegseth certainly hasn't either. But this idea that he's looking to wrap things up, Wall Street Journal had that story today, telling his top officials in the White House he wants a quick end. Not so, says the president. Listen.
They are begging to make a deal, not me. They're begging to make a deal. And anybody that saw what was happening over there would understand why they want to make a deal. And they're great negotiators. I say they're lousy fighters, but they're great negotiators. They are begging to work out a deal. I don't know if we'll be able to do that. I don't know if we're willing to do that. They should have done that 4 weeks ago. They should have done it 2 years ago.
I want to bring in Jonathan Tamari for reaction from Capitol Hill. He is the senior Washington reporter at Bloomberg Government. And Jonathan, it's great to have you. Thanks for standing by through this lengthy conversation here. Republican lawmakers had classified briefings with Pentagon officials just yesterday, and many of them, including some pretty important names. Mike Rogers, chairman of the Armed Services Committee in the House, as well as Roger Wicker, Armed Services in the Senate. They were left wanting for details and were suggesting some level of mission creep or an evolution in the justification and objectives in this war. What's the conversation on the Hill among Republicans?
Yeah, I mean, it's surprising to hear Republicans openly criticize the White House like this. As you well know, we have seen very, very little of that in the time since President Trump returned to office. Senator Lisa Murkowski was speaking to our colleague Eric Wasson here on the Hill earlier today. She told Eric that it was one of the worst briefings that she's ever had, and that the answers just weren't there. So I think there are a lot of Republicans who are concerned about what comes next. There's a lot of Republicans concerned about the possibility of troops going there on the ground and this just evolving from an air campaign into something more complicated. And so I think Republicans have a lot of questions. I think they're concerned that they're going to get a lot of those questions if and when they go back home, and they're not getting the answers they want right now from the administration.
There's still no supplemental request, right? We've been waiting for the administration, and a lot of folks seem to think it would drop about a week ago, and the number we kept hearing was $200 billion. Is this being slowed down based on what you're hearing, Jonathan, because of the prospect for a peace deal, or is it coming either way?
I think it's unclear. It's unclear if that $200 billion is actually going to get through the White House. My understanding is that was kind of originating from the Pentagon, would still have to go through the White House for approval before it comes over here to Capitol Hill. But I think it could depend on, yes, is there a prospect that this all winds down? Maybe they need less money. Is there a prospect that this goes even longer and they need more money? And then I think there's the question of how can they actually get it through the Hill? Democrats are not going to support this request by and large. And so what process would be there for them to actually get it done? Could it be attached to some kind of other deal down the line here?
The Department of Homeland Security remains closed today. This is another matter that Republicans and Democrats are not able to see eye to eye on here. And there was momentum behind a deal 2 days ago, Jonathan. It seems to have gone poof, unless you can tell me something else. Are we just indefinitely shut down? Should the TSA start driving Uber?
They might. I mean, there's not, as we stand here at this moment, there's not a sign of a deal. The thing I would say is that there are a lot of members on both parties that want to get to a deal. They don't want to be blamed for these lines, for the chaos that's unfolding. I mean, this is the kind of thing that just everyday people are encountering in their everyday life. It's not like some extraordinary circumstance. People just trying to get where they're going through the airport. And then on top of that is the reality that Congress is supposed to be off for a 2-week break. These lawmakers have plans. Like a lot of people, at the end of the work week, they don't want a whole bunch of new stuff piled on them. So let's keep an eye. I think keep an eye on the next 12 hours here will be really critical to see whether they get a deal, get out of here, or if they don't get a deal right now, then it does become a question of really what is going to be the pressure point that does it, because there are multiple pressure points today. So we start kind of far away, but today is kind of the day to really watch, I think.
All right, Jonathan, thank you so much. Jonathan Tamari of Bloomberg Government. Yeah, 12 hours from now, it'd be flying out, right? Well, even before that, it's just supposed to be recess time. I can only imagine what's going through Patrick McHenry's head. I told you he was coming in, and he's with us now. The man who held the gavel once and is now Bloomberg Politics contributor, former Republican congressman, former chair, House Financial Services, and yes, former House Speaker Pro Tem. Nice to see you, Mr. Chairman. Welcome back. So, boy, do we have some questions. Is recess a powerful enough force in the universe to reopen DHS?
So, the language used is jet fumes, right? So at the end of the week, you're going home. Right, just to get out, just to normally go home. But for these long recesses, it's a really powerful incentive for deal making.
Yeah,
there's a level of exhaustion on the Hill around the DHS situation, and a meaningful set of circumstances that have changed. So the environment's changed, which opens up an opportunity for Democrats to come back to the table after a very long shutdown, and try to come up with some solution that Republicans are willing to give them. And so right now, the solution here is that Democrats get nothing other than to not fund the agency that they hate.
Yes.
But no policy wins for them.
Yes.
Quite a change of circumstances where you fund essentially 95% of the Department of Homeland Security and not fund the 5%, which is ICE, where the Democrats want policy changes on how ICE operates.
The language this morning, as I wake up to the tip sheets, remarkable. Politico, an overwhelming sense of frustration and despair. One Republican senator said, quote, "I just want to go home." Frustration and despair means darkest before dawn?
Oh, yes.
Okay.
Or to John McCain's line, darkest before it goes full black.
What are you feeling here?
The fact that you're seeing senators emote in public is relevant, is important, sign of deal making. Yes, and the fact that they're saying this, I just want to go home. Well, that's great. It's a great incentive to actually go and do your job. And so it works for middle schoolers, and it works for members of Congress.
The president's threatening or saying that everyone should stay all straight through Easter weekend until this thing is done. So it's day 40. By the way, and you fly a lot. How is it that DCA has no wait times and no ICE agents?
The power of
is
politics.
There? I mean, is this what it seems to? What it appears?
Power of politics. And look, I mean, these agencies are they try to run them very well with every capacity they possibly have. That's what this administration's done, and the imperative that President Trump is put on them. The meaningful change, though, for the Department of Homeland Security is the confirmation of Mark Wayne Mullen.
Yeah.
Right? I served with Mark Wayne, know him very well. His capacity for relationship, his EQ is extraordinary. Absolutely extraordinary. That's why he has meaningful relationships on a bipartisan basis. That's the reason why he had a bipartisan vote, which is surprising given the fact that the Department of Homeland Security is one of the most polarizing within the Trump administration for Democrats. But it's his power. Then that's part of also the level of trust here. That is a very old school notion. We've devalued that in our current politics, but it's still a very powerful incentive for deal making here in Washington. So index to Mark Wayne Mullen and his relationships. He had Democrats at his swearing in ceremony at the White House. That is a significant thing.
I know he's got a lot of friends on both sides of the aisle. I was struck that he was not called on by the president in the cabinet meeting today. This would be the first opportunity for him to speak here. And you do wonder if this unlocks something. Does it surprise you the president has not taken a position on this deal that John Thune and Katie Britt worked out?
Yeah, they're going to let it. They're going to let it circulate.
Okay.
And that
will he come behind this? You think eventually?
I think so. Yeah. And I think the bit of measurement here is to let this deal making take place, and then message on it. So he's trying to be silent to give them space and opportunity.
Fair enough.
That's how I read it.
So this ends with a piece of legislation that funds DHS other than ICE. As we know, it has lots of money already. And then reconciliation brings about further funding for ICE and maybe a Save America Act. Is that the baseline?
Potentially,
the base
but
case
it's
here?
a very. that is the base case assumption of what they will try to do.
Got it, but maybe not how it ends.
It's a tight House. It's a tight Senate. This is divisive politics right now.
Yep.
And as we get closer to the election year, much harder to effectuate.
I'm going to ask you about Iran, but we're starting finally to hear more about FISA 702 renewal. It's the 20th of April. How big of a story is this about to be?
Oh, it is always a difficult story. 8 years ago, when we reauthorized FISA in January of 2018, under President Trump's first time, it was a cat and mouse game up until the final vote in the House. And I think we're seeing that likewise. I think notable in the House, FISA opponent, Chairman Jim Jordan, is in favor of this deal. A notable shift for him. Also a bit of pragmatic politics for him because he seeks to be in Republican leadership.
So the idea of a supplemental of $200 billion is one thing we're asking about. Also, the idea of war powers potentially being addressed again if troops are on the ground. But more importantly, what we're hearing from the president here in this cabinet meeting is really something. They're begging, he said. The reporting is wrong. They're begging for a deal. He talked about how he doesn't care. I'm the opposite of desperate. The fact of the matter is we have the chair of armed services in the House, chair of armed services in the Senate coming out of classified briefings saying they did not hear the details they needed to continue this conversation.
That is normal, quite normal, maybe a little more aggressive for the chair and ranking member of their comments yesterday. Slightly abnormal in that regard, but normal for the Hill to say we want detailed knowledge of the strikes that are occurring right now, and is not in the interest of the United States and our national security for that to be real-time data, right? After the fact, yes, sure, but pre-planning and all that stuff, this is not how you actually function effectively. So the question is, can the Hill get enough information about the plan and objectives, right? Objectives, duration, really matters for our politics on this Iranian engagement.
Duration is impossible to answer.
Well, duration, but when you know the objectives, then you can start surmising what the duration is, right? So if we know what the objectives are, we know the command and control system of Iran is gone. And so we have people that are speaking for the regime, but there is no regime, and there's no proof of the current new Ayatollah actually being alive, right? Whether or not he's a cardboard fiction is the internet meme.
Yes.
So how do you respond to a regime that has spokespeople that may not have anything behind it? Who are we going to negotiate with that would be the strong person to actually enable some level of command and control of Iran? It's a complex thing, and that is going to be rough day to day, week to week, until you actually have some strength of a leader within Iran to put together what looks like a government. They are not going to be purist and good people. We're talking about a question of a better regime for the world, not a great regime for the world, or better, not good, might be the right way to think of it. So you have to have enough capacity to manage the internal politics with Iran, and you also have to not be so wicked that Israel and the United States won't take you out. It's quite a balancing act for an Iranian leader or any type of regime. And so this takes a little bit of time. I think the supplemental is the kicker here, which is where are we in a month's time? If we're talking about the ending of our bombing raids and there are no troops on the ground, this is about replenishing munitions.
Much easier debate.
Easier debate. If we have ground troops in a month's time while you're asking for the supplemental, it's working through Congress, that's going to be a rough.
Do you think this White House knows what it wants to do yet?
I think they do. I think they have a clear set of objectives.
With regard to ground troops, 82nd Airborne, the Marine Expeditionary Units that are on the way.
I think any commander-in-chief wants to have all options on the table and be able to make the call. That's frankly what Obama did in taking out bin Laden. That was a risky call up until the final moment. Likewise, these things all deal with the situation at hand with the best information you have to effectuate some greater outcome. It's complex, and we're all going to watch.
Coming out of a classified briefing, the same as the chairs we mentioned, Nancy Mace of South Carolina
running for governor.
Yes, the justifications presented to the American public for the war in Iran were not the same military objectives we were briefed on today in the House Armed Services Committee. How many Republicans does she speak for?
Herself.
Really?
Yes.
So you don't think that's an accurate depiction?
No.
Okay.
And so when members of the House are running for some other office, whatever their voice is colored by that next thing they're seeking.
Yes, right.
So you want to be in the cabinet, and other senators do.
So no credibility.
Everyone's wise to this.
Interesting.
But there are a handful of folks that are in the MAGA movement that want to pull back from the world. What they're trying to say to President Trump is that he doesn't represent MAGA.
Right.
They do. And traditionally when this happens, those people that are saying they're speaking for Trump's interest and Trump says otherwise, President Trump wins that debate on what is President Trump's agenda.
Patrick McHenry, this is a great time to be in Washington, right? The cherry blossoms are out. It's beautiful outside. Can we acknowledge that?
Yeah, spring is
I know you're
here.
an optimistic man at heart.
Have to be optimistic.
We'll keep talking through this with Bloomberg Politics contributor and former Congressman Patrick McHenry. Great conversation. Great to see you, as always. This is Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. S&P and NASDAQ extending their declines. S&P down more than 1%, NASDAQ down 1.5%. President Trump warning Iran to get serious about peace talks. BlackRock Global Chief Investment Strategist Waitlist says they're dialing down their tactical risks for now, turning neutral because overall risk asset pricing is not consistent with the shock implied by energy markets.
If we don't have tangible evidence of actions that could shorten the duration of the disruption, and right now we don't, then current risk pricing is not consistent with the durable disruption that energy markets are pricing right now.
Whaley, BlackRock Global Chief Investment Strategist on Bloomberg Surveillance. WTI now topping $95 a barrel. Brent crude over $109 per barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 1.1%. NASDAQ down 1.5%. The Dow is down 0.8%. The 10-year Treasury yield at 4.4% and the 2-year yield at 3.96%. Bitcoin is down more than 3% now at $68,000. The Federal Reserve is asking a judge to stand firm in his decision to dismiss 2 Justice Department subpoenas seeking information about those building renovation cost overruns tied to the administration's legal fight with Fed Chair Jay Powell. The case pits the independence of the Fed against the Justice Department's power to carry out investigations. And it could delay the confirmation process for President Trump's hand-picked Fed chair nominee, Kevin Warsh. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much, and thank you for being with us here on the Thursday edition of Balance of Power. You made it to Little Friday. And we've got a lot to talk about following another stem-winder of a cabinet meeting. The president wrapping things up more than 90 minutes into the operation. We didn't do the whole round robin. Not all the cabinet secretaries spoke, which is why I guess it didn't top 3 hours. But we did get some fresh commentary on the war in Iran. As we were just discussing with Patrick McHenry, he says they're begging to make a deal. Stories that he is desperate to make one are not true. He says, I'm the opposite of desperate. I don't care. Steve Witkoff did confirm, by the way, that the 15-point peace plan the press secretary cast doubt on yesterday, in fact, was presented. And we do have a formal reply from Iran, some of the news that we woke up to this morning, with some difficult reaction coming from the Republican side of the aisle. Following classified briefings on Capitol Hill. This is obviously a very delicate point of time that we're in. Having oil prices higher again reminds us of the market risk, which is something that the president of BlackRock is talking about. You see the commentary from Rob Capito says investors may be underestimating the risks stemming from the war in Iran. Likely to weigh on growth, drive inflation higher. He says growth could be hit by as much as 2 percentage points, while inflation may rise by a similar margin, even if the war ends shortly. He's talking at the Asia Pacific Financial and Innovation Symposium in Melbourne. He says oil may spike to $150 a barrel, even if we announce tomorrow that the war is over. And whether he's talking about oil in New York currently just south of 95 or Brent already at almost $109 a barrel with a near 7% increase today, either way, it's not a good situation, nor is the closure of DHS. People are waiting in lines for 4.5 hours, depending on the airport here, unless, of course, strangely, you're in Washington, sailing right through. No ice there either. We do still have National Guard here in the District of Columbia. I bumped into a couple of guardsmen when I was walking from the car to the office today. But look, the idea of a deal to reopen DHS appears to have crashed into the rocks here just days after it was implied the president was on board. He mentioned this earlier in the cabinet meeting, his feelings about Democrats and the role they're playing in this debate. Listen.
They're punishing the American people, including travelers at airports, all in the quest to return to open borders and give amnesty to illegal alien criminals. And we're not going to let the Democrats get away with this stuff, and people are wise to them. So they need to end the shutdown immediately, or we'll have to take some very drastic measures.
Drastic measures. We don't know what that means on day 40 of DHS being closed, but maybe our panel has a better imagination than I do. Bloomberg Politics contributor Rick Davis is with us, Republican strategist and partner at Stone Court Capital, joined today by Laura Fink, Democratic strategist, founder, CEO, Rebel Communications. It's great to see you both here. Rick, what do you think the president's talking about?
You know, it's hard to tell. There's no question that there's a kind of a scrambled egg going on Capitol Hill with where we thought we were only 24 hours ago as far as getting a deal for DHS spending. And they don't even seem that far away. There are only a couple of issues that the Democrats are claiming they haven't been satisfied on as regulatory effects on ICE. And Republicans pushing back saying, well, if we get a deal on these kind of ICE controls, why wouldn't we pass the ICE funding at the same time, which actually is pretty logical. Why wait? So it's almost like a big step back to maybe get a step forward. But as I said yesterday, the clock's ticking. You know, the House goes out on Monday and the Senate goes out at the end of the week. That is not a lot of time to get something passed through the Senate and then agreed upon in the House to be a bill that the president signs. Are we going to be in another position where we're going to have to call the House back after they've already gone on Easter break?
Laura, it's a scrambled egg on Capitol Hill, as only Rick Davis could say. What do you make of the president's remarks here? They need to end the shutdown immediately, or we're going to have to take some very drastic measures. What would those measures be?
Well, I mean, if it's a scrambled egg, then the head chef is President Trump, and then his sous chefs are all the Republicans in the Senate. They have control over all of this, the entirety of the negotiation. And the Democrats have been at the table and willing to move on things. And in fact, they cooked up a deal over and over again. And at various points, President Trump has simply said absolutely not. So this really is in his hands. And it remains to be seen whether or not he's using this so that he can, as he's mentioned, send National Guard troops into the airports. I know, you know, he really does like to leverage that power, sending them into cities, now sending them into airports, using the ICE officials to go into airports and sort of stand near the TSA terminals where people are waiting for hours. All of this is in the kitchen of Republicans. And, you know, I wish that Democrats had more power to cut a deal here, but they're not running the show.
You know, that's a very good point. Rick, I don't know if you heard our conversation with Patrick McHenry, but I was struck by some of the language in the tip sheets this morning. Look no further than the playbook, talking about an overwhelming sense of frustration and despair. I just want to go home, said one Republican senator. What does that tell you? First of all, is it accurate with what you're hearing from your colleagues on the Hill? And what does that tell you about where we are in this negotiation?
First of all, I do think it's typical. You don't see this many historic numbers of retirements in both the House and the Senate, or people trying to move on to other jobs. Congress used to be a real perk to get elected there and serve, you know, the people in the nation's capital. Now it's almost like putting the yoke on and having to do the back 40 before lunch. People are really frustrated. This is a House of Representatives that has passed less legislation than any previous House of Representatives in their first year, you know, is in decades. So everybody up there knows they're not getting the job done. They're tired of the shutdowns. They're tired of the arguments. They're tired of not being able to pass legislation. There are so many other things that these senators I know want to do, and they can't do it because it's just in a logjam. And so I think that could be a breakthrough moment. But again, as Laura says, you could get a bill out of the Senate right now and either rejected by the House or not signed by the president. So it's more than just a group of senators and congressmen that need to come together. It's those chambers and the president all at the same time. And it's very hard to see that happening in the next couple of days.
Well, there you go. If you're planning on flying the next couple of days, there you have the news. The president's perplexed with Democrats. He's perplexed with media coverage of this war, and I think he sees them as the same group of people. Rick and Laura, listen to what the president said about the current state of negotiations after he made clear he's not desperate for a deal. They're begging, we're winning, and they're in fact providing gifts. Remember he talked about the present the other day that Iran had provided? This is what he was talking about. He explained it earlier. Listen.
They said to show you the fact that we're real and solid and we're there, we're going to let you have 8 boats of oil. I said, well, I guess we're dealing with the right people. And actually, They then apologized for something they said, and they said, we're going to send 2 more boats. And it ended up being 10 boats. And I hope I haven't screwed up your negotiations, but I thought it was appropriate to say, because I did taunt you the other day by saying they're going to give us a present.
You taunted the press with that one, and we were all wondering what it was. There was a thought that it was a cargo ship, an oil tanker that went through the strait. Now, apparently it was 10, but it's not helping oil prices, right? Brent's up 6%, 108. WTI's up 5%, just shy of $95 a barrel here. The president, Laura Fink, said that he thought oil prices would actually go higher when they made the calculation to begin striking Iran. What do you make of this idea that the Iranians are now gifting us somehow Pakistani-flagged oil vessels?
Well, what I see is $14 billion going into the bank accounts of the Iranians who we are at war with. And I see it, President Trump seems, I believe him when he says he thought oil prices would go higher. He seems surprised at a lot of the reactions of the Iranians. He seems surprised that they won't come to the table, surprised that our allies are not with us, surprised that the Strait of Hormuz is even at issue. And so the question is, does all that surprise add up to something like unpreparedness? And that's where we are left. Right now, the Iranians don't trust us because we bombed them 2 times when we were at the negotiating table with them. And so it really leaves us with few options. And we know that President Trump is ratcheting up the rhetoric, sending in 2,200 troops from my hometown alone on the USS Boxer, and preparing for what I think everyone can agree is not a great outcome, having ground troops or additional American lives put at risk. So we are really at a critical point, and it is unclear what is going to happen.
Rick, what did you make of the messaging today from the president? He seemed like he just wanted to keep talking here to refute the reporting that has been in mainstream media. He pointed specifically to the Wall Street Journal on a couple of occasions that had reported today he was looking for a quick end to this war. That, of course, I think would be a good thing, right, for members of Congress who are watching all of this and the American people. He doesn't, however, want it to look like he's desperate. Is that what we learned today?
It's hard to tell what's a negotiating tactic with Donald Trump and what's like his true feelings. And we've seen this play out over and over again on trade deals and on negotiations with Congress and even playing the ref with the Supreme Court, which he took a couple shots at today at the cabinet meeting too. So it's hard to unravel that. I would say part of what I think he's trying to play into is trying to keep the Republicans on board with him. As we heard from the briefings today on Capitol Hill, people came out pretty frustrated that they weren't really getting told the whole story. Yeah. And I think part of what's emerging within the party is this, sort of binary outcome. Either Trump's going to get his job done and actually heal the Iranians to being a productive country in the world, like what he did with Venezuela. And then it's a home run, right? Everybody goes out and says, hey, it worked again, amazing, the world's a different place now, price of oil will come down. But if it doesn't work, the other side of that binary outcome is that we have a disaster on our hands, we have a quagmire, we have ground troops, and it destroys the Republicans' chance of really competing in the 2026 elections, but also probably in the 2028 elections. And so the stakes could not be higher for people who are Republican elected officials all the way up and down the ballot, all relying on Donald Trump and the hope that he gets this right.
And we are absolutely hearing that anxiety when Mike Rogers, the chair of the Armed Services Committee in the House, says we want to know more about what's going on. We're just not getting enough answers following a classified briefing. That gives you a sense of where we are. Great panel. Many thanks. Rick Davis and Laura Fink will be back in our second hour with much more to talk about here on Balance of Power, live from Washington. I mentioned the cherry blossoms when Patrick McHenry was here. They're going to be peaking, in Washington the next couple of days. There's tourists everywhere going around the tidal basin. And I'll tell you, if you're starting to get down on the news, take heart. They've cloned Stumpy, successfully cloned Stumpy. Have you not heard about this? Where's Nathan Dean when you need him? The National Arboretum out with a statement saying the beloved cherry blossom tree fell 2 years ago in the capital has seen its clones flower for the first time this spring in what federal officials are describing as a pinnacle achievement. If there's a second life for Stumpy, I think we all have a chance. We'll be back in our second hour as we welcome our global television audience. Kaylee Lyons will join us. Do we have lines out to Stumpy? I think this is part of the program today by the time we're done. And we're going to have an important conversation. I hope you'll be with us with Senator Ted Budd, the Republican from North Carolina and Republican as well here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
President Trump says they're begging for a deal. Welcome to the Thursday edition with fresh remarks from the Commander-in-Chief in his first wartime cabinet meeting. I'm Joe Matthew alongside Kaylee Lyons in Washington. We thank you for joining us. Steve Witkoff, Kaylee, confirming that he did present a 15-point peace plan to Iran, and we now have their response to chew on.
Yeah, and it doesn't seem the president is necessarily thrilled with that if he knows what that response looks like. As he says, he doesn't know if the U.S. is willing to work on a deal with Iran, that he is, in his words, the opposite of desperate, as he also was heralding the idea that there's more targets he would like to hit before leaving Iran.
They went over an hour and a half, talked as much about Iran, I guess, as they did the Department of Homeland Security, which remains closed now on day 40 of our partial government shutdown. But really interesting, as a number of Republican lawmakers, including the chair of the Armed Services Committee in the Senate, as well as his counterpart in the House, complain about a lack of details from a classified briefing they received yesterday. And it's interesting, the White House came out swinging this morning, but we didn't fill in too many blanks.
Yeah, and perhaps some of that is by design, as President Trump, when asked during the cabinet meeting, for example, if the U.S. was going to go in and seize the enriched uranium, he said, why would I tell you that? Yeah, I'm going in at 3 p.m. tomorrow. The idea being, of course, that you can't declare all of these things publicly, including when it comes to putting actual troops on the ground. But if you're not telling the members of Congress who actually do have the authorization to be briefed on these things, and in theory would be the one authorizing you to do them in the first place, that's where it gets a little tricky.
Well, particularly if you're about to ask them for $200 billion in a supplemental, which we still don't know. It hasn't happened yet. That's the report. Ted Budd, by the way, the Republican senator from North Carolina, is going to join us in a couple of moments to give us his reaction to all of what is a long-running conversation. We'll hear from the other side of the aisle, too.
Yeah, Congresswoman Susan DelBene, who runs the DCCC, will join us later on as well on what this means for the midterms. But let's focus right now on what all of this means for the markets, because it's another wild trading day in oil and beyond. So for that, we turn to Amy Morris here in Washington. Hey, Amy.
Hey, Kaylee, and you said it, shifting views on how long the war in Iran could last sent stock, bond, and oil markets to another session of big swings. Losses in equities accelerating after the president said he would not commit to a deal to end the conflict. WTI now nearing $95 a barrel. Brent crude topping $108 a barrel. We do check these markets for you all day long here at Bloomberg. The S&P 500 is down 1%. That is 66 points. NASDAQ down 1.4% or 315 points. And the Dow down 0.6%, about 289 points. The 10-year Treasury yield at 4.4% and the 2-year yield at 3.96%. Bitcoin is down 2.8%. It's around $68,900. Memory chip stocks extended their losses after Google publicized research that could allow more efficient use of the storage needed for AI development. U.S. insurers Equitable Holdings and Corebridge Financial set to merge in an all-stock deal, valuing that combined business at $22 billion. Wave Life Sciences shares fell after a single higher dose shot of its weight loss drug did not meet investor expectations for reducing visceral fat. Shares of Wave Life Sciences now down 54%. Amazon offering $1,000 prizes for its delivery drivers who share stories about why they love their jobs. In a My Why competition, it's for drivers employed by Delivery Service Partners, a network of small businesses that Amazon contracts with to manage those delivery workers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, Bloomberg Business Flash. Back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much, checking on the markets for us. And we're keeping an eye closely on the bond market as well, as we've seen a series of weak auctions, 2-year notes and 5-year notes over the course of Tuesday and Wednesday. And now today, Thursday, we just saw a weak 7-year note auction as well, drawing 4.255% compared to the 4.247% yield pre-sale. So that's something to keep an eye on, as well as the appetite for U.S. government debt at a time when there are real concerns out there, of course, about potential inflationary risks stemming from the conflict in the Middle East. And while the president did try to downplay that today, as did the Treasury Secretary Scott Bessent in a televised cabinet meeting, the idea that the U.S. does not need the Strait of Hormuz, that energy prices will be going lower soon, depending, of course, on what happens, I suppose, in the Strait and who all is going to get involved in it. As the president, of course, has called on Gulf allies as well as NATO allies to help secure that vital waterway. And he spoke of those NATO allies in the meeting. Take a listen.
One thing, we're very disappointed, I'll say it publicly, we're very disappointed with NATO because NATO has done absolutely nothing. And I've always said, 25 years ago, I mean, I was somebody that wasn't a politician, but I was always involved in politics and I understood politics. I said 25 years ago that NATO's a paper tiger, but more importantly, that we'll come to their rescue, but they will never come to ours.
So just imagine the conversation at the G7 meeting that is getting underway in Paris. And I'm glad to say Bloomberg's Europe correspondent Oliver Crook is there and reporting on our behalf here on Balance of Power. I want to bring Oliver in live now from Vaux de Cernay. Oliver, what are you hearing about this military action against Iran and the president's remarks about our NATO allies?
Yeah, so what's remarkable is in sort of ordinary times, a G7 meeting would be the venue in which the United States might consult allies potentially before an invasion of a major country, potentially after an invasion. There would be discussions about strategic petroleum reserves that are sort of organized across these G7 countries. But as we know, these are not really ordinary times. I've been speaking to a number of people, including the highest diplomat from the European Union. She's awaiting Marco Rubio's arrival tomorrow to, again, be on this sort of fact-finding mission that I think everybody in Europe is on, to try to establish what the U.S. war aims are, where they see things going, and also specifically what kind of support they're seeking from allies. I also spoke to the Canadian foreign minister, also a NATO member, about their potential appetite of entering in some way in this conflict, whether it's easing the waterways, if there's an attack, say, on some of the Gulf allies. Is that something the Canadians are willing to step in on? And the realistic situation for the Canadians and many others is this is not the moment, this is not our war. That being said, we do know from the NATO Secretary Mark Rutte that there have been conversations about building a so-called coalition of the willing. Apparently 30 or so countries are already in discussions about this, of potentially getting involved in the day after in order to help ease the sort of naval vessels going through the Straits of Hormuz. But right here, you know, there's no appetite to really get fully involved, and really for them, they're going to try to A, get a sort of fact-finding mission from Marco Rubio to establish what the U.S. aims are, and B, try to keep him on side in Ukraine.
All right, Bloomberg's Oliver Crook live at the G7 foreign ministers meeting in France. Thank you so much for joining us. And we want to go live now to Capitol Hill, where we're joined by Republican Senator Ted Budd of North Carolina, who of course sits on the Senate Intelligence and Armed Services Committees. Welcome back to Bloomberg TV and Radio, Senator. We appreciate your time. Your chairman on the Armed Services Committee, Senator Roger Wicker, as well as the chair on the House Armed Services Committee, Mike Rogers, have both expressed in recent days some frustration about understanding from the administration what exactly the options are they are considering when it comes to putting further troops into the Middle East right now. Of course, you had Rogers saying that essentially the briefing that he received yesterday didn't answer lawmakers' questions around this. I understand that you need to have some ambiguity in public, that there is much the president doesn't want to reveal through the news media, for example, but does the administration not have an obligation to tell you exactly what it's considering?
Well, they do, and that's why we're Article 1 in the Constitution. Article 2, the President and the administration are supposed to work with us on such matters. If they're going to come to us for a supplemental, they need to be letting us know about these things. And this is a classified setting. But I'll also say, in defense of the administration, you have to have a Congress that you can trust. When we go into those classified settings, you see members occasionally go out and talk to the press. We want to be open with the press, but not with things that we hear in a classified setting. So the administration needs to make sure that they can trust Congress, and individual elected officials need to make sure that they're keeping classified things classified. But we do need more information. The administration, the Pentagon are going to work much quicker than Congress will by design, but they need to have a good flow of information. So I understand what Chairman Wicker and Rogers are concerned about.
Well, and we don't want to put any classified information on the air, Senator, but I would ask you, are the justifications that the White House presented to the American people the same ones that you heard in that classified briefing?
In broad strokes, absolutely yes. I mean, you see the ballistic capabilities. It's known what they shot towards Diego Garcia. It's much further than we were anticipating as far as Iran's capabilities. The vastness of what they've done over the last 47 years, particularly since 2020 in the buildup in Iran. I mean, that has been all sources of terrorism tend to lead right back to Iran. We've seen Hezbollah. We've seen Hamas, what they've done. We've seen what they've done to our soldiers. We've seen their threats to our homeland. And when you take that capability with ballistic missiles that we've just recently seen and the whole world now knows about, plus their intent to enrich uranium to 90% levels, I mean, that is nuclear capability that not only could destroy Europe, it could destroy us as well. And so if you want a safer America, you need to have a defanged Iran. And that is certainly what the president's trying to do.
Well, when we consider that defanging, though, obviously the president as well as the defense secretary have heralded what they're claiming is American and Israeli air superiority over Iran. Yet the president also said today that Iran had to grant them a present of allowing 10 vessels through the Strait of Hormuz, also noting that Iran is right now charging some of those vessels in order to transit. Does that not underscore that it is actually still Iran that has complete and total authority at this time over the strait?
Well, I don't think so. When you look at our capabilities in the region, and yes, I mean, there is a geological issue when you've got a 24-mile wide strait and you've got essentially Iran that wraps around it. But when you see their geological advantage there, it pales in comparison to what we can do militarily. When you have the 11th Marine Expeditionary Unit on the way, you have America's 911 force in 82nd Airborne going there, that increases our option. I think it's going to cause Iran to step back and rethink if they want to preserve any semblance of their regime. And again, we can't have the hostile part. We don't want an enemy of America. If they want to be a great country of 90 million people and good for the region, good for themselves, and not a threat to the United States, that's fine. But they need to come to the negotiating table in good faith, not this constant years-long deception that they've put forth. We have, when you go back to what Steve Witkoff has done to go over there to talk, they actually bragged about their nuclear capabilities and their enrichment. That's not the way you have a good negotiation. So I don't think they've been trustworthy partners at all in this, but we keep coming back to them. We're pausing. The president gave them a window of time to say, come to the table, let's talk about the next phase. And if they don't, it's going to be very hard on Iran.
Yeah, there are reports today that the Pentagon, Senator, is developing options for what they're calling a final blow, and Axios lines them up to include invading or blockading Karg Island, which is something the president's talked about a lot, but also invading Larak, an island that helps Iran control the strait, and the strategic island of Abu Musa, along with a couple of smaller islands, the western entrance to the strait. If the Strait of Hormuz remains closed, would occupying these islands be enough military pressure to reopen it?
It would certainly increase it, but what we want to do is give the Pentagon, give the commander-in-chief as many options as possible to do what he needs to do to protect the American people. Because when you take their ballistic capabilities and you combine it with their enrichment goals, I mean, that is devastating to the United States, and they've chanted death to America for 47 years. So we need to give the president, we need to give the Department of War and our war fighters all the protection, all the options that they need. We pray for our troops. We're grateful for them. We don't want a prolonged war, and we want to get this thing resolved completely and decisively as quickly as possible. But we have to give the president options in order to do so.
Well, of course, your leadership in the Senate is also seeking a quick resolution on another issue, although it is one that has been protracted 40 days now, that the Department of Homeland Security has been shut down. We understand that Leader Thune has submitted what he's called a final offer to Democrats. Senator, whatever that offer looks like, are you prepared to vote for that in the name of getting TSA agents and others paid?
The Democrats have used 57,000 TSA agents in the whole of Homeland Security. At a time of concern for the defense of our homeland, the Democrats have held it hostage. It's absolutely unbelievable. We have to get this department open. We have to protect the homeland. This is critical. We've got a great secretary there in Mark Wayne Mullen, one of our colleagues here recently from the Senate. I think he'll be a great leader for that. But we have to get this open. We can't hold these people hostage. And we're not just talking about airports here and those 57,000 individuals that are walking off the job, not because they don't like their job, not because they're just mad and they deserve to be mad for what Chuck Schumer has done to them. But these are people that can't afford gas to get to work. These are people that are sleeping in their cars. These are people that they can't afford food to get them through the week so that they can get to work without being paid. This is absolutely ridiculous. We have to open this up. The American people are fed up with what Chuck Schumer's doing here. It's unbelievable what they've done. They have walked away from 2 different deals. They keep moving the goalposts. They want things like body cameras for enforcement agents. That's fine, but it was in the original deal. So look at the original deal and that they walked away from, and you'll see that we've been reasonable at every turn, and we're still continuing to be. I think the Democrats are inherently afraid of their increasingly radicalized base and their far left base, and they're worried about their own primaries. They're worried about their own elections. We're just here trying to serve the American people and be reasonable, get these departments open, keep them regularly funded, be good stewards of the American taxpayer. That's all we're trying to do here, and we're asking them to come in good faith to the negotiating table.
Senator Ted Budd, Republican from North Carolina, we thank you for the insights. Of course, Democrats are saying many of the same things about Republicans who are entering primary season, and we assemble our political panel for their take on everything that we just discussed with the senator. Bloomberg Politics contributor, Republican strategist Rick Davis is with us, partner at Stone Court Capital, alongside Democratic strategist Laura Fink, former, founder and CEO of Rebel Communications. Laura, I'll give you a chance to respond to that, and I'll ask you, do you think these TSA agents should be made whole once DHS someday reopens? Should they get back pay for this closure?
I mean, I think that they're legally required to get back pay. And I also think that and know that overtime pay should be paid. We should incentivize them, and we should protect them in future negotiations so that structurally they're not the ones having to go out and raise families on no dollars and deal with what I imagine to be very grumpy customers in line. So the senator is right about that. But I think what you can't deny is that when you are in charge, when you win elections, as the Republicans did in the last election cycle, you do have to take responsibility, and sometimes you've got to make concessions you don't want to make, and that's where we are. You know, we know we're not talking about what's on the table here, because if Americans heard about like what we were arguing over, it really seems like it's something that should be done by now. That's on the desk of the president and then the Republicans who are negotiating on his behalf. So as someone who has some flights coming up, I hope certainly that they resolve it, and especially for those TSA workers who work hard every day and are dealing with some real tough circumstances.
Well, and senators themselves would like to have flights coming up, Rick. They're trying to get out of here for a 2-week-long recess. How much of an incentive is that beyond the human impact of these TSA agents?
Well, as Patrick Henry said earlier, jet fumes are a great motivator, and these guys want to get out. It's an election year too. I mean, so not just a time to be with your constituents and your families around Easter. But you need to be in touch with these folks, because you're going to be on a ballot, certainly in the House and in a third of the Senate. So it's really a critical period of time, and it is a great motivator to get a deal done. And something I'd like to pick up what Laura said, just because Republicans are in charge, it gives us, Republicans, an obligation to get something done. It's not my way or the highway. It's like actually getting something signed into law. And the public knows that the Democrats don't have a vote on that. And if you look at past polling, Republicans, even when we're in a minority, get blamed for government shutdown. So there's never a good outcome for the Republicans on a ballot when you start shutting down portions of the government. And so I really don't get why there isn't a bigger crisis within the caucus to get a bill and get it done and get home.
All right, Rick Davis and Laura Fink, they will not be going home yet, as our political panel will be back with us for more later on this hour, because we have to get a view from the other side of the aisle as well after speaking with Republican Senator Ted Budd. Congresswoman Susan DelBene, the Democrat, of course, from Washington, the chair of the DCCC, joins us next. I'm sure she wants to weigh in on what all this means for the midterm.
I suspect she does. This is the woman who is responsible for getting Democrats elected to the House. If they take control of the House, it'll be largely due to the work that she's up to right now, and she'll be with us live from Capitol Hill straight ahead here on Balance of Power. It's the Thursday edition. DHS still closed. This is Bloomberg.
It's 1:21 on Wall Street. I'm Amy Morris. We check markets for you all day long at Bloomberg. WTI now closing in on $95 per barrel. Brent crude nearly $108 per barrel. S&P 500 is down 1.2%. That's down 81 points. NASDAQ is down 366 points. That's 1.6%. And the Dow is down 0.8% or 387 points. The 10-year Treasury yield at 4.4% and the 2-year yield at 3.96%. And Bitcoin is down 2.8%, around $68,000. Hims & Hers Health has introduced a weight loss membership starting at $39 for the first month and $149 each month thereafter. Membership includes support services, access to providers, and nutrition guidance. The medication costs are separate. Hims & Hers says it's making Novo Nordisk's FDA-approved GLP-1 medications available, including Wegovy injections, pills, and Ozempic pens for type 2 diabetes. Shares of Hims & Hers now 1.5% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew and Kaylee Lines.
All right. Thanks so much, Amy Morris. We'll have more on the markets in about 20 minutes' time as we keep tabs on Wall Street here with so much information from Washington driving the financial markets here, beginning, of course, with energy, but also when it comes to interest rates and the stock market. It's hard to remove the two. We just had an interesting conversation with Senator Ted Budd, the Republican from North Carolina, on what is now day 40 of this partial government shutdown. When I say that, I'm, of course, referring to the Department of Homeland Security. There have been on-again, off-again talks, if I can characterize it that way, this week about reopening DHS. There was the prospect 48 hours ago, in fact, of a piece of legislation that would fund all of DHS without funding ICE, knowing that it has a lot of money from the president's big, beautiful bill. But that seems to have crashed into the rocks. And when we talked to Senator Budd about why, knowing Democrats would like further reforms when it comes to ICE, he said, I think the Democrats are inherently afraid of their increasingly radicalized base, worried about their own primaries and elections. We're just trying to serve the American people. So we thought we would talk to the member of Congress who was responsible for getting Democrats elected in this midterm cycle. That would be Susan DelBene, Democrat from Washington. She is chair of the House Democratic Congressional Campaign Committee. And Congresswoman, it's great to see you. Welcome back to Bloomberg TV and radio. How would you respond to Senator Budd?
I'd respond to Senator Budd that he should probably listen to the American people. If you listen to the American people, two things are very true. One, they want to make sure that TSA workers are paid. They're struggling because they haven't been paid in so long. These are people doing important work for our communities. Making sure that we fund the Coast Guard and FEMA. We have legislation that could be passed right now to fund the parts of Homeland Security that we all agree on, things like TSA and FEMA and Coast Guard. That could be done right away while we continue to talk about the need for reforms for ICE. Look at what's happened across the country, violence in communities, 2 Americans killed because of the violence that we have seen from ICE agents. People want to see reforms across the country, are demanding reforms. If Republicans were listening to people, they would understand that and come to the table. But right now, there's a very straightforward solution. Rosa DeLauro has a bill to make sure that we fund the parts of Homeland Security that we agree on, and then we continue to make sure that we are working towards reforms for ICE. Those could be happening right now. Republicans don't know what they want to do. They're waiting for Donald Trump to tell them what to do.
Well, are Democrats united in what they would like to see done either, Congresswoman? Do you trust whatever deal it is that Chuck Schumer may be able to negotiate?
Well, look what's happened in the House. We have a piece of legislation. We have something called the discharge petition to force a vote on the floor since Republicans won't put the bill on the floor. Again, just fund all the other parts of ICE like TSA, or fund the other parts of Homeland Security like TSA, and then make sure that we continue to negotiate on ICE. That's a very straightforward solution. Strong support. Republicans, I don't think they know what they want to do, but I think Senator Kennedy on the Republican side was clear that he thought the problem was Donald Trump.
Well, Donald Trump was speaking last evening, as a matter of fact, at a fundraiser. This is the NRCC's March dinner which brought in tens of millions of dollars. Yeah, if we can have those comments. Congresswoman, I'd love for you to hear what he said, and we'll have you respond. Listen.
Well, we have a hot party. We have a very hot party. With your help this November, we'll defeat the radical left Democrats, and we'll win a midterm victory like our country has never seen for whatever reason. I don't know what it is, but a president who wins, Republican or Democrat, almost always does poorly in the midterms. Nobody knows why, even if it's a successful presidency.
I don't know if he's projecting, Madam Chair, but there are questions about the money race and the extent to which Republicans have been outraising Democrats. How concerned are you or not about that in this midterm cycle?
Well, the American people are with us. We've seen that across the country. We've seen that in special elections across the country where Democrats are overperforming, flipping seats across the country, including that state legislative race. Donald Trump's, where Mar-a-Lago is located, flipping from Republican to Democrat by a wide margin. Folks are angry because Republicans have broken promise after promise. They promised to lower costs on day one, a big broken promise. Promised to only go after the worst of the worst when it came to immigration, a big broken promise. Promised no forever wars, and now we have a president with no plan entering a war in the Middle East, and he still hasn't articulated what his plan or objectives are. So people are angry all across the country. We have had strong support, and the American people want folks who are going to stand up for them, who aren't just going to be a rubber stamp for Donald Trump. We also have great candidates who see what's happening on the ground, who want to run, and folks with incredible backgrounds, veterans and farmers, small business owners, mayors and ministers, all who are going to help us take back the House in November.
Well, Congresswoman, I'm glad you raised that legislative district in Florida, home to Mar-a-Lago, a Democrat winning it after Trump carried it by 11 points in 2024. There's been murmurs today among Florida Republicans on the idea that the redistricting push that the state Republicans are making may be a more risky proposition now, given the results that we saw. Does it make you rethink how that map may be more advantageous to Democrats than previously thought?
Well, we have 44 districts where we are on offense across the country, all across the country, including in places like Texas, because people are outraged and because in special elections, in congressional special elections since November of 2024, Democrats are running 17 points ahead. So when you look at the districts out there where we have opportunities, they're all over, from Texas to Iowa to Arizona to Michigan and Pennsylvania, because people are outraged from the actions of this president and Republicans in Congress. So absolutely we have opportunities. We have great candidates who are authentic and independent-minded. And people want folks who are going to stand up for them, not just be a rubber stamp for Donald Trump. And this Republican Congress has done nothing but wait for Donald Trump to tell them what to do.
Got to ask you quickly, Congresswoman, I'm almost out of time, but I'm just struck by gas prices in states like yours around the country. We have a national average today of $3.98, which is obviously a big problem, especially if you're not getting paid at TSA. In your state of Washington, it is $5.30, which means half of your constituents are paying more than that. This is just an average. How long can your state pay that much money to fill the tank?
Well, remember, folks are struggling already. Working families saw costs skyrocket because of actions from Trump, with tariffs, costs of housing, food, healthcare costs going up because of Republican actions. So folks were already struggling. Now you add this on top, all directly the result of decisions made by Donald Trump and Republicans in Congress. We know #1 issue across the country is affordability, and we're going to stand up and fight for working families, unlike Republicans who seem to not care.
All right, Congresswoman, we appreciate you joining us. Democratic Congresswoman Susan DelBene of Washington, the chair of the Democratic Congressional Campaign Committee, with us live from Capitol Hill. Thank you so much. Of course, when we consider what is driving gas prices higher, in large part, it is the conflict between the U.S., Israel, and Iran in the Middle East, which President Trump, during a cabinet meeting today, said once again he actually thought would drive energy prices even higher. He continues to contend he thought it would be worse than it is. And on that messaging, we turn back to our political panel. Rick Davis, partner at Stonecourt Capital and Republican strategist, alongside Laura Fink, Democratic strategist and founder and CEO of Rebel Communications. Rick, I wonder what you make of the president repeatedly saying this, that actually he thought it was going to be way more bad than it is when we're looking at gas prices that we haven't seen this high in some time. Is that what you want to be telling the American people right now?
Well, it's a device he's used in the past, as far as impact on tariffs and things like that, where, look, they've gone way up, almost a full dollar to most Americans. Oh, don't worry, that's not so bad. It could have been so much worse. And so he can't actually speak to lowering those gas prices. And of course, for a year, all he talked about was how he has lowered gas prices. So I can see how this is the best possible way to address the issue without actually addressing the issue. So he's built kind of a trap for himself after spending a year talking about how he's reduced the price of gas. Now he can claim that it's not as bad as you think it would have been. And I mean, it's not where you want to be politically, that's for sure.
Yeah, well, isn't that right? Laura, did you hear what Susan Del Bene said? 44 seats, I believe she said they are playing offense. I know that Democrats have history on their side in this midterm cycle, but is the party, certainly at least on the House side, getting a bit over its skis?
Well, it's an embarrassment of riches in terms of the number of districts that are in play, which has a lot to do with the energy on the Democratic side and the real lack thereof on the Republican side. We see that, Republican voters are not enthused for all the reasons that Rick is suggesting. And Donald Trump does not seem to be really paying attention to his base. He has a very loyal base, but also there are people who he has swung in previous elections that he needs to hold on to make up for that traditional slide in the midterms. But I think not only is the wind at Democrats' back, but they also seem prepared. Although I will say, I do think she might need to get out there and start making that money competition a little more even, because the more districts you have, the more you have to spend in order to ensure that your candidates get across the finish line. But you heard her on message talking about affordability, talking about the impact in the districts, and you also heard her talk about the quality of the candidates. I think people are really stepping forward. We saw that with the first-time candidate in the Florida race, and then again in the special elections, that we really have incredibly strong, diverse candidates who are really from and built by the districts that they're running in. So that will be the secret to their success if the Democrats are able to pull it off come fall. And Republicans have a lot to contend with, and President Trump, with the war in Iran and many of his other moves, is not helping them.
Really great panel. Rick Davis and Laura Fink, we thank you both so much for the insights. This has been a very productive half hour, as a matter of fact, Kaylee. I love this when we have a chance to talk with members from both sides of the aisle, distill it with the panel here, and it really gives us a sense of the uncertainty here that's being reflected in the markets.
Yeah, and of course, much of that uncertainty right now is centered on what's going to happen in the Middle East. Is there a path for diplomacy, or is the U.S. going to strike Iran even harder, as the president has suggested? We're going to get into that next with Admiral John Kirby, of course, who used to be the White House communications advisor at the National Security Council in the Biden administration. So that's ahead on Bloomberg TV and radio.
It's 1:40 on Wall Street. I'm Amy Morris. This just crossing the Bloomberg Terminal. Stanford's medical school is facing a Justice Department probe over its admissions policy. That's according to the New York Times, which says Ohio State and the University of California, San Diego are also facing federal probes over their admissions policies. The S&P 500 fell about 1% after President Trump said he would not commit to a deal to end the conflict with Iran. Oil was volatile amid mixed signals from the president. Brent rising nearly 6%, now topping $108 per barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 down 1.25%. NASDAQ down 1.75%. The Dow is down 0.8%. 10-year Treasury yield at 4.4%. The 2-year yield at 3.96%. And Bitcoin is down 2.8%, around $68,000. The trading arm of French oil major Total Energies embarked on one of the biggest ever buying sprees of Middle Eastern oil this month, helping to send prices soaring in a market that's already facing a liquidity squeeze because of the war. The scale of the total purchases was unprecedented and added to upward pressure and sharp price moves at a time when the war has already upended the Dubai crude market. And the Federal Reserve has asked a judge to stand firm in his decision to dismiss 2 Justice Department subpoenas seeking information about building renovation costs overruns tied to the administration's legal fight with Fed Chair Jay Powell. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now we return to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. She'll be back in about 20 minutes' time with our next update on the markets here as we kick off Bloomberg Business Week daily at 2 p.m. Eastern Time. So we're back in this same world. Stocks and gold down, oil and interest rates up, with great concern about what might happen next in the Middle East. And ahead of our conversation with retired Admiral John Kirby, and it's one that we've been really looking forward to, I'll just bring you back to the cabinet meeting with President Trump. So many questions, so few answers, and mixed messages when it comes to the potential for negotiating a deal. The president saying they're lousy fighters, but they're great negotiators. They're begging to work out a deal. He went on to say, I don't know if we'll be able to do that. I don't know if we're willing to do that. Yet at the same time, he talked about the so-called present that he was given by Iran. He teased reporters with this a couple of days ago and actually identified what that present was today. Listen.
They said to show you the fact that we're real and solid and we're there, we're going to let you have 8 boats of oil. I said, well, I guess we're dealing with the right people. And actually, they then apologized for something they said, and they said, we're going to send 2 more boats. And it ended up being 10 boats. All right, I hope I haven't screwed up your negotiations, but I thought it was appropriate to say, because I did taunt you the other day by saying they're going to give us a present.
So when we considered the Strait of Hormuz and this conflict, we will speak now, as Joe said, with someone who is not only experienced, having naval experience in this theater, but also experienced in communicating around armed conflict and national security. Retired Rear Admiral John Kirby is with us, of course, the former White House National Security Communications Advisor in the Biden administration. Thank you so much for being here on Bloomberg TV and radio. Admiral, obviously you know this area well. If Iran is giving us gifts of allowing vessels to pass through the strait, if they're charging others some $2 million in order to do so, one could argue that is Iran being able to continually exercise control over this waterway. Is the U.S. Navy alone able to wrestle that control back? What would it take?
It would take more than the U.S. Navy. I did convoy escort operations back in the 80s when President Reagan sent us there to do exactly this same thing, make sure that the oil traffic could flow in and out safely. And we didn't do it alone back then, and I really don't think the U.S. Navy wants to or can do it alone today. Now, obviously, we're the most powerful Navy in the world. We have a lot of capabilities, and certainly our destroyers can conduct these kinds of convoy escorts, but it's dangerous, it's slow, it's time-consuming, it's resource-intensive, and it's going to require a lot more ships than the U.S. Navy is going to be able to afford to that mission. It could take, just to get through the strait itself, that's a good half a day transit. But depending on how long the route is, where you're picking the convoy up and where you're dropping it off, I mean, it could take days to a week. And with the traffic shut down the way it's been the last few weeks, it's going to take a while before confidence can be grown enough in the shipping industry to get back to anything near the semblance of traffic that was going through before this conflict started.
Well, this is incredibly helpful, Admiral. It's great to see you. It's been a long time since we've heard from you here on Bloomberg, and so I'd like to hear a little bit more based on your experience of what it would take to reopen the strait militarily, because it's been suggested that we would need to have a full-blown, a full-blown no-fly zone to help protect the naval vessels who would be escorting ships. The president has talked about volume, that he needed the help of our NATO allies, which he now says he never needed, to be able to create the scale. Is that correct? Is that the approach the administration should be taking?
Yes, and I was glad to hear the president when he did talk about the need for allies and partners to chip in. I think he was 100% right on that. And back to the origin of your question is, because it's not just about convoys, it's not just about a man-on-man kind of defense, putting ships with oil tankers. It's about ISR, intelligence, surveillance, and reconnaissance. You have to have eyes on over that strait 24/7 so that you can see anything the Iranians might or might not be doing. You need and that requires, again, a lot of resources from the air. You're certainly going to need seaborne assets, and you need to worry about not just the mines. It's not just floating mines that the Iranians could put in the water or even seabed mines. It's their drones. I'm mostly concerned about the drones, air drones and sea drones. Sea drones can attack by stealth. Air drones can be very, very hard to knock down. They're very slow moving, but they fly close to the level of the water. They can be hard to knock out of the sky, and all it takes is one of those things, whether it's a missile, a drone, air or seaborne, and of course a mine, to get through to shut down traffic for potentially weeks. So it's a very difficult thing to defend against, and it would require an awful lot of assets and an awful lot of time.
How would 2 Marine Expeditionary Units and thousands of troops from the 82nd Airborne contribute to a mission like this or another mission, Admiral? What exactly do you think we could be getting ready for as we position these thousands of other American service members into this theater?
Difficult to know, of course, what the administration is planning, but if we're just going to talk about the strait, the Marines could be helpful if you wanted to go after a couple of the small islands that bound the strait, which are in Iranian control and therefore could be used by the Iranians as bases to launch drones or even small boat attacks. So you could put the Marines on those islands and help, again, restore a little bit of confidence in the shipping industry, that you've got eyes on, that you've got a presence, and that you have the ability to defeat Iranian threats. There's also talk, I know, about maybe using the Marines to assault Karg Island, which is that island way up in the north of the Gulf, right off the coast of Iran, about 15, 16 miles off the coast, that they use for infrastructure. That's kind of their port of departure and embarkation for all the oil that comes out of the Gulf. And so there's been talk about maybe the Marines taking that over. That is a much taller order. It's a bigger island, and I suspect that the Iranians are going to want to defend it. In fact, I saw press reports today that they're already fortifying Karg Island in anticipation of some kind of amphibious assault. And then, of course, there's always the other option here, which when you have the 82nd Airborne coming, it certainly you can't ignore it as an option, is the potential to put U.S. troops on the ground in mainland Iran, in the area around the strait, sort of southern Iran, to try to prevent the Iranians from using their coastal facilities to attack ships in the strait. That is a much, much taller order for the U.S. military and would require an awful lot of planning, organization, coordination, and, of course, time. And, of course, it's very risky indeed.
Yeah, I don't know if these are in some of the documents, the classified documents that the president had at Mar-a-Lago that mapped out Iran battle plans, Admiral, but we are seeing reports today that the Pentagon is developing options for what they're calling a final blow, and occupying Karg Island is one of them, as well as invading Larak, if I'm pronouncing it right, the island that helps Iran keep control of the Strait of Hormuz, and seizing the island of Abu Musa to that same extent. Are these battle plans that you have seen for years? Are these options that the Pentagon has been looking at for other administrations as well?
Well, I won't get into the details of operational planning or what I was cognizant of when I was in the uniform, but I can tell you that the U.S. military has long been looking at threats to the Strait by Iran and coming up with contingency plans for how to deal with those threats. I have no doubt that after I left service, the U.S. military and Central Command continued to refine those plans and those contingency operations. I'll leave it to the planners to speak about what they're thinking or what they may not be able to do. I would just tell you that if you're going to introduce ground troops, and that certainly appears to be an option the president has not eschewed, there is a whole new level of risk here, and quite frankly, a whole new level of potential escalation of the war. Once you insert troops on the ground, then you're in a different kind of fight than we are right now.
Well, of course, the president hasn't ruled that out entirely. And to your point about there being some things that you are not able to communicate publicly, obviously things can be classified for a reason, and strategic ambiguity can be a real strategy. But I wonder if you see the administration as kind of straddling the line of not having credibility either, as they seem to, President Trump or the Secretary of State, the Defense Secretary, others aren't necessarily sending a consistent message as to what it is we are not only trying to do, but what it is we're willing to do to get there.
It's an interesting question. And I think I spent a lot of my time focusing on the Pentagon briefings. I wish they did more. I wish they had more traditional media in the briefing room. But when you listen to General Kane, the chairman of the Joint Chiefs, talk, or when you watch the videos by Admiral Cooper, the Central Command commander, you do get a clearer sense of what they believe their military objectives are, what they've been ordered by the commander-in-chief to do. And it's pretty simple. They're pretty limited objectives. But then when you listen to the political messaging, it does tend to be all over the map. And it's very hard on any given day to, is it unconditional surrender? Is it regime change? Is it just the nuclear program? Or now, we're talking about maybe going after energy infrastructure on the ground in Iran. There's a lot of mixed messaging. This administration might contend that that's good, that is strategic ambiguity, that confuses the Iranians. But if you are, in fact, in the middle of negotiations, if you are trying to end this diplomatically, then clarity and concision in message is absolutely vital, not just for the public that's paying attention like you and I are, but for the Iranians, for your enemy, and for your allies, Israel. And it's not clear to me that the Israelis share the same strategic objectives as the United States in here. And they get a vote in how and whether this war ends. So clarity and concision and simplicity in the message as you approach negotiations is absolutely vital. And I would hope that we'd be able to see a little bit more of that than we have in the last couple of days.
Admiral, you, of course, were appointed Pentagon Press Secretary by Chuck Hagel when he was the Defense Secretary. Yeah. So you know what it's like to stand up in front of that room and manage a press corps in a very sensitive environment here. And I'm curious what you make of the posture that this Pentagon has taken when it comes to journalists. Of course, we just saw a recent court ruling in favor of a lawsuit brought by the New York Times that struck down the administration's decision to curtail the activities of reporters. And in response to that ruling, the Pentagon says it's going to be kicking reporters out of the building altogether. They'll build an annex, some sort of outhouse on the property where reporters will purportedly be allowed to work, although they still won't be allowed to solicit information, even if it is not deemed classified. Is this all good for the country?
I think it's not only not good for the country, it's not good for the Pentagon. It's not good for Mr. Hegseth and his leadership and for what they're trying to communicate about the war effort. So I really hope that they revisit these policies and begin to allow more briefings to occur and more media to be in the briefing room for them. And to have the press back in the building, I think, is important. Look, when you're talking about issues of life and death, war and peace, when you're talking about the U.S. military and the billions of dollars the American people are spending on their national defense and the literally millions of sons and daughters who are in uniform, the Pentagon has an obligation. It's not a privilege. It's not an opportunity. It's an obligation to explain what they're doing with those tax dollars and with those young men and women in uniform and how they're using those resources to keep the country safe. It's an absolutely sacred obligation. And I always looked at it that way from the podium. So did Secretary Hagel when I worked for him, Secretary Austin when I worked for him, that we had an obligation to get up there and explain ourselves. The other thing I would say about access to the press and having the Pentagon press there with you all day long, and they were with me all day long, is it makes you a better spokesman. It makes you a better policy leader because you get to hear what they're hearing from their sources. You get to understand what stories they're working on. You get an opportunity to maybe shape their thinking about those stories. And I think you also quite critically, get a chance to make better policy, because there's nothing better for policy than to throw it open to the scrutiny of an independent press every day and let them poke holes in it, let them ask the tough questions. You can actually, if you're wise and you're humble, as Secretary Hagel and Austin were, you'll change your mind from time to time.
Spoken by someone who's been there. Admiral, it's great to see you. We'd like to stay in touch with you as this entire story progresses. John Kirby, retired Rear Admiral, former White House National Security Comms Advisor, and a fascinating conversation you're only going to hear today on Bloomberg. I'm Joe Matthew alongside Kaylee Lyons in Washington. We'll meet you on the late edition of Balance of Power. It starts 5 p.m. Eastern, only here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters in New York City. It is Thursday, March 26th, and we've got stocks down. Oil prices are higher as a ceasefire between the U.S. and Iran seem out of reach, at least for the moment, based on President Trump's remarks at a cabinet meeting earlier today.
They are begging to work out a deal. I don't know if we'll be able to do that. I don't know if we're willing to do that.
That, of course, was President Trump earlier from the White House. We'll have more on the trade for you in just a moment. But ahead this hour, once again, Tim, our focus is the war.
Yeah, we're going to have an update on the war on a day, as Carol mentioned, when stocks are lower and energy prices are once again higher. Brent above $100 a barrel, in fact, close to $109 a barrel, up 6.5%. WTI, the U.S. benchmark, up to $95 a barrel.
All right, we're going to talk about that. We're going to talk about how to invest through the war, how investment managers are thinking about the current moment and also the outlook for 2026. I'm almost wondering, do we write off 2026 already because of what's been going on? Plus, tech titans to advise the president on AI and science-related issues. We're going to have more with White House AI and crypto czar David Sachs.
Also, a view on private credit from one investor. The founder of Tannenbaum Capital Group stops by. That's in just a few minutes.
And then we're going to talk about smart technology in a little bit of an unexpected place, but it's a really fascinating story. Stick around. That's later in the hour.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here's Amy Morris in for Charlie Pellet. Hey, Amy.
Hey, Tim, and you're absolutely right. President Trump sent some conflicting signals on the prospect that talks with Iran would bring a halt to the nearly month-long war. That did roil global energy markets. WTI jumping 5.5%, now topping $95 per barrel. Brent crude 6.5% higher, closing in on $109 per barrel. Look at the NASDAQ, down 2%, down 433 points. S&P down almost 1.5%, around 96 points. And the Dow down 447 points. That's just about 1% lower. The 10-year Treasury yield at 4.41%, the 2-year yield at 3.97%, and Bitcoin down 3.4%, just about 3.5% now. It's still moving down to $68,000. Memory chip stocks extended their losses. Google publicized some research that could allow for more efficient use of the storage needed for AI development. U.S. insurers Equitable Holdings and Corbridge Financial are set to merge in an all-stock deal, valuing that business at $22 billion. Wave Life Sciences shares fell after a single higher dose shot of its weight loss drug failed to meet investor expectations for reducing visceral fat. Wave Life Sciences shares are 50% lower. Amazon offering $1,000 prizes for delivery drivers who share stories about why they love their jobs. The contest is for drivers employed by delivery service partners. It's a network of small businesses that Amazon contracts with to manage their delivery workers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go to Bloomberg Business Week Daily with Carol Massar and Tim Stenovic.
All right, Amy, thank you so much. Amy Morris in there for Charlie Pellet. So President Donald Trump threatening Iran with intensified military action and said he's unsure whether a diplomatic agreement can be reached with the two sides at loggerheads on how to end the near month-long war.
Yeah, Iran has rejected a U.S. ceasefire proposal. It's waiting for a response to its rejection of a U.S. 15-point plan to end the war with its own conditions for a ceasefire. Back with us for more for our daily update on the U.S. war in Iran, Bloomberg News White House and National Security Editor Michelle Jamrusco from the Bloomberg Bureau in Washington, D.C. 24 hours ago, we were talking to you about what seemed like there could be some sort of off-ramp for the president here, or at least de-escalation. After that cabinet meeting and the comments that we heard from the president today that looks increasingly unlikely, what do the next 48 hours look like in your perch from Washington?
Yeah, round and round we go, Tim. It seems like we're having the same conversation about the back and forth. I think one thing that was interesting this morning is that Iran, through its Tasnim news agency, did acknowledge that they had received the 15-point plan from the U.S., so that was a new piece, is that they openly acknowledged that. Trump later kind of joked that that was obviously a tell that they were lying about the status of negotiations. So, again, we have the jawboning from either side. It's hard to trust 100% what either side is saying about any of the status of the talks. But we did have kind of more of the same from Trump in that almost 2-hour cabinet meeting, where he did express both optimism at times and then, uncertainty, more prevailing tone on when they would reach a deal, when Iran would kind of meet the demands that the U.S. has put forth, while also not really acknowledging what Iran has in turn put forward as its own conditions for a ceasefire.
Well, it really is hard. You've got to just go on the headlines, right, that we get from both sides, Michelle, at this point. I mean, that's the reality of the world we live in. Yet you do wonder what's going on really behind closed doors and behind the scenes. Having said that, investors definitely have, their say, and they have pushed stocks pretty much near their lows of this session. We see WTI crude and we see Brent crude also higher in today's session. So investors don't necessarily see any end near. So at this point, I guess one of the things I'm just curious about is, what are you guys hearing, kind of internal intel of how much pressure the president is maybe feeling from his administration about, we've got to kind of wrap this up? I mean, everything looked pretty chummy and relaxed at that cabinet meeting this morning.
Well, I think that's a really good question, Carol. And I think, one person that we've been watching and that we were watching during the cabinet meeting was Treasury Secretary Scott Bessent, who has been sort of that calming voice for markets at times. He perhaps played a role after Sunday night's market turmoil in convincing the president that something had to be done to kind of cool people down and to project some sense of confidence that things would get back on track, especially with the Strait of Hormuz. And we've seen throughout this war, this almost 4-week war, that, the moments that the markets have calmed are usually when the U.S. has put forth some either confidence in that talks were ongoing or were generating some sort of momentum, or some sort of energy proposal, and they've had a few of those to try to kind of curb the energy prices that keep surging around the world and especially domestically here at home. So I think that's a pressure point that we continue to watch, but also heading into the weekend, there are rumors of Vice President J.D. Vance heading to Pakistan, who has served as a mediator in these talks and who confirmed that they passed through, or the U.S. at least confirmed that the Pakistanis passed the 15-point proposal to the Iranians. So they're serving as a conduit for further negotiations. That could happen. We may see something out of that, or we may not. I mean, as Trump hedged his bets, he said he wasn't sure if Iran was serious about negotiating. And of course, publicly, what the two sides have put forward as conditions for a ceasefire are very far apart.
Yeah, Michelle, before we let you go, that's one part of sort of potentially the end or a de-escalation of the conflict. The other side of this is what happens with U.S. troops that have been sort of sent to the region. And
Absolutely.
An update, can you give us one on an expeditionary force, a Marine expeditionary force, and any signs that we're getting from Washington, any signals we're getting from Washington about potential escalation?
Well, on the first piece of that, Tim, we do know, of course, there's 2 Marine expeditionary units that are headed to the region, one from Japan, one from San Diego, and they're totaling somewhere around 5,000, probably more troops than that. But, in gaming out, what it would take to do some sort of ground operation, whether on Karg Island, which has been in the news quite a bit with speculation, or elsewhere around in Iran or around Iran, there's a lot of military analysis, smart military analysis over my head that is kind of trying to game out how many troops that would take and what that sort of operation would look like. A great piece on the Bloomberg Terminal about this out last night. So we do know the resources that are headed to the region, at least some of them. But at the same time, Trump has definitely obfuscated when asked about what the next steps are. He obviously doesn't want to tip his hand, and he's ridiculed those who have asked about any takeover of Karg Island or other operations that have been rumored to be a possible next step for the Pentagon.
Hey, one thing I do think about too, Michelle, is just, we're the Middle East, other nations or, entities in the region, how they are feeling. And they have, felt the attacks directly. At one point, we were hearing maybe the possibility of them, backing and joining the U.S. forces. Is there any update on that we know of?
Yeah, there's a lot of mixed feelings, Carol, throughout the region. A number of Gulf allies, as you mentioned, including Saudi Arabia, including United Arab Emirates, have showed some support for assisting in what could be a potential escalation of the war. You know, there's been this line from the Saudis, you know, that they are eager to kind of end the war, but to do it in a fashion that ensures Iran's defeat. So that's kind of, you know, that in some ways matches what Israel has said all along, which is, you know, Iran must be defeated, and they're not willing to cease operations until they know that that will be the case. So they want to remove the nuclear threat. So, you know, there's a lot of that talk. Of course, some uneasiness from allies within the region and around the world about how you do that, how you ensure that the Iranians don't have further nuclear ambitions, are not further threatening. And at this point, you know, some allies see that we're in too deep to kind of question the process right now, but they're not willing to get further involved. So you have, you know, on the other end of the spectrum, folks like UK's Starmer, who have been pushing back for some time, and you know, prompting you know, Trump to be very upset about and disappointed in both NATO and allies like the UK.
All right, going to leave it there. Michelle, as you so well point out, always so many moving points and parts and entities that need to be thought about kind of how we wrap this up or where we go from here. Michelle, thank you. Michelle Gemrisco, White House and National Security Editor at Bloomberg News, joining us from the nation's capital. We got to talk a little Apple.
Yeah, as we were speaking with Michelle, a headline crossing the Bloomberg terminal at Red had a Bloomberg exclusive from Mark Gurman. Apple plans to open Siri to outside AI assistants. It's a major move aimed at bolstering the iPhone as an AI platform. The company preparing to make that change as part of a Siri overhaul in its upcoming iOS 27 operating system update. That's according to people with knowledge of the matter. Shares of Apple, as we speak, little changed, but did spike higher slightly after this report. Google shares down right now. Alphabet shares, the parent company of Google, down by about 3.5%.
And I'm not quite sure I understand that because, right, this is going to enable users to send queries to services like Google's Gemini or Anthropic's Claude. Is it maybe just a crowded field?
Perhaps. Yeah, I mean, the change also, as you note, Carol, bolster the iPhone as an AI platform, turn around Apple's fortunes in AI. It's lagged behind Silicon Valley peers. And Mark Gurman has reported a lot on that in recent years.
But interesting to see Google.
Yeah, it is.
That's why I'm trying to understand a little bit of that. All right, we're going to continue to follow that one as well for you. All right, you just got your update on the war and certainly the U.S. perspective. Our Michelle Gemrisco on that. We want to get to a market view on it. This, as the conflict has led to surging fuel and fertilizer prices, sparked fears of an inflation crisis and worldwide food shortages, with oil prices surging and more than 4,500 people killed in that conflict. Our next guest notes that current evidence is good enough to support the market for now, but says cracks are more likely now than they were at the beginning of the year. So let's get to it and find out what those cracks she is focusing on. Great to have back with us Anne Maletti. She's head of equity investments and chief diversity officer at Allspring Global Investments. They've got $600 billion in assets under management. Once again, joining us from Milwaukee, Wisconsin. Anne, good to have you back with us. This year, so far, safe to say, not turning out as maybe we would have expected back on January 1st. Are you ready to make a call on 2026 at this point, just because of what has come at us so far?
Carol, I wish I had the crystal ball for you and Tim and everybody else today. But I think these are times where we all have to be pretty humble. We don't know what the outcome will be for 2026. And as you kind of set up my coming on just a few minutes ago, I am pretty optimistic about the economic data we're seeing today. But I am concerned, much more concerned about inflation than I was when we entered into 2026. And I think the Iran war or conflict, whatever it is to be called here, the first order effect is it is an inflation scare. But the longer it goes on, it really does potentially form into a larger growth scare for the market. And I think days like today, when there's less certainty about whether or not this can end quickly, investors are both grappling with potentially higher inflation forecasts and a longer duration, which then leads me and others to think about what that could do to growth.
As you're talking, I'm thinking about a stock that's lower today, Miller Knoll, down 25%. The company And the reason I'm talking about an office furniture designer company is because the company came out with earnings, and one analyst said the company expects about 125 basis point hit to growth related to the conflict in the Middle East, lost volume, higher transportation costs from the increase in oil prices. That'll weigh on EPS during the fourth quarter by about 10 cents. That's according to William Blair. Is that going to be a story that we hear from every company during earnings season?
Tim, I think, yeah, Tim, it's a really good point, and it's something that something I learned well in my earlier days covering transportation and obviously other broader markets of the market as well. When you have really quick inflationary pivots up, like energy prices. Energy is like the perfect example. If oil and gas prices spike in a short period of time, it's really, really hard for the supply chain and companies to adjust to that quickly. You can think about yourself being in the seat of a CFO or a CEO. You can't adjust your supply chain quick enough. You can't put in price increases quick enough. All of those things are true. Versus a more moderate uptrend or downtrend in fuel prices, where you can kind of price that into your business model. And so what we're seeing here, and I think you gave a great example, is an immediate impact to the costs of doing business. And we were all talking about tariffs in the beginning of the year. Because those were coming on slowly, we weren't seeing that immediate impact. There were adjustments down and then rolling on that took longer than expected. All of those things gave companies time to adjust. They can't adjust to things as quick as they're happening today and spikes that are happening as we're seeing them today. And so I think this will be a theme that investors hear about and that we hear about in the next reporting cycle. The thing that all investors will be looking for is, okay, is that temporary, or is that when are we going to see an end to that? And that's where I get to the duration.
Yeah, and I think about, Anne, is this the war? I mean, obviously, the war trade, although equities for a long time during this last month or so seem to, as we are constantly reminded, look for a reason to buy and to rally. Like we see that over and over again. Other parts of the market might be telling some different stories. So I am curious, what is, can you back out the war? And if you do, fundamentally, and we'll start to understand fundamentally, certainly for stocks and companies as we start to go into earnings, what we hear from the C-suite. So, is this a war trade, and that if the war ends, we go back to the fundamental trade, or that's not so easy?
I think it is becoming a little bit more foggy, Carol, because again, how quickly can we go from energy prices where they're at today back down to maybe not where they were right when the war started, but a more, moderate price? And, can you adjust down fairly quickly? How many quarters does that take? How many months does that take? And so all of those things will matter to investors. How quickly can we adjust back? Because all of those things will have an impact on the cost of goods sold, and then obviously inflation into the market, and then potentially growth concerns. And so we were looking for upside, right? You had more deregulation, you had a lot of tax benefits that were going both out to companies and consumers. To me, most of that has all been taken away now. And maybe if you think about the equity markets, it's like, okay, instead of that being upside, that's no longer upside. But what's the potential downside? And so if I'm a little taken aback, maybe the equity markets aren't down as much, but maybe it's because it's just taking away some of the upside potential it saw and not going all the way to a negative scenario.
All right, great to check in with you. Take care. Nice to talk. Anne Maletti, she's head of equity investments and chief diversity officer at Allspring Global Investments. All right, coming up next, a wave of redemption requests has left more than $4.6 billion of investor capital trapped behind withdrawal limits in the private credit industry. It's something we talk about a lot. One investor in the space weighs in.
It's 2:21 on Wall Street. I'm Amy Morris. This is crossing the Bloomberg terminal. Elon Musk's X is reportedly restructuring ahead of the SpaceX IPO. The Wall Street Journal reports X has let go of its chief marketing officer and conducted a round of layoffs of non-technical staff as it looks to right-size the social media company. The company is pushing ahead with its plans to roll out X Money, a payments business within the social media platform. Skepticism that the U.S. and Iran will reach a ceasefire pushed oil higher and sent stocks lower. We do check markets for you all day long at Bloomberg. WTI now topping $94 a barrel. Brent crude is just about $108 per barrel. The S&P 500 is down 1.5%, down 98 points. NASDAQ down 2%. The Dow is down 0.9%. 10-year Treasury yield at 4.41%. The 2-year yield at 3.97%. Google shares about 4% lower now after Apple announced it would open Siri to outside AI assistants, part of a Siri overhaul. This is coming in the iOS 27 update. Hims & Hers Health introduced a weight loss membership that starts at $39 for the first month and $149 each month thereafter, including support services, access to providers, and nutrition guidance. Medication costs are separate. Shares of Hims & Hers more than 2% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovac.
All right, so appreciate it, Amy. Tech industry titans, including Meta's Mark Zuckerberg, venture capitalist Mark Andreessen, Oracle's Larry Ellison, NVIDIA's Jensen Huang will serve on a new council advising President Trump on AI policy and science-related issues.
AI has emerged as a politically contentious issue in the November midterm elections. Tech executives and companies have been pouring money into races to elect lawmakers who will be favorable to the industry. Bloomberg Tech co-host Ed Ludlow talked about this new advisory council with Kraft Ventures partner and co-chair of the President's Council of Advisors on Science and Technology, David Sachs, earlier today.
PCAS is the President's Council of Advisors on Science and Technology. It's a group that's been around since the presidency of George Herbert Walker Bush. I think that was around 1990. So it's been around for over 30 years. And the version of it that was created by Bush 41 was actually building on a group that was first established by FDR. So this Council of Advisors has been around for a long time. And the idea is to gather some of the best and brightest minds in the country on cutting-edge technologies to make recommendations to the President of the White House on issues that obviously can have a great impact on the American economy and our security and on innovation policy. And so we're pleased to announce this group. The President just named the first 15 people. We can have up to 24. And these are, I think, some of the biggest luminaries and stars in the world of science and technology. And this group will meet periodically to, again, make recommendations to the President of the White House.
Jensen Huang, Lisa Su, Mark Zuckerberg, Michael Dell, who I think also served on the PCAS 2001 under George W. Bush, and so has some experience of that. It's an initial list, as you say, but how was it composed? Why those 15 specifically? What is it that the President and you and Mr. Kratzios believe they bring in the first instance?
Well, first of all, I think there's a variety of technological expertise. You have people there who are in the world of software. Others are in the world of chips or advanced semiconductors. We have folks who have won Nobel Prizes for physics, who've done breakthroughs in quantum computing or fusion or small modular reactors. So there's actually a range of skills there. I'd say the other point that's noteworthy is that these people are builders, they're doers, they're people who have actually not just done research or academia, but they've actually built companies in a lot of cases around their inventions. And so I think there's a strong emphasis on what you might call applied experience here. I would say that of the different PCAS that have been created, this one I think you'd have to say has the most star power of any group like this that's been created.
Well, there you have it. That was Ed Ludlow from Bloomberg Tech with David Sachs. He is co-chair of the President's Council of Advisors on Science and Technology. One more thing. Last week, President Trump unveiled a blueprint for regulating AI. It lays out the groundwork for Congress to create federal standards that include online safeguards for children and less stringent permanent permitting for data centers.
Yeah, they're trying to figure their way forward. Hey, speaking of safeguards, it's something that some investors in private credit seem to be looking for, or maybe not totally understanding the investment that they were in. This is happening as a wave of redemptions. Requests has left more than $4.6 billion of investor capital trapped behind withdrawal limits in the private credit industry. We've done some great reporting on this. I want to get to our next guest. He's a private credit investor. Here in studio with us is Len Tannenbaum. He is founder of the Alt Asset Manager based in West Palm Beach. It is Tannenbaum Capital Group. They've got roughly $2 billion in assets under management. He also founded Fifth Street Asset Management. It was a $5 billion credit manager sold to Oaktree back in 2017, a while ago. It's been a while. Welcome back.
It's been a while since I've sold, and good to see you again, Carol. Good to see you, Tim.
Good to see you.
It's good. I love people who've been in an industry for a while, seen some different things. The private credit industry, it seems like nonstop that we've been talking about for several years right now. It's grown. It's massive. I'm just curious how in terms of the evolution from when it first started, when you were first involved, is this for better or for worse?
My God, it's changed so much. We took the company public at Fifth Street in 2008. Since then, everything's changed. Back then, we're 0.7 times levered. Today, you're 1.2 times levered. Back then...
Almost double.
Yeah. A lot more leverage. EBITDA. Everybody says they're at EBITDA 5 times leverage. Today, it's really, I think, 7. And you saw that in an S&P report that basically said, look, you have a lot of add backs. So many things, I mean, we can't do it all today, but so many things have changed to add leverage, to maybe change the quality of the assets, and then it became very frothy. We all know it was a bubble. Lots of assets came in, interval funds opened a new client base, and now the bubble's bursting, which is kind of normal for the industry.
Well, that's a big statement, because I think people would say we see cracks. What do you mean it's bursting? Because it's like, are you saying that there's a lot more to come, or in terms of redemptions? Or tell me, go deeper in that.
Go deeper into it?
Like, yeah.
Well, you know, it's always happens, the industry cycles. Back then, when we started, a company called American Capital, Allied Capital, and GE Capital were the 3 leaders. Today, none of them exist, right? 10 years later, they don't exist.
Right.
So that was
GE Capital was lauded.
Amazing, that's right.
In a big way, yeah.
Exactly. And so that bubble, that created a bubble, and that bubble burst. And that bubble burst because liquidity came out of the system in 2008, which gave birth to my little company that we started, and we got to come in at that vintage. So today, it's a similar thing happening. The industry will be here. Look, it's a good industry. It's an institutional industry. So I'm not saying the industry goes away. It's just, and it has a good purpose. It's just, it's not going to be quite this big.
What's the cause of the bubble bursting this time?
Well, it's usually liquidity draining from a system. So that's what you're seeing here in the redemptions. You're seeing liquidity drain. Sometimes you see a recession. Sometimes you see, investors wanting their capital or hoarding capital. Sometimes in 2008, you see 2020, right? You see dislocation.
But the investor appetite for capital, what's prompting that right now? Is it concerns about AI and software, for example, and a lot of the software exposure that these funds have? Like, what is it that's prompting investors to say, actually, we want our money back?
So I think a smart person on Bloomberg, maybe it was Blank Fine, I was watching the clip, and he goes, what happens in history doesn't repeat itself, but it rhymes.
Right.
It's rhyming, right? So you never know what bursts a bubble, but it usually is a liquidity drain. It can be the AI causing more dislocation, and it could be the PIK securities. I mean, I think the people became very complacent. You have things called PIK toggles. I know that's difficult, but think payment in kind. So in other words, they really don't collect cash. They collect more debt. And so all of these different tools, lack of covenants. People say they have a covenant. A covenant is like, think about brakes on a car. So you're running a car at 65 miles an hour, and lately they've been doing with no brakes. So that's kind of scary. And so all of these different changes in the market since you and I spoke last, maybe 8-10 years ago.
A long time ago, I know.
Yeah.
It's made a difference. Well, I think it's a conversation we've had a lot, Tim and I have, certainly around this table, and that just this idea that the industry grew so much. There were assets chasing, deals to be made. There was just the hope of, the returns of the past that would continue. And when you have so much money chasing maybe a certain amount of deals, you're going to tend to put that money into deals that maybe aren't so wonderful. And that deal that might look great in a zero interest rate environment or really low, okay, but doesn't look the same way today. And that's what we're starting to see.
And will interest rates bail them out? Like I saw you.
Probably not.
That now we think probably not, right? Now it's forecasted to even go the other way. So people were hoping, stay alive till 25, and
I want to throw something on, and this is from one of our producers, Talia, who shared this story with me, and we wanted to bring it up with you.
Sure.
Goldman Sachs and JP Morgan are offering hedge fund clients ways to bet against the private credit market. They have assembled baskets of listed companies with exposure to this space, including European financial institutions and alternative managers. Private credit market, of course, facing pressure. We've heard that story before, right? Betting against something.
Sure.
Do you think that's a telling sign? Or not necessarily?
I think taking a blanket approach is not the right approach. Yeah, I hate painting the same brush with everybody. There are good performers in private credit. When the fire burns, the forest burns, the new trees can grow. Hopefully we get to invest now in the new lower middle market's empty.
Right.
So we get to invest in a very exciting part where they haven't had good returns for the last 7 years.
So you pick up things at a really low price, is that what you're saying, or no?
We're coming into deals and getting another 400 basis points, which pays for that risk-adjusted return, which wasn't there a year ago.
Right.
So now is a good time to invest. So there will be winners, but I think that same fire, right, will burn some trees, and there will be some trees that remain. And there's some really good players in the market.
So what about your portfolio, in your private credit portfolio right now? What are you seeing in there?
Well, the good news is I'm just building it in the last 4 months.
So it's a good time to build
Your
it?
private credit exposure you're just building in the last 4 months?
I sold our Fifth Street to Oaktree in 2017. I personally owned about $100 million of Oaktree stock. I've sold all that a couple of years ago. They did very well, actually, a couple of years ago. That stock has gone down a lot. And today, I haven't invested at all in private credit. I just started again. And we always invest our money at TCG alongside our investors. So I'm the largest investor in every fund. I own 25 to 30% of the fund. So we put our money where our mouth is. And now I think it's a really exciting time to invest in the lower middle market.
Where specifically?
I mean, you can invest across assets. You can do asset-backed stuff.
Yeah.
You can even do some technology. One of the companies we invested in goes into a company that uses Walmart and Target and trades with them, right? They're one of the suppliers. And they always mismatch invoices. So they go and they say, I'll save you 25%. And if they do, they get 25 or 30% of the money they save them. And that's a great business model. And I think AI, going back to your other conversation about AI, is helping them. Because the smaller companies, the lower middle market, can often be helped by AI to compete with even bigger ones.
Len, real quickly, just got about 40 seconds.
Sure.
What about in the software space that's been beaten up? Is that not something you want to touch? Is it just not in that lower middle market area? I'm just curious.
I'm not a software expert. 30% of our stuff was technology. So I believe, even though I'm not a software expert, that about 50% have trouble and 50% may do very well. I'm just not smart enough to be in the right 50%, so we're not going to play.
You want to know what you're investing in. Try to understand it. Yeah.
You have to be an expert to invest in software here.
All right. Good stuff. Great to check in. Let's try and not wait 10 years or something.
No, hopefully not.
A lot happens in 10 years. Len Tannenbaum, good to have you back. Founder of Tannenbaum Capital Group. When we come back, the top cause of death for women in the United States and how smart technology, speaking of technology, may actually help.
In the meantime, taking a look at markets as we get to 90 minutes to the end of equity trading, the S&P 500 down 1.5%. This is Bloomberg Business Week Daily.
It's 2:40 on Wall Street. I'm Amy Morris. Skepticism that the U.S. and Iran will reach a ceasefire pushed oil higher, sending stocks and bonds down, extending a month of volatile trading since the war started. WTI now about 4% higher, around $94 per barrel. Brent crude more than 5% higher, closing in on $108 per barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 1.4%. NASDAQ down about 2%, and the Dow is down 0.8%. The 10-year Treasury yield at 4.4%, and the 2-year yield at 3.97%. Bitcoin down 3.7%, now around $68,000. Elon Musk's X is reportedly restructuring ahead of the SpaceX IPO. The Wall Street Journal reports X has let go of its chief marketing officer and conducted a round of layoffs of non-technical staff as it looks to right-size the company. The company is pushing ahead with plans to roll out X Money. That's a payments business within the social media platform. The trading arm of French oil major Total Energies embarked on one of the biggest ever buying sprees of Middle Eastern oil this month, helping to send prices soaring in a market already facing a liquidity squeeze because of the war. The scale of the total purchases was unprecedented and added to upward pressure and sharp price moves at a time when the war's already upended the Dubai crude market. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. We return to Bloomberg Business Week Daily with Carol Masser and Tim Stinovet.
All right, Amy, thank you so much. Amy Morris in for Charlie Pellet on this Thursday. So you might remember we recently talked about heart disease being the top cause of death for women in the United States. It kills more women than all forms of cancer combined.
Yeah, women are particularly vulnerable to cardiac health threats spanning biological, clinical, and healthcare systems that contribute to underdiagnosis, delayed treatment, worse outcomes compared to men. This recent study published in Circulation, it notes that could be about to get worse. Alarming uptick of disease in younger women. Close to a third of all women between 22 and 44 will be diagnosed with some form of cardiovascular disease by 2050.
All right, so we've talked about this before. There's a lot to talk about, especially when you lay out the numbers like that. Let's get to the Bloomberg Business Week Women's Health segment. We focus on key issues in developing technologies impacting the present and future of women's health around the world. Our guest, Alicia Chang Rodriguez, she's founder and CEO of Bloomberg Tech. She joins us from Boston. Alicia, great to have you here on Bloomberg. Welcome, welcome. First of all, I'm curious how all of this, get into your background a little bit and how this all came up on your radar when it comes to underdiagnosed or delayed diagnosis in women when it comes to heart disease and how it kind of led you to where you are today.
Yes, no, thank you for having me. I'm very happy to be here to share about this. Well, this all started because sharing a bit about my background, I am proudly named Alicia after my grandma. She dedicated her life to women's health as an obstetrician, and we lost her to a heart attack when I was 13 years old. It was sudden, without warnings, and we didn't really talk about it. It was until years later when I was at MIT's Computational Cardiovascular Research Group that I realized how common her story really is, which is all of the statistics you just shared. Heart disease is the #1 killer of women worldwide, and it has been historically overlooked. At MIT, we had access to some of the largest data sets used today for clinical decision-making, and they were mainly composed of male cohorts. 1 in every 4 clinical trial participants were female. And that's when it really clicked for me that there's a data gap. And as artificial intelligence helps turbocharge digital health, there's actually a danger that these algorithms that are trained with mostly male data sets will actually perpetuate these problems. And we also saw the exciting opportunity because, AI thrives on patterns and women's lives are full of them, from our menstrual cycles to pregnancies to menopause. Women's physiology is dynamic and we've been historically ignoring them. So we did start this thinking that for every woman that symptoms have been dismissed, that the data was missing or unrecognized, and now her heart story can be rewritten through science and technology and understanding.
So how are you doing it? How are you doing it at Bloomberg Tech? What is the technology that you're using? How are you harnessing the data and using AI right now in a way to try to prevent this from happening?
Yes, so we started by building a device that was since its inception, thinking about how to better collect data from female physiology, right? So we designed it in a wearable form factor that it looks and feels like an everyday bra. It can be a nursing bra, a tank top to sleep, or just a regular everyday bra or a sports bra. And it has all of these sensors all around her torso, looking at her heart, lungs, hormones, metabolism, right? Because we wanted to optimize how we are collecting data from a woman.
So tell us about...
We call it the Bloomer tag, which is the acronym for Tech Augmented Garment.
Yeah, fascinating. We're showing, for those who are listening on radio, of course, can't see the pictures, but showing some images of what you guys are doing. You're in the testing phase. So tell us about kind of what you have found out, how accurate it is, how useful it is. Data for data, alone is not necessarily helpful, but give us an idea of what you're finding as you go through the test phase.
Yeah, I always think that the data for data alone, it's noise, right? Like we really want data to understand what's going on. And like you said at the beginning, because women are having worse outcomes compared to men her same age after a cardiac episode, we really needed to see how we look at these female patterns and what are we really striving for. So when we built this device, we've taken the device through clinical validation. So we've done clinical studies so that we can prove the medical grade quality of our sensors because they're all textile based. And for us, it's more about generating digital biomarkers that understand female physiology with all of the accumulated evidence that we've had over the last 30 years on how heart disease presents differently in women. So amazing work from cardiologists and researchers has demonstrated that most of the modern cardiology today is focused on blockages in larger arteries.
Right.
But the reality is that women have heart disease in the smaller vessels. So all of these patterns, understanding them really well and being able to use a cardiac monitor that is comfortable, continuous to identify these patterns is, for us, it's really important because we can change the way that we deliver care today in finding these conditions at an earlier stage and not when the disease has become so severe that now you're ineligible for certain therapies that you would have been eligible if you find them earlier.
Alicia, I want to ask you, we've got a couple of minutes left here, but is this something that the FDA signs off on? And I'm just curious, and is it something that healthcare plans will pay for this, that doctors respect the data that comes in? Walk us through that, because that's something that really speaks to viability, right, in terms of
so we've made it to be
tool.
like a Holter monitor. So it's more on that stream of a medical device, with the reality that unlike the Holter monitor, right, like a patient can be seen because it has the ability to collect data from the reports and that give more information to the cardiologist so that they can provide better standpoints and logs about what's actually going on, what her symptoms are when she's feeling a chest pain or any other symptom.
Does the healthcare community, do doctors, do medical professionals respect the data that comes in? That's what I'm just curious about, what you're hearing.
Yeah, so that's why we've done clinical studies. So to prove the clinical validation so that they see that this is equivalent to any other medical grade technology. And at the same time, we're very focused on demonstrating all of the evidence on our digital biomarker pipeline.
I know, because everybody's probably thinking, I'm thinking in my control room, what would something like this cost? We've only got about 30 seconds.
So this is very similar to when you would get a Holter monitor at the doctor's office.
Which costs what? I have no idea. What do those things cost?
Insurance pays for it.
Yeah, insurance pays for it, and it depends on the state. So.
Okay, interesting. I'm always curious about those. Like, what does it cost? But you're right. If insurance covers it, insurance covers it.
I guess depending on your insurance.
Yeah, exactly. Yeah. Let us know how things go. Alicia, thank you. Alicia Chong Rodriguez. She's founder and CEO of Bloomberg Tech, joining us from Boston.
Hey, I'm looking at shares of Occidental Petroleum. They are going to a session high right now. This after Reuters reported that the company's CEO is preparing to retire. More next on Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, get ready to wrap up. Not quite. We still have about an hour to go, but to wrap up on this Thursday.
We have 2 hours.
Did I freak you out a little bit?
Yeah.
Just like, wait, where are you? No, I just meant we're getting close to the last hour of trading. We do have stocks kind of hovering near their lows of the session, so we are down about 1.4% on the S&P 500, NASDAQ 100 down almost 2%. And I'm just going to take a quick look. It's interesting. I looked at the S&P 500 kind of bumping along that oversold. It's off of it, but we continue to kind of hover around that level. And then if you look at the S&P 500, you dig a little deeper, and you have about 208 names actually gaining ground today and about 295 to the downside. So it's not like everything is down.
No, but on the S&P 500, I'm just looking at it compared to where it's been in recent days. It's at a new low for during the war. So it's actually touching a new low point, going back to at the lows today, Friday, September 5th, 2025, but right now lowest since September 8th. So kind of giving up all the gains going back to September.
I think it's safe to say investors come in every day and they expect, all right, are we any closer to resolving this conflict? And then we just get kind of these mixed messaging or a no. And so markets kind of either mark time or they move to the downside. So we've certainly seen that in the equity trade. I'm Carol Masser along with Tim Stennebeck. Let's get to some stocks on the move on this Thursday. Bloomberg News equities reporter Avalon Purnell is in the house. How are you?
Very good.
Good.
Always fun to be here.
Well, thank you. We like to have a little bit of a party when we're in here.
Yeah, market's not really partying today.
No.
What's going on with the stocks that you're
Very
watching this
true.
afternoon?
We could go ahead and start off with Meta Platforms. That's ticker Meta, falling about 8.1% for its
Not
biggest.
a party.
Very much not a party. Biggest intraday drop since October, and that's after Meta and Google were found liable in the first social media addiction trial. Analysts are saying that the landmark decision could point to ongoing risk, understandably so, for both companies as they continue to fight thousands potentially of these similar claims.
That's interesting because they didn't go down that much yesterday.
Just gonna say that. Yeah, this happened at,
Wow.
before 2 o'clock yesterday, so the market was still open, and we didn't see a big reaction. But I guess now analysts are coming out with sort of how they view things, Carol.
Yeah.
And earlier today it was down at only 5.6%. That was a session low. Now down 8%. Wow.
I'm just going to throw this out.
Go, throw it out.
I have no idea if there's a connection, but there is a story on the Bloomberg about Mark Zuckerberg, of course, of Meta Platforms, meeting Senate Majority Leader John Thune, according to a person familiar with the schedule. So I don't know exactly what that means. We know these tech execs and heads have been up.
Looks like they're meeting right now. According to PBS, Mark Zuckerberg arrived at Senator Thune's office at 2:22 today.
Just throwing it in, little ad in there for you. Okay, so Meta definitely down a lot. Valero Energy, I saw this one actually rallying.
Yes, you are absolutely correct. It is up about 5.8% to hit a record high. That's after we reported that Valero's Port Arthur refinery could restart some units as soon as next week after an explosion shut down the plant on Monday. Also important to note that energy stocks as a whole just continue to rise as the attacks continue in the Middle East, and President Trump saying earlier that Iran should get serious about getting to the discussions table before it's too late. So we'll keep an eye out for that as well.
Definitely an outperformer, though, when you look at those energy names. Let's go to something. Actually, I feel like you should bring it in because you actually brought this to my attention.
Jack Daniels?
Yeah.
Let's talk a little bit about the parent company of Jack Daniels. You find him in Louisville, Kentucky, Brown-Forman.
Absolutely correct. That is ticker BF/B, gaining about 8.1% for its biggest intraday jump since last March. That's after Bloomberg reports that the French beverages company Pernod Ricard is exploring a potential acquisition of the owner of Jack Daniels whiskey. Important to note, though, that the Brown family has the majority of voting control and has rejected previous attempts to purchase the company. But we all know there's been a lot of weakness in alcohol and beverages just in general, so maybe that could make the deal more likely. Obviously, unclear.
Yeah, people not drinking, though, right?
No.
Or so we hear.
Yeah, so maybe, I think, there could be more consolidation, or there could be consolidation in this space. There's been a lot of consolidation in this space, but like you said, changing consumer habits, Avalon, who knows?
We'll see.
All right, good bunch of stocks. And just a reminder that even in a day where we overall see the major indices lower, there's individual names up and down, as we often see in any market. Avalon, thank you so much. Bloomberg News equities reporter Avalon Purnell. Hey, check out our Stock Movers podcast, 5-minute episodes, big winners and losers. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Coming up next on Bloomberg Business Week Daily, we got a great program. We're talking about the markets. We're talking about the sell-off, of course. But speaking of sell-offs, gold down close to 20% from its highs. Those were back in January, Carol.
Right, and that's after last year, quite a run, but we're going to get into it with Axel Mark, who knows so much about the space. We're also going to talk a little bit about distressed real estate. We are looking for signs throughout our economy, throughout our world in terms of distress, certainly as we see some pressure as a result of the war on things like stocks and other asset classes, so we'll see where we're going. We also saw mortgage rates moving up again.
Well, speaking of the war, we're spending our entire 4 o'clock hour on the war, specifically modern warfare and its decade-long mission to bring AI into war. It's all in a new book. Carol is holding it up right now. Project Maven, a Marine colonel, his team, and the dawn of AI warfare. Katrina Manson, our Bloomberg News colleague, she wrote the book. She's going to join us.
Listen, we've been talking about AI and the role in this war, U.S. war in Iran, but it has been about a decade-long mission when it comes to the Pentagon. Anyway, it's an incredible read, and we're going to get into it with Katrina. Hey, stick around. If you're watching on TV, the close is coming your way in just a moment. Tim and I continuing right here on Bloomberg Business Week Daily.
This is CBS News on the Hour, your home for original reporting.
I'm Jennifer Kuiper. One of President Trump's chief negotiators says he's convinced Iran wants to make a deal to end the U.S.-led war. CBS's Linda Kenyon.
At a cabinet meeting, U.S. Envoy Steve Witkoff said he believes Iran wants to accept a 15-point action list that the U.S. has presented.
We have strong signs that this is a possibility, and if the deal happens, it will be great for the country of Iran.
Defense Secretary Pete Hegseth, who prefers the term Secretary of War, says if Iran does not accept it,
the Department of War will continue negotiating with bombs.
While the war continues, Iran has slowed to a trickle 1/5 of the world's oil supply by paralyzing tanker traffic through the Strait of Hormuz. Linda Kenyon, CBS News, the White House.
Secretary of State Marco Rubio is traveling to France for a G7 meeting. It's his first trip abroad since the war with Iran began, and it will be at the top of the agenda. Earlier this month, an explosive device was found outside a gate at MacDill Air Force Base in Tampa. CBS's Camia McCormick reports a brother and sister have been arrested.
Alan Zheng has fled to China, according to FBI Director Kash Patel. He's charged with attempting to damage government property and unlawfully making a destructive device. His sister is in custody, charged with being an accessory after the fact. MacDill is home to the U.S. Central Command, which is responsible for military operations in the Middle East. It's been on heightened alert since the war in Iran began.
On Capitol Hill, senators are discussing a last and final offer to end the government funding shutdown as pressure mounts and airport lines keep growing. CBS's Shauna Mizell at Bush Intercontinental Airport in Houston.
This line actually starts outside. It wraps around this entire concourse, and the wait time here for this specific checkpoint is 180 minutes.
The Texas girls' camp, where 27 people died in last year's July 4th flooding, has filed an appeal to stay open.
Earlier this month, the court blocked Camp Mystic from doing any more work at the site. Brad Beckworth represents the family of Seal Stewart, a camper whose body still hasn't been found. He says the camp has already made changes at the site, disturbing evidence and hampering the search for Seal.
That camp's not ready to reopen.
Camp Mystic says 900 girls have signed up for this summer, and it's working with local and state authorities to enhance its flood safety. Michael Wallace, CBS News.
As the weather warms up, allergy season perks up with lots of sniffling and watery eyes across the country. Dr. Tim Ryan is an ears, nose, and throat doctor in Atlanta, Georgia. He says it's important to stay ahead of the symptoms.
Most people wait to start to treat their allergy till it's too late. You wait for a high pollen count day, and then you start on your medication. So you really want to start treatment early.
Stocks are down on Wall Street. This is CBS News.
Real.
hearing more from the Today Show's Savannah Guthrie about her mother's kidnapping from her home in Tucson. CBS's Deborah Rodriguez has new details.
Savannah Guthrie tells her NBC colleague Hoda Kotb she realizes her fame may have been behind her mother Nancy's abduction.
I don't know that it's because she's my mom and somebody thought that lady has money, we can make a quick buck.
She says her brother Cameron, who spent his career in the military, was the first to suggest ransom as a motive.
We don't know, but yeah, that's probably, which is too much to bear. To think that I brought this to her bedside.
Almost 2 months after she vanished, there is still no sign of 84-year-old Nancy Guthrie.
I'm so sorry, Mommy. I'm so sorry.
Deborah Rodriguez, CBS News.
Freddie Mac says the rate for a 30-year fixed mortgage has surged to 6.3%. That's a 7-month high. Jennifer Kuiper, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about 55 minutes away from the closing bell on this Thursday. Stocks kind of hovering near their lows of the session. So what does that mean? We're down about 1.5% on the S&P 500. We're now looking at about a 2% decline on the NASDAQ 100. So the sentiment, the tone, really since we started getting comments out of the White House earlier today, that it doesn't look like there's any kind of ceasefire between the U.S. and Iran happening anytime soon. And that has really put more of a negative tone on the trade here.
Yeah, the president threatened Iran with intensified military action after Tehran rejected Washington's push for a peace deal. The two sides far apart in efforts to end the war. Until Iran agrees to stop the conflict, the U.S., quote, according to the president, will keep blowing them away.
All right, so that is our trade. We're going to dig into it a little bit later on. But what we also want to talk about is what we've seen with gold, down nearly 20% from its January highs. Last year, it was all about gold, especially later in 2025. But gold is having a very different trade today and certainly in 2026. Axel Merck is back with us of Merck Investments. And so we're going to talk about what he is seeing, the longer-term trends, and then we're going to talk more broadly about the war and kind of different asset classes.
Well, speaking of those asset classes, one of those is real estate, specifically distressed real estate. The state of distressed real estate, workforce housing, as U.S. mortgage rates jumped for a 4th straight week.
All right, and then we're going to spend our final hour on the war. Sorry, it's a lot of war stuff today.
Well, that's what the backdrop is for the trade.
It kind of is, to be quite honest. The thing we're going to get into is modern warfare. The decade-long mission to basically bring artificial intelligence into war. It's all in a new book. It's called Project Maven. It's really fascinating, and the involvement of the government, the Pentagon, Silicon Valley, names that you know. It's written by our own Katrina Manson. It's a great read. It's kind of our new era when it comes to how we fight.
Yeah, perfect timing for this great book. Before we do that, though, Amy Morris is standing by in the Bloomberg Interactive Broker Studio. She has got an update on the day's trade and top business stories. She's in for Charlie Pellet. Hey, Amy.
Hey, Tim. President Trump says he doesn't know if the U.S. is willing to work out a deal with Iran that is keeping oil higher and stocks lower. WTI about $94 per barrel. Brent crude near $108 per barrel. Of course, we check markets for you all day long here at Bloomberg. The S&P 500 is now down 102 points. That's about 1.5%. NASDAQ down 469 points. That's a little more than 2%. And the Dow is down about 0.9%. Or 441 points. The 10-year Treasury yield at 4.4% and the 2-year yield at 3.98%. Bitcoin down 3.6%, around $68,000. Oil prices might not go back down even after the Strait reopens. Kathy Entwistle is Managing Director and Private Wealth Advisor at Morgan Stanley.
What's interesting, the market looks like on the surface, like surprisingly resilient, but underneath it's like a violent rotation going on, and energy and AI infrastructure are booming, while software companies and private credit lenders are showing signs of stress.
Kathy Entwistle at Morgan Stanley on Bloomberg Surveillance. Vicki Hollub is preparing to retire as chief executive of Occidental Petroleum. That's according to Reuters, citing unidentified people familiar with the matter. Occidental shares nearly 4% higher. Memory chip stocks extended their losses after Google publicized research that could allow for more efficient use of the storage needed for AI development. Wave Life Sciences shares fell after a single higher dose shot of its weight loss drug failed to meet investor expectations for reducing visceral fat. Wave Life shares now 48% lower, and this just crossing the Bloomberg terminal. Netflix says it is raising the price of its standard streaming subscription with ads by $1 to $8.99 per month. The standard plan without ads will rise by $2 per month, and the premium plan, which supports up to 4 devices at once, will climb another $2 per month. For on-demand news 24 hours per day, 24 hours a day, there you go. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenivek.
You hear that, Carol? Netflix increasing the price of its standard streaming subscription, as Amy just said, with ads by $1 to $8.99 per month. That's according to the company's website.
Yeah, well, you know what?
Standard plan without ads rising by $2 to $20 a month. Premium plan that supports up to 4 devices at once. Family plan, I guess you could say.
Cable's looking better and better every
$2
day.
to $26.99 a month.
That's a lot. And that's one. That's one.
It's the
Right?
Netflix price index.
All right, you want to talk about housing?
Let's talk about
Let's
housing.
do that.
Yeah, that sounds good. U.S. mortgage rates jumping for a 4th straight week, reaching the highest point in 6 months, and dampening prospects for the crucial spring season as the Iran war roils markets. Back with us in the studio, Amy Rubenstein. She's CEO of the Chicago-based Clear Investment Group. It targets real estate investments in the distressed, mid-size, multifamily sector and predominantly secondary and tertiary markets nationwide. She joins us here in the Bloomberg Interactive Brokers studio. Good to see you. How are you?
I'm great. Nice to be back. Thank you.
Nice to have you here.
You know, we last spoke to you early last month, and it was a really different macroeconomic environment.
Sure.
The inflation outlook was different. There was no war in Iran going on. Oil prices were around $60 a barrel. How has all of that affected your world?
Yeah. Well, look, I think we're in a transition market right now where fundamentals aren't really changing as far as the fundamentals of housing, but we are seeing transaction volume increase. So I think this is because we are finally seeing some stability in interest rates, even though they didn't go exactly where everybody thought they would go or where everyone wanted them to go. What happened is now people know what to underwrite to as far as buyers, and sellers aren't sitting there waiting for these massive rate cuts and waiting for cap rates to drop. And so we're getting a little bit more alignment on pricing.
So like people aren't just waiting around. Well, maybe it could get better. We have an understanding of kind of where we're going to be.
Exactly. Like this is what you get right now. And sure, we're getting a little bit of volatility right now with the war on rates, but generally speaking, Fed's not cutting rates right now. Nobody's expecting them to. And so now we also have at the same time a slowing down of construction starts, which is going to create future supply constraints. And so that sets us up for a very solid investment period for particularly what we do, workforce housing, where you still have those fundamentals that are strong, people still need a place to live, and now we provide that without having this extra supply coming in, and so it creates that extra value.
What do you think about on the demand side, though, in terms of people who need this housing? Like, you know, this is one of the things we talk about in terms of AI and work, and if the economy starts to have some issues, you know, people maybe they think differently about their living situations. How does that stuff impact you as well?
Yeah, well,
or could
we do always have a demand. Now that doesn't mean that there's always going to be demand for affordable housing, because these are renters by necessity, not lifestyle renters who are choosing where they're going to live, right? That being said, that doesn't mean that the bottom sector doesn't get hurt by macroeconomics, and so then we have to deal with that. And of course, we've got rising labor costs and material costs, and when you get inflation, it's going to hurt your tenants. At the same time, on the flip side, real estate is a hedge against inflation. So for investors, this is where they want to be.
Does it dwindle supply for you? Because, and I know you're very picky about what markets you're in, and you've decided not to work in some markets that you used to be in, and you've decided to exit or enter different markets based on timing. But if this is an asset class that is attractive right now in an environment such as this, then does that make it more difficult for you to acquire new targets?
So for us, it's all about acquiring at the right basis. And so right now, it's about being a very discerning investor.
But it's a very efficient market, because there are a lot of people who are looking at this stuff?
Sure. So we, in particular, are buying highly distressed deals. They have a lot of managerial distress, high vacancies, high delinquencies, and then we're catering to a need that we're not competing with new building against. So we are catering to tenants who have an AMI or area median income between 30 and 80%. You can't build new construction without government subsidies and compete against that. And so for us, that means there is great value there, right? But what we have to do is we find things at auction, or we're finding things that are negative cash flowing. And that's where we are basically taking existing supply that is not functional and unlocking it and bringing it back on the market.
So one of the things we were thinking about, Amy, before when we were on our planning call this morning, is that what we love talking about you is, you know, in an environment where, you know, we don't know when this war is going to end, and that opens up so many different questions about the outlook, right? And so we're just dealing with lots of questions. But are you, talking to someone like you, like, are you seeing more distressed opportunities to buy as an indicator that things are getting tougher out there, or no? Does that pool kind of stay constant?
So for us, it does. The level of distress that we're buying is not macro distress. I think that you do, it's not based off of macroeconomic distress, right? Okay. I think you do see, you know, as when you look at properties that are a little bit less distressed, you're seeing more trading right now, because as maturities are coming up on loans and it's harder to refinance into new things, and you see sellers kind of lowering their expectations, right? But for us, it always is going to exist. It's just about finding those deals that are really hurting, and not because of interest rates, but something bigger than that.
When you find a deal that might be negative cash flow, or there are managerial issues, what are the reasons why it's not working for that particular management company?
So the properties that we buy need a serious infusion of capital. And so if an owner does not have that capital to put back into that property, now why did it get to that place? It could be a combination of many different things. So it could be that the operator didn't quite know how to operate this kind of asset, this sort of workforce housing asset. Often the sellers that we are buying from are not traditional real estate operators. Maybe they have a different career path, and then
they got in over their heads?
Yes.
Okay. So if you're in a situation such as that, and like, I know every situation is different, every building or every asset is different. What percentage of the renters typically stick around during this overhaul? Like,
sure.
Can you keep them in their homes?
Sure.
While you're
We try to keep everybody. We want to keep our tenants. We do not want to displace them. That being said, is sometimes we do lose tenants if there is, if we're trying to clean up crime in a property, or if someone flat out refuses to pay rent and cannot find any sort of financial help, which we are pretty good at pairing people up with some sort of financial help. But there are cases where people do have to vacate.
It sounds like a lot of the macro doesn't necessarily impact you guys directly in what you're doing. Is that fair to say?
I would say we're fairly hedged from macro. It doesn't mean we don't get headwinds or tailwinds, but we're fairly hedged in our asset class.
So what is the biggest thing then in terms of risks that you think about most often? And we just got about 40 seconds left.
Sure. I mean, the risks we see is the pace of lease up, or the amount of delinquencies that we see, and the pacing of that. Our returns are a bit outsized, so we do have cushion to absorb some of that, as they have to be when you're investing into distressed real estate.
Interesting stuff, right? We're just trying to piece together the environment, and one that we thought we knew on January 1, and then it's changed dramatically.
Never boring.
But interviews like you kind of help us remind us of different parts of the market where things kind of continue. Amy Rubenstein, she is CEO of Clear Investment Group, joining us right here in studio.
Hey, coming up next on Bloomberg Business Week Daily, we're talking a little bit about gold, down close to 20% from its all-time highs. Yeah, Axel Merck joins us next. This is Bloomberg Business Week Daily.
It's 3:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. President Trump threatened Iran with intensified military action after Tehran rejected Washington's push for a peace deal, and that brought oil higher. WTI around $94 a barrel, Brent crude near $108 per barrel. S&P 500 is down 1.6%. NASDAQ down more than 2%, the Dow down right at 1%. The 10-year Treasury yield at 4.41% and the 2-year yield at 3.98%. Bitcoin is down 3.5%, around $68,400. Netflix says it will raise the price of its standard streaming subscription with ads by $1 to $8.99 per month. The company's standard plan without ads rose by $2 to $19.99 per month. Its premium plan, which supports up to 4 devices at once, climbed $2 to $26.99. Netflix shares are 2% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovet.
Amy, thanks for that update. Appreciate it. We're having fun already with Axel here in our studio.
There's something we have to talk about, and there's something we kind of want to talk about. We'll see if we can get
We got to talk about gold.
Yes, we do.
Down around 20% from its January highs of over $5,300 announced. Tatiana Dare on our Markets Live blog today writing earlier that gold's positive correlation with risk assets looks unusually sticky in this latest period of risk aversion. She notes that in previous equity drawdowns of at least 5%, like we're seeing right now, the positive link between gold and risk assets faded as bullion acted as a risk buffer. This time, though, it's an exception. For more, we bring in Axel Merck, President and Chief Investment Officer at Merck Investments. The firm has around $4.4 billion in assets under management. Axel's here in our Bloomberg Interactive Brokers studio. Welcome, welcome.
Great to be in person here with you.
Do you agree with that relationship in the way that, as Tatiana noted, gold's relationship with stocks has been consistently positive, but there's evidence now that precious metals at the mercy of risk assets and speculation that those returns could have altered that role of it being a risk asset?
So in the long run, gold has a zero correlation to equities since the 1970s, but it's not stable. It morphs in and out, just about to cause maximum frustration on investors. And the reason why gold has had some headwinds, just like equities, is because in the current environments, nominal yields in bonds have been rising higher, but inflation expectations have not budged, which means real yields have been moving higher. And ultimately, this brick, this barbaric relic, is competing with cash. If you get compensated for holding cash, well, then why hold gold? And the question is really, what's going to persist? One of the unique things about a supply shock is that the economically sound reaction is usually political suicide, and politicians do the opposite of what's the sound thing. Think price controls in the 70s or help to the consumer during the pandemic. So let this go on long enough. And the government, I'm not trying to be critical of this administration, it happens throughout the world. The Italians just cut the fuel taxes. So the government reaction, that's what gold then reacts to. Or let next week's non-farm payroll report come down and the folks at the Fed say, oh, we got to cut rates, don't worry about this inflation. Miran at the Fed says, oh, we only worry about it if there's a second round effect. So it's that second round that tends to be then supportive of the price of gold.
I get that, but how much is also, Axel? I mean, gold was up, 56% last year, quite a run. Go back the year before, it was up 23%. I mean, so how much is also, though, it just had such a strong run, and some of that had to be undone?
Well, the one thing, there are a whole bunch of different investors in gold. One of the groups that was absent for several years...
Retail?
No, speculators.
Okay.
They were busy with meme stocks, all the wonderful SPACs and crypto. And then a year ago, they decided, hey, gold isn't such a bad place. And so what they do is they mostly increase volatility. And so that's obviously a component that contributes to it. But retail has not had a frenzy. If you look at the total ounces held by the physical gold ETFs, they're not back to the 2022 highs. Of course, normally we reach new highs, but we haven't had a panic into gold. It's not the typical speculative bubble, so to speak. But what is unique about gold compared to other asset classes, it's a much smaller asset class.
Mm-hmm.
And so one of the investors is the quote-unquote gold bug that's worried about fiscal sustainability, while that fringe view is moving a little bit closer to the mainstream. And it doesn't need many of those investors to reallocate to gold for it to have a dramatic run. Now, as we're at these levels, volatility is, of course, very high as well.
So then are you saying there is an opportunity for retail to drive it higher?
Well, of course, the question is the timing,
Yeah.
right? I mean, I tell people I'll sell my gold when fiscal sanity comes back to Congress,
Okay.
upon which
When
I
is
get
that?
a chuckle and says never, right? But what gold is going to do tomorrow, I don't know. But over the next several years, neither the left nor the right has any intention of doing proper entitlement reform, and neither is their drive to properly drive revenue. And so we are living in eternal deficit.
So you're saying either cut spending or raise taxes, and neither party wants to do that.
That's right.
Or neither party will agree.
Milton Friedman says the only thing you can do is cut spending, because the moment you actually raise revenue, government will find a new way to have yet more spending. And historically, he's right in that. And so going back here to the Iran war, the market is pricing this in as a short-term shock, some differentiation in Europe and here, but even a bad case scenario, let's say the Iranians can charge a gazillion for every ship that goes through, that would mean oil will flow again and we'll live happily ever after. The world is a more expensive place to do business in, and that's historically good for gold.
Go there, because I think one of the things that we keep trying to get to is what is the longer term impact of this war, this environment where it feels like, you talk about spending, I think about defense spending. We're going to talk about that a lot in our 4 o'clock hour. I mean, we're talking about $1 trillion, budget spending that we're looking for in the United States, other countries, European, everybody seems to be like focusing on things like defense and spending. And I just think then the fiscal houses of governments get even worse. What are the implications of that longer term?
Well, we live in a different era. The peaceful era since World War II is over. We saw that Ukraine, Gaza, those were symptoms of a new time. Iran is a symptom of this time. Governments are more nationalist. We have protected industries. All of that makes an economy less efficient. There might be the right political reasons to do these things, which means will you spending more? You didn't mention climate change, right? All that is making it expensive. Population is aging. Well, we live in democracies. How do you solve these things? You solve them with debt, printing money. And right now, the Fed is quite disciplined, but the interests of government and those of savers are not aligned, and the gold investors is investing based on that.
There are some out there who could be watching right now and say, the administration would probably say this, but the military action that the U.S. has participated in this year, they would say would make the world a safer place. The president has said that many times. And we actually had Wilbur Ross, the former Commerce Secretary, on earlier this week, and he made the argument that essentially the rest of the world has been put on notice that President Trump will use the American military to go after you. Does that make the world more stable?
I'm not doubting that is the right thing to do. Indeed, the Europeans need to get their act together and do substantially more. All I'm saying is less efficient, right? The same with trade. Having free trade makes a more efficient world. It might not be in a national security interest, right? And that's why we put certain blocks in place. And talking about tariffs, it doesn't just impede the flow of goods, it impedes the flow of currency, increasing borrowing costs. So these are things that are happening. I'm not judging, I'm describing. And the gold investor is saying, well, this is a good thing for gold. Now, that doesn't mean gold can't get overheated in the short term or it can't have a very strong correction. But that is one of the reasons why people are investing in gold and continue to invest in gold.
So we're $4,412 an ounce. Do you have a number that you think about how far?
No, you guys always want a number. One of the reasons I don't give a number.
Have you met the Bloomberg?
Yes.
We like numbers.
So one of the reasons I don't give a number is because the market is fairly small. You can get through this number in no time, right? And so some people have put out a number of 10,000. Says I'm comfortable with that, right? But I'm not going to put a price target out there because I don't know the horizon. Right? Give the horizon long enough, then sure. But it's one of those things that you got to look at the dynamics of the underlying dynamics, and currently, obviously, there's a headwind to price.
Well, we just talked about some of the underlying dynamics that we think is going to be, it's a different world order going forward. Is it fair to say that certainly is supportive of maybe we're at a floor, and that it is supportive for gold to definitely move higher and consistently higher.
Well, we have a new world order every day with a new tweet coming out, with a new statement coming out. What we do know is that the market is pricing this in as a shock and not as something structural. So you can agree or disagree with that, but that's what, and little difference, a little more long-term implication in Europe than here based on WTI and Brent. If you look at those sort of things, there will be a way to muddle through. If this lasts long enough, there will be substitutions, fracking will increase. We're not going to substitute oil if this thing lasts only a few weeks, but if the market believes it's going to last longer, we will rewire the economy and deal with it in one way or the other.
So, shock, we move on.
That's the oversimplified way of looking at it, but that shock can be very painful, of course.
Yeah.
So I'm curious about your view on gold in a portfolio. And everybody's portfolio is different, obviously, but there are those people who are outspoken. Jared Dillian, for example, he says 20% of your portfolio should be in gold, and you should, adjust it each year accordingly. There are others who say, okay, throw maybe 5% in your portfolio. Again, different for everybody, but what's your general rule?
Well, you can look at my public disclosures, and I have substantially more in gold mining in particular. I have substantial gold holdings, but I'm not recommending everybody else does that. Investing is about the risk you can afford to take. I happen to think I understand gold. I understand gold miners. Most people don't understand gold. So if you don't understand it, don't pile into it too much. The thing about the gold is it has a volatility about that of the S&P, but that can spike. Now, you've got to be aware of those spikes. Now, anybody who's looked in recent weeks is aware of that, but there are these extended periods where it doesn't, and if you're not aware of those spikes, then you can be caught off guard. And so I encourage anybody to study these things. What is a bad case scenario? Because bad things do happen if you're a longer-term investor, and you've got to be comfortable with that. So if you're comfortable with that, I happen to think, yes, a substantial allocation to gold is an important diversifier in a world where bonds might not serve that purpose as much anymore. Obviously, gold is not a direct substitute, but you have the S&P, very tech-heavy. If there's a pullback, where do you hide? And gold is but one of the answers to that.
Well, it's an interesting environment where we've spent so many years just talking about, the Mag 7, the big tech names, AI, and so on and so forth. We still talk about it, but it is interesting to see that in terms of investment space, it feels like, commodities, basic materials are something that we've moved into. You are obviously in the precious metal space. When it comes to things like miners, what's your advice to investors in terms of how they look at them? And just got about a minute or so left.
Let me expand on your question. In 2011, Mark Andreessen said software is eating the world. Now, software is suffering from AI. Back in 2011, software was low barriers to entry, high margins. AI is high barriers to entry. Who knows what the margins are? If you look at commodities, mining in particular, well, there are high barriers to entry. It's expensive, but the margins are amazing, even with the pullback we've had. The miners are pricing in that the price of gold would be about 35% lower. And so suddenly we have a somewhat level playing field between tech and mining, and that's one of the reasons why I think more investors will pay attention to it.
Yeah, which kind of gets to that whole idea of like things we just didn't seem so basic, some old economy, if you will, but it's interesting. Thank you so much. A joy to have you here in studio. Axel Merck, President and Chief Investment Officer at Merck Investments. As we mentioned, the firm has about $4.4 billion in assets under management.
Hey, coming up next, we're going to drive to the close with Rayanne Mitrione, market strategist and founding partner over at Callan Family Office. That's next on Bloomberg Business Week Daily.
It's 3:40 on Wall Street. I'm Amy Morris. We check markets for you all day long here at Bloomberg, and stocks are lower. Let's go to the First Word breaking news desk for today's afternoon call with Bill Maloney.
And good afternoon, Amy. That's right. U.S. stocks are under pressure as the war drags on. The Dow is currently down 475 points. S&Ps are down 1.7%, and the NASDAQ, that's down by 2.2%. The U.S. 10-year yield is now at 4.41. Gold is sinking, oil is climbing, and Bitcoin is trading lower by 3.6%. Among the main 11 SB sectors, only energy was in the green, and leaders to the upside in the Dow, Chevron and Salesforce, while NVIDIA fell 3.7% and led to the downside. In deal news, MasterCard seeks to sell its real-time payments unit. And in other news, the SpaceX IPO could allocate up to 30% to retail investors. Wrapping things up, Facebook fell as much as 9% today to its lowest level since April of 2025. Live from the First Word breaking news desk, I'm Bill Maloney. Amy?
Thank you, Bill, for on-demand news 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that is a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry.
I'll drive. Shotgun.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
All right, everybody, we are just about 18 minutes away from the closing bell on this Thursday. Carol Master, Tim Stenovic, of course, live here in our Bloomberg Interactive Brokers studio. We're looking at a market.
Yeah, I was going to say just off lows of the session.
Yeah,
right?
yeah. We're down
what
about,
are you seeing?
almost about 2.25% lower on the NASDAQ 100, pretty much hovering. You know, it's just kind of a ski slope down, if you will. 1.6% lower on the S&P 500. We've talked about this a lot. Definitely more of a negative tone in today's session. You flip it on over to Treasuries, and we've seen yields moving up as well. Again, concerns about higher energy prices, how long they stick around, how that bleeds over into inflationary pressures and the picture. I'm looking at a 2-year note with a yield of 3.99 and a 10-year note of about 4.41. Again, this speaks to, you know, central banks around the world. If they're worried about inflation, there's going to be pressure on not to cut rates, and that certainly can impact things. And then you just wonder how that spirals down in terms of maybe slowing down the economy even more.
Yeah, we're seeing under pressure in the S&P 500, communication services, information technology, and industrials. I mean, if you look at what's dragging the index lower, it's the Mag 7, NVIDIA down close to 4%, Meta Platforms down 8%, Alphabet down 3.5%, Microsoft down 1.4%, and Broadcom, Carol, down 2.5%.
All right, so let's get to it. It's drive time to the close. Rayanne Mitrioni is with us. She is market strategist and founding partner at Callan Family Office. They've got about $10 billion in assets under management, and she joins us from Palm Beach, Florida. Rayanne, it's great to have you back with us. Tell us a little bit about what you are hearing from clients and how you guys are managing through this environment. Are you making changes to portfolios? Do clients want you to do that? Or are they willing to kind of ride this for a little bit longer?
Thanks for having me on today. It's great to be here. Definitely hearing different things from different clients. Most are willing to stay invested. I mean, we tend to advise our clients in these types of periods of volatility. It is really best to stay the course and stay invested rather than trying to get too cute and time the market getting in and out, because you can easily miss those big upswings as well. But it is an opportunity to rebalance and make sure your exposures are what you want them to be, and rebalancing at lower gain, lower tax cost is an option, or doing loss harvesting in these types of environments, but really making sure that you have the right kind of risk in your portfolio where you're comfortable with and where clients are. Is really important in times like these when you have this level of volatility.
Are clients reaching out right now in a way that they don't typically reach out?
Yeah, to some degree. Some are more seasoned than others. We tend to be proactive when we have situations like what we're dealing with right now around contacting them and giving them updates on their portfolios and the markets. I mean, in most cases, a lot of our clients are surprised how well their portfolios are holding up, because if you have a diversified portfolio, it's actually done okay in this environment. There are parts of the market that are even still positive year to date, even though the headlines and the volatility feel really bad right now. Like, if you have value, small cap, mid caps, and a number of sectors within the S&P are still positive year to date, looking obviously at energy, but also materials, industrials, utilities, consumer staples. So there are parts of the market that are actually doing pretty well internationally as well. So that's not as bad as it really feels right now.
Does it feel like, could that view change though, if we do see oil prices higher for longer, to borrow an interest rate phrase that we used to say? Does your view change?
To some degree. I mean, the risks are certainly increasing the longer that this continues. The longer we have elevated oil prices and traffic through the strait is somewhat constrained, that could certainly continue to become more problematic. Right now, I think everyone's hoping that we see some type of resolution and oil prices start to normalize. But if they stay elevated, I mean, we've seen a complete, inverse correlation between oil prices and equities. And that could accelerate if we see some more escalation here.
You mentioned about overseas exposure. I'd love to know a little bit more about that, because I think everybody was kind of hot and heavy, certainly on it last year. And we saw some outperformance, certainly, in some non-U.S. markets. Have they increased exposure? Do you want to increase their exposure because you think it's smart, or have they pulled back at all?
We have international exposure, both on the developed and emerging side. We are more positive on emerging markets than developed right now. I mean, last year we saw strong performance in both areas, and a lot of that was tied to a weaker dollar in a lot of ways, also investing in defense in Europe. So there were some themes that were really playing into that. Certainly now, just with what we're dealing with oil prices and the situation and how that'll affect different countries and companies, we're a little bit more insulated in the U.S. So we are definitely comfortable having more exposure in the U.S. But from a valuations perspective, I mean, emerging markets have a more attractive valuation as far as being more in line with historical averages, whereas in the U.S., even though some of our valuations have come down, we're a forward PE around 19.5 versus 23, a few months ago. It's still elevated relative to historical averages. So we do want the U.S. exposure, and we want to have some international exposure, but we remain most constructive on the U.S.
When you look at the U.S., and I want to go back to this, there's obviously the large caps that we talk about all the time, those names in the S&P 500. We did see, I felt like last year we started to see some interest, and even this year, into the small cap space. Talk to us about small cap, mid cap, what you're finding of interest. Right now, the Russell is little change, just a tad higher in not today's session, but for year to date.
I was going to say.
Sorry.
I'll have what the Russell 2000 is having.
Nicely done. S&P 500 is down about 5% year to date. So tell us about that space. You're finding interest there?
We are. I mean, valuations, of course, are more attractive than large cap, but cheap isn't always better. But small caps have had some tailwinds going for them, and we have seen earnings growth pick up in that area as well. We've had strong earnings growth within the S&P 500, but we've also seen it pick up strongly in the small cap arena as the economy's been really stable, and we had some of the interest rate movement down, and I think that was a big tailwind was the thought that we were going to see some more Fed easing. So the fact that we will most likely not get as much of that as expected, we're not maybe as bullish on small caps as we were previously, but we do still think there's a good opportunity there for exposure.
Yeah, and I'm looking at actually S&P Mid Cap 400 Index. It's actually up almost 2% this year. So it's you got to pull out. We talk about the market, in kind of one expression, if you will, but there's a lot of things as a monolith, but there's just so much stuff that's out there, and you can definitely find some opportunities.
Rayanne, good to see you. Thanks for joining us on a Bloomberg Business Week Daily. Rayanne Mitrione, market strategist and founding partner over at Callan Family Office, about $10 billion in assets under management. What do you see on the screen, Carol?
We're moving towards the closing bell. Just got about 10 minutes to go, and I'm looking at a market that continues to hover around their lows. In fact, we're pretty much at it. 2.25% lower on the NASDAQ 100, almost 1.7% lower on the S&P. Stick around. We're counting you down.
This is Bloomberg Business Week Daily.